Very good morning. You're watching India Market Open. It's looking like a decent start to the markets. Hopefully, Powell still has his job for now. And the trade deal is still very much on the table between India and the US. So it's a day of hope, I would say.
Absolutely. And I think with that, the markets might take it with a positive cue because there is that indecisiveness between the bulls and the bears. Seems probably the bulls can take charge in today's session. I think that's the story it seems like.
Yeah, I mean, numbskull Powell is still in charge.
Oh, wow. The epithets. You know, we actually pulled up this data on whether Trump can fire him. For the Fed chief, there are special laws that protect them from arbitrary executive action. So it's going to have the president has the power to remove executive branch officials. The removal power is not absolute, though. It's subject to congressional limitations. Congress has created exceptions for independent agencies, though, like the Federal Reserve, and independent agencies often have for-cause removal provisions, which means there has to be a reason. What Trump is probably betting on is that his charges of fraud will stick, that the Federal Reserve has spent too much money building, constructing their building, and there is something fishy going on there. So that's where it stands. As of now, he can't truly sack Powell, and there's no real precedent. So even if he tries to, it'll end up in court. A lot to watch there. It is the big factor, though, in the markets, which is why we're spending some time on it this morning. U.S. markets rebounded from lows and closed in the green as Trump actually denied plans to fire Powell. Earlier in the day, there was an official from the White House who said that he is planning to. Wall Street Journal and some newspapers went as far as to say that that Trump has actually waved around a letter to fire Powell, and then he comes out and denies it. Which is why you saw U.S. markets eventually largely closing up in the green. Now, all eyes will be on weekly jobless claims and June retail sales data that will come in later today. That becomes important. Bond yields are fluctuating on reports of Trump firing the Fed chair. The 2-year dropped to 3.89%, the 10-year at 4.46%, but you had the 30-year doing fine. So because immediate interest rate moves would impact the 2-year more, you saw a sharper drop over there. Oil prices, meanwhile, recovered as tariff war fears are also growing. Brent has neared the $69 mark. Asian markets are mixed. Amidst this uncertainty, Japan's exports have also fallen for a second consecutive month. And let's see if we can pull up some of those Asian indices. So Nikkei under pressure because of that export data, which isn't so great. The Hang Seng still up in the green. But all eyes here domestically on what happens to this trade deal. And President Trump has signaled that a new trade deal with India may be on the horizon.
We made deals with a lot of great places, but we had one yesterday, that was announced. We have another one coming up, maybe with India. I don't know. We're in negotiation. When I send out a letter, that's a deal. In other words, that's a deal. They don't want to ever say that. Oh, how many deals have you made? And the best deal we can make is to send out a letter. And the letter says that you'll pay 30%, 35%, 25%, 20%. In one case, 50%, Brazil. And because what they're doing to their former president is disgraceful. I know the former president. He fought like hell for the people of Brazil, that I can tell you. And I believe he's an honest man. I think what they're doing to him is terrible. So, we have some pretty good deals to announce.
Welcome to the new world order where trade deals are struck based on several other factors that you haven't contemplated before. But let's talk about what happened in trade yesterday. Let's talk about the flows data. You had net selling by foreign institutional investors to the extent of about 1,860 crore rupees and domestic institutions net buying to the extent of 1,223 crore rupees. Now take a look at the benchmark. There was range-bound action for the Nifty 50. It shuttled in a 134-point range and it managed to eke out gains, just about closed above the line at 25,212. Now, in the options space, we will talk about this in more detail, but what I noticed, I thought was interesting is that 26,000 calls were unwound with writing shifting lower. So the resistance, in my opinion, will be faced at 25,500, where there is increased writing for the Nifty 50. Broader markets also remained within a tight range, and in fact the benchmark mid-cap index up about 0.1%, similar gains for the small-cap index. In terms of sectors, PSU banks shone in trade. It was as a pack the biggest gainer, 1.8% for that index. PNB, BOB, BOI, Canara Bank, SBI, which is in the news, all gained close to 2% or above 2%. So quite a big move in trade yesterday. Nifty IT blowing hot and cold. Yesterday, of course, it gained by about 0.6%, gained for a second day in a row, aided by Wipro as well as Tech Mahindra. Again, there's news to talk about, earnings to talk about in the space. We'll talk about that in just a bit. Metals, defense stocks underperformed in trade. And what I found interesting among the large cap volumes was that HCL Tech saw very high delivery volume yesterday. HCL Tech, in fact, delivery volume was 4.8, nearly 5 times the 30-day average. And the percentage was also elevated at 78 times, or more than 78 times, which is quite interesting.
Absolutely, because IT is going to be in focus today as well. You have Wipro that will be reporting numbers, LTI Mindtree that will be reporting numbers. So the kind of up move that we saw in yesterday's session, there'll be either two ways. Either that surge continues, or you will start seeing profit booking immediately in terms of opening. But what's interesting is that indecisiveness that we're seeing between bulls and bears. You start the day on a flat note, and I think that's happening since the last 7 to 8 trading sessions. And the second half is where that pickup happens. Now, as long as Nifty trades above that 25,100 mark, that bullish sentiment may continue. Though there are signs of consolidation that are coming in so far, and you are seeing a lot of stock-specific action that's happening. If there is any shallow correction, that is indicating some bit of constructive and positive price structure as well, not only from the benchmark perspective, but also from individual stock perspective. The highs of the last 2 sessions, which is at 25,255, that has been identical, and that is the key number you should be watching out for. Any move upside above this will further lead to 25,500 to 25,600. Apart from that, in terms of Bank Nifty, it's in the consolidation range. The broader range out trade remains positive for Bank Nifty, and there is current consolidation, which is indicating buying opportunities at lower levels as well. Very quickly, Axis Bank, you're seeing a short built up, and this is since the beginning of expiry. Similarly, if you talk about HDFC, AMC, that will be reporting numbers. There is a strong bullish trend on this one as well, where a long build up is seen. Geo Financial Services, again, a bullish trend, but witnessing selling pressure at its resistance. So that's the setup looking like, where Geo will be reporting numbers as well. LTI Mindtree, it's a sideways to positive trend for the company and a Wipro. There has been short build-up since the start of expiry, indicating, again, a sideways to positive trend for this one. So these are the ones which will be reporting numbers, and that's the setup that we should be picking up.
Yep, absolutely. Some key factors to watch as well. I think earnings continue to be. I mean, I think IT is right now for the brave-hearted because it's difficult to predict. We've had a bit of debate internally also on how to look at TechM, and I've ended up with a positive view on TechM, all things notwithstanding.
And then with IT, what was interesting is yesterday we spoke to Vinay Jaising, and he's saying that he's looking at replacing IT as a sector from the portfolio with CDMO.
Yeah.
And that's the buzz. So that was a very interesting shift that he was talking about.
Yeah. So, because pharma is in its own space right now, and that's why you're seeing that push up coming in. So a lot of factors to watch. I would say earnings will be number one in terms of those factors. Look at the earnings that will be reported today. Wipro, Axis Bank, 361 WAM. There are many more, but I've just picked the ones which I think will be something that the street will look at. CEAT, Indian Hotels, Geo Financial Services, LTI Mindtree, Waaree Renewables are some of those that will be in focus. Meanwhile, short-term trends for the Nifty do remain positive, with the analysts eyeing a critical resistance level. The immediate and crucial resistance for Nifty is around 25,250 to 25,260. A sustained move above this level could propel the index towards the 25,500 to 25,550 and potentially even 25,700 mark. Immediate support for Nifty is at 25,000. The index has been holding above its 50-day moving average, which also acts as a strong support. As long as Nifty closes above 25,000, the sentiment is expected to remain bullish. advocating a buy on dips strategy. The put-call ratio rose to 0.88 from 0.72, suggesting a shift towards a more bullish sentiment as well. For the Bank Nifty, resistance at 57,260, support at 57,000. So those are the key factors to watch. But let's get to the stocks, and I'm going to start with Tech M. So Tech Mahindra. All in all, I would say a thumbs up because the numbers are in line with estimates. Margins improved by 76 basis points, showing an on-track move with the FY27 estimate of 15% for margins. Communication was the largest sector that saw a growth by 3%. That accounts for 33% of the revenue. New deal wins have outperformed at $809 million, while estimate of versus the estimate of 600 million to 800 million. Revenue in constant currency terms, though, saw a downtick by 1.4%. Look at the core numbers. Revenue is flat at 13,351 crores. EBIT was up 7%, which was a positive. Margins at 11.1% versus 10.3%. The margin beat is what gives it a positive spin. Net profit down 2% to 1,140 crores as well. USD revenue of $1,564 million was up 1% as well. But look at what the brokerages are saying. Brokerages are not that positive, largely on the run-up already. So this is a valuations question more than a performance question. Keep that in mind when you're looking at this thumbs-up call. So Morgan Stanley, for example, is maintaining an underweight. They've cut the target price to 1,555, about a 20 rupee cut there. They're saying company has delivered on margins, strong deal wins, stability in top clients and steady improvement in margins are key positives. Weak conversion of deals to revenue, a tough outlook for verticals like manufacturing and weak macro are some of the key concerns. They're underweight on risks to consensus and premium multiples. Macquarie has maintained an underperform. They've hiked target price to 1,110 from 1,090. They say the EBIT margin is in line, excluding an 18 basis point one-time gain. So keep in mind that there was a one-time gain as well. They say it continues to lag peers in growth in key verticals, continue to believe that the goals of getting to 15% EBIT margin and peer group average growth by FY27 estimate are a very tough ask. So Macquarie is not that excited. Jefferies, meanwhile, has maintained an underperform, has cut its target price mildly by 30 rupees really. They say it's a revenue miss, but profits are ahead of estimates. Revenue growth remains under pressure despite strong deal wins. 15% margins in FY27 means a quarterly margin expansion of 75 basis points over the next 7 quarters. This looks very optimistic amidst 1 to 2 wage hike cycles and challenging growth environment. They also talk about rich valuations as a concern, which is why they've kept it as underperform. Nevertheless, on the basis of numbers compared to its peers so far in this quarter, Tech Mahindra seems to be largely in line. State Bank of India is the second one on my radar. Their largest QIP fundraise is coming in. It's a thumbs up. The fundraise will shore up Tier 1 capital, fundraise near market price to book post. The fundraise likely to be 1.6 times. It's favorable at a time when repo rate cut may aid loan growth. So which is why a thumbs up on State Bank of India. ITC Hotels reported yesterday, but I've picked the stock today because of 2 very good notes on it, and it already ran up about 5% odd in yesterday's trade. But look at what Jefferies is saying. Jefferies has maintained a buy and hiked the target price to 270 from 240. They say it's a healthy beat, positive surprise across. Robust growth in RevPAR owing to scale up in Sri Lanka project and higher other income. Q1 also saw post-demerger additional overhead costs. Remain focused on scaling to 20,000 plus keys. They're at 13,500 right now. That's by 2030, led by asset-light expansions. They've raised the EBITDA estimates for ITC Hotels to 4% for FY26 to 28. Macquarie, meanwhile, has also maintained an outperform and hiked the target price from 250 to 270 rupees. They say the hotel segment outperformance is due to improvements in KPIs and the Ratnadeepa property. Solid revenue and EBITDA growth. So they see a revenue growth of 16%, EBITDA growth of 19%, driven by growth in average room rates, occupancy and cost controls. ITC Ratnadeepa RevPAR is almost doubled from the launch in the first quarter of 26 with stable occupancy. So which is why, despite the run up today, I would say ITC Hotels will be in focus today as well.
I have two stocks that are allied or related to the travel and tourism space. But before I get to that, I want to talk about Angel One on the earnings front, because the way that I see it, this is a negative update. Of course, the stock already reacted to that quarterly update that came in just a short while back, where the stock dropped, and then it's recovered somewhat from that point. But what are the key takeaways from the numbers? The revenue is clearly impacted by the change that the regulator has brought in the way that derivatives trading is done, and the revenue is down about 19% year on year. The fees and commissions income, which I spotted as well, is down quite considerably. You should read that as 29.8% lower and not 0.8% lower. 29.8% lower on a year-on-year basis and 9.4% sequentially. The margins have contracted very, very sharply. So 24% is where they came in at. It was quite considerably higher in the year-ago period. So that's something to bear in mind, as a result of which the bottom line has taken quite a hit. So the PAT has dropped 61% year-on-year, 34.4% sequentially. The company says that it saw a 260 basis point impact on the margin on account of incubation of new businesses. Now, put all of that together, the top line has improved sequentially, but has dropped quite considerably on a year-on-year basis. The trading volume has actually dropped because of the change in the norms, and it's going to take perhaps a little time for the company to come to terms with all of these changes that are in the offing. In the meanwhile, costs have gone up just a tad bit, so margins have been under pressure. At least in the near term, it's going to be a little bit of a tough situation for Angel One to navigate. Things, of course, could improve going forward. For now, though, it's a thumbs down. GMR Airports is a thumbs down on account of the air traffic data that came in for the month of June. The total passenger traffic handled was up only about 1% at 97.93 lakh. Now, remember, May was impacted on account of geopolitical tension, but they've said that this month also they saw some impact on account of changed routes, etc. And the main concern is that Delhi passenger traffic is down 5% at 61.6 lakh. Hyderabad is actually a pretty bright spot for them, where the passenger growth is at 17%, and Mopa in Goa is also seeing a reasonable growth. But most of their traffic does come from that Delhi region, which is something of a bit of a concern for GMR Airports. I hope I'm saying this right. It's Le Travenue, is that it? This is essentially Ixigo, and the company's net profit is up quite considerably on account of a 73% growth in revenue. So key takeaway is strong revenue growth on the back of transaction activity. The average transaction value has gone up over 50% in the quarter gone by, and that is a considerable improvement. Margins have contracted, though, to 8.1% by as much as 110 basis points on a year-on-year basis. But despite that, because of the top-line growth, you've seen the net profit grow as much as 28.5%. So all told, it's a good quarter for this company as well.
Interesting names in terms of earnings. I think one which I've picked up so far is L&T Technologies. A thumbs down mainly from a margin perspective, and if you talk about the revenues which have been downtake. If you talk about the 5 takeaways here, margins have come in at 13.3%, which is a muted number. Though this is the 3rd consecutive quarter with over $200 million large deal wins that they've seen. The revenue from Indian geography has fallen by around 16.5%, and that contributes nearly 21% to the revenues. Tech segment has seen a degrowth of around 9%. 40% of the revenues coming from this segment, and the revenues in constant currency terms have seen a degrowth of around little over 4% on a sequential basis. What the company is saying is they're expecting to clock double-digit growth in FY26. They maintain their medium-term outlook of around $2 billion in terms of revenues, and the EBIT margin target of 16% between the 4th quarter of FY27 to the 1st quarter of FY28 is what they have indicated. They're expecting the second half of FY26 to be better than the first half, both in terms of revenue as well as margin performance, and that improvement will only start coming in from the 3rd quarter of FY26. In terms of segment and market commentary, the company is expecting to start generating revenues from the Middle Eastern market in FY26. And the clients have remained cautious, according to them, due to macroeconomic uncertainty, though the sentiment is improving. And the Chinese EV makers are creating pricing pressure for the European OEMs, and this is what could be impacting the business as well. They're seeing a trend of non-linearity between revenue and headcount due to automation. If you see in terms of brokerages as well, two of them, a mixed view coming in there. You have Morgan Stanley, which has maintained an equal weight. They've hiked the target price to a 4,500 from a 4,300. And according to them, the results are in line with expectations. Citi has maintained a sell rating. They've cut the target price to a 4,015 from a 4,055. And they've, according to them, it's a weak set of numbers where revenues have been lower while margins have been in line. Moving on, you have a Hind Zinc that is in focus as well. And this is on the back of it being the lowest bidder in one of the mines. I'll get you the details. So what they've done is they have got a license for e-auction of potash and halite block in Rajasthan. The block has an area of around a little over 1,840 hectares. Now, Hind Zinc is aggressively expanding their portfolio into critical minerals. And the blocks are crucial for various industries like agriculture as well as clean energy. It also reduces reliance on traditional zinc business. So a thumbs up coming in with regards to Hind Zinc. And lastly, PNC Infra, they've been the lowest bidder for NHPC's 300 megawatt solar power project. The tender is for setting up around 1,200 megawatt solar power capacity, and they've procured this via tariff-based competitive bidding. The order consideration size is approximately 3.13 per kilowatt. In terms of the company's order book, that stands at around 17,800 crores, which is 3.2 times book-to-bill ratio. So that is a strong number there. And in terms of outlook, they're expecting 20% revenue growth and 13% EBITDA growth in FY26. They've guided for revenue growth rate in that range of 15 to 20% for FY27. And new orders worth 15,000 crores that could be flowing in as well in FY26. So that's a thumbs up on PNC Infra.
Very quickly, I forgot to mention that there's one brokerage note that came out on Angel One, and Investec has actually said that the Q1 was better than expectations. So they have said that the PAT is better than what they had anticipated, and they're saying that the earnings growth will improve sequentially. So I'm putting that as context. We've put out the numbers as we see them, and there are a lot of one-offs that the company claims will improve going forward, but the numbers as they look are not the best.
Okay, so like I've reiterated this in the past, we're not in the business of predicting whether the stock will go up and down. We're telling you how we see it. There could be 100 factors that work.
Absolutely.
And I think what's even tougher to predict is what's going to happen in the primary market. But in a quick update of what's happening there, and this is something to watch out for. So SmartWorks co-working IPO was subscribed for 13.45 times on its final day. Institutional investors subscribed 24.4 times, retail investors 3.53 times, and non-institutional investors 22.78 times. So SmartWorks in focus, and the listing is today, I believe, for SmartWorks as well.
Yes.
So SmartWorks in focus. Anthem Bioscience IPO subscribed 63 times, nearly 64 times on day 3. Of course, that depends on the size of the IPO, so look at it that way. But nevertheless, qualified institutional investors have subscribed 182 times, non-institutional investors 42 times, and retail investors 5.6 times. So two IPOs which will definitely be in focus among the many. I was looking at a statistic today. I think India has broken old records in primary market issues this year alone, and we're pretty much just halfway there, and many more big ones coming up in the second year, and especially around Diwali. But Glenmark is the other stock that we should quickly talk about this morning. In focus as it transitions into an innovation-driven company, the firm held its investor day and set an ambitious goal to drive 70% of its revenue from branded products by 2030. Varsha joins us now with more highlights.
Thank you for that. On to the ambitious goals. Let me just start with the financial aspects, wherein their medium target, if you see, is to take the revenue CAGR of 12 to 13% over the medium term. Wherein, if you see that in the last 3 years, the revenue CAGR for this company has been only 3%. So huge uptick there. Even if you see the EBITDA margin, they want to move their EBITDA margin to 23% on a consolidated level versus 18% what we have seen in FY25, and also they are targeting of 20% when it comes to ROCE and ROE. And India business, they are expecting to grow at 10 to 12% consistently over the next few years. And the US business, according to the company, is at an inflection point, and they are expecting $300 to $400 million of sales when it comes to US business over the next 5 to 6 years. Let's talk about their innovation and pipeline, wherein more than 15 molecules are in clinical development with 7 active partnerships for innovative products. They are focusing on oncology and immunology. Onto the commercial footprint and growth, if I were to talk about, the India business continues to be the largest and the fastest growing segment for them. They're expanding branded business in Europe and emerging markets too, and they're also growing US generic business through respiratory and injectable launches. Lastly, on the IGI, so if you see the key pipeline over there, now they partnered with AbbVie for ISB 2001, which treats blood cancer, which is currently in phase 1. 2 more molecules are in different phases when it comes to clinical trials, which are into oncology only. And lastly, when it comes to IPO for IGI, they are expecting IPO only after 3 years. So the main highlight is the target, the medium term target that they've given, wherein the margin is to be taken to 23% versus 18% in FY25.
Okay. Varsha, thanks so much for putting that into context for us. Watch out for the stock in trade today. Glenmark Pharma had quite a bit of a chop and churn in trade yesterday. Let's talk about the watch list then, and we've covered a few stocks, but they bear repeating ahead of the start of trade. Tech Mahindra, it's an inline set of numbers, and better than peers is what you should pay attention to. ITC Hotels, a number of brokerages coming through and are bullish post that solid set of numbers in the first quarter. SBI, fundraising on the cards. QIP opens at a price of 811 rupees per share. There is, of course, a range for that QIP. Glenmark Pharma, it has provided margin guidance of 23%. Zydus Life, there is an inspection that has ended at its Gujarat unit and there are no observations, which is a positive. PNC Infra is the lowest bidder in a 1,200 megawatt tender. Emcure has signed an agreement with Sanofi. This is a positive development for the company. Lupin has launched a drug with $55 million of revenue potential in the US. Thermax, Kotak has hiked its price target on the company.
Moving on, Angel One, the profit has dipped 34% on a sequential basis. You have LTTS, where the top line and margins have missed the first quarter, so that's a negative as well. So 2 stocks in the red. If you look at implied open as well, as of now, 43 points in the positive is what is being indicated, but where we open is going to be crucial, whether it is a flat opening or not. But let's quickly slip into a short break. On the other side, we'll get you top trading strategies for today.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. All right, we're starting off with an NDTV Profit exclusive. This is something that has been the core of discussion for some time. As far as banks are concerned, the Reserve Bank of India remains cautious, though. We're learning about allowing private equity players to control significant stakes in domestic lenders. My colleague Vishwanath Nair joins us for more. I think Vishy hopes had perked up after the whole IDBI situation. But what are you learning?
Right, so what we're picking up at this point in time is the fact that foreign private equity firms, which tend to bring in bags of money into the Indian banking sector, they will not have that much access to the Indian banking sector. What we're learning is that the RBI is not keen on allowing any private equity players to control significant stake in domestic lenders. Now, significant stake as a term has meaning, and we'll get to that as we discuss this further. The RBI's concerns are primarily because of the source of funds, which remains sort of secretive or opaque in a private equity firm, and that PE firms are quick to sell their stake in banks. They don't hold that stake for a very long period of time. At best, maybe 5 years, and then they move on from their investment. That is their business model, of course. The RBI is only open to allowing foreign banks to own 26% in Indian banks. This is because they are strategic players who tend to hold that stake for a longer period of time. Having said that, the 26% limit will remain as it is, as the RBI is not keen on recommending a higher shareholding. Recommending to who? To the government, because there has to be legislative changes brought in if you want to exceed that 26% mark. There, the RBI is saying that that should not be the case. You should not allow foreign lenders to directly hold more than 26%. Now, just for reference, I just want to point out that FDI and private bank currently allows up to 74% stake to be held by foreign investors. However, an individual investor can only hold up to 15%. So cumulatively, they can hold 74%. An important development also is that RBI's concerns on the foreign banks holding more than 26% stem from the fact that they are bound by their home regulators, these foreign banks. So essentially, the RBI wants to maintain the operational maneuverability when it comes to domestic banks. Like, for example, let's say in Yes Bank's case, right, where the RBI could quickly stitch together a rescue plan. So that cannot be done if there are too many foreign players holding Indian banks directly. What does the RBI favor, though, is wholly owned subsidiaries. Essentially, wholly owned subsidiaries are entities which are 100% held by the foreign banks, but they are India entities. And the next slide, you'll understand that, the wholly owned subsidiary model is something that the RBI favors. Only in certain special cases, like, for example, in Catholic Syrian Bank or in Lakshmi Vilas Bank, where the RBI allowed foreign lenders to come in and hold large equity stakes, that is fine because those are bank rescues. That is still within the possibility of happening. But the main reason is that, as a general rule, the RBI will not allow a foreign bank to directly hold more than 26% stake in an Indian bank.
important updates there, and perhaps lays the roadmap for a lot of transactions that can take place going forward, or that may not take place, rather, I should say. Thanks so much, Vishy, for getting us those details. On to another story which was broken just yesterday and which was confirmed. State Bank of India has begun its 25,000 crore rupee QIP process, and the pricing is in. We've got the first fundraise by this bank in 8 years, and this is the most valued, of course, government asset. What does this mean, and what should shareholders watch for? Harsh is joining to tell you about the details. Harsh, the pricing is in. What are you picking up?
Well, yes, so if I were just to extrapolate the price itself at 811 rupees a piece, this is at 1.4 times 1 year forward post money price to book. Just very, very simply put, post the fundraise at 811 rupees a piece, the book value will obviously go up because the current book value is sub 550 rupees per share. So that will go up when you issue shares at 811 rupees a piece. So that's post money, already the book value going up, plus you have profitability of FY26 to account for. So we've taken the Bloomberg average analyst estimate profit after tax, added that to that number and arrived at the book value, thereby extrapolating on 0.4 times price to book on the SBI's 811 rupee floor price which they've established. Of course, there's a 5% bandwidth that management continues to have. It currently also trades around the 1.4 times price to book at around 830 rupees a piece. The current capital adequacy is where the challenge lies. The CET1 currently stands at 10.8, likely to go up to 11.5 as a result of this as per analyst estimates. So 11.5% being the capital adequacy or the CET1 ratio means that it gives SBI some bandwidth, some room to grow in this falling interest rate environment. So positive with regard to that, gives it that bandwidth to grow, and likely they are seeing that growth, which is why they front-ended and really pushed for this QIP at the start of this year itself. Of course, we'll have results come out for Q1 and better commentary to come through on the back of that. But for the moment, all positive. The discount doesn't seem too large basis the current market price.
Okay. All right. Harsh, thanks so much for getting us those details. So State Bank of India and a whole host of banks in focus on account of that exclusive story that NDTV Profit broke for you. We're joined this morning by Parag Thakkar in studio of Fort Capital, of course. And we've got Aditya Garwala of Invest for Edu joining us remotely. Aditya, thanks so much for taking the time. Parag bhai, always a pleasure having you in studio.
Thanks.
Let me start by asking you a question on the tech results that we've seen. We saw a couple and we're waiting for more to come through, but Tech M seemed to be a decent set, better than peers at the very least. Hero's got it a thumbs up. Tamanna's got a thumbs up. LTTS thumbs down on the other hand. So what do you make of the numbers?
See, basically we have to understand that this quarter was supposed to be a weak quarter, right? Because US macro has worsened because of this Trump tariff related things. And so any retailer or any manufacturer will of course not do a discretionary spending. The positive thing which I am seeing in the results is that what Infosys also said, what TCS also said, what Tech Mahindra has also said, that they are seeing some discretionary pickup in BFSI and tech services. Right, for Tech Mahindra also communication was up. For HCL Tech and I think Tech Mahindra, BFSI is up. And that's why I'm saying that, and see, this is a sector which is a hated sector right now because of so much uncertainties, right, around US. So I would say that, as I told last time, I was sitting on 12% cash. I have deployed some money in IT.
Okay.
At the lower levels.
Where?
I was going to ask. Yeah.
with full disclaimers over
full
here.
Disclaimer.
Let me
Don't
say that.
replicate what I do in my fund because it's very dynamic.
Yes.
I have, for example, in IT, I have bought Infosys, Wipro, and HCL Tech. HCL Tech after the results, after the result fall.
So just one question on that. We were just doing this research where the market share from revenue perspective for large cap IT is dwindling and it's going to the mid cap IT. So why the conviction on the large cap names and not the mid cap names?
Yeah, because see, when you are buying in a sector where there is no full clarity, right? The clarity will emerge after the tariff thing settles down, after US corporates are sure of spending, right? So till then I would stick to large cap liquid names which are at a low PE also. For example, just to tell you, Wipro now, Wipro result is today, right? Market cap is around 2,75,000 crores. In my view, they will generate around 15 to 16,000 crore cash profit this year. So 5.8% is a cash profit yield, right? Dividend, they have said that dividend payout will be 70%. They'll do 12.5 to 13 rupee EPS. So in my view, 9 rupees dividend can come. So 3.7, 3.8% dividend yield. And if like Tech Mahindra, they also surprise you a little bit on a deal win side, right? And protect their margin at 17%. I think stock can go up from here.
So Wipro top bet and then Infosys?
Yeah, I'm hoping because see, the result is today. So please, another disclaimer from my side that on result day, IT stocks react really
sharply,
very violently.
Yeah.
So there is no recommendation to buy Wipro today.
How do you think TechM will react? Because numbers in line, margin beat, but
and deal wins were good.
Deal wins are good, but conversion to revenues is not great.
Yeah, so basically Tech Mahindra, see, it's a great company and now a new CEO doing all right things. Margins can only improve because the base was 10%. Like Wipro and HCL Tech are at 17%. HCL Tech was 16.3% this quarter, which disappointed the street. Wipro is at 17.5, which can come to 17, say. But while Tech Mahindra is starting from a low base of 10%. So it can only improve from here. But the improvement, in my view, can take some more time because the demand environment is not that great.
So why is it not in your list of top three? You
Due
said
to this reason.
Okay.
Because
so it will take some time for
the
things
street
to
seems to have believed that FY27 15% margin, what they are saying, is possible. While I am taking my own view that in such demand environment, when there is cost pressure also, because they have to do upskilling of their employees, right? They all have to be ready for AI. Right, so I am saying that in this environment, to take it from 11 to 15% in 2 years' time, I feel it is slightly difficult.
That's what most brokerages are also saying this morning, honestly, that it's a beat on margins, but the 15% EBIT margin target is a bit steep. Aditya Agarwala, what do you think? Since we've been talking so much about tech, let's start there and then get, of course, your view on indices and stock picks this morning.
Morning, Tamanna. Thanks for having the show. My sense is IT will take some time before it actually finds its feet and then starts to inch higher. Overall, it's more of a consolidation that I see for the IT majors, and especially if I talk about the large cap stocks. Because if you actually take a look at the mid cap names, be it a Coforge or a Persistent Systems, or maybe an add emphasis as well to that name, they've actually outperformed the large cap IT names. And they've actually made money if you bought into them just at the start of the year. They have made money for you. But on the flip side, if I talk about large cap companies, they haven't really done much for themselves. And I feel that looking at the chart setup as well, it will take some time for these companies to actually form a proper base, maybe another quarter or so, and then they will eventually start to head higher. Clearly on the upside, 39,450, 39,500 on the Nifty. IT has been acting as a major hurdle for some time now. Until the time that is taken out, I don't see any momentum or any trigger to buy into these large cap names. Having said that, yes, give it about a quarter or so, and I would be nibbling into some of these large cap names as well, specifically talking about Infosys and HCL Tech. I do feel they're coming close to a good support area. And if I talk about mid-cap IT, definitely there are outperformers there. Top bets there would be these three names that I just spoke about, Emphasis, Coforge, and Persistent Systems in that pecking order. So I would like to allocate some money to the mid-cap IT names, maybe immediately post numbers and hold out for some time before I allocate some fund to the large-cap names.
Relatively quick answer because we're heading to our regular segment at 8:45. Heard on the street. What is the level that you're watching for the Nifty 50 today, Aditya?
Morning, Alex. 25,250 is the level that I'm watching. A quick answer for you. But when it crosses that, I'm looking at a 100-point rally on the upside.
And the trend is likely to be a little bit range bound in the near to medium, in the near term at least?
Absolutely, Alex. My sense is you won't see any big bang move on the upside or the downside, either on the Nifty or the Bank Nifty. It's more of a consolidation on the upside, 25,800, 26,000 at max. On the downside, 24,400, 25,000 are the support areas. My sense is you will continue to see markets continue to oscillate in this zone. Clearly, because the VIX has also come to a level from where it usually bounces back. So VIX is not a trending index. It's more of a range-bound reversal index which reverts back to its mean. So around 10-11 levels is where you will see VIX actually returning back to levels of 13-14. That is where I feel markets will see some kind of a volatility pick up for any reason. I don't know what could be the news. But my sense is you can see around 25, 400, 500 market actually finding a resistance and then some bit of profit taking again from those levels.
Got it, Aditya. Thanks so much for that. I'll circle back for the picks that you have for our viewers this morning. But before that, our special segment on India Market Open, Heard on the Street. This is where you get the Taza Khabar from the dealing rooms. And Samit joining in with all of the latest. Samit?
Well, yeah, the first stock that remains in focus is Veranda Learning, and dealers are indicating that the company might announce a fundraise anytime soon, so keep an eye out for that counter. For Diffusion Engineers, the dealers are indicating that large HNIs have been accumulating this counter in trade of late. The stock was up around 3.5% in trade, and the accumulation could continue even today is what dealers are indicating. For Tega Industries, there's a buzz on the street that there might be a fundraise. A lot of multiple private equity investors have shown interest in the company, and they might announce a fundraise anytime soon. For ABB India, there were sell flows on large HNI desk yesterday ahead of the ABB Global earnings. Now, the ABB Global earnings will come out today anytime between 9:30 to 10:30. So keep an eye out for ABB India as well. And lastly, when it comes to Shoppers Stop, there have been buy flows on expectations of strong Q1 results. The stock was up 6% yesterday. Today, the company will be reporting its Q1 numbers. So keep an eye out for Shoppers Stop as well.
Okay. Quite a few over there to keep an eye out on, but let's add to that list of ideas. We try and give you the maximum number of ideas before markets open, and of course, you can make your own decisions then as viewers. But Aditya Agarwala, let me come to you on your top tech picks this morning.
So I've got a couple of buy recommendations. The first one is from the real estate space. My sense is this space is going to continue to see some kind of a money flow and upward momentum. So DLF is something that I've picked for our viewers for a target of 885 on the upside with a stop loss at 825 on the downside. DLF looks very good to me. The second one is SBI, and I know there is a QIP at around 811. So we just need to see how the stock opens, where the stock opens. My sense is you will see higher levels in SBI. So SBI is also a buy for a target of 870 on the upside with the stop loss somewhere around 811, 812. So we will just need to see how the stock opens, and once it finds its base, my sense is one should initiate a fresh long position in SBI for a target of 870 on the upside.
Is on his list as well.
DLF, just quickly, because you mentioned DLF on the charts, I just wanted to ask Parag Bhai about DLF. So news flow, because entry to Mumbai.
Yeah. So DLF is my
As if there aren't enough luxury builders in Mumbai.
Should it be an entry to the portfolio or not is the question.
No, so basically I already own significantly large weight in DLF because my way of looking at it is that it is a 2 lakh crore market cap company. I think the rental business where they own 66% stake in the DCCDL that will end this year with a 6,300 crore rental income. And this is going to 10,000 crore by FY30. I imagine 6,300 crore rental income, which is going to grow every year at about 10%. And such a business. So I would say that rental business value itself is 70-80,000 crore. Plus they have a land bank of 280 million square feet, which is valued at around 1,50,000 crore. So I would say this is one stock where at least the intrinsic value is equal to market price. In all rest of the cases, as I keep saying to others, that it is liquidity, hope, and strong macro.
So fundamentally, you're backing Aditya Agarwala's buy call. He's doing it on charts.
Absolutely, I'm fully into it.
What is the biggest threat, though, at this point for DLF?
See, I'll tell you. The point is that recently we are hearing that real estate sales have declined a bit.
Muted, yes.
Right. But there I will say that it is company specific. For example, we saw Brigade and Prestige business updates, and they were strong. Some companies might report a lower number. That's okay. That is why I like DLF, because your view on DLF cannot change with every quarter's pre-sale number.
Sure.
There is some intrinsic value behind it. There is a rental income. There is a land bank.
There's stability. There's more stability.
And 6.5 crore is what they are expecting in terms of start price in terms of the project.
Yeah, so see, I'll tell you, as I told this particular DLF thing, I'm not actually saying that this quarter ka pre-sale number should be above the analyst estimates and so it's a good buy. It's not like that. There's an intrinsic value.
Okay. It's a longer term play. All right, let's switch focus just for a second to the IT pack, a buzz with earnings. Tech M Tech Mahindra and LTT have posted their Q1 earnings, while the street is awaiting Wipro and LTI Mindtree's earnings. Before we bring in Girish Pai of BOB Capital Markets to take this further, let me get Somit in to just set this up for us. 4 numbers, 2 done, 2 to come. What is the take there?
Well, firstly, on the numbers that have already come in, firstly for Tech Mahindra, numbers were pretty much in line with what the street was estimating. Margins have improved by 76 basis points, but also that was because of some one-off of 18 basis points, as brokerages have highlighted. And the company is on track, is what they are saying, to achieve their FY27 guidance of 15% margin. Communication segment, which contributes nearly 33% to the top line, grew by nearly 3%, and deal wins. The new deal wins were above the highest estimate on the street. It was at around $809 million. For L&T Tech, if you look at, margins continue to remain muted at 13.3%. This was but on the deal win side, again, this is for the 3rd consecutive quarter where the company has announced a deal win of more than $200 million. Revenue wise, tech segment, which contributes 40% of the revenue, fell by around 9%, while India geography, which contributes around 21% to the top line, also witnessed a drop of around 17%. Now, companies that will be reporting its numbers today, that is Wipro and LTI Mindtree. Firstly, for Wipro, as we have seen with other IT companies, revenues are expected to be down by around 2%. EBIT is expected to fall by 3%. Margins are expected to come in at 17%, while net profit, that is expected to be down by around 9% on a sequential basis. Now, when it comes to constant currency revenue degrowth, management had guided for around 3.5 to 1.5% of degrowth, and that is what analysts are estimating for the first quarter. And when it comes to margins, after seeing a steady improvement in margins for the last 4 to 5 quarters, we are expecting some cool off in the margins, and hence a downtick on a sequential basis on margins is what is expected from Wipro. And when it comes to LTI Mindtree, revenues are expected to rise by around 2%. EBITDA is expected to be higher by 7.5%. Margins are expected to come in at 14.5%, a growth of around 70 basis points, while net profit is expected to be higher by around 8%. When it comes to deal win, analysts are expecting the deal win number to be anywhere between $1.3 to $1.5 billion, and overall they're expecting a good growth from LTI Mindtree, and a strategic and the new strategy where the new CEO will also be something important to track going forward.
Lots to watch out for. Thank you so much for that. In fact, let's get in. Girish Pai, Head of Institutional Equity Research at BOB Capital Markets. Girish, good morning and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, let's start with the ones which have reported numbers, which is Tech Mahindra as well as L&T Technologies. If you have to look at both the companies, it's a different set of numbers that have come in. How are you looking at Tech Mahindra, taking into consideration the commentary, because they are being absolutely eager and very optimistic in terms of what they're expecting to be delivered versus what the reality is? What is your view?
Yeah, firstly, thanks for having me on your show. So I don't track LTTS, so I don't want to speak about that. On Tech Mahindra, we have been positive on the stock because we have believed in the mean reversion of margin story. The margins were expected to go back to 15% at the EBIT level by FY27. So this was a guidance they had given at the beginning of FY25. And when FY25 began, they were expecting that FY26 growth would be better than what it is turning out to be as we speak right now. So this is what the management said on the call yesterday, that FY26 revenue growth is turning out to be a little weaker than what they anticipated. But having said that, they stick to the guidance of 15% EBIT margin by FY27. And the revenue guidance for FY27 is that they're going to come higher than their peer set. So let's wait and see whether they're going to change the guidance if FY27 industry growth tends to be a little weaker, which is what we anticipate. Then there could be some downward revision to that number. But as we speak right now, we think that they should hit that 15% number, largely because of internal initiatives that they have. So it is a hold rating that we have on the stock. We've continued with that because stock has kind of run up a bit. And we continue with that as we speak.
Girish, hi, good morning. Tamanna here as well. I was going through your report where you say uncertainty stays and eating the tariff may impact even FY27. Of all your calls, you've given 9 sells and 4 holds. Clearly, the overview on IT is not very positive from your POV.
Right. So we've been underweight on the sector for a fairly long period of time, ever since I initiated coverage on the sector and this particular firm. We are saying that while there could be clarity on post the tariff announcements which are going to come between now and August 1st or even after August 1st, the eventual tariff that would be levied on goods coming into the US could be somewhere in the high teens or maybe early 20s compared to the 2.5% that was the effective tariff rate which US was applying to goods coming into the US. And the US government is very clear that that should not be passed on to the customers. It has to be absorbed by the value chain in some sense, and more so the US corporations, which are the customers of Indian IT services firms. So my sense is that the profit margin of some of these US corporations will take a hit, not so much in 2025. I think in 2026 there could be a bit of a challenge here if they're forced to take a hit on the margins because they have to absorb some of these tariffs, and that could put pressure on spending, and that could mean that discretionary spending is not going to immediately recover in the calendar year of 2026. So that is why we continue to be a little bit more cautious. Yes, there will be some clarity on the tariff front sometime in the next 30 days, but that doesn't mean that the cloud kind of lifts on the sector.
Girish, Wipro and LTI Mindtree reports numbers today. What's your expectation? Because clearly, at least on a consensus basis, Wipro is expected to look weak. But what should the street watch out for?
Yeah, so Wipro, we are expecting a 2.5% kind of CC revenue decline on a quarter-on-quarter basis, which is in the midpoint of the guidance they've given. Margins, we are expecting EBIT margins to be somewhere in that 17.5% territory. I think that's consensus as we speak right now. What one needs to watch out for is guidance for next quarter. My sense is that it will be either flattish or maybe slightly negative at the midpoint of their the range that they talk about. That may not be taken very positively by the street. And also the overall commentary is something that we'll have to watch out for. And the TCV, large deal TCV number, whether that is going to come in that 1 billion plus kind of region is something that one needs to watch out for. So I would say those are some of the things. And the salary hike, whether they're actually going to come out and talk about a salary hike this year. Last year, they gave the salary hike in the month of September. Whether if that gets postponed, that would indicate that there is a little bit of weakness or they see weakness in demand. On LTI Mindtree,
sorry, is there a buy call on any IT company with a long-term perspective, or what is a relative top pick in your view? Or it's a complete avoid?
No, so as things stand today, we have four holds from a short-term perspective, and I'm saying from a 12-month perspective. But if you ask me, if you take a 2 to 3 year view, Tech Mahindra continues to be a stock that we kind of prefer in the tier 1 space. In the tier 2 space, we like First Source and eClerx.
And First Source. Okay, tough one there. Thank you so much, Girish, for your time this morning. So the view on IT continues to be muddy at the very least, I would say. But long term, till you don't have clarity on what's happening with tariffs, I don't think that's going to change. Welcoming Shrikant Chauhan to the conversation this morning. He's Executive Vice President and Head Equity Research at Kotak Securities. Shrikant, great to have you on. Of course, Parag Thakkar continues with us. Let's get your index calls first.
Good morning, Tamanna. Good morning, everyone. Well, for Nifty, we are of the view that it is in the range. But at the same time, if we consider yesterday's activity and open interest statistics, then based on that, I am of the view that now the market is having very good support between 25,200 and 25,100 levels. So the chances are very high that the market may again try to retest the levels of 25,500. Ideal strategy should be to look for creating some long positions with a stop loss at 25,100. For the Bank Nifty, there also we are bullish, and the best part is that it is managing to sustain above the levels of 57,000, which is positive. Also, if we consider the overall participation of banks in this particular current up move, then most of these stocks have very close to their breakout levels. I'm going to say very close to their resistance level, and above that we can expect a breakout sort of formation. So overall activity is suggesting us that the bank nifty is again heading for the levels of 58,000 or maybe higher. So we may see new highs for banks, especially with the support of PSU banks.
Interesting. So a buy call on banks this morning versus on Bank Nifty versus Nifty?
Yeah, we like Punjab National Bank, we like Canara Bank. State Bank has also crossed its immediate highest level. But specifically, we like Canara Bank, which is around 117, 116 sort of levels. From here, the stock can move towards the levels of at least 125, 123 in next maybe 1 or 2 days of time. So it's a buy at current levels with a stop loss at 114. We also like Reliance Industries because we are expecting pullback in the market. We can expect that particular pullback from either State Bank of India or Reliance Industries. State Bank is already into breakout. Reliance can move from here towards the levels of 1544, 1545. We can keep a stop loss at 1464 for creating long positions on Reliance Industries. So broadly, we need to focus more on PSU banks and few large cap companies which are part of index.
Meanwhile, what do you anticipate, Srikanth, on the private banks? Because I think a lot of focus is on a couple of these. Axis also going to be posting its numbers this week, if I'm not mistaken. So what about the private banks, the large private banks?
See, we are observing that there is a trend of buying value stocks, and maybe because of that, we are buying interest in those banks where there is upside, or maybe where the street can expect further upside based on their current fundamentals. Most of these private banks are very close to their fair values, except Axis Bank. But otherwise, HDFC Bank, ICICI Bank, they are very close to their fair value. So the upside is minimal. At the same time, their current valuation is also quite on the expensive side. But if you consider State Bank of India or PNB or Canara Bank, the genuine buying interest is there in terms of even technical setup. So that's the reason I'm of the view that in this particular up move, we need to focus more on PSU banks. Yes, we like HDFC Bank, and we are of the view that the stock can again move towards the levels of 2050 or maybe 2100. So the upside is limited, but the overall trend is still intact.
Just in case I missed it, your top two calls this morning, Srikanth?
Canara Bank and Reliance Industries, both on the buying side.
Canara and Reliance Industries. How would you look at a Wipro this morning? Ahead of numbers?
Yeah, see, the overall setup of the stock is not that great. However, we saw a deep decline in last 3 months, 4 months. It was around 320 levels. From there all the way, it has fallen to the levels of 230, and the fall was completely vertical. So it's a pullback that we are witnessing right now, and already I think whatever the negative or maybe the bad news flow is there is priced in. So we are expecting the stock to remain in a range, but at the same time, I'm not expecting any outperformance. Yes, we like Tech Mahindra, we like Coforge. So there we are bullish. We also like Infosys. But for Wipro, we are of the view that it should remain in a range, and little bit we need to be careful.
Just quickly on some of the other, because we have the pre-open rates which are just up. They'll settle, of course, but I want to see what's happening with Tech Mahindra. I want to see what's happening with LTTS. This morning, Tech Mahindra about 2% up. So far, of course, it'll settle. I want to look at what's happening with Infosys, LTT Tech, not bad. L&T Tech, not bad, actually. Just about flat. Infi is taking a bit of a knock. What would be your top IT call, if any, Srikanth?
See, at these levels, I would like to go with those stocks which are relatively performing than other stocks in the same basket. So in that particular space, if we consider that particular theory, then we like Coforge, which is around 1880, 1882 levels. Based on its technical formation, the stock can again move towards the levels of 2000, 2050. But in the near term, I am expecting this stock to move towards 2150 or 2200 sort of levels. So the upside is definitely there. Downside is very much limited. I don't think that the stock is going to sustain below the levels of 1800. So upside is nearly 70, 80 rupees on the downside. But on the high side, we can expect 200 to 300 rupees.
Okay. All right. It's time for the big brokerage call of the day. Srikanth, points well made on the IT pack. Let's talk about the Kotak Securities note on Thermax. It's got an ad rating on the stock, and Harsh joining you to tell you what the target price is and what the rationale is. Harsh?
Well, target price not much higher than what the current market price is, 3,800, but they certainly make a case because they've hiked the target price from 35 to 3,800 Kotak, and that obviously moves a couple of eyeballs for sure, given that it's a Kotak upgrade. Now, in that sense, FY25 was an active year, is what Kotak is saying in terms of products and innovation, and they're expecting Thermax to be an outperformer within the capital goods space. So what they're saying is industrial products saw the most launches, and that's where the most traction is going to be built up. Now, FY25 numbers, they've just broken this down. 77% of the revenue does a healthy double-digit EBIT margin. 14% of the revenue is where there's loss making, and that's been the drag with regard to the overall margin. And 9% has reported around a 6% EBIT margin. If that 14% were to turn around, you could well see margin accretion come through to the tune of 250 basis points overall. What they've therefore done is they've hiked the margin by 20 basis points, thereby increasing the target price as well. So that's where the bit of tweak is. Further, they're talking about growth as well. Industrial products is around 40% of the business where there's solid growth. Energy solutions also has solid growth, 22% of the business. Chemicals, 7% business has good growth as well, and biomass, 5% of the business, accumulating to around 75% of the business has good growth prospects going into FY26. They're penciling an EPS CAGR of 20% or over 20%, nearly 22%, FY25 to 28, due to that turnaround in the loss-making 14% revenue business. That's broadly the thesis which they are playing at. They've notched the multiple up a bit to 40 times, and they've rolled forward their estimates to June 2027. All of those tweaks leading to the target price hike to 3,800.
Okay, the stock is showing some buzz in early morning. I mean, some being relative. We're anyway seeing a fairly muted view this morning. Just want to pull up a Hind Zinc. They have clearance for mines, for new mines. So that might show some action over there. Ahead of results, 361 WAM, HDFC AMC, Wari Energies, you should look at some of those as well if they are showing any movement ahead of results. That's the big factor. Look at a Kalpataru projects, about 2,300 crores worth of orders is what they've announced just shortly before markets have opened. PNC Infra also. So news flow is moving stocks. Emcure Pharma buzzing this morning. Just on Kalpataru, Shrikant, is something you track. And if I were to ask you about what you're liking in this entire space, what would you say?
See, for Kalpataru, again, the case is more or less similar. It is finding resistance at higher levels, but at the same time, if we consider its overall long-term pattern, then one thing is very clear that the stock is heading higher eventually, and we may even see the levels of close to 1350, 1375. So it is in the range, but the strategy should be to buy on dips instead of buying at current levels.
With regards to where Kalpataru projects go, Shrikant, how are you looking at the entire pharma pack? Because lots of stocks which are buzzing, Glenmark, which is talking about another innovative drug that is in the pipeline. You have Sanofi as well as Emcure, two of them also buzzing in trade on the back of the partnership where they're revving up their distribution for one of Sanofi's products. And on the negative side, you're talking about tariffs as well. Whether they will come in or not is a secondary thing. But from charts, do you think there is that positivity emerging? There could be further breakouts, and if so, which would be your topics?
So we need to be very, very selective in from the pharma sector because most of these stocks are exhibiting some unusual sort of patterns. Like Lupin is down, Sun Pharma is going up, but there also we saw yesterday good amount of sell-off from the highs. So broadly, it's a mixed sort of signal the sector is exhibiting. But specifically, we like Divi's Laboratories. We like Laurus Lab based on its technical formation. We also like Glenmark Pharma, but right now it is very close to its resistance level and it rallied a lot from the lows. So at these levels, we need to be a little bit patient. Let the stock correct back to its important support levels. There we should look for taking some position. But we also like Biocon. And this time the Biocon has crossed its important level. It has been consolidating within the range of 390 and 350 on the downside. But this time it has crossed this level. So based on its formation, I am of the view that the stock is heading for the levels of 425 or 430. So we like Biocon also at current levels. And Dr. Reddy, I think there also we need to keep a close watch. Already the stock has fallen to its important support levels, and around this level the stock is forming some base building formation. So it's a buy at current levels, but with a positional.
Okay, so Dr. Reddy's is a buy at current levels. What about State Bank of India? You mentioned it briefly. State Bank of India looks like it might be the top Nifty gainer, at least if you look at the pre-open. We'll wait and see how it actually pans out. The QIP coming in. Are you liking SBI right now, Shrikant?
Yeah, we like State Bank of India, and see, the overall trend of the market is suggesting us that because the market is in the range, we are witnessing buying interest in those particular companies or banks or stocks where there is upside in terms of fundamentals. So, in brief, value buying is happening in the market, and State Bank is having deep upside from current levels. Currently, it is at 838. Fundamental targets is close to 900, 950. Based on technicals, also the stock has spent almost 3 to 3.5 months below the range of 820, 825, and now it has crossed this level on the back of specific news flow. But otherwise, also if we consider the entire space of PSU banks, then most of these stocks have crossed their immediate support resistance level. So based on that, on immediate basis, we can expect 855 levels for State Bank of India. But eventually, I am of the view that the stock is going to trade somewhere close to 900 levels.
Okay, State Bank of India, Parag bhai?
So basically, in my view, it is price to perfection from near-term perspective, I'm saying. Because see, right now it is trading at one-time book value. P is 7x.
No one can understand why they want to raise money.
No, because they want to increase the tier 1. Na? They were at 10.8, which is very low. So if you add this plus Yes Bank stake sale plus this year's profits, they'll inch closer to 12%, and that is required, right? Because if RBI wants to implement an ECL provisioning norm, largest bank of India, which is 25% market share, has to have 12% tier 1.
Yeah,
so
they have to make
and the fundraising
set the example.
Cannot be at the more timing was so perfect. You know, even if they would have 811, right? The price expected for such a large fundraise could have been lower, but this time the market has so much liquidity. In fact, I would say that based on what has happened in SBI, that price has not come down. In fact, has gone up. In spite of 25,000 crore fundraise, I think government should seriously look at OFS of many PSU stocks to raise money in a year where tax inflows are going to be a little bit slower because of this tariff thing going on and the whatever is going on. Plus, I think one thing which we need to discuss is possible GST cuts. I think that is coming. For many essential items, it will come. That will be another boost by government to, to stimulate growth.
Which segments are you expecting a cut to come in?
I would say that farm equipment, so tractor kind of thing, or many essential FMCG products also it can come. So wherever the tax rate is at 12%, they can bring it down to 5%.
So would a M&M or a Escorts be a play that you look at right
absolutely.
now and a good opportunity to buy?
We have actually bought M&M again to participate in this particular theme.
Okay. So interesting bets in terms of M&M as well as you're also talking about Escorts. In fact, Shrikant, a quick one with regards to auto, 2 sessions, very varied moves. You have Tesla that has already come in. We were talking about OEM competition. Any picks where charts are indicating strength?
Yeah, so we like Mahindra and Mahindra, which is around 3,120 or maybe 3,200 sort of levels. There also the stock has spent almost 6-7 months below the levels of 3,250. On the dismissal of that, I am expecting stock to move towards 3,500. Again, the stock is forming higher top, higher bottom sort of series, which is positive. Based on technicals, we also like Hero Motors, which is around 4,400. And there also, it has spent a lot of time, and now there is a news flow for the stock. The stock has spent a lot of time between 4,100 and 4,400. So the technical pattern is suggesting us that the stock is heading for at least 4,700, 4,800 sort of level, which is decent upside from current levels. Maruti is also holding above its important support levels since last almost 3-4 weeks. And based on its technical formation, the stock can move towards 13,000 again. So the stock has spent a lot of time close to this 12,000, 12,500 levels. Now the next rally could be somewhere close to 13,000 sort of level.
Shrikant,
broadly we are bullish on the auto stocks.
Shrikant, you got 10 seconds. What's the top pick is this morning before the start trade?
Yeah, I would like to go with Canara Bank. There, I'm specifically bullish. I'm expecting stock to move towards 123, 125 sort of level. And the overall formation, the overall broader formation is also quite bullish.
Okay.
So,
that was actually in 10 seconds, Shrikant. So well done on that. For the countdown right here, start of trade this Thursday morning is not half bad. I mean, you're seeing completely flat market as it has been most of the week. But let's see where it closes. I think results and your trade deals is going to be the focus. Nifty IT, keep an eye on Nifty IT. A lot of action here. Largely, it doesn't seem to be too positive. Dripping fast. About will it go to 0.5% down, 0.25% down right now as we move ahead? Your broader markets are looking okay. Mid cap 150 about 0.25% up. The small cap 250 also close to 0.25% up right now. Bank Nifty also completely flat. Let's pull up the heat map and you're likely to see a lot of action around results coming in. State Bank of India on that fundraise and price to perfection, as Parag Thakkar said just a short while ago, is your top gainer, just about 1% up. Hindalco, aluminum players will be in focus. You've had this big indicators come in from a large global company, Alcoa, which is looking at positive results. So keep an eye out on all aluminum players. 1% up on Hindalco. SBI also doing okay. Eicher not bad. In fact, it's a day of auto. Eicher, Tata Motors, M&M, all of them on that list and not doing too bad at all. Bajaj Auto also showing some buzz, but look, all of this is in relative terms. Your top gainer is less than 1% up. What is hurting? Tech Mahindra beat on margins, but Street not convinced that they can hit their 15% EBITDA margin target by FY27. They have good deal pipeline, but the conversion to revenues is a pain. Can they cut costs further? You might see a turnaround in Tech Mahindra through the day, but it's definitely opening weak. So is Wipro ahead of results. So blowing hot, blowing cold. Today is a day for IT stocks definitely to blow cold. TCS also down there. Axis Bank ahead of results, about 0.25% down. So no great shakes in terms of on the negative side. More green on the screen than red. So that's definitely a positive. But the buzzers this morning, definitely aluminum companies. State Bank of India, because of its fundraise, remains the top company in focus this morning, and that's definitely going to be the big one. I suppose much more action on the broader markets, Alex.
Yeah, as has been the case, Tamanna, in the recent past. Individual stocks reacting, but let's take a look at the broader markets. Decent gains at the start. Let's see if this builds through the session. 0.3% for the mid-cap index. About that same amount for the small-cap index as well. Let's also pull up the indices, the sectoral indices. And that should more or less reflect what you've seen on the Nifty 50. And that indeed is the case. More green on the screen, but big movers in the realty pack. And I'll be quite curious to find out what the constituents are doing. We'll do that in just a bit. But the auto pack doing reasonably well as well, up about 0.5% or so. And metal counters, we talked about Hindalco gaining a little bit of ground on the back of that Alcoa update. And I would assume that a few more companies as well will be doing reasonably well in the metal pack. PSU banks once again building on the gains from yesterday's session. Remember, yesterday the entire pack gained about 1.8%, and SBI is the top gainer, leading to a little bit of strength in the PSU banking pack as well. IT on the bottom of the screen is down about 0.2%, and that's because quite a few of those constituents, Nifty constituents as well, that are trading in the red. But let's take you through individual stocks that are moving this morning, and there are a few that are reacting quite sharply to earnings. And first, let's pull up Angel One, because there was a little bit of debate. I looked at the numbers and I thought, you know what, based on the quarterly update, it was not the best set of numbers. But there are a few views out there that are suggesting that perhaps it was not as bad as anticipated. So therefore, after having a pre-open session where it was lower by 2.5–3%, it has recovered that and it's trading more or less flat. It's not the best set of numbers. Perhaps things improve going forward for Angel One. LTTS, here you have a top line and margin miss in the first quarter, but the street is looking at it differently. Whereas Tech Mahindra had a better set of numbers and it's seeing selling pressure, LTTS is actually in the green, so you can never tell. There is Ixigo though, stood out as a very strong set of numbers, and it is indeed trading higher, but possibly the stock of the day so far, up about 10%. over 70% of revenue growth in the first quarter on the back of quite a bit of an improvement in the average transaction value. A few orders that have come through for Kalpataru projects. This came very close to the start of trade. It's up about 3% or thereabouts. PNC Infra as well, gaining quite a bit of ground. It has emerged as the lowest bidder for a 1,200 megawatt project, and it's gaining as much as 5% right now. Pharma in focus, there are quite a few stocks that we should talk about this morning. Glenmark Pharma on the back of its margin guidance, which is given as 23%, up about 2%. Zydus Life, no observations is good news for its Gujarat facility, and it's up about 0.8%. Emcure has got an agreement with Sanofi, which should improve its distribution. It's up about 1.3%. And Lupin up about 0.7% as well. A couple of brokerage calls. Thermax was the big brokerage call of the day. You have Kotak Securities that has an ad rating on the stock. They have quite a few interesting notes that they've made, and I'm sure that you listened to that when we got you that update at 9:05. The stock is up as much as 3.2%. And finally, ITC Hotels. This is a stock that gained very substantially on the back of numbers yesterday, about 5% towards the end of trade. Perhaps to a certain extent a little bit of profit taking, but a lot of brokerages coming through and raising their target price to 270 on the back of a very strong set of numbers. So here are some very interesting moves. For me, Ixigo stands out as the winner today.
Absolutely. A 10% up move in terms of Ixigo is something that the street is watching out for. But on the back of earnings, JTL India, a weak set of numbers that have been reported. So that's one stock that you should be watching out for. Tilaknagar Industries also has been having a strong run over the last couple of trading sessions. And now you have a ruling from the Bombay High Court, which has been in favor of Tilaknagar Industries. And this is with regards to its proprietary rights and the trademarks of Mansion House and Savoy Club. You're seeing some up move in terms of Tilaknagar Industries as well. Edelweiss Financial and Sammaan Capital are the ones which are moving from that capital market space as well. Edelweiss now cooling off slightly. Sammaan Capital 3% up move. Aegis Vopak is also seeing a strong move in terms of today's day of trade. So watch out for a Aegis Logistics 3.5% up move there. AWL Agribusiness reported numbers early on this week. The uptick does continue with regards to AWL Agri as well. Wari Renewables is another one which is seeing a good move, and a PNC Infra on the back of the order win, on the back of the tender, is seeing some strong moves. So strong names on these on this front. Another stock which will be reporting numbers today is Jio Financial Services, and Reliance Industries will be reporting numbers tomorrow. Parag bhai, you have coverage on both these counters. How are you looking at the numbers and the expectation?
No, so I would say that Reliance has corrected nicely from 1550 levels to say 1480, so market is going into the result with a muted expectations. In my view, the refining was very good in April, May, June, and retail was decent. Up till now, we have not seen very good updates from large cap retail companies like Trent. We saw a little bit of disappointment in the AGM. Then the Avenue Superpart numbers were also not that great. But Reliance should do relatively better in my view, because they are almost complete from their whatever strategy changes they had to make on the retail side. Better numbers will come after, I would say, festive season. The starting valuation today in Reliance is not that expensive. As I said in DLF, there are very few pockets, or Wipro, there are very few pockets where valuations are in your favor. Otherwise, it is just because of strong macro, very liquidity, high liquidity, and hope that valuations have just run up. Reliance, 20 lakh crore market cap, 1,40,000 crore cash profit, so 7% cash flow yield. And telecom business is annuity cash flow business, which is continuing to grow. So what you have to see is refining and retail, and in my view, in this quarter, they should do relatively better.
A lot of people were buying it in last year as well, before it went through that lull, because of the anticipation of value unlocking. But there's no word on that, Parag bhai. So do you factor that in?
I don't factor that
at all.
Because see, if you see Bharti, which has around 29 crore subscribers, and of course the total EBITDA is around 1 lakh crore. Now Bharti's EVS is 13 lakh crores. Now Reliance, and that includes Africa business of Bharti. In Reliance, if you have say 47 crore subscribers and you have a domestic EBITDA of 75 to 80,000 crores, anyways market will value Reliance Jio also at say about 10 lakh crores, 11 lakh crores. Right. So what is it? So I don't actually factor in any IPO kind of. If at all it happens, and when if liquidity is so great, and there is some pop on the valuation which analyst has already modeled today, it will be a bonus.
Okay. Okay, so let's talk about a few of the movers from the metal pack, and I wanted to pull that up and see what was moving. Also the realty pack. If we can pull up the constituents first, actually, of the realty pack. Okay, we got metals. Let's talk about that. Nalco is up about 1.4% or so. You have Welspun that's up and about. Most of the constituents actually gaining ground. Did you see the Alcoa update? And what do you make of the trends that would be suggested? Of course, there is one outlook that they've revised downwards as well. Was that the revenue guidance? I can't remember exactly.
I'll tell you. If from 4th June, any aluminium which comes from Canada into US is attracting 50% tariff.
Yes.
Right. And for example, Hindalco's raw material, if you see, 60% is scrap. Right. Yeah. So 30% is around is imported from Canada.
Right.
So the Hindalco has also said that at 25% duty, the quarterly impact will be $40 million. So at 50%, definitely the impact will be $80 million.
Sure.
So you, for example, last year, so Novelis EBITDA was $2 billion. So you have to remove $300 million from that, which is 14%, and see the numbers. I hold Hindalco in my portfolio. I will continue to buy on dips. My view is that it is 9p stock with a trailing basis. 9p stock with price to book value of 1x with 15% ROE. Market cap by cash profit, which I see, which is very attractive. The cash profit yield is around 13%. So the starting point is good. There is a headwind of this Canada tariff on aluminium, which I think either tariff can come down, which is a hopeful thinking, wishful thinking, or they will figure out. For example, Alcoa has said that whatever Canadian aluminium they were importing, that they are processing somewhere else and sending it to some other markets like Europe.
Sure.
To mitigate this impact of 50% tariff on Canada aluminium.
Yeah. So that automatically the raw material impact that people were talking about goes away.
They'll have to do something, because if this 50% tariff continues, then the prices of aluminium in US goes up so dramatically that definitely it will affect
the problem, Parag Bhai, is that no one knows whether these tariffs are announcements, their social media posts, or they're actually, everything is coming with deadlines, right?
Yeah. So here, from 4 June, under Section 232, the tariff has been already implemented. So the tariff is going on from 4th June. Now, whether it will be withdrawn is a question.
Is a second question. But you know, one space where there's a relatively more clarity and which is buzzing, I think the top buzzer of the day, of the morning is realty stocks. And look at the Nifty realty. You know, you're seeing at least 10 of the 11 which are in the green. Prestige is leading that pack. I think you should look at Brigade as well. Phoenix Mills, Godrej Properties. Godrej Properties has a foray into a new market, and that is what is working for realty stocks. Shrikant, any of these that are on your radar?
Yeah, specifically we like Prestige, which is around some 1750, 1765 sort of levels. And here also we saw a very spectacular rally from the lows. It was around 1050 levels. From there all the way it went to 1700 levels. Now it has been consolidating since last 1 month, and it is very close to its breakout level. So based on its formation, there could be a possibility of hitting 1900, which was its immediate highest level. So yes, we like Prestige. We also like Lodha Developers. There also we are bullish. It is around 1445. There we have a target of 1520, 1530. And we also like DLF. There also we see the stock is like already corrected to its important support levels. And the next level to watch out for would be 920 or 25. So yes, we like real estate stocks, but in that specifically we like DLF, Prestige, as well as Lodha Developers.
Okay, DLF, Prestige and Lodha are the three which are in focus. All right, thank you so much, Shrikant, for joining us today. Parag Bhai, thank you so much. A pleasure as always to have you in our studios, especially. SBI in focus. SBI is grabbing headlines as it kicks off a record 25,000 crore fundraise to institutional investors. They're selling shares. It's the biggest equity fundraise by any Indian company. Now, before we bring in Rohan Mandora of Equirus Securities to speak on this, let's go to Harsh for More details on this landmark issue, Harsh.
Well, yes, so of course it's a large fundraise, and that fundraise, what it does is it provides ammunition to SBI's already very, very strong 22,000 branch network that they have to distribute loans at a time when the repo rate falls around 100 basis points thereabouts. So all of that likely to aid loan growth, and this provides that vital ammunition for it to go out and lend and grow as well. So that's going to hold the key. But the pricing isn't too bad either, frankly, for such a large size. To price it at 811 rupees a piece with a possible 40 rupee differential, because that 5% bandwidth given to management. But ideally at 811, given the kind of given the price that we've seen in terms of the stock price and the wide range in which it trades in for the moment around the 800 mark, doesn't look bad at all in that sense. And even the price to book doesn't look too bad at around 1.4 times 1 year forward. It's a decent price to book as well for existing holders as well as for new investors. And therefore, with the promise of growth, the largest bank in the country, the safety net that SBI already has, and then you have a fundraise of this size at this value, doesn't look bad at all.
Okay. Thank you so much for that, Harsh. Rohan joins us this morning. Rohan Mandora, Associate Director at Equirus Securities. Mr. Mandora, thank you so much for speaking with us. Just what are you making of the fundraise? Do you see it as a positive? Of course, it's a requirement they have for the capital adequacy ratio, but the way it's been received is what is heartening?
Yeah, thanks for having me on the show. I think from a near-term growth perspective, they are adequately capitalized. They are having 15% plus ROEs growing at 12-13%. So no near-term requirement of capital. But I think this is, as you indicated, good from a medium-term perspective, because if India AS comes in, that thing would, a capital buffer would be needed for that migration. Plus, whenever the growth uptick happens at a systemic level, SBI would be favorably placed with this capital raise that has happened.
Okay.
Capital raise adds around
on.
65 basis point to the tier 1 capital, CET1 capital of the bank.
Okay. So, Mr. Mandora, we're not, in totality, you're talking about almost 45,000 crores, which is coming in through equity and debt. 25,000 crores is the QIP that we're talking about. 20,000 is the debt number that came out yesterday. Taking this aspect into consideration, if it's shoring up their tier 1, what's the direct impact that you see in terms of financials?
So from the equity raise that they're doing, we would expect roughly 4 bips kind of a NIM expansion that can happen in the current environment. From the bond raise, depending on the timing, bonds are typically on a higher cost. So there could be some marginal drag on NIMs. But we would also see in the second half, so by the time the bond issuance happens, in the second half, we would see the benefits of CRR coming in. So at the margin, that thing should be neutral depending on the bond timing issuance. So in the near term, 4 bips improvement in Q2 is what we can expect. After factoring the impacts on the repo cuts that would happen. So Q1Q, there would still be decline, but this would offset the decline by 4 basis points.
Rohan, what would be the call on public sector banks right now, on SBI specifically? The fundraise, of course, is the big factor. But the other point is, now, are we going to be seeing some leeway on foreign entities coming into the Indian banking system? There are so many perspectives there. What is the outlook turning out to be on PSU banks right now with all of this in place right now?
So I think from an investor's standpoint, I would say that PSU banks are delivering healthy ROEs of 15 to 18%. Even if they don't re-rate, that is the kind of compounding that we can expect in these names. There's talk about increasing the foreign holding limit for PSUs as well as for strategic investors in banking system, increasing into 15 to 25. So that's under deliberation. If that happens in the near term, immediately we don't see any impact on the PSU pack because the FII holding is around 10 to 12% for most of the PSU names. If the strategic investor is permitted, then maybe certain mid-sized or small-sized banks may benefit. If some strategic investor, if some strategic bank is wanting to participate in the India growth story, like we are seeing in the case of Yes Bank, where another bank is looking to acquire stake.
Mr. Mandora, on the back of the QIP, what is the kind of demand that you expect from domestic funds and hedge funds? Anything that you're picking up in terms of your conversation so far?
So whatever news flows I have in the morning, there's almost 3x demand that has come in on the QIP. I am not sure because this is just the WhatsApp message that I've gone through. And we are not a banker, so we'll not have the exact numbers. But the demand seems to be pretty healthy.
Okay. And in terms of whether demand is healthy as well for an SBI, how would you place the other PSU banks from a valuation perspective? Because recently, the kind of run-up that you've seen in terms of the PSU banking space has been absolutely spectacular in comparison to what's happening with the private banking space. So, your view and your top pick in this sector?
So on the PSU pack, I think the recent move has been supported by the fact that these banks would see lower NIM compression in 1Q vis-a-vis private banks because they have the benefit of MCLR repricing. Most of the PSU banks have increased MCLR between 5 to 15 basis points in the last 6 months, whereas most of the large banks, ICICI, HDFC, Axis, have not done any meaningful action on MCLR in the last 1 year till March. So obviously in 1Q, private banks have reduced and PSUs have reduced very limited. So on the NIMs, we would expect that sequentially PSU banks should outperform, and that's where the recent move has happened. In terms of the pecking order among the PSU pack, we believe that SBI is our preferred pick. We think that it is one of the best banks delivering growth on retail, healthy asset quality trends on retail. And in case any uptick happens in the corporate credit cycle, they would be the first one to participate in that. So that way also, we think that SBI remains a well-placed bank. And given the valuation differential between SBI and the mid-sized PSUs, we think that there's a reasonable comfort in investing in SBI at this price points.
Okay. Just your top PSU pick, Rohan, before we let you go?
SBI.
Sorry?
SBI.
SBI. Okay. And does this list start and finish from there?
No. So see, if you were to look at beyond that, among the mid-sized ones, Bank of Maharashtra has been delivering healthy numbers. 20% kind of an ROE profile is what they are delivering. They were one of the banks which were under PCA, and after that, once they emerged in the last 4 years, their performance has been commendable. So for somebody who wants to take a bet on mid-sized PSU banks, then Bank of Maharashtra can be looked at. Indian Bank is another name which can be evaluated in that space.
Okay. Thank you so much for speaking with us, Rohan Mandora. They're talking about State Bank of India, that QIP in focus. I just want to pull up that stock very quickly, just dip mildly into the red. But we are hearing that there is quite a bit of appetite for that QIP. 25,000 crore rupees is the largest ever fundraise. The other set of companies that you should watch out for is aluminum stocks that are going to be in focus. Nalco, Hindalco and Vedanta among them. Look at some of those prices there. So Alco's June quarter earnings is what is the trigger. So Alcoa is the world's 8th largest producer of aluminum, and they have talked about a revenue beat. Estimates slightly. EBITDA is in line. Earnings, in terms of earnings, 2025 volume guidance has changed. Aluminum shipment guidance has been lowered. In the alumina segment production is from 9.5 to 9.7 million tons. That's unchanged. They've maintained the guidance for alumina shipments as well, between 13.1 to 13.3 MNT. In terms of quarterly earnings and segments, in the aluminum segment, shipment guidance has been lowered. It will remain unchanged between 2.3 to 2.5 MNT. Aluminum shipments guidance is 2.5 to 2.6. So what led to the reduction in guidance is because their San Ciprian smelter production cut is due to delayed restart. But nevertheless, the impact seems to be fairly positive. I think the other big stock which is in focus this morning is Ixigo. On the back of strong earnings, Mahima is joining us with more details.
Right, so absolutely, it's been a very strong quarter for Ixigo overall, and this is on the back of revenue growth that has been on the back of good transaction value growth. In terms of the gross transaction value, that expanded 55%. This is despite of this quarter facing a lot of headwinds. Margins have contracted a tad bit, but this is because of accelerated growth in terms of investments that has led to this kind of dip in the contribution margin. margins. And lastly, net profit has also seen a significant amount of growth in terms of percentage wise. It's seen a growth of around 29% on YOY basis, and this is on the back of strong top line growth. Now, in terms of numbers, revenue up 73%, EBITDA up 52%, net profit up 29% almost. In terms of the segmental performance, both flight and bus segments saw a gross transaction value growth of almost 81% YOY. The flight segment has seen robust passenger segment growth, and this is in despite of the industry headwinds that the entire airline industry has seen. In terms of train, the gross transaction value was up almost 30%, and train in terms of the train business, that has continued to consolidate as its dominant position in the overall train market as well. In terms of what brokerages are reading through with these earnings, JM Financial has maintained buy but revised the target price to 220. They're expecting ixigo to continue to deliver above market growth in the near term, and they're saying that the growth on the back of effective cross-selling of services is something that ixigo does the best. And in terms of focus, their immense focus is on superior customer experience and robust traction, and that is something that will augur growth in the near term as well. So this is the overall view as to what's happened with ixigo earnings, and of course what brokerages are saying.
Okay, thank you for that, Mahima. We'll take a very short break. We're coming right back with a lot more action. We're speaking about the real estate market. Is the Mumbai real estate market set for a shake-up after DLF's re-entry? Will DLF be second time lucky with its Mumbai foray? All of that after this very short break. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Welcome back. You're watching India Market Open. Clearly a somber day of trade, as always, is what we've started on with. But real estate, that's the space to look at in terms of today's session, where you have real estate giant DLF, who's re-entering the Mumbai market with its first premium residential project, which is the West Park Phase 1 in partnership with Trident Realty. Anushi brings in more details. Anushi, a re-entry in the Indian market for DLF. What are the details that you're picking up and anything that analysts are telling you?
Certainly, all eyes would be on the real estate sector, especially considering that DLF is one of the biggest in the space, and it is re-entering the Mumbai market again. And this company is launching it with the West Park Phase 1 project that we are seeing. This is in partnership with Trident Realty as specified. Now, what this first phase included includes 4 towers, which will be coming in picture, and this would be with 416 flats. Built-up area is something of 57,510 square feet that we are looking at. And if we see the overall potential of this, again, it is a significant one, considering that the ticket size in the range of 6 to 9 crore each. Expected completion by June 32 that we are looking at. The timeline for the second phase is something that we should be focusing on going forward, on what is the outlook over there. Now, this project will be developed in 2 phases, so that's the kind of outlook that we are building in for this current project that we are looking at. But even if you see the earlier history with MMR region, this is DLF's re-entry after almost 2 decades that we are looking at. Firstly, it had acquired a 17-acre mill land plot for 700 crore in Lower Parel in 2005, but because of global financial crisis in 2008 and even the debt picture back then, the company had to sell this land parcel to improve its balance sheet to Lodha developers in 2012 for a consideration of 2,700 crore. So it's a strategic re-entry that we are looking at in MMR region to capture on the premium residential space that we are looking at. Now, Kotak expects about 2,000 to 2,500 crore of pre-sales coming in from this project, which is considerably smaller considering the other projects that we have looked at for DLF, especially seeing its dominance in the NCR region especially. If we look at the Privana North project, that had almost reached the 11,000 crore of sales mark in this first quarter itself, which led them to almost achieving 50% of this guidance in just this 1 quarter itself. If you are seeing the timeline also in terms of how the pre-sales have shaped up so far, we are looking at 21,000 crore of mark, and this is the 2025 picture that we are building in. The management does expect this range to remain. They are seeing about 20 to 22,000 crore of pre-sales for the current year as well. So this number is something that we should be watching out forward as well, because the management is focusing on keeping this 20,000 crore of mark going forward. In terms of where the launch pipeline is concerned, 17,000 crore is the mark that we are looking at. This includes the Privana North project along with Mumbai and Goa project, which will be coming up in the second half. Dahlias is something we should be watching out for, considering it's a big ticket size order project that we are seeing. But this is the overall picture that we are building for DLF. Certainly an interesting launch that we are looking at, and it's re-entry in the MMR region.
You track this space so closely, Anushi. So this is one space. MMR region and luxury is already very, very saturated.
Yes.
How do you see the comparative impact of DLF coming in?
So DLF impact in this, there is still, if you look at the overall luxury space, the demand continues to be stronger, as just seen by how the other segments are doing. That's the affordable and mid segment. Now, it's not the first company which is entering in this luxury segment that we are seeing. Even Prestige Estates, which has a most south dominance, has entered the space with a big project launch. And DLF, it currently is testing waters in this. Even if you look at the unsold inventory levels, that in Mumbai continues to remain on healthier sides, but it's the outlook going forward which would be interesting, considering that there are other operational metrics also that we have to consider. That is your price appreciations and how the MMR region is different from how your NCR geography works in terms of where the real estate space is concerned. So something definitely early stage for DLF to come out with a launch pipeline, but interesting to still watch out for.
And I mean, that's interesting. And the other aspect, Tamanna, thank you, Anushi, for that we need to consider is the kind of launches that have happened in the first quarter itself. You have DLF, which already launched Privana in the north, which is in Gurugram, 11,000 crore. That was the size of the project. Oberoi, in MMR, you're talking about Goregaon, 1,000 crore project that has come in. Prestige Indirapuram, a 3,000 crore project, and Godrej Properties in Bangalore, a 2,000 crore project. So all of them have been focusing on large projects. The question is, analysts are betting big on affordable housing right now. And none of these players have even re-looked at affordable housing. So that gap between analysts betting big on affordable housing versus the players really picking up pace, that's where the gap is going to be now.
Just You talked about DLF's Gurgaon project. Now, the thing with luxury real estate also is, and of course, a lot of these companies are trying to go pan-India, but it's very regional.
Correct.
DLF knows the Gurugram market. They are the boss of the Gurugram market. Bombay is or MMR is a different beast. Let me get the view from Santosh Kumar on this. He's Vice Chairman at Anurag Property Consultants. Santosh, very good morning to you. What do you make of the DLF launch or relaunch or DLF coming into Mumbai?
Well, so this is the second attempt after exiting the market in 2012 for DLF when they sold their, major mill and holding in Lower Parel. While Mumbai luxury market is highly competitive, there are hundreds of new homes are in the same micro market. DLF is betting on quality, execution strength, and its strong legacy in the premium segment. They have been a boss of Gurgaon market and they have done great job. But this is going to be a very exciting journey for DLF. I do hope, their first phase, which they are expected to generate around 2,500 crores of sale from these 400 odd units. I definitely feel this is going to be a great journey for them. They're also depending on, it's not a one-off move. It's a part of their broader strategy of having a very strong brand, basically targeting Mumbai only for very strong pricing power and brand equity. With the market formalizing post the RERA, I think there is a level fielding game for DLF along with many of the very strong Mumbai player as well as a national player to thrive in this Mumbai market.
Hira, on this side, you're talking about the Mumbai market where the unsold luxury stock is up really 36% basis your report. And I think this is the first time since 2022 where your unsold stock in the luxury segment has seen a yearly increase. If you have to take that aspect into consideration, look at a DLF who's looking to sell in that range of 6.5 to 9 crores. Do you think there could be a mismatch?
I don't think so. It is most of these unsold inventories are peripherals of the Mumbai, some of the suburbs, I would say. But if you look at, Mumbai have been a very lucrative real estate market. It contributes around 31% of the total housing sales in India in the last 6 months. If you look at some of the supplies which has come up in across India, 31% came in MMR region, and ticket prices are also very attractive. And if you look at the prime areas of Mumbai, the prices have been ranging around 45,000 to 1.25 lakhs per square feet. So it's an attractive market primarily because it is a constrained supply driving demand. Primarily because the land in Mumbai is scarcity. There is a quality developers in Mumbai, those who develop, and also it is one of the busiest economic activities. It is a financial hub for many of the end users. So with Mumbai has seen limited fresh supply, especially in some of the key micro markets like South Mumbai, Bandra, Powai. I think there is a supply-demand mismatch. If the price is going to be attractive and margin going to be attractive, I definitely feel DLF will see the success in the coming launch.
Santosh, let's just talk about the specific property that DLF is looking at and what our research analyst who tracks it, Anush, is telling us that they're looking at a range which can go from 6.5 crores up to 9 crores in the Andheri western suburb. Are you seeing that kind of appetite right now? And is there no supply-demand mismatch there?
I don't think there's a huge amount of demand is there. Whenever DLF coming to any of the new region, they do groundwork very well, and they have been working or heating up the market for the last 8 months, I would say. And 6 to 9 crores is not that it is a very high price. I think looking at the demand, I think definitely, DLF always brings in premium wherever they go because of their track record, because of their the amenities which they provide in the development. I do believe this 6 to 9 crores will be a very attractive price for the Mumbai customers.
Santosh, so if you have to look at the other key players from a Lodha to a Oberoi, Godrej, Sunteck, these are the major ones in the MMR region. As compared to these and the pricing that they demand in a similar region, where would you place DLF? On the expensive side, at par or reasonable?
I think they are at par with many of the other developers. Especially, all the names you mentioned, they are very quality and luxury. I would say ultra luxury developers, those who have developed many of the similar kind of product in Mumbai market, and they are having a very strong hold in that market. So DLF is also entering, and they're very cautious on the price, and it's going to be a very attractive and at par with the prevailing price in the Andheri market.
Thank you so much, Santosh Kumar, their Vice Chairman at Anurag Property Consultants, talking about DLF's big entry that is coming in. I just want to pull up the Bharti Airtel stock, and I don't know if this is going to be too much of a stock impact, but I thought this was an important story. They've inked a pact with Perplexity to offer a 12-month Perplexity Pro subscription for free. The stock mildly up, but just as a product bundling. Now, to bundle up an LLM, an AI chatbot, so to say, with your subscription is going to be the next big thing.
Yeah, because initially it started with OTT platforms.
Yeah.
And I think this is the next phase.
I think it's an important leg. It's an important leg up that Bharti Airtel has done. And Perplexity Pro, I mean, those who I know who have subscribed to it, is a really great product. Right now you have all of these LLMs, whether it's ChatGPT or Grok, you get the basic version for free. This is now Perplexity Pro, and we'll try and get Aishwarya up on this in just a bit. She's got that story. We'll figure out what the impact is, but I think this is one space to watch as far as telecom is concerned. Definitely a new one for value-added services to customers. All right, focus on the primary market. SmartWorks is all set to make its D Street debut. I think you have the pre-open rates for SmartWorks. We should pull that up. It's looking like it's going to open at a premium. It had decent oversubscription, Sajid, and 7% up is what can be expected.
Yeah, I think the pre-open rates are as per expected lines. The IPO, which closed on 14th, was priced at 407, and as per the final subscription, which was say 13 times oversubscribed, there was a market premium of really between 20 to 25 rupees on opening, and that's what it is there. To give you a perspective, it's a second co-working space to list in the market after Office. It had a top line of nearly 1370 crores and it's a loss making for the last 3 years. It's a very different model from what Office operates. It's little asset heavy in that nature. The total IPO was 582 crores, which includes 445 crores of fresh issue and 137.6 crores of OFS. Going forward, they're expecting that in FY26 and 27 they may turn profitable, given the fact that there are many most of the projects will be more operational by the end of FY26. So yes, the IPO is opening at around 6 to 7%. That's what the street expected.
Company you've looked at closely, Sajid, what's the quick SWOT? It's just a couple of minutes, and we've got those live visuals up for you also. Listing day, always exciting. Because even Office has gone through its ups and downs. We hear that you're going to see WeWorks perhaps also come in with an IPO. Where does a SmartWorks sit in comparison?
If you look at the models between what Office is operating and SmartWorks is operating, it basically is offering its services to small and medium enterprises who are operating in multi-cities. So suppose an entity wants 300 seats across 10 or 15 cities, they will give seats across those cities. So that's the model they are working, targeting specifically small and medium enterprises. It is looking little expensive because the company has been loss making for the last 3 years from that point of view, and the asset model is little asset heavy in that sense because they incur all the expenses. Office on the other hand has a little lighter model where they join hands with the developer and and they share the revenue in some proportion. So in some cases the entire fitments are done already and then they move in and it's a revenue share kind of model there. But SmartWorks they develop the entire property and then they give it out. So from that point of view, there's the model difference which is there. It's loss making. That's the only thing which is a negative which is coming in, and the IPO was priced slightly expensive given the fact that it's not profitable there. So the tenure is around 45 months. So from that point of view, the expected opening of 6 to 7% premium was expected.
10, 9, 8, 7,
yeah, I just love it from Dadaji to baby. Everyone is in that frame. Yeah. There you go. All right, let's see what the opening rates are. Not bad at all. About 9.5%, 10% up. Gone are the days when you used to see rocket-like opening premiums. But all things considered, 10% up on SmartWorks is not bad at all. Thank you so much for that, Sajid. So SmartWorks co-working, not yet become profitable, but focus. The differential is they have a focus on SME companies in tier 2, tier 3 cities versus WeWorks or even an office for that matter.
And with this, just pick up our office-based solutions.
Yeah.
That is also seeing some bit of a positive reaction on the back of a peer, which is getting listed at the day's highest levels. In fact, we will be speaking to the management today as well in terms of office space. But an interesting move, an interesting space. The fundamental over here is that not many have worked. After COVID, that trend has died down to some extent, and that has only been one of the major concerns that people have looked at. But a 10% up move, strong one.
I think that feeling that co-working spaces will not become less relevant after COVID has proven to be very, very wrong. People need it. They've realized the economies of scales, and that has worked. All right, a lot of breaking news this morning, so we're just going to address everything as quickly as we can. I'm going to go across to Aishwarya now, and we talked about a few minutes ago this pact that Airtel has with Perplexity. They're going to offer 12-month Perplexity Pro subscription for free. How much does this subscription cost otherwise, Aishwarya, and what is the strategy here?
Well, it seems like AI tools is picking up steam, and Bharti Airtel offering it to its consumers might be an enticing offer. Otherwise, if you go for Perplexity Pro as an AI tool, if you want to purchase it, it's available at about 17,000 rupees per year basis, and this could be an enticing offer. Like I mentioned, this is going to be available for the next 12 months for those who are Airtel consumers. Now, search engine tools to create videos, images, etc. is something that millennials, Gen Z, and a lot of others are using it to research as well. As compared to other top 5 in the market that you see, Gemini, Claude Pro, ChatGPT, and ChatGPT OpenAI Plus, all of them are priced, if you go for a purchase, anywhere between 20,000 to 30,000 rupees. Perplexity otherwise is available for 17,000. So good deal there if you are a Bharti Airtel subscriber.
Perplexity for a year for a 12-month subscription is 17,000 bucks.
Yes, 17,000 for a year, and that's available for free if you are a Bharti Airtel consumer. So a good deal there. Otherwise as well, you could use this Pro version to create a whole lot of content, starting from images to videos and even research-backed different tools that it provides you. So that's the update so far, and first ever partnership with an Indian telecom company.
Yes. So that's their India entry. So that's very, very interesting. Bharti Airtel stock is flat, but it's a big move to give a 12-month Perplexity Pro subscription for free. That subscription costs 17,000 rupees otherwise. So look at that as well. All right, our details coming in on the SBI fundraise, and see if we can pull that up on screen as well. We're learning that investor interest far exceeds 75,000 crore rupees for a 25,000 crore rupee fundraise. I mean, it's just insane. That's the only word I have for it. Foreign investors are cutting large checks for the SBI QIP is what we're learning. Domestic investors like major mutual funds and insurance companies are participating. I mean, Vishy, who says there's any dearth of liquidity in the Indian markets?
Yeah, that's right. So while your domestic investors are pouring in and they're obviously putting in large chunks of money, what we're hearing is insurance companies like your LIC, of course, they'll be at the forefront to support their distant cousin, SBI. But apart from that, there'll be a lot of other domestic mutual funds and insurance companies who are coming in. What is surprising and what has surprised a lot of people within this fundraising process is the amount of money that the foreign investors are pouring in. You know, checks are ranging from like $400 million to $700 million. And that's something that is major for an Indian lender going abroad and seeking funds. What we are understanding is that these foreign investors seem to suggest that we were waiting for a large ticket QIP to come into the market so that we can come in and invest in it. And that's what they've gotten with SBI's 25,000 crore QIP. As of now, country's largest qualified institutional placement that has happened. The demand, from what we understand, is far exceeding the 75,000 crore mark. That 75,000 crore is already 3 times of the actual investment size. This might be significantly larger. That's what we're learning.
You know, it just tells me, of course, SBI is SBI. It has a giant share in the Indian banking space. But this is something that we were discussing earlier as well, Vishy, that this is a great time for the government, which owns stakes in these very valuable public sector banks, to go in for OFS and mop up some capital there, mop up some liquidity there.
So SBI is the bellwether, right? So whatever happens there, that's essentially sort of an indicator of what is going to happen for the rest of the public sector banking piece. So if SBI is able to gain so much interest from foreign investors and they're coming in with large checks, then that gives a lot of confidence for your other domestic public sector banks to come out to the market and start demanding money at reasonable valuations. You know, even with the current discount, the pricing for the SBI QIP is very, very competitive. So therefore, your other banks and the government looking to sell its stake in the other banks through an OFS will get that, will use that as a base and then demand whatever premium that they want to get on their shareholding at this point.
Okay. All right. So that's exciting. 25,000 crore rupees was the size of the fundraise. All right, the largest ever for any Indian company. 75,000 crore rupees is the kind of capital chasing it. Look at the appetite there, including from foreign investors. So it tells you a lot about the kind of excitement about it. Thank you so much for that, Vishwanath Nair. We're taking a very short break. Don't go anywhere, because when we come back, we're joined by Sameer Arora, founder and fund manager at Helios Capital. We're going to have a detailed conversation with him on all things market. Stay tuned for that and more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores.
Welcome back. You're watching India Market Open, and markets frankly not doing too much this morning. It's all about stock specific. It's kind of a dull day. Unless if you're SBI, then that's a different story altogether. However, we're joined now by Sameer Arora, founder and fund manager at Helios Capital. We always look forward to these conversations with Sameer. He speaks his mind and has the best commentary ever on what's happening in the markets. Plus, I love your glasses this morning, Sameer. It's matching your jacket. So, okay, let's start with the kind of appetite we've seen for State Bank of India. The reason I'm starting the conversation with that is because if you just look at fund flows, and we tend to look at fund flow data, foreign flow data, it's quite dismal. But when there is paper of value, clearly the appetite is very much there. Is that the problem? Not enough value being spotted right now in the Indian markets?
No. It is, of course, the fact that this is a big size issue and the stock is relatively cheap. By the way, we own it since June 20. And so that could be one reason. But I think the overall market flow dynamics have already changed. Because since April, May, when people have got, even though the US market is doing well, the world seems to have come to a conclusion that they have to diversify away from US a little bit. You know, according to the MSCI benchmarks, broadly 68-70% of the world's money goes to US. And that is no longer accepted as much by the world. A, because the rest of the world is outperforming US this year. The currency, that is the dollar, has depreciated by nearly 9.5-10% against the DXY. And in general, people feel that that is too much, the fact that you have 70% in the US, which in the past, that means say 10-15 years ago, would have been in the 50% range. Since then, the US market outperformed a lot and sucked in so much money from the rest of the world. I read recently and I actually invested in that same ETF, which is the World ex-US ETF, saying that the World ex-US ETF is raising billions of dollars, which previously they were not getting. The ETF had been around for long. So there is this little bit of moving away from US. And if that happens and continues, then because US is 70 and the rest of the world is 30 or 68 or whatever, and you reduce 3-4% from US, we mean all collectively, and that 3-4% goes to the 30% base, everybody gets more money. And in that, India has a strong case. So India money, I think the overhang of selling has already gone away 1 or 2 months ago, according to me.
You know,
long story. That is a short story. Then you will get more of these. Of course, SBI itself was attractive because it looks visually cheap, and it is cheap, and it is big, and it's easier for people to put 500 million. But if you give them $350 million deals, they will also get subscribed now. I think because the direction has changed.
The direction has changed. So, you know, I'm wondering whether you are waiting with bated breath to see the India-US trade deal or not. It's sometimes anticipation becomes so long, it kills the buzz.
That's why it's gone. Now, basically, you can see from the hints, according to me, it'll be between 15 and 20%.
Yeah.
So it won't be the 10 that we initially thought, but we will all view it as positive by looking at relatively what has happened to other countries, including China. So China is at 35 new, plus it had the old 20%. Let's ignore that. Okay, it's been there from previous Trump regime. So the new one for China is currently 10 plus 25 for fentanyl. So that is one competitor. Second, we can say for textiles is that Bangladesh, more than us, Sri Lanka, more than Vietnam, 20. So if you are in the 15-20% range, you can say we are not we have got some advantage over some of the guys, but I don't think we're getting to 10 the way this conversation and the comments seem to be coming. But I'm saying beyond a point, what will we get excited about except to say that relatively this advantage is there for some of our exports like textiles and here and there.
Right. Sameer, good morning. Hira this side. So would it be right to say that the interest with regards to US is now shifting away? And if so, do you see that coming back to India in a strong fashion by the FIIs?
No, first of all, it is not shifting away because that is too big a statement because all the progress is done there even now. But what I'm saying is this 70% looks a bit too much. Now you could have said that last year at 68% or whatever it was last year. But then at some point the world realizes because maybe they are upset with US. Maybe the sovereign funds are upset. Maybe some large guys are upset. Individuals may be upset. Their companies might be upset. So you say, why do I put so much? And also, it looks beyond a point unsustainable. But even if you think that it was not, but just the fact that the rest of the world this year, that means MSCI World has outperformed S&P. So that also then makes people who were always believing that this US exceptionalism is good, but it does not mean taking 70% of the world's money with 25% GDP. So I'm saying we don't know how far it can be, but it is clear. Even in our own portfolio, we have a global fund where we used to have 72, 73% in US up to January this year. And now it is at 50%. Now we are aggressive guys, but some institutions won't go from 70 to 50, but they can go from 70 to 68, 67. That is massive money for the 30% crowd. That is the balance. And in that, India has a very strong case. That case is our fiscal deficit is in good shape, our inflation is good, the RBI and SEBI are trying to be more market friendly, regulations reduction. We have a good monsoon. Then you can add a few more things. We can say we are beneficiaries of this trade deal.
Sameer, I'll interrupt over here.
That is the story.
Yeah.
It's not a massive move.
It's not a massive move. So if the global fund has reduced exposure to the US from 70 to 50%, where does... Correct. Helios Global Fund, correct. So then how much have you increased if you have in terms of India, and where have you increased?
No, in that fund, we won't increase in India. We have India dedicated funds. That fund has gone basically 15% into China, which used to be 4-5%, and 5% into gold. And India used to be 9%. Now maybe it's become 10-11% just by a little bit of relative performance in the last few months. But basically, that money has gone into China plus gold for now.
And in India, where are you increasing?
That fund is not intended to be an India-centered fund, So the India weightage in the index might be 1 or 2%, and against that it is say 10%. So that will not be increased in that fund. But otherwise, our India funds are doing well. Our mutual funds are nearly now reached 5,000 crores, which started at 500 crores in November 23. So in 1 year and 7-8 months, it has become 10x. The AUM. So that way, India, we can see, is on the cutting edge. I was saying in a big picture sense, people who were too much into US, moving away from US. For us, the thing is because we have separately so many India-centric funds, global fund. I mean, global means foreigners investing into India. We are not making our global fund be basically an India plus fund. So it will have only 9-10% in it.
Just on a little bit of a separate note, Sameer, I was going through your X feed, which I find most entertaining, and I have to ask you about this that you put up, where you say, analyst, we had a buy on the stock, we continue to recommend a buy. We actually made a graphic, let's pull that up. So client says, but how were the results? Analyst in the voice of Salman Khan, एक बार कमिटमेंट कर दी तो मैं अपनी भी नहीं सुनता. I can't do the Salman Khan voice, but he says buy remains a buy. This I think is an important point to talk about and address.
I aimed it at the IT sector, where companies have had pathetic results, broadly no guidance, and everybody say, no, we have a buy because next year there will be a 1% gain in something or a 0.5% gain in something. There's no logic. If you start from a zero base, then any of these guys would have put a buy. But because they had a buy, now they say, okay, let it continue, kind of thing.
Yeah, no, but it's an important point to note. We did a piece recently about how a majority of buy ratings have not translated to anything over a year.
In terms of returns.
In terms of returns.
No, but that is okay. But go beyond that. That if you have two bad results, you reduce your EPS guidance. You reduce your own EPS estimate by 5-6%, and then you say doesn't matter, buy still continues. So in Alliance, when I was there as an analyst in the 90s, the rule was that if you cut guidance, if you cut your estimate by some X%, 4-5%, you have to change this thing. You can't say it doesn't matter. It's 5% less. How does it matter? Because we are long-term guys. That was the rule for being not active, but to be, whatever is the word, that you can't just generally let the buy be separate and the analysis be separate.
Okay.
So
coming back to IT, because that's an important one. No one can quite make up their mind. There is enough commentary which shows some positivity on IT and Indian IT, but the numbers are just not matching up.
No. I'm saying you look at those numbers and you make them positive. You take these guys' positive number and then say what is the valuation, what is the growth. Okay, instead of going 3 to 4, I will go 4.5. Now that is positive as per the market for 2 days. That because you have outperformed. But the point is that 4.5, how much will you give? Okay, make it 7%. Make it double of what the estimate is. What should be the PE for that? Look at the Google P there. It might be 16. You do it SOTP, it might be 10. And here we are saying that doesn't matter, 25 P is good because lever is 50.
No, so how are you looking at IT right now, Samir?
So we don't look at it much.
Yeah.
We don't look at it.
Completely underweight IT with all the numbers coming?
It depends on what you like. We have one stock, which is KPIT, which we also have kept. Although that also hasn't done much in the last year or so. Yeah, otherwise we don't have. Unless you call Indigene IT, okay, we have it. Depends on classification, but yeah, nothing else.
So ER&D is something that you're liking?
No, it's not like even that. That is a big concept. Look at the results of these other companies and how they have done. So you can call it one company now, whatever category you want to call it, because my general big picture thesis was, we don't like generally auto, we don't like a disruption by EV. But here he's assisting the disruption. Assisting the disruption is okay. Being disrupted is not okay. And basically, IT sector itself has been disrupted. What to say? IT sector itself is disrupted right now. People don't want to believe it's been disrupted black and white. You can see it in every result, every company.
What about the new age tech companies? Swiggy, Zomato, would you still look at them from a positive view?
Absolutely. But before that, they are not really tech companies. Tech company would mean that, they are basically, because what people don't understand is how difficult it is to, in real life, have 300,000 restaurants and 300,000 agents, and every minute they have to be busy and every guy has to be delivered what was ordered, and there should be less complaint or zero complaint. Everybody should get it in 25 minutes and then go to the next guy and in Blinkit deliver everything in 10 minutes. It's a massive exercise. And so people think of it, oh, he's just delivering food to you, but that is not the way. It is an extremely complicated business. And we like Eternal more just because we have it in a bigger position. And by the way, we have just made 5x as of last week because we bought at 52. But the point there is, there are very few pockets in India where you don't have to rely so much on the end growth of the industry. You are relying on the change in buying habit. And at a very small percentage move, it has reached like maybe combined, this whole industry might be a $10 billion value, and whereas the market might be 500 billion or something for grocery and retail and all these things. So it's a very small shift, but you are still not depending on some unknown random this thing that the growth will be 8% and you will get new orders from somebody or something. It's a day-to-day business with the convenience being highlighted again and again because of too much difficulty in dealing with India every day in terms of traffic and pollution and weather and heat. And on the other hand, for whatever reason, very comparatively available labor. Now, if the world doesn't want it like that, there's nothing we can do, but that is a model perfect for India.
When you're seeing the results so far, and I know it's early days, it's barely a week, there's a lot of commentary on optimism with Q1. Q1 can have a positive surprise. Are you buying into that at all? Have you made up your mind?
I thought you said it well, that the results have been very weak.
For IT?
This week.
For the week this week, okay.
But I'm saying in general, I don't think that you can have... See, so we are bullish, but you have to understand what does bullishness mean in today's context. Bullishness is that India is better than most of the other countries or many of the other countries in terms of fundamentals and macroeconomics and policy sentiment or change, whatever you want to call it, on the margin. Plus, this flow-based thing is there. But since the results can't be very good, because in two and a half sectors, which are big sectors, the growth rate will be very low, which is IT, big consumer, and even although we own most of these big banks, they are not going to grow even 10%, I think. Maybe 8-10% they will grow because of NIM compression, this, that, for 1 or 2 quarters. So the aggregate earning, plus you've seen IT is actually negative. Today you saw that broking fellow minus 65. There'll be many of these. So in aggregate, the numbers can't surprise positively, but we can say going forward, consumer will move up to 3% and IT might bottom out, and therefore your earnings growth may be 12-13% instead of 9-10%. And therefore we say with all these positives, you are supposed to make 10-12% for now in a year.
So 10-12%, Sameer, this year. And with that, you've been positive with regards to insurance as a space as well. Yeah. You have HDFC Life, ICICI Lombard, all of them that have reported numbers in the last 2 trading sessions. Do you think numbers warrant a buy at current levels?
So first thing is you don't know what I like, because those funds I don't manage. Okay. I manage offshore fund, but broadly we all like, and I know what you're talking about, the mutual fund side. By the way, there's a third one we own, which is the health insurance. So yeah, broadly we like the theme. And the fact is right now there is a shortage of reasonable to high growth ideas in our market. And therefore any place which offers that is exciting, because you can't have the whole portfolio growing just because, like this IT or these consumer large companies, or the guidance was 4% and they came out with 4.2%, therefore it's a buy. Those things we don't like. So we should at least start with the feeling that the revenue earnings will grow in the range of 12-15% or more. And anything which offers that with somewhat big picture support and backdrop and somewhat reasonable valuations will be a candidate considered seriously.
Very quickly, Sameer, my producer is telling me I have to thank you, but I'm just going to squeeze this one in. What about pharma? Because pharma with what
you can thank me afterward than before. Nothing wrong. Thank you should be done anyway. He doesn't have to tell you. You should thank me.
I have to take a break, that's why. So I'm going overtime. There's a whole different metric here. No, but what,
you are a big company. You don't need all these ad breaks. Tell me.
What about pharma stocks?
Pharma we like. Pharma we might buy more also. And we like healthcare also. So yeah, that broadly. But the thing is, those weightages, because the way we have done it in the past, these won't define our life, but they will be helpful. That means we are not going to make 15% pharma, but you can have 5-6% pharma. So you can say matters or it doesn't matter. But yeah, we like pharma and we like healthcare and we like this Fortis and we like Apollo and we like here and there pharma also. Yes.
Superb. Thank you, Sameer. Always a pleasure, always fun to have these conversations with you. Have a great day. Sameer Arora there likes pharma, does not like IT very clearly, does not like auto.
Eternal positive, Swiggy positive,
but he's an eternal positive because he has the biggest share of it.
But eternal versus a Swiggy is where he's talking about on that front. But interesting names.
Interesting names there. We'll have to quickly wrap it up. Ask Profit up next. Stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and with me is Mahima Vachirjani. I got the name right today because Mahima is back. And so we'll take you through the next 1 hour of trade. And of course, this show is geared towards getting you answers to all of your stock-related questions. There are a few ways for you to get in touch with us. One of them, of course, is to call us on the landline number that will soon flash on your screen. And the other is to send us a message on the WhatsApp number that you see flashing on your screen. Let's very quickly take you through where the markets are right now, and then we have a conversation lined up with you, with the newest listing, which is SmartWorks. The benchmark Nifty 50 once again trading in a very, very narrow range. This has been the case for most of the last couple of weeks. Just one session where you saw a big move for the benchmark, but 0.2% lower for the Nifty 50. And the broader markets also not doing too much, up about 0.2% for the mid-cap index and about 0.4% or so for the small-cap index. We'll get into individual names in just a bit, but before we do, let's talk about the new debutant on Dalal Street, SmartWorks, doing particularly well, up about 13% from its issue price. And we've spoke to the management, in fact. We've got the management. My colleague Agni Dev interviewed Harsh Binani, who is Executive Director, and Nitish Sart, who is the Managing Director of the company, and talked about their future plans. Listen in.
What are the plans beyond this? You will be using capex of around 230 odd crore for capex and another 114 crore for loan repayments, but that's the funds that are raised from the IPO. Beyond these funds, what are the plans for growth for SmartWorks?
SmartWorks' trajectory in the last 3 years, we've been growing fairly quickly. From 6 million square foot, we've grown to 10 million square foot. From a adjusted EBITDA of 35 crores, we've grown to 172 crores. If you look at that growth trajectory, it's a 3.5x growth in our EBITDA numbers. We are using these funds from the IPO not just to grow, but there is an ambition to take this business to a significantly higher scale. IPO funds is only a part of that funding, because the cash flow that the business is generating itself is also funding a significant portion of that growth.
Right. So if I take that a step forward, you're currently operating 50 centers across 15 cities. So is there any plan of expanding beyond that?
So 90 to 95% of India's demand comes from the top 7 cities. We'll continue focusing on having a bigger presence there. There are other interesting cities that you can explore, especially in the tier 2 and the tier 3 regime in India, and we will look at expanding into those cities, but majority of our expansion will be within the tier 1 cities in terms of scale of the centers that we're taking.
Right. So my next question would be if you could give me a color on your anchor book, which saw participation by quite a few famous investors. So what kind of a confidence does that bring in for a company like SmartWorks going ahead?
Thank you so much for having us on this momentous day. And we would like to extend a sincere gratitude to all our existing investors. They've shown a lot of confidence, right, from Government of Singapore through Keppel, Madhukela Family Office, Enam, Hexaware, Polycab, all of them who've not only invested but reinvested in the business. Our anchor book reflects a growing strength in the long-term orientation of the business. We've created a lot of value for our shareholders in the past, and we intend to continue doing that in the future. The current anchor book has a good mix of mutual funds, life insurance companies, FIIs, all who are long-term, because we truly believe that the story of SmartWorks has just started, and IPO is nothing but just a comma, not a full stop.
Right. So, but now that you're listed, you will be competing against the likes of, say, an Office Space or even WeWork that's recently gotten a SEBI approval for their IPO. So, a couple of questions do stem out from this fact. First of all, how do you maintain your competitive edge? I know that your business works on a very different model compared to the listed players. And beyond that, since you are a listed company and now retail investors will constantly be looking at your bottom line profitability, which is still in the red as of now. I know your cash flows are still better than your EBITDA, and all the money is getting back into the company. But these are my two questions I'd like to ask.
There are 3 unique aspects to SmartWork which we believe makes us stand out. A, we are the largest, so scale inherently brings a lot of advantage. As businessmen, we understand the importance of cash flows. That is the beginning and the ending of SmartWorks, and that is a gold star where SmartWork really shines today. And we also understand in an environment like India, frugality, cost leadership is extremely important. So if you combine scale, cash flow and capital efficiency and the entire aspect around our frugality, you have a very powerful package that has ensured that SmartWorks has grown faster than the industry. In fact, we've grown 1.5x faster. And given the scalability of our business model, we intend to continue scaling up the fastest. And in such a short span of less than 8 years, which includes 2 years of COVID, if today we've become the largest with 10 million square foot, you can only imagine that India today being the office to the world, and with the grand vision of our Prime Minister Modi ji to make India the developed economy by 2047, what will be the requirement of modern office to cater to the workforce? And here is SmartWorks, which is less than 0.5% of India. And looking at us, we are less than 35, we represent the youth of India. Next 25 years is where we would want to continue working and realize this ambition of making India a developed economy, as well as making SmartWorks not only the largest. Why can we not go to the globe and make SmartWorks one of the largest in the world?
So with that bullish sentiment, again from a purely bottom line perspective, when can we see it getting back in the black, like a positive number for your bottom line over the next few quarters, next few years, if you can give any color to that?
Like Nitish had mentioned earlier, our EBITDA has seen a 3.5x growth from 36 crores to 172 crores. This accounting loss that you're mentioning is simply because Ind AS 116 ensures that we have an accounting provision for lease liabilities which are actually not paid by the company. So if you look at our trajectory, even on that aspect in the last 3 quarters, you're starting to see a significant movement towards the gold line that you're mentioning. So this profitability and cash flow strength of the company is already inherent, and as we continue to scale up, because our revenue only grew by 1.8x in the last 2 years, you will continue seeing the inherent advantages of scale getting us to this landmark very, very.
All right, so 13% up on listing day. That is the latest entrant to the Indian equity market. SmartWorks co-working space is doing particularly well. On that note, let's get in our experts of the day. We've got Kush Bora of kushbora.com and Mr. G. Chokalingam, who is the founder and managing director of Economics Research. Gentlemen, thanks so much for taking the time and appreciate your patience. A lot of action in the primary markets and we can't really ignore it. So let me kickstart things with the first question that has come in, and it's a question for the long term. It's coming your way, Mr. Chokalingam. EIH Limited, and this is Aniket Hiremat's question. He's writing in from Karnataka. He's asking whether to invest in EIH or Taj GVK. Incidentally, a lot of hotel companies posting their numbers this week. We saw ITC Hotels, and we will soon see another couple. Indian Hotels today, right? There you go. So what do you make of this? And why don't I just ask you about the rest of the space as well, beyond EIH as well as Taj GVK?
Definitely, the hotel industry outlook remains very bullish in the short to medium term. There is no doubt at all. Coming to particular hotel stocks, EIH Limited, in fact, only a week ago, we had initiated a buy recommendation to our clients. And Taj GVK also absolutely can give some return, but EIH is among the top 4 companies, hotel companies in terms of size. And these days, such companies get much better valuation than the small stocks. So from that perspective, I believe EIH is superior to Taj GVK. Now, EIH, very interesting fact is that Reliance Group as well as ITC Group together have more than 30% stake in this company. And that gives me enormous confidence in the hotel stock. And second, if you look at the latest annual report, there are more than 12 to 13 projects, expansion projects. Some are greenfield, some are brownfield, but many of them are greenfield projects. They are coming up, and the management expect them to launch starting from FY26 to FY29. I think the medium to long term outlook also looks fabulous for EIH. So I would continue to maintain a strong buy recommendation on EIH Limited.
Buy recommendation on EIH in the hotel space is the view that Mr. Chokalingam has. All right, our first caller for the day, Srivadan, is calling us from Bengaluru. Srivadan, hi, a very good morning to you. How can we help you today?
Hi, I have a query on Swiggy. I got it at IPO. Now I'm not at a huge loss, but I just wanted to have an outlook on Swiggy, like how long can I hold or any fundamentally?
Okay, Shiva, I got your question. I'll take this up with Mr. Chockalingam. Mr. Chockalingam, do you think he should continue to hold Swiggy at the current levels, or should he exit?
Growth prospect is there, but it is going to take at least another 2-3 years to come back to strong bottom line. Yeah, for long term it's a hold, but I think there will be a lot of pressure for at least for another 1 or 2 years in terms of stock price performance.
Okay. Niloy from Kolkata is writing in. He wants to invest 5 lakh rupees with a horizon of 18 months. And he's asking for suggestions of companies that are appropriate for this time frame. Kush, I'll come to you. Slightly longer term than what we're normally speaking to you about, but 18 months, what are the prospects for the companies that you're looking at?
So it has to be a mix of sectors for sure. So I'm looking at the realty pack, interest rate sensitive PSU, even some of the NBFCs. So Geofinance is one stock that you can definitely consider, for investing. LIC Housing Finance has had a good move, and if he wants stability and safety, then SBI, which has now given a breakout for levels of 900 and higher, he can consider that. Apart from that, from the realty space, you've got Valor Estate and Marathon NextGen. So these are some of the stocks that he can consider from an 18-month perspective. Very solid charts. These stocks were just consolidating along with the market decline. But on the whole, if you see, very interesting setup on some of these names. So yes, interest rate sensitive is a good play for the next 12 to 18 months.
Okay, so that's with regards to where Mata Next stands, and of course the view that Kush has. The next question is on Gillette India. That's an interesting question. Hemendra is asking this question. He's bought Gillette India during COVID times. About 5,000 odd shares is what he's saying. Oh no, bought at 5,000 odd levels. What is it? 5,000 odd levels. So his returns have almost doubled since his holding, and wants to know if he can further expect doubling his returns from the current levels in the next 3 to 5 years or not. Mr. Chockalingam, I'll come to you on this one. It's trading at a very high P as compared to its peers. Plus, if we see the 3-year CAGR in terms of profit and sales growth, it's been around 10%, which has been slightly better than its FMCG peers. But do you think that his returns could double in the next 3 to 5 years for Gillette India?
I doubt in the next 3 to 4 years. Maybe beyond 5 years, it might double. The fact is that it's already trading close to 100 PE. And yes, in the short term, there could be further upside of, even 5-10%. Because oil prices have corrected, and its raw material is, they are a derivative of oil, and also, the metal prices are slightly weak. That could favor, but it has lost a strong double-digit growth momentum in volume term long ago. So yes, it's a hold for a maximum 5 to 10% return for next 1 year, but it might take much beyond 5 years to double the stock.
Yeah, okay. And I find it interesting that Gillette was bought by our viewer at a time when people were not shaving during COVID-19. So he's gotten his ideas absolutely bang on, gone contrarian. And what a return it's been. So kudos to you. Neva's got the next question. Neva's writing in from Chennai, and she's got 4 shares of Britannia at a price of 4,826. She's wondering what the future target is, and she's ready to hold for the long term, that is 3 to 4 years. Kush, very sorry to keep you waiting. We're getting a lot of questions from long-term investors. Mr. Chockalingam, coming to you on this one. 3 to 4 years, 4,826 is the buy price. What are the prospects in your opinion?
Certainly it's a hold and buy if there is any decline in Britannia Industries, because basic raw materials are wheat and sugar. Now there has been a phenomenal increase in the wheat output and wheat procurement, and there has been a significant moderation in the prices of wheat. The third input is palm oil. That also has seen some moderation in the prices. And sugar also, for the long term, in the last 2-3 years, the sugar price also quite subdued. All this favor well for Britannia, and it has been able to, maintain the decent growth in the last 3-5 years, and I believe it will continue to maintain the growth. It's one of the best FMCG stocks to hold and buy on decline.
Okay, all right. So that's the call on Britannia. And incidentally, I'm hearing this about more FMCG counters in the recent past, right? Which is an interesting trend. It was a much reviled, much hated sector.
So a few weeks ago, when I'd asked Mr. Chockalingam, his view on the entire FMCG sector, he'd come out and said that it's not FMCG anymore; it is SMCG, slow-moving consumer goods. Mr. Chockalingam, just wondering if that idea of FMCG has changed for you.
Not really. I'm a student of passionate student of economics, and I have been interacting, for decades with a lot of stalwarts. In stock market, what makes a difference is understanding the structural changes. Those who understood a massive structural change in the IT sector made wealth for generations. So this is very important for a long-term investment. So from that perspective, only I coined this SMCG. I think perhaps for at least another 4 quarters or even more, it would remain as SMCG. Of course, it would be one or two exceptions would be there like Britannia, but otherwise I am not too bullish on FMCG.
Got it. And a very quick answer to this next question, Mrs. Chockalingam. Would you say, therefore, that if you're looking to build a legacy portfolio, something that will go into years, this next period of consolidation, which we're likely to see, is a good opportunity for you to accumulate some of these stocks?
FMCG, yeah, one can accumulate a stock like ITC and Britannia in FMCG. If your question is confined to FMCG. ITC, because it's well diversified, it has got IT, paper, packaging paper, agri, and also, hotel through ITC Hotel. So that definitely for a very long term, it would be one of the best two stocks. I mean, it might underperform in another 2-3 quarters, but beyond 1 or 2 years, definitely. Similarly, Britannia, I have already mentioned. And I would also add Jyoti Lab. It's a FMCG small company. It's a enormously beaten down stock. And most consumer branded goods stocks are trading at 6 to 8 times enterprise value to annual branded sales, whereas this is available at 4 times. Strong balance sheet. So these are the 3 stocks I believe if somebody is willing to wait for more than a year, they are possibly very good stocks within the consumer good industry.
Okay. All right, got it. And viewers, we decided to stretch this conversation a little bit because we thought that it would benefit you. Pradeep is calling us from Bengaluru. Pradeep, very good morning to you. How can we help you today?
Very good morning, Alex. See, I am in a fix as to, I have narrowed down to 2 stock purchases. One is Geotech Robag, and one is Ace Construction.
Okay.
Now, I wanted to know which would be for long term, and at what level should I buy now?
Okay. And you, what is the rationale that you've used to narrow it down to these 2 companies?
Based on the fundamentals, though they are a bit overvalued, but still the fundamentals seem to be quite good.
Yeah. Okay. So can I get you a technical view on both of these to tell you what levels to consider buying them?
Yeah, yes, and also whether they are good. I wanted a confirmation from Mr. Chockalingam as to whether they are good for long term.
Okay. So let me do that first. Mr. Chockalingam, yes or no answer please on Ace Constructions and Vatek Wabag.
Ace Construction is better than Vatek Wab, not only from a business model, also from the balance sheet quality. So that's my view.
Okay. So Ace Construction, therefore, is Mr. Chockalingam's pick. Kush, on the charts, what level would you suggest is a good level to accumulate Ace Construction for the long term?
So it's not a bad idea to start accumulating at the current level. The 200-day moving average support is starting to act up. The volumes on the way down are actually picking up a little, but as long as the 200-day moving average and this support of 1150 is held, you could see the stock consolidate here and then see some sort of a spurt. It's been consolidating for the most part, for the better part of this year within that 1100 to 1300 range. So yes, it's a staggered way in which you should accumulate, and this 1150 range is not a bad place to start accumulating.
Okay, we've got our next caller. Shrikant is calling us from Bengaluru. Shrikant, hi, a very good morning to you. How can we help you today?
Yeah, hi, good morning, madam. And good morning to Mr. Alex also.
Good morning, Shrikant.
Good with the query, Shrikant. Yeah.
I have a request with Mr. Kushbora that, see, I have 7 lakh rupees parked where I need to invest for short term.
Okay.
That is for 1 to 3 months.
Okay.
So which will be the better can Mr. Kushbora suggest to me?
Okay, got your question, Shrikant. Kush, I'll come to you on this one. 7 lakhs is a big amount. Would you divide this into different pockets for the next 1 to 3 odd months?
It is a big amount, but it depends on what kind of percentage of his portfolio that remains to be, right? But yes, thank you, Shrikant, for that query. I think a couple of stocks from the interest rate sensitives that I just mentioned from a 12 to 18-month perspective, those will still apply for a 1 to 3 month perspective as well. So you've got the likes of LIC Housing Finance and SBI, which you can consider. But if you want to move beyond those and consider a few others, then some of the names that have actually done well, and we've recommended that on the channel as well, are Ajax Engineering, Paytm, and if you want to perhaps widen the horizon a little, then Vijaya Diagnostic. So these are some of the stocks which have got momentum on their side, even when the markets were correcting and consolidating with a negative bias. They've actually gone on and shown strength. So consider some of these names. Just to reiterate, so you've got SBI, LIC Housing Finance, Paytm, Ajax Engineering, and Vijaya Diagnostics.
All right. Hopefully that answers your question, and these are short-term stocks recommendations that you can take up. Vedanta is the name of the counter we're talking about next, and Reshma Bhatia from Pune has written in. She's holding. She's not told us a level, but she says that she's sitting on decent profits. Mr. Choklingam, she's worried about this latest Viceroy report, and that's got her a little jittery, and she's wondering whether to sell half her quantity and shift to something else. What's the opinion?
I would maintain a sell on Vedanta. I'm not concerned about the report, but my concern is related to the oil segment of Vedanta. Today the crude oil price is down almost 18-19% from 52-week high, and the OPEC has come out with forecast of low growth for oil consumption in the next 1 to 3 years. That would be big negative. And also what is happening other side of the world on copper, other metal in terms of tariffs, that also would be ultimately negative for such a player. So therefore, at this price, I would maintain a sell call on Vedanta.
Okay, all right. Sell call on Vedanta. We've got Paramjit calling us from Dharamshala. Paramjit, a very good morning. I wish that I was there. And what would you like to know about today?
Good morning. I'm having 3,000 shares of Cryjack.
Okay.
Recent IPO.
Yes.
At the rate of 298.
Okay.
Want to know 2 and 3 year view.
Okay, understand. Mr. Choklingam, coverage on Cryjack, did you have? It's a very recent listing and done particularly well post-listing. So would you hold for the next 2 years?
I'm sorry, I have not studied the fundamentals of this company, so I'm not able to give you.
And unfortunately, Paramjit, it's too close of a time frame for me to ask Kush for a view on the technicals as well. And Kush is nodding his head, so I assume that is correct. So maybe we'll check back at a later date and give you a view on Cryjack. Thanks so much for calling in. We have to slip into a very quick break. We've got a special coverage on the other side of the break about Dabba trading. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest.
Spot the Scam is an effort by NDTV Profit to educate you, the viewer, and to protect you from the scams that are currently being perpetrated in the name of promising amazing returns through investment. Now, this is an NDTV Profit exclusive. We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies. The platform, called Trading Dost, is a classic racket, luring investors by promising huge returns. My colleague Charu Singh has this report.
On the morning of 13th July, we came across an interesting ad in a Hindi daily. It was quite an audacious ad because the trading firm that gave the ad promised 500 times returns to investors like you and me. That's not all. It had also promised opening an account with them with zero brokerage and no documentation. It seemed a little strange, so this entity called Trading Dost was irking us, and we went to the SEBI website and checked for their registration. It was quite strange that none of the names mentioned on the ad or the entity's name itself was registered with the regulator. And hence, we decided to give this person a call.
जी कौन बात कर रहे हैं?
बोलिए ना मैडम, राघव बोल रहा हूँ।
अच्छा राघव जी, मैं चारू सिंह बात कर रही हूँ NDTV प्रॉफिट से। आपका एक ऐड देखा था तो आप कॉल किया था। मुझे पता चला यहाँ पे कोई सेबी रजिस्टर्ड इंसान एडवाइस नहीं देता है। 16 साल से काम चल रहा है, तो ये कैसे पॉसिबल है?
नहीं, आप क्या बोलना चाह रहे हो, क्या पूछना चाह रहे हो? जर्नलिस्ट हो, न्यूज में डालने के लिए आप हमसे इन्फॉर्मेशन लेना चाह रहे हो या आपको हमारे लिए अकाउंट खोलना है वो पूछना चाह रहे हो?
अकाउंट तो नहीं खोलना है, इन्फॉर्मेशन ही चाहिए। इन्फॉर्मेशन तो न्यूज़पेपर में भी है। खैर, मैं तो बस ये पूछ रही थी कि ये 16 साल से बिना रजिस्टर्ड एंटिटी के कैसे काम चल रहा है?
मैडम, आप एक बात बताओ कि आप जर्नलिस्ट कितने साल से बने हुए हो?
मैं तो जर्नलिस्ट कितना हो गया होगा, 2 साल हो गए होंगे।
5 साल, 2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
ठीक है,
हमारा और आपका तो जन्म भी नहीं होता तब से डब्बा ट्रेडिंग का काम हो रहा है। अभी तो ये NSC, BSC, आप देख पहले क्या होता था, पेपर पे लिखा जाता था, आधा पत्ते पे चढ़ता था, आधा नहीं चढ़ता था। धंधा थोड़ी ना बंद हो गया, धंधा तो पहले से ही चल रहा है।
सही बात है।
एप्लीकेशन का काम ये जो चल रहा है ये 15-16 साल से चल रहा है। मैं और आप तो डिसाइड नहीं कर सकते ना किसी के बोलने से। मेटा 5 एप्लीकेशन है, पूरे इंडिया में चल रही है मैडम, इंडिया के पूरे वर्ल्ड में चल रही है।
सही बात है राघव जी।
हाँ, कहाँ
से हैं आप?
कौन से मीडिया में डालना है ये तो बताइए।
NDTV कहाँ से हैं आप?
हम तो हिंदुस्तान से ही है, बेस्ड ऑफ दिल्ली है।
दिल्ली से?
हाँ जी मैडम।
दिल्ली में कहाँ से?
दिल्ली में रहते हैं मैडम हम। वो देखा आपने शादरा?
राघव जी, आपको डर बिल्कुल नहीं लग रहा कि ऐसे न्यूज़ चली जाएगी, लिख जाएगा, छप जाएगा, ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
अरे आप बोल रहे हो कि क्या कहते हैं, बिना सेबी रजिस्टर्ड एंटिटी के एडवाइस दे रहे हो, जानकारी दे रहे हो।
एडवाइस किस बारे में दे रहा हूँ मैं? एडवाइस
रिटर्न की गारंटी दे रहे हो।
100% दे रहा हूँ मैडम। आप ट्राई करके देख लो कि आप पैसे डाल के डिपॉजिट करके ट्रेड करके विड्रॉल तो देखिए कितना फास्ट देते हैं हम। आपका जो बिजनेस है वो आप करिए, मेरा जो बिजनेस है मैं वो करूंगा मैडम। अगर आउट पूछना चाहे तो बिल्कुल पूछिए, बेझिझक पूछिए। आपको मेरा पर्सनल नंबर चाहिए वो भी ले लीजिए मैडम, कोई प्रॉब्लम नहीं है।
बताइए आपका पर्सनल नंबर क्या है?
585 पहले लगाना पड़ेगा आपको +971। मैं आपको इसी नंबर पे व्हाट्सएप कर दूंगा।
अच्छा चलिए कर दीजिए। ओके।
After this call, NDTV Profit broke the story first on its website. And on the same evening, India's leading bourse, the National Stock Exchange, came out with a cautionary circular for the investors. First off, they said that this platform trading toast is not to be trusted and investors should not associate themselves with it. Secondly, they asked the investors, advised them to steer clear from these dabba trading activities, all these schemes that lure them and promise them high investment returns. After this, we decided to give this Raghav person another call to ask him how he felt about the NSE circular. First off, we would like to tell the viewers that first number on the newspaper ad did not go through, and the second number did allow us to speak to him after 2 attempts.
हेलो राघव जी, आवाज आ रही है?
बोलिए मैडम।
सर आपने कहा था आपसे बात करनी हो तो आपको कॉल कर लूं, तो इसी
बात करनी है, मेरी तो बात हो गई आपसे कल।
नहीं, मुझे आपसे बात करनी थी इसलिए मैंने किया था। अगर आपके पास 5-6 मिनट है तो मुझे कुछ चीजें पूछनी थी।
किस बारे में पूछना है मैडम?
सर आपने कहा था कि क्या कहते हैं, ये गलत नहीं है डब्बा ट्रेडिंग या जो भी चैनल है, और ऐसे बहुत सारे लोग हैं, तो क्या आप बता सकते हैं ऐसे और कौन कौन से प्लेयर्स हैं जो कर रहे हैं?
कौन से न्यूज में देना आपको?
मुझे बस जानना है कि और भी लोग हैं और नंबर्स हैं।
नहीं, हमारे पास इतना टाइम नहीं है मैडम कि आपके लिए हम कंटेंट दे आपको। हमारे बहुत काम करने के लिए मैडम, दोबारा फोन मत करिएगा प्लीज।
अच्छा, तो आप ये बता सकते हैं कि आप यूएई का नंबर क्यों यूज करते हैं जबकि आपका काम दिल्ली से होता है?
मेरे पास है ही नहीं यूएई का नंबर। आपको कौन बोला मेरे पास यूएई का नंबर है?
आपने मुझे दिया था, शुरू किया था बोलना, लेकिन फिर आपने बताया नहीं पूरा नंबर।
नहीं, है ही नहीं मेरे पास यूएई का नंबर। आपने कल छाप दिया है, देख लिया आपने पेपर, ठीक है, कोई प्रॉब्लम नहीं है। आप करिए जो आपको लग रहा है करिए। आप हमें प्लीज डिस्टर्ब मत करिए, हमें हमारा काम करने दीजिए, आप अपना काम करिए।
क्या आप यही काम कंटिन्यू करेंगे जो आप कर रहे हैं?
100% यही करूँगा मैडम।
ठीक है, और कब तक करते रहेंगे? कब से कर रहे हैं?
क्या करना है मैडम आपको?
सर जानना चाहती हूँ, ऐसे जर्नलिस्ट पूछ रही हूँ।
आज ही चालू किया मैडम मैंने काम।
क्या?
आज चालू किया, आज से काम चालू किया, न्यू बिजनेस।
नया बिजनेस? कौन सा नया बिजनेस?
मेरा नया बिजनेस चालू किया मैंने, डब्बा ट्रेडिंग का। डब्बा देता हूँ घर में जाके, दाल चावल रोटी सब्जी।
और फिर उस एड का क्या हुआ जो आपने डाला था नवभारत में?
कौन सी? मैंने कहाँ डाली एड? गलत फहमी हुई आपको।
यही नंबर है न्यूज़पेपर के ऊपर, एनएसई का सर्कुलर भी आया कल शाम को इसी बात पे।
मेरे को नहीं आया मैडम कोई सर्कुलर, क्योंकि ये नंबर मेरे को बिलोंग ही नहीं करता।
तो फिर आपने ये नंबर उठाया कैसे?
मैडम आपके पास और कोई काम नहीं क्या?
नहीं सर, जर्नलिस्ट हूँ, यही काम है मेरा।
हाँ, तो हमारा काम तो हमें करने दीजिए ना। हमारे बहुत क्लाइंट के फोन आ रहे, दोबारा प्लीज आपसे हाथ जोड़ के विनती, कॉल मत करिएगा। थैंक यू वेरी मच जर्नलिस्ट मैडम।
As you all just heard, Raghav had changed the meaning of dabba trading itself by the end of our call. This particular platform trading those is likely to disappear and reappear in some new avatar. And investors like you and me will be lured into such schemes every single day using Telegram channels, YouTube channels, WhatsApp calls and SMSs. And we must exercise extreme caution before putting our money in such schemes. Charu Singh in Mumbai for NDTV Profit.
So, I certainly was a little taken aback at the tone and tenor of the voice that this Mr. Raghav used when he was speaking to Charu. And there was absolutely no hesitance. Of course, at the end of that conversation, he changed his tone and he said that he was actually delivering dabbas and not dabba trading. Deven Choksi, Managing Director of DR Choksi Investment Managers, joining us now. Devin, thanks so much for taking the time. I hope that you heard at least a portion of that conversation. Are you surprised that people are unafraid to carry out what is essentially an illegal activity?
Yes, Alex, good morning. Well, I think not completely surprised though. I think because they are carrying out illegal activity, they know the perils and the consequences of those activities. Unfortunately, I think these illegal activities are happening in the system also because of the byproduct of our age-old trading norms and the rules. Today, I think in these times, when you have a complete blockchain in place to, I think, trace all your transactions, starting from order to the transaction, for banking, from stock broking, for depository, for everything, you are still maintaining a kind of a system which was then installed at the time of introduction of derivatives. We started derivative market with 1 lakh rupees worth of market lot. Today it has become 20 lakh rupees worth of market lot. I don't understand the need for this particular market lot. Because of this market lot, which is a restriction that one has created, the fallout effect of this market lot is dabba trading. If you don't have market lot, then dabba trading do not exist. Now the question is that I think we are creating market lot for the safety of investors. 9 out of 10 investors are losing money. Where is the safety? So I think this is a subject I think which needs to be introspected a little bit more in detail. I don't necessarily blame, I think, the entities who emerge to take the inefficiency into their account and probably make money. We have seen Jan Street, I think, doing that. We are seeing local traders doing it. Inefficiencies, everybody wants to make money out of it. I think it's not their fault. It's a lacuna in the system which they are capitalizing as I see it.
Interesting. That's an interesting take. Devin, hi. Mahima also joining in. It's not just these scams, right? There are also scams going on where, people are just creating WhatsApp channels, Telegram channels, and going ahead and giving stock recommendation in terms of trading as well as, fundamentally buying the stock. If there's somebody who wants to begin trading today or investing today, what should that person keep in mind? There should be, I feel there should be an SOP that every investor should, be aware of, that these are the 3 or 4 things that I should keep in mind before joining any of these WhatsApp channels or Telegram group or before approaching anybody like Raghav.
So, Mahima, I think my whole take is that I think every investor, I think, as they always say, the buyers beware. The investor also requires to be aware about, I think, certain rules, regulations, and the regime of the regulators. Unfortunately, I think he is a sophisticated investor who knows about everything. But the one who is not so sophisticated is only concerned with, I think, easy part of making money. He is getting into this particular trap and he is playing around. He does not even ask the question that who the person on the opposite side is. In fact, I think there are instances of impersonation in WhatsApp and Telegram accounts wherein people are cheated, their money, they are duped, I think their money has gone. All those things are happening under our nose. Maybe I think regulators are operating separately. The banking regulator operates separately. The security regulators operate separately. I guess I think it's time that finance ministry or government takes up this particular call, make all regulators work together and ensure that I think there is no such a loose end in which I think people can take money out of somebody's account by way of impersonation on WhatsApp or on Telegram or any such kind of social media channels.
Devin, and ultimately, as you said, it's buyer beware, but from the perspective of managing expectations, I think what we've seen in the recent past is change of regulations in the derivative space where the regulator is attempting to at least hold back some of the fervor that people have and the fact that so many individual traders have lost money. So would you say more than anything else, it is setting of expectations? If somebody is promising you to double your money in 30 days or in that kind of time, it's something that any top investor in the world would be incredibly happy with, but nobody has achieved, right, Devin? So would you say that setting your expectations more than anything else is the most important thing?
Provided you are self-aware, I guess I think you are absolutely right in your question. But you as an investor, I think you don't have greed. I think that is impossible. Every individual person, I think, would have a small or big greed. I think that is definite and that is a fact. So when you have greed, I think this kind of outcomes are bound to be there. It's not going to be very surprising if this outcome is not there. In fact, I think to teach them the right methods, You may do the public awareness program that you have been doing as an exchange, as a regulator. Everybody is doing this kind of programs, but still it is happening and it is still unfolding. Remember well that I think we are still not 50, 60 crore investor accounts in the country. I think for a size of population, we still have only 10, 20, 12, 13 crore kind of an accounts in the country. I think if they have multiplied by 4 times, 5 times, this is even going to take a bigger shape. In my viewpoint, I think it is a regulator who has to basically install correct practices. Today, I think this particular market, and I'm taking the liberty of explaining this part a little bit, I think here, that today this market, which was evolved in 2000 derivative market, has now completed 25 years. In 25 years, what has changed? Probably nothing has changed, I think, except creating the larger and larger hurdles. That is not the solution. In my viewpoint, there are 3 different class of players in the derivative market. One is a proprietary trader who is coming either from the local or the global side. I think what we have seen in recent days, one example. The institutional players who use derivative market for also the hedging purpose, and the retail who basically use the derivative market for leveraging as well as for hedging purpose. Now, if these 3 class of players, they operate on one single platform with the same set of rules, the disaster is bound to happen. You are driving a bullock cart and you are driving a racer car on the same expressway. You are bound to meet with accident. In such situation, I think these 3 class of players, I think, should be segregated, not from the price discovery point of view, but from the execution window point of view. The product differentiation has to be created for 3 segments. If you want to stop the menace of, I think, this double trading, or I think the higher amount of greed which is getting generated in the minds of people, I think this kind of system will have to be created. This system has the power to, I think, control the kind of, I think, nonsense which is happening in this particular place. If we can handle that part, I think that can possibly give a relatively better solution in my viewpoint. That is why I'm insisting that the remodification or the modification of this particular system is required at the uppermost priority level in my viewpoint.
That's a very important point that you're making. Just another illustration of that is I can choose to have a 100-meter race with Usain Bolt, but I have absolutely no hope of winning that race. Devin, thanks so much for joining me this morning. Pleasure speaking with you as always. All right, so this was an attempt to draw your attention to some of the strategies that people are using to take your money away. In no other uncertain terms, effectively this is scam, and beware is the message that we have for you, and spot the scam with NDTV Profit. All right, now back to Ask Profit. And this, of course, you know, is the right platform for you to ask your questions on stocks. And so the next question we'll take is on HDB Financial Services. Of course, you know that the IPO was done recently. And we've got Puneet, who's writing in, who bought at levels of 840. And he's incurring a bit of a loss right now. Stock is currently at 813, 814. Remember, the results came out not too long back, and there were a few issues that cropped up, not least of which the trajectory of commercial vehicle loans. Mr. Choklingam, if you saw the numbers and if you track the company, of course you do, I'm pretty sure you do, what would you suggest doing? What are the prospects?
Yeah, in fact, we have recommended subscribing to the IPO. But on listing day, we closed it. We suggested a sell. Purely based on the price to book value, it was a little stretched around 740. The price to book value was more than 3.8 times. So I would suggest wait, and in case the stock falls, somewhere close to 770, 75 range approximately, then one can consider buying for long term. Otherwise, above 800, even now the valuation is slightly stretched.
Right, so that's with regards to where HDB Financial stands. The next question, in fact, our next caller is from Murli, who's calling us from Bengaluru. Murli, hi, a very good morning to you, and thanks so much for waiting. How can we help you today?
Yeah. It's a long wait, but I think it's worth the wait.
Thank you. Go ahead with your question.
Yeah, I bought 300 shares of Emcure Pharma in January 25.
Okay.
And last 9 months, I didn't make any return, even in this market. And it has entered into an agreement with Sanofi for distribution of some of these products recently.
Right.
Yesterday or day for yesterday.
Correct.
But it's quoting a high P of around 81.
Correct.
Whereas, can you switch over to Pfizer which is quoting at just 31 PE, and which has shown good improvement in performance in the last 2-3 quarters.
Right. Okay.
It is in MNC also.
Correct. Okay, I got your question, Murli. I'll take this up with Mr. Choklingam. Mr. Choklingam, what he's saying is that he is already holding Emcure, but he's saying that Pfizer is at a better P. And yesterday, Emcure did sign an agreement with Sanofi India to broaden reach in anti-diabetic drugs, is what he's talking about. Do you think he should stay invested in Emcure or shift to something like a Pfizer?
One can stay invested in Emcure because if you look at PE, yes, it is slightly stretched around 38 times. But the point is that most of these pharmaceutical companies, the appropriate valuation, apart from PE, one should also focus on enterprise value to annual pharmaceutical sales. There you get a lot of comfort because EV to sales is only around 3.2, 3.3 times, which is a very, very fair price for holding the stock for medium to long term.
All right, let's take the next question. This is on Mazagon Dock Shipbuilders, and Momita Biswas is writing in from Kolkata and asking about this. She's bought at levels of 3,410 rupees per share, and she's wondering whether to hold it. She's a short-term trader. What's the view on the charts, Kush? A little pressure on the selling side.
There has been, and I think that could well continue. I don't see a V-shaped kind of an up move on on Mazagon. In fact, some of the other defense names as well. However, the volumes that you're seeing on the downside are starting to thin, not just in the last couple of sessions, for the last couple of weeks. That's been the case, which means there's a good possibility that the bulk of the selling might perhaps be getting done. I would suggest a hold on Mazagon. Preferred to keep a stop loss around the gap, which is the 3030 mark. And if indeed that's broken, then the structure could worsen further. But if not, the stock could consolidate from here and perhaps see a mild rebound, and that's when you can exit. For now, hold the stop loss near the 3030 mark.
Hold is the view on Mazagon Dock. All right, our next caller, Shankar, is calling us from Kolkata. Shankar, hi, a very good morning to you. I believe you have a question on Kajaria Ceramics.
Yes, madam. I'm having 50 shares of Kajaria Ceramics, bought at 1174.
Okay.
Now the stock has been much below my purchase price for long.
Right.
But recently it has made an up move and is now trading above my purchase price.
Correct.
So I wanted to know, I'm a long-term investor, so I wanted to know if it would be better to book profits or should I hold it for say another 1 or 2 years?
Okay, got your question, Shankar. I'll take this up with Mr. Choklingam. Mr. Choklingam, any view on Kajaria Ceramics? Should he continue to hold for further upside?
Yeah, one can hold it. At least another 10% recovery is possible. I looked at the fundamentals. One can hold the stock.
Okay. Let me take the next question, and this is from Sagar, one of our very long-term viewers, and he's been investing for a while. Max Healthcare is the name of the counter that he's looking at. He's holding 4,200 shares, and this is as part of the demerger deal. The stock has delivered exceptional returns, he says. Do you see outperformance continuing going forward? Any projections that you have? Any niche or better stock in the hospital space with potential upside in the long term? And he's already holding a basket of hospital stocks like Apollo, Fortis, NH, as well as Artemis as well. So what, according to you, Mr. Choklingam, is the best pick out of what I've mentioned and the strategy that you would suggest on Max?
See, Max has already played out very well, and valuation is definitely stretched. We normally look at enterprise value per bed. I would not recommend a buy or hold Max Health. One can consider Apollo Hospital. According to me, that has got a lot of growth potential. And if somebody is willing to take a risk, definitely it is only for risk-taking investor, then they can consider Shall Be Limited. Personally, also we have invested in the stock. And it came out to the IPO around 246 rupees about 7 years ago. And if you look at operational bed and enterprise value, this is the cheapest hospital stock. So the kind of, the consolidation is happening in the market for hospital business. I believe Shall Be Limited has a potential to get re-rated. So, but that is only for risk-taking investor. Otherwise, conservative investors can consider Apollo Hospital.
Okay, our next caller, Dusoji, is calling us from Hyderabad. Dusoji, hi, a very good morning to you. How can we help you today?
Yeah, good morning. My name is Dusoji. I'm calling from Hyderabad. So this is regarding the Garden Shipyard. So actually, I purchased 3,075 rupees for 99 shares.
Okay.
Now it is in.
Okay,
it's
go ahead.
Trump.
Yeah, go ahead.
So should I hold it or should I?
Okay, got your question, Dasoji. I'll take this up with Kush quickly. Kush, on the charts, Garden Reach, what's the view like?
Very similar to Mazgaon, selling continues, but the pace and the volume of the selling is going down. So just a hold, keep a stop loss near the 2475, 2480 zone and continue to hold. You could consider an exit on rebound.
Exit on rebound is a call on Garden Reach. So whoever else wants to know about that stock, there you go. That's the answer. It's time now to hit the rapid fire round. And this is where Kush as well as Mr. Chokalingam, we throw in many questions at you as possible over the course of 2 minutes. Starting with Exide, which Rohan has bought at levels of 384. And he's got a target of 450. He's willing to wait for 3 months. Is that a good strategy? Kush?
The target seems to be stretched for 3 months, but on the whole, I would suggest a hold, top loss at 360.
Okay, the next question is on Bajaj Auto. Bharat is asking this question, wants to know if you can buy at the current market price for the next 3 years. Mr. Chokalingam, your view?
I would prefer TVS Motor for next 2-3 years over Bajaj.
Okay, BEML, bought at levels of 4,329. And would you book profit or hold till March? 2025 is already done. 2026, I guess, is what he's talking about. Kush, what's the view?
So for now, I would book profit on BEML. Consider a buy on decline close to the 4200.
Okay, the next question is on Azad Engineering. Rajvardhan is writing in and wants to know if he can continue to stay invested in this counter for the next 5 years. Mr. Chokalingam, your view?
Sorry, I have not studied it.
Okay, the Kush, your quick view?
No view for 5 years on Azad.
Okay, Rajratan Global Wire, bought at levels of 607, around 387 shares. 2 years is a holding period. What should you do? Should you hold or exit? Any view, Mr. Chokalingam?
On any further rise, it can be sold. The PE ratio is highly stretched.
Okay, Vari Renewable, Raja from Bengaluru has 165 odd shares, wants to know if he can buy more at the current levels from a longer term perspective. Your view, Mr. Chokalingam?
I would not suggest buying because the entire renewable space is getting crowded in the business as well as in the stock market.
Okay, Raghu's been investing in BEL since COVID, and he's wondering whether he should buy again. He's booked profit and exited. Kush, what's the view?
Yeah, so you could start accumulating now, and maybe all the way up until 380 is when you can consider accumulating from here to up until 380. That way.
Okay, Kush, Mr. Chokalingam, thanks so much for taking the time and for answering all the questions that you did today. Absolute pleasure as always having you on the program. And that brings us to the end of this edition of Ask Profit. I understand that it's been a bit of a curtailed session, but we thought that message had to go to you. Spot the scam. It's an important thing to bear in mind, and spread the word is what we can tell you. And do stay tuned. Lots more coming up on NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है जनता को जवाब चाहिए, इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hello and welcome. You're watching KYC. We've spoken about quite a few sectors on this show, and one sector that we've not covered is online travel. So we thought let's take that up. It's also a stock which is absolutely a buzz today. It's called Lert Revenues Technology Limited, and it's basically branded as Ixigo. So you would have obviously either heard about it or seen it or perhaps even used it. Let me first start off with what I want to know about Ixigo. The numbers for Q1 FY26 were solid. Are they sustainable is the first possible piece. But really zoomed out on a broader sense, it's a very competitive space, right? How is Ixigo standing out? How do they continue to plan to stand out in this very crowded marketplace? And they're doing good numbers, Mahima, frankly. And so what's helping those numbers is what I'd want to understand. Second is, what are the growth expectations and levers? And they're getting into new businesses, especially into hotels. Yes. So that's one possible lever. Also, the revenue is skewed towards train and flights. So there's a large gap where other avenues with regard to travel is concerned, which they can tap into quite easily. Whether they are planning to do that and what the potential for that perhaps is. So that's what I'd want to understand. Also, customer acquisition, customer usage has gone up quite sharply. The monthly active users have increased and not just inched up. They've nearly doubled up over the last year or so, which is all a positive. But what does that do to customer acquisition cost? Is that continuing to remain elevated? Are marketing expense continuing to remain high because it's competitive? That's an important aspect to understand. Can take rates further expand? And an extension to that, I'll take it to number 5. Take rates are basically your commission payments that you make on each transaction. And number 5 as well, I'll couple both of these by saying that, and this was an interesting observation which Sajid sir in our newsroom made to both of us, that train prices have gone up because of premiumization within the train segment. And most of those booking trains are actually booking through platforms and are booking the more premium trains. So both of those is tying up very well. And therefore, with that increased price, will take rates also go up. So maybe the rate doesn't go up, but the value goes up. And are we seeing that trend likely playing out on the numbers? Also, what are they doing with the excess cash? Because essentially they don't need too much investment. It's a capital light model. And therefore, what are they doing with the cash that they're generating? They've done over 120 crore of cash last year, and what the plan is going forward is what I'd want to know. Also, last off, there's no single promoter here, so that's one possible risk, that there's not enough skin in the game from management. But the other more important piece is that you have plenty of private equity players. If they start exiting, that poses a real risk, and is that risk as real as we are seeing it? That's what I'd want to really understand. But let's start off as we always do. By the way, Mahima, myself, taking you through the next half hour or so. Essentially, I'd want to first start off with what the company is about, if it's not already quite clear. But I'll quickly take you through it. It's India's largest online travel agency for the next billion users is what they call it. It empowers Indian travelers to plan, book, manage trains, flights, buses and hotels, even though buses and hotels are far smaller in comparison to the trains and flights. And Mahima, I'll probably take you through that mix. It's focused mainly on tier 2, 3, 4 cities and the mass market. They are also trying to integrate AI and technology as well as data science in all of their offerings. How is that playing out is going to be interesting to watch out in this very crowded online travel agency space. But Mahima, the rest of the company.
Right, so I'll start with the products. As you rightly mentioned, the biggest segment is the train segment, where almost 41% of their revenue comes from this particular segment. This basically includes, your ticketing business, of course, your confirmed tickets, your Tatkal tickets, plus the PNR status, the predictions, the live tracking of trains, plus the position of your platform, coaches, utility tools, etc. In this, there's also waitlist prediction, alternative routes, plus they also have the ixigo guaranteed, where if you don't get your ticket, which is waitlisted confirmed, there's a 3x guarantee feature also present on the platform. And there's of course IRCTC partnership for direct ticketing as well. Now in terms of flights booking, which is roughly 32% of their overall revenue, that's the mix. Well, again here ticket booking is included in terms of domestic, international booking as well. There's web check-in. There's also real-time information for your flights. If they're delayed, they update you on the app itself. In terms of price lock as well, there's a price lock feature where you can pay a slight amount and lock the price of a particular flight that you're eyeing on, plus there's cancellation option, refund options available on the app itself. Then there's buses, which is almost 24% of their overall business, overall revenue. Buses basically, it's a platform where around aggregates of supply of around 4,000 operators is present, and that covers your 3.5 lakh plus routes when it comes to your road routes. So that's with regards to where the buses stand. Here also there is live tracking, there is operator rating comparison, there is also Abhi Assured, something that gives you guarantee and assurance of how your entire journey will be. So that's with regards to where these three products stand. Plus they've also recently entered into the hotel business. They've launched, it's not very recent, but in December 2023, and this what they're doing here is they're cross-selling their trains, buses as well as their flights along with the hotels. So they already have an existing user base that is present, and they're using that user base to now foray into the hotel business as well. So that's with regards to where hotel business stands. In other verticals, they also have their Gen AI, which is an excellent itinerary planner that plans your itinerary if you are on a vacation. There's AI travel assistance as well. There's food delivery on trains option that is available on the app, that is via the Zoop platform. There is also cross-selling and value-added products like travel guarantee as I mentioned earlier, plus there is insurance as well on the platform, and of course meals and cabs once you're out of train or a flight or a bus. In terms of the business model, as Harsh mentioned earlier as well, it's an asset-light model. Digital business basically on app and website business that operates online, sells B2C, so directly to consumer. Indian travels via, of course, mobile apps and web platforms. The focus is on Indian markets right now, especially non-metro, your tier 2, tier 3, tier 4 cities, and they have offices in Gurugram. There's also a subsidiary in Europe, and of course operates delivery across India. So that's with regards to where their entire business model stands. And lastly, in terms of main dependency, now this is interesting because supplier access, of course, IRCTC is the main one for trains. There's airlines and bus and hotel partners, but in terms of their overall IT infrastructure, that involves your dependency on cloud computing, data tech, as well as API integrations, and of course the payment partners as well. So that is one key dependency that they have to rely on, and of course human capital, because their data is something that should be in secured hands when it comes to where one person is traveling from one place to another. So that's their main dependency. This is everything, a brief, everything that you need to know about ixigo per se.
Perfect. Let's start off therefore with the metrics. We'll start off with the income statement. We'll look at operational metrics for this one, balance sheet, cash flow. We'll thereafter take up return ratio, shareholding, street cred, as well as valuation. So all of that to be covered over the next maybe 10 minutes or so. Let's start off with the income statement. Mahima.
Yeah, so in terms of the income statement, it's been a good run up for the entire company. If we take a look at the past 3 years of the performance, in fact even 4 years for that matter, the 3-year CAGR growth for revenue has been around 34%. The revenue has grown almost 1.5 times in the past 3 odd years. There is also EBITDA, which has seen a CAGR growth of almost 148%. Margins have remained fairly stable. I've seen a steady growth from that 2% mark. This is adjusted EBITDA margins from the 2% mark in FY22 to almost a 10% mark in FY25. Net profits, it was a loss-making company in FY22, around losses of around 21 odd crores, which has turned profitable since FY23, and the profits have continued to grow. Slight decline in terms of where FY24 was concerned, but overall a good growth where it comes to the overall trajectory of net profit as well. So overall a thumbs up when it comes to the income statement.
You want to, Mahima, take us through the Q1 numbers as well?
Yeah. So
as well as some of the operational metrics.
Sure. So in terms of the operational metrics, I'll go there first. Of course, the stock is buzzing today on the back of the Q1 numbers, but just before I go on to that, operational metrics, overall, the gross transaction value has been on a significant amount of, in terms of percentage also, it's been on a good rise, but in terms of the number as well, it's almost doubled when it comes to, your comparison to Q1 FY25 versus Q1 FY26. Even the annual active users have increased from around 480 million to 544 million. So that means that more and more people are signing up for the app. The take rates here, the take rates for flight has slightly declined from 11% mark to an 8% mark. For train, that has remained stable because train as a business is consolidating for them. There's bus where the take rates have slightly increased from a 10% mark to 11% mark because again, that's a growing vertical for them. So this is with regards to where these operational metrics stand, but in terms of the Q1 performance has been a stellar quarter for sure, this year. And this is because, their overall transaction value, gross transaction value has gone up both for flight and business. That's been around 80% on YOY basis. Plus in terms of the overall growth also, there's a great growth in terms of revenue, 73% increase in terms of their overall revenue. Margins are slightly dipped because of the major investments that they're making in the business, and that's the only reason as to why the margins have gone up, and of course their marketing cost as well going up. So that's with regards to where the Q1 numbers stand for ixigo. So overall a great set of numbers in Q1 itself.
Yeah, perfect. So very strong set overall, 11% QOQ expansion on the top line, not looking bad. And even your adjusted EBITDA margins, Mahima, yes, they've come off, but it's really, really small. Let me actually pull out those numbers. So Q1 FY25, the adjusted EBITDA percentage was around 10.4%. It's now come in at 10.1%. The guidance continues to remain 10%. And full year FY25, they've done 10.6%. So it's extremely marginal. It's rather the growth on the top line that's really impressing the street, it seems. And sustainability of that is obviously the question. So that's how at least the income statement looks. Let's look at the balance sheet now. And in that sense, again, looking quite impressive. You're seeing book value at around 634 crore rupees. And when you're looking at the overall, the current market cap is around 8,000 crore after the run up that we've seen today. So obviously considerable price to book, but it's a platform business, mind you, something that you must know, that platform businesses generally have lower capex, and therefore your book value will always be lower and your price to book will always be more. Your cash and bank balance is fairly healthy as well at around 270 odd crore. Of course, that will they'll continue to build on that. As they build on it, will be interesting to see where they're utilizing that cash, because tech will be very limited in terms of its investment. It's more about how much can they expand this number and what they do with the cash flow. That will really matter. So, Mahima, cash flow.
Right, so overall cash flow position has also been healthy. I mean, if you see the overall trajectory of cash flow from operation, that's been at a steady rate. In fact, as compared to FY23, it's almost tripled, more than tripled. In fact, it's 4 times, from 31 crores to 122 odd crores. There's the overall, the cash flow from operations to PAT ratio is also healthy at 129% as of where FY25 stands. Of course, in terms of net cash flow position, the FY24 picture doesn't look very attractive, but overall FY25 on a net cash flow position basis, they have remained positive. So a thumbs up where it comes to the cash flow position as well. But as Harsh mentioned at the start of the show, right, that they're sitting on a huge amount of cash pile on, on their balance sheet. We'll have to, try to understand as to what are the plans with respect to the kind of cash flow that they're sitting on. Are there acquisitions that they're looking forward to? That is an interesting question to, or interesting aspect to look at too.
Yeah, and what kind of acquisitions, if so? Because it's a business which is ripe for consolidation, so acquisitions are understandable. But where exactly is that happening? But the CFO to PAT is quite healthy, so no concerns there whatsoever. Now let me take it across and look at return ratios, because that's where you could see some bit of choppiness, and that we've seen. Whether this kind of early teens number is sustainable, well, it seems like it's sustainable, but we'll have to wait and watch for a year or two to see the sustainability of that. Also, the other piece with regard to this is early teens. How do they allocate capital, and therefore that will also determine where return ratios go, because they're going to be investing quite a bit of money and a lot of it is cash. Now, you want to see where they are investing that cash, because that will determine where the ROCE actually goes. If they are acquiring other businesses, that again is a risk. What kind of businesses are they acquiring? What kind of return ratios are those businesses playing at is what we'll want to understand. So we've given this a neutral, but shareholding, Mahima.
Right. So in shareholding, again, as you rightly mentioned, no promoter holding right now. Skin in the game is not there. And while, when they came out with that IPO, also the offer for sale was a big chunk of that IPO. It was 620 crores where, there was offer for sale for promoters as well as early investors. So that's one thing to keep in mind. FIS overall has maintained their stake in the company from a 58% in June 24 to around 59% in March 25. So slight increase there overall. DIS overall, again, a steady state of holding in the counter, around 9% stake in the company. And lastly, public shareholding has slightly gone down from that 31% mark to 30 odd percent mark, but no concerns there as well. But we've given it a thumbs down here because there's no promoter holding per se.
And the risks of private equity investors exiting. So both of those are real risks, and that's something which everyone needs to be cautionate about, if at all that's a word. Let's quickly look at street cred as well. And the IPO price was 93 rupees a share. Of course, the stock doing very well for itself post the IPO, which happened exactly last year, June of 2024. It's given 120% returns to investors. 48%, of course, was the return which they've got post the listing itself, which happened at 138.1. So even if you purchased it at listing, you still made a decent return on this one. The 1 year stock price performance is 18%. Year to date is 14%. 6 months is 42%. And the 1 month performance is 11%. So across the board, this is clearly a business where the management has kept enough value on the table for investors. So, but that's with regard to street cred. Let's quickly also look at valuations. Now, the guidance is late teens to maybe 20% kind of top line growth. The price to earnings multiple currently sitting at 125 basis the 8,000 crore market cap, which it has just touched today. It is likely that it will trade at around 79 times FY26. This is as per Bloomberg analyst estimates, but just 3 analysts cover this one.
Yeah.
You've looked at this, Mahima, you want to spell it out?
Yeah, just 3 analysts covering, and just on that valuation perspective, I mean, very expensive to its peers as well, right? Something like an IRCTC or a Yatra Online or Easy Trip, all of these trading, although they are also not cheap, but trading in that range of 36 to 40 odd P, but the current P for Ixigo for sure is way higher than its peers as well.
Well, let's sum it up. That's all our rating parameters on the screen, and we'll quickly come to the KYC rating. Some of these numbers were quite impressive. Of course, shareholding a bit of a concern. We spoke about 5.5 on 8 is what it commands on our KYC rating. But let's bring on board Mr. Alok Bajpai, Group CEO at Ixigo, joining us as we speak. Alok, good morning from where you're at. In fact, good morning from where we're at as well, but it's fairly early for you. Thank you so much for joining in and speaking with us. Alok, let me first start off with that top line growth. It was very strong in Q1. Can you continue this kind of 10% QOQ expansion, or were there one-offs here in this quarter?
Well, there were no real one-offs here. I think what you're seeing is the outcome of a journey of more than a decade, right? So I think if you look at why Ixigo is growing at the pace at which we are growing, it's a function of 2 things. One, the kind of market we are going after, and we chose to go after the underserved next billion users, or the Bharat India 2 part of the market. And I think even though it took a bit longer to build the business, and of course, build deep inroads into train, bus, and flights now, I think the fact is that it's a much bigger audience to cater to, right? Only 4% of Indians fly, but when you look at the numbers of people taking trains and buses, it's an order of magnitude bigger. So we kind of built a very large base, and we are now able to monetize this base. And this kind of growth has been coming in not just for a quarter, but if you look at our entire history, our CAGR, for the last 5 years has been quite good as a result of the fact that we've just started monetizing the large base that we built over several years. Will this kind of growth continue going forward? I think it's a function of 2 things. One, are there things we can do which we don't do today? For example, hotels is a category that we've just entered, and we have started to make some inroads there, although we don't disclose at this point, but we are seeing quarter on quarter growth starting to come in there. And of course, can we monetize our existing base even better with value-added services? So you would have seen that almost 29% of our transactions, have some value-added services also sold on top, which offer peace of mind protection. So our take rates are improving. Our contribution margin has remained fairly stable. There's been a slight dip in CM percentage, but that's deliberate because we want to chase growth at this point.
Alok, hi, Mahima also joining in. Just want to get a sense on competition. How is it looking like? What's the landscape? Because that's changing very fast. Just want to get a sense about that. And how do you think that you are standing out when it comes to, the other players who are doing the same thing?
I think Ixigo's story is a bit of a blue ocean story in that sense, because we chose to go after an underserved market where there was very limited competition, and in a way we are creating new market. Even if you look at our growth in competitive categories like flights, where there are multiple OTAs doing flights business, I think what stands out for us is the ability to tap into the first-time flyer segment, which is coming, largely from people who today might be traveling on a bus or a train, and tomorrow, have the capacity or the per capita income to actually upgrade them. And the fact is, because a large part of this ecosystem is already using us, if you look at our user base, more than 500 million users in last fiscal year have actually used us at least once. If you look at our monthly active users, 84 million monthly active users. So in that sense, I think we are at a crux of, we are at that inflection point where you start to see that monetization, start to see the bottom line coming in with the operating leverage. And I think it's just a start in many ways for categories like flights and buses, where the penetration that we have is still much lower. So on trains, we are the market leader with 60% share of the OTA market. On flight, we would be the third largest player. Obviously, we'll wait for the others' results to see how they are growing. But we have been growing the fastest over the last 4 quarters. Buses, we are the fastest growing player and the second largest player. At an overall level, we are number one on user base and number two on revenue and GTV. That's where we are today.
Look, how do you continue to stand out in a marketplace that is this competitive? And you're getting into hotels as well. How does the scale up in hotel happen? Will it be, or rather, you've done this since December 23, but give us the strategy here. How will you stand out? Again, it's a crowded marketplace.
Yeah, I think every category that we entered was, I mean, we were not the first train booking site, nor were we the first flight OTA or the first bus OTA. I think every category we entered was already competitive. The only reason why we continue to grow and take share is because we are very focused on customer experience, right? So we were never obsessed just about selling tickets or monetizing, but actually going and solving deep utility problems in every category. If you look at products like Flight Tracker Pro or our ability to manage trips with AI, or if you look at our train tracking capabilities or train PNR prediction or the travel guarantee product that we launched, these are innovations that have come out of deep understanding of what people want and solving for their pain points. And a similar story, will hopefully play out, in other categories we enter, because even if you're a late entrant, the advantage you have is to look at that category with fresh eyes and figure out what pain areas haven't been solved yet.
Alok, when I was looking at your take rates, the flight take rates have slightly come down, year on year, but train take rates have remained stable. So I have a two-part question on this one. How do you see this improving? Because train take rates have consolidated, flight take rates are coming down. Is there a scope of improvement in both of these cases? And secondly, in the start of the show, Harsh was, he did mention that one of our senior did point out that there is premiumization of trains that is happening, right? So does that impact your take rates? How does that work? Try to, make us understand that.
Well, our take rates have been fairly stable, and in fact, they may have improved slightly on categories like flights and buses. But some of that is optics also, because last quarter, the fares on domestic actually came down a bit due to some of the turbulence that the sector was experiencing as a result of Sindoor and then AI 171. But if I look at the broader, bigger picture, right, the take rate comprises of, what kind of convenience fees exist, and there's commission, and there's also value-added services. I think our ability to have latch-on value-added services and the ability to also, figure out through data science and AI, what kind of pricing and what kind of essentially personalization one can do around who to market it to or sell it to. I think that cross-sell, upsell funnel has really started to work. So you can expect that take rates are fairly stable. I mean, on train, we've been centered around 6%, and it's a regulated industry. So I think we've been managing to maintain it around that number, slightly plus or minus here and there is okay. But on buses, we've managed to improve it from 10% to 12% over the last 1.5 years, if you see. And I think we are at a point where we are satisfied with where we are. So we don't see any major changes happening there.
Alok, two quick questions. I have only 30 seconds left. So what do you do with the cash that you're going to be generating? Where do you invest? And second, what's the risk like of private equities exiting? How large is that?
Well, I think on the use of cash, I think we've always been very conservative on these things. I mean, Ixigo was built with very little capital and very little cash in the first 10 years, first 15 years of our existence, right? And I think we will, use cash effectively only where we see an opportunity to. And even at the time of IPO, we said we are always on the lookout for great companies. We've already done 3 acquisitions: Confirmed Ticket, Abhibus, and Zoop, and all 3 are playing out nicely. We will be on the lookout for investments and acquisitions out there. And also, in terms of opportunities like hotels or developing more AI products, we will not be shy of investing over there. And I think, what we expect is that look, cap table churn, etc. I mean, every company goes through that life cycle, but I think if we continue to deliver on our promises, I think that is less of a worry at this point.
Sure, got it, Mr. Bajpai. Thank you so much for joining us this afternoon, or rather this morning. Viewers, in fact, that's all the time we have. So we'll have to close this at this point. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI?
The real estate space is something that you should keep your eye out for, as DLF is marking its entry in the Mumbai region. Now it's marking its entry in the region with its West Park Phase 1 project. But to talk to us more about the details and its overall strategy in the MMR region, we are joined in by the chief, we are joined in by Akash Ori, the joint MD and CBO of DLF Home Developers Limited. Hello, Mr. Roy. Welcome to the show. It's a big day that you're marking your entry in the MMR region again. I just want to get your overall sense in terms of the West Park project that we are seeing the Phase 1 in focus particularly. What is your strategy going forward with the MMR market?
Well, thank you first for having me on the show. So as far as we are concerned, DLF is extremely excited to be in the Mumbai market. There's a product that we've conceived for the market, and there is a certain legacy and a lifestyle story that we kind of bring in, which we are bringing in. So I think it's going to be a real good relationship.
Mr. Ori, the expectation is that with this project launch, the pre-sales that the markets and the analysts are building are in the range of 2,500 crore of sales. Are you fairly confident of achieving this number or even overachieving this number?
Well, I think everybody's kind of gotten used to DLF selling in 1 day and 3 days and everything else. Mumbai is a different market. It's a new market for us. I will tread carefully. We are extremely buoyant, extremely excited. And I think, see, right now, we've been saying this for some time now, that we will do this in two phases. The first phase of this particular launch is happening now, as you see, and then followed by the other one. But I think so far, we're extremely grateful of the response we've received. There is a certain sense of even ownership that has already been created. A lot of people who've been aspiring to get a DLF home and wanting us to be here, to make homes and memories for them for life, are welcoming us. So I think right now it's been a pretty warm welcome.
Okay, Mr. Auri, can you give us some more of a detailed outlook in terms of this project launch, in terms of the towers which are going to be launched in phase 1, phase 2? What is the kind of expected timeline for the phase 2 as well? And what is the overall pricing that we are looking at? Because if we are looking at the range, it's in the range of 5 to 7 CR that we are looking at. Is that the correct value that we are seeing?
No, I think, see, right now, overall, the project right now, in the first phase, will be about 4 towers. And then the next phase will have another 4 towers. It's a nice integrated project. We're bringing in the DLF amenities. It's got a beautiful eco deck. And when I say amenities, I'm talking about bowling alleys, restaurants. There's a rooftop restaurant, and other facilities that go with it, a gym, spa, other food and beverage facilities. So I think this is something that Mumbai is going to enjoy. As far as price points are concerned, there will be, it's between 6 to 9. That range is what I'd like to give you. But initially, yes, obviously there will be a little benefit, and post that, then things will kind of ramp up.
Okay, also just want to understand your strategy behind the re-entry in the MMR region that we are looking at. What has changed this time? Because, earlier you had made an entry in 2005, and this was by a land acquisition that we'd seen in Lower Parel, which was eventually sold off to Lodha developers in 2012. So what is the strategy this time? How is it different from the last decade or so?
Well, at that point in time, I think priorities were different. We entered the market, but we also did, even that transaction was of good value to us, as you may know. But right now, we realize that our footprint is been now across 20 cities all over, and Mumbai has been calling us for some time now. And I think what is important is that investors and end users have been wanting DLF to come in, which is pretty heartening to kind of see. And that has prompted us to make this, re-entry. And we've partnered with Trident right now, Trident Realty. We're in a very buzzing place around Andheri West. And the product itself is something that people are going to enjoy not only owning but living in. So as far as we are concerned, opportunities are coming in as we speak, to do other things. But I think one step at a time. We want to get this thing going first, and we brought in our trademark product and service lifestyle that generally DLF is known to do. So that's what we're going to do.
So in next 2 to 3 years, now this is going to be like 2 phases entry as you spoke about. But what is the overall kind of launch pipeline that you see in Mumbai?
Right now, I can only comment about this to you. As I said, there are so many things happening, some very good proposals on the table. But first, we want to get through this, and you will see future announcements from us for Mumbai, and the products and offerings and services will definitely get better. So that is something that you will have to wait for this. Please keep watching this space. But as of now, I think all attention, all energies are on this project. And as you know, any time and every time that you kind of come into a new market, you continue to learn, the ways of the market, and you need to respect them. So I think at this point in time, we'd like to, bring in DLF into Mumbai, and kind of get that off the ground. That is where all our energies and time right now are going to be dedicated. And post that, you will hear from us hopefully soon.
Okay, fair enough. Now, in terms of, Mumbai is one launch that we have awaited. You already have the DLF Privana North launch, which saw about 11,000 crore worth of bookings. Considering the Goa launch also in the second half, the launch pipeline is of around 17,000 crore. And pre-sales expectations are same as last year in the range of 20 to 22,000 crore. Just considering the response that we saw for the Privana North, do you expect an upward revision in terms of whether pre-sales guidance is given?
See, we've just about started. It's been one quarter. Right now, we'd like to keep the guidance as is, because there are, as you rightly said, a launch here followed by Goa. And then, of course, we've got the second phase of Dahlias coming in, which is our super luxury offering in Gurgaon. Then there's some residual sales. We've got our quarters pretty busy right now for us to launch another project. Make no mistake, we're capable of launching and, of course, bringing it to market and selling them in no time. But I think at this point in time, right now, we've got our hands full. Dahlias is a very, very important project, as you are aware, post Camellias. That's going to take a lot of our time in Q3 and Q4. Again, very large ticket size, individual sales as well as the entire project. So right now we've got lots happening. We've got, and in fact, in the project pipeline, if you've seen our analyst deck and our guidelines for the next 3 years, we are reasonably busy. But at this point in time, please also understand that 20,000 crores plus is also, they're very large numbers to continue to repeat. So happy to do so. But right now, I think one day and one quarter at a time.
Okay, just want to get a bit of that sense on Dahlias as you spoke about. Now, that is an important project. Now, if we see the pricing trends, it had been in particular focus, considering about 1 lakh of square feet was kind of the pricing that we saw for that project. Just want to get your overall take in terms of pricing in NCR region, because this is one of the regions wherein there has been most appreciation, where the pricing has been. What is the kind of trend that you're seeing building on in the next few quarters or so? Do you expect this to stagnate, or do you see further growth over here?
See, super luxury in very many ways is price inelastic. Is also, please understand that there will never be, it's also a demand and supply syndrome. You will never see excess or more supply in super luxury because it's always going to be a limited inventory introduction. But even if you look at the NCR markets, buyers are coming from all over the world. Everybody wants to upgrade their lifestyle, and people who are at a certain level in the NCR market today, should they want to invest and live and be in a place that is commensurate to what their standards are internationally or domestically, this is the only place. The DLF Golf Links is something that is being built for that aspiration. We've had very successful ventures there, the Aralias, the Magnolias, and the Camellias, and now the Dahlias with 2 golf courses and a beautiful lake park. So it's going to be a development that is around absolute lush green environments, and what is going to be created there and is being created there is going to be a unique project. So I don't think money, there will be a time money won't be able to get you in there, because it's going to be, if I can draw a parallel, it's going to be akin to the Central Park America story, where you have 800 acres of a green lung and you've got these apartments, that kind of are around you. So what is going to happen here is also going to be that. And at present, you've got a very eclectic mix of people. The Camellia itself is called the Billionaires Club. So I think a lot of good people already. They are the ones who make these communities. They are the one who attract. So they are the catalysts for others to come. But you will see this as we move along. Price will be an important factor, but will not be the only factor. You will see it go up because it is directly proportional to the services and what you actually want to pay for your lifestyle, your peace of mind, your security, and something that you can call as home.
All right, and still watching markets at 12 with me, Shreyanshi Singh. Let's take a quick look at what the markets are doing at this point in time. That, of course, was the word coming in from the management of DLF Home Developers, talking about their latest expansion in the city of Mumbai. But let's take a look at the Nifty for now, managing to just be near those 25,200 levels. Below those levels, in fact, sub those levels. Let's take a very quick look at the real estate pack, because that's the pack that is buzzing away in trade. Leading gains as well, followed by pharma, FMCG, as well as metals. Tell you what, let's connect with Ghulam Zia, who's the Senior Executive Director at Knight Frank India. Thank you so much for taking time out this afternoon and joining us. I wanted to get a sense of what you think about the latest developments in the MMR region. First things first, let's talk about DLF Home Developers' latest expansion, the pace of project launches as well. What do you make of this entire pace as well as the latest development?
Hi, it's a pleasure to join you on this show. First of all, since we spoke about Mumbai, let's take a macro perspective of what's happening in Mumbai. Last couple of quarters for pan-India home markets are not very encouraging, because there are talks of market stabilizing, if not starting the downslide. I would say we would need to wait for a couple of more quarters to convincingly talk about the state of market. But last quarter or two have been pretty flat. And especially in Mumbai, there is a segment of market which is actually showing clear signs of fatigue, which is ticket size of apartments ranging from 20 crores to 50 crores as one range, in which there's a lot of inventory come in, and the velocity of sales is disturbing. It is going to take you about 4 to 5 years to sell that inventory. So that is one category which I am worried about. However, that said, the other categories, 10 to 15 odd crores or 5 to 10 crores are such segments where inventories are going pretty in tandem with the velocity of sales. So not much to worry about. You will perhaps sell all your inventories within 2 to 2.5 years, which is a healthy sign. Now, coming specifically to this market of western suburbs called Andheri. Now, this is I would say, upper middle class kind of a market where your ticket sizes are going to be between 5 to 10 crore. So overall, market-wise, not much of a problem. As I said, this is not going to take you much longer period to sell looking at the inventory levels. However, in this market, the competition is very stiff. Pretty much every name that you can think of, including the corporate developers, right from Godrej to Mahindras to Lodha to everybody that you can think of is there catering to this market. By the way, Andheri remains the most wide market of Mumbai. It's the land area is huge. And in that segment coming in, catering to that specific market, which has been actually catered to by multiple local developers, the competition is going to be extremely difficult. And as I said earlier, also you made this point, those developers who had actually real estate, let's face it, remains a very, very local kind of a business. And in there, the brands that you have made, the recognition you have got is also that way. So when you're coming into a market, you need to be cautious that you need to also time your projects well, because right now, if we go by the market buzz, if the market is reaching the peak, then once again, next year and a half or two will be the acid test. So overall, the timings, in my view, is not wrong. Is the competition which I would be more worried about.
Well, absolutely. That just about sums it up. It's a very important point that you brought up there, the competitive landscape. I'd like to talk about that a little more. Tell us about why you think more players are currently entering this market and what do you think is going to happen next? Because you've correctly pointed out how there's a lot of competition in this space. Can it lead to a case of oversupply once the real estate cycle really turns?
Well, that's the exact point I was trying to drive across when I highlighted the cycle portion. That's what my biggest worry is, that what everybody is saying that we have already reached the 12 o'clock position on the property clock. But is that a truth is what I am worried about, because at least in my view, in our view, our house view is that we haven't reached that position. We still have some way to go before we hit the peak. But if at all we do really reach that position, then the inventory in this market is what I'm worried about. It's going to be huge. And mind you, the project size itself that we're talking about, 17 odd acres, itself is huge. Well, one thing which I'm not unduly worried about is because of the slums, etc. Not too much, because Mumbai is, it exists. High-end and mid-end projects and as well as slums coexist together. So which is not so much of a worry. But in my specific view, one plus point is that this is where the metro culmination is happening. The project location that we're talking about, a metro and the JVLR connect, which is coming into Lokhandwala, is going to cater to this. And in my view, by the time this project comes for execution or when people start living here, you will have a brand new infrastructure. And let's also not forget the Warsaw-Bandra link will also be ready. So those who are going to be staying over here will have an access to Nariman Point in not more than half an hour, 45 minutes, which mind you currently takes you at least an hour and a half. So huge benefit also there. Whatever said and done, my problem remains huge inventory that is going to kick in to this specific market. But the appetite of market always surprises us. So I would say let's wait and watch.
All right, now that we've zoomed in on the fine print when it comes to this particular market, I also wanted to zoom out, take a look at the bigger picture as well, because the regulatory reforms and stamp duty payment rules are different across states. You have MMR versus other states, and that's also some sort of comparison that I'd like to talk about. Other than that, also, is there any key differentiator that you'd like to highlight when it comes to MMR versus the other states?
Well, MMR has always been on top of the deck in terms of apartments sold. Like last year, we saw almost about 100,000 apartments sold in the island city. Let me focus on island city because MMR is huge. So MMR has actually been doing kind of transactions which are the best in the country. However, something which we have observed in last couple of quarters is that the numero uno position as far as luxury market is concerned is gradually Mumbai is losing out here. Delhi has emerged, and as you're talking to Mr. Ori a short while back, DLF and Delhi have created a new luxury benchmark in Delhi. And that's where the position that Mumbai enjoyed for decades has actually gone. The number of apartments sold in that category, which is 50 crore plus, has been the highest in Delhi for last 2-3 consecutive quarters. And that's a big change. However, in terms of regulatory environments, I don't think there's much of a difference. While Mumbai still collects about, I would say, 1 or 2% extra stamp duty for infrastructure cess, metro cess, etc. But that said, that's a money which is actually accruing back to you by way of better infrastructure. And you can see it. In last 5-7 years, we have seen a huge improvement in infrastructure. In the next 5 years is going to be really the biggest change for the existence of Mumbai you will be facing in next 5 years. So if you are contributing by paying a % or 2 of extra of stamp duty, it's coming back to you. So net, I would say not much difference as far as regulatory perspective is concerned. It's ultimately the market, the buyers. The buyer segment is pretty unique in Mumbai. Maximum amount of wealth created over here due to equity markets, due to financial capital. That's what Mumbai is known as. So the buyers have deeper pockets compared to the rest of the country. So you have good sales of the mid to upper end of the market in Mumbai.
Yeah, point taken. So that just about sums it up, right? When it comes to the competitive landscape, the latest development that we've talked about, and also the numero uno position, very interesting point that you brought up there. Thank you so much for taking time out and joining us this afternoon.
My pleasure.
So that was the latest coming in as far as the real estate pack is concerned. But let's move on to an NDTV Profit exclusive then. The Reserve Bank of India remains cautious about allowing private equity players to control significant stakes in domestic lenders. In fact, Vishwanath Nair joins in to tell us more about all of this.
Right. So what we're picking up at this point in time is the fact that foreign private equity firms, which tend to bring in bags of money into the Indian banking sector, they will not have that much access to the Indian banking sector. What we're learning is that the RBI is not keen on allowing any private equity players to control significant stake in domestic lenders. Now, significant stake as a term has meaning, and we'll get to that as we discuss this further. The RBI's concerns are primarily because of the source of funds, which remains sort of secretive or opaque in a private equity firm, and that PE firms are quick to sell their stake in banks. They don't hold that stake for a very long period of time. At best, maybe 5 years, and then they move on from their investment. That is their business model, of course. The RBI is only open to allowing foreign banks to own 26% in Indian banks. This is because they are strategic players who tend to hold that stake for a longer period of time. Having said that, the 26% limit will remain as it is, as the RBI is not keen on recommending a higher shareholding. Recommending to who? To the government, because there has to be legislative changes brought in if you want to exceed that 26% mark. There, the RBI is saying that that should not be the case. You should not allow foreign lenders to directly hold more than 26%. Now, just for reference, I just want to point out that FDI and private bank currently allows up to 74% stake to be held by foreign investors. However, an individual investor can only hold up to 15%. So cumulatively, they can hold 74%. An important development also is that RBI's concerns on the foreign banks holding more than 26% stem from the fact that they are bound by their home regulators, these foreign banks. So essentially, the RBI wants to maintain the operational maneuverability when it comes to domestic banks. Like, for example, let's say in Yes Bank's case, right, where the RBI could quickly stitch together a rescue plan. So that cannot be done if there are too many foreign players holding Indian banks directly. What does the RBI favor, though, is wholly owned subsidiaries. Essentially, wholly owned subsidiaries are entities which are 100% held by the foreign banks, but they are India entities. And the next slide, you'll understand that, the wholly owned subsidiary model is something that the RBI favors. Only in certain special cases, like, for example, in Catholic Syrian Bank or in Lakshmi Vilas Bank, where the RBI allowed foreign lenders to come in and hold large equity stakes, that is fine because those are bank rescues. That is still within the possibility of happening. But the main reason is that, as a general rule, the RBI will not allow a foreign bank to directly hold more than 26% stake in an Indian bank.
Well, absolutely. So looks like bags of money coming in from private equity players will have to wait, and that's the word coming in from the RBI. But let's move on. Take a look at Ixigo, because that's the counter that's buzzing away in trade. In fact, let's take a look at the entire pack of earnings buzzers. Varsha is standing by with that update.
Yeah, thank you so much for that. Let me start with Ixigo, as you highlighted. If you see good numbers, positive numbers, strong revenue growth that you're seeing is on the back of transaction activity. The gross transaction value, if you see, is up 55% year on year. There's slight contraction in margin, but a net profit grew almost 28% on the back of strong top line growth. Just to speak about the four numbers, revenue was up 73%, EBITDA was up 52%, margins at 8% versus 9% last year, net profit was up 29%. Let's talk about Angel One. Company has given a weak set of numbers there. The revenue impact that you're seeing is because of SEBI's changed derivatives trading norms, falls 19% year on year. If you see, the fees and commission income drops almost 30% year on year, though rises 9.4% quarter on quarter. Margins, if you see, have contracted sharply year on year to 24% from 33% last year, and the company saw 260 basis point impact on margin due to incubation of new business. Just to speak about some numbers, if you see, total income was up 8%, net profit was down almost 34%, total number of orders grew by 4.8% quarter on quarter, F&O orders grew by 4.5% quarter on quarter, and asset management AUM as of June 2025 stand at around 340 crore. Lastly, on the JTL Industries, the stock is under pressure because the company saw muted set of numbers there. There was a significant decline, when it comes to the margins, EBITDA per ton, I would say, and there was a significant hit on margins. The margin impact that you're seeing is led by higher employee costs and higher cost of materials. So overall, if you see a weak set of numbers when it comes to JTL Industries.
All right, and those are some of the earnings buzzers to take a look at. Thank you so much, Varsha, for joining us with that update coming in. But let's move on. In fact, it's time to say goodbye on this edition of Markets at 12. But as we do that, in a surprisingly candid comment, Oil Minister Hardeep Singh Puri said that India would continue to buy Russian oil despite the US threatening to impose 100% secondary tariffs on countries that purchase goods from Russia. In fact, he's also said that India was not worried about sanctions and that we would cross that bridge when we come to it. Let's go across and listen in.
My own view is the price of oil will come down. It will come down, madam, only because there is more oil available in the international market. Today, two major suppliers of crude are sanctioned. My first submission to you is, will those sanctions remain forever? You know whom I'm talking about. Iran next door and Venezuela. Number two, there is more oil coming on the global market from the Western Hemisphere. I mean countries like Brazil, Guyana, Canada, they're not even OPEC plus members. So my response, and I'm sorry I've given you such a long-winded response, is that I'm not worried at all. If something happens, we'll deal with it. If, for instance, major buyers of oil, major suppliers of oil just go off the market, well, there was worry when some of them went off the market earlier, which same thing happened. You either divert. वो हमारे यहाँ कहावत है ना, एक दरवाजा बंद होता है तो दूसरा खुल जाता है. I think we've got a lot of scope in that. There are a lot of new suppliers coming on the market. Our own E&P is going to go up soon. And when will this happen? Let's not draw any inferences. Some statements are made in order to ensure that two disputants settle quickly.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. expert insights, real-time stock pick.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers here watching Profit Buzzers. This is Hiral Dadia. Let's quickly take a look at what markets are doing at this hour. It's been a somber start to trade, and if you see in terms of Nifty 50 as well right now, no major moves. We are holding on to that 25,150 mark, and that is the important aspect, because till the time Nifty is above that 25,150 mark, that bullish sentiment may continue, but right now seeing cuts of nearly 0.1%. Let's quickly pull up Bank Nifty, wherein the private banking space and the PSU banking space has been in focus. You have Bank Nifty, which is also at the day's lowest levels with cuts of around 0.5% coming in there. PSU Bank Index is also under pressure today, so there is profit booking that is coming in on that space after the kind of surge that we've seen over the last couple of trading sessions. Private Bank Index also seeing cuts of around 0.4%. Let's quickly look at the sectoral heat map, and then we'll see what the broader markets are doing in trade. Real estate, the top gainer today, you have a DLF which is entering the MMR market, and this is the second time it's trying to do that. They have got the RERA approval as well for the project that they will be launching in, they've launched already in Andheri. Nifty Pharma seeing some smart moves today. So pharma, healthcare, consumer durables, FMCG and metals on a front footing. What's losing? IT is absolutely on a back burner with the kind of numbers that are coming in from a Tech Mahindra as well as L&T Tech. Plus you have Wipro and LTI Mindtree that will be reporting numbers in today's session. So that space is closely eyed. Defense continues to see profit booking as well in terms of today's session. Let's quickly look at the broader markets. You have the mid cap and the small cap index also, where you're seeing a lot of stock specific action. So your mid cap 150 is slightly outperforming the benchmark indices in trade. And if you look at the small cap 250 as well, absolute outperformance, 0.3% higher. That's the way the broader markets are functioning. Let's look at the heat map in terms of Nifty 50, and then we look at a few of the broader market stocks as well. Tata Consumers, I beg your pardon, Hindalco, Trent, Dr. Reddy's, Sun Pharma, they are the ones which are seeing some smart moves in trade today. But apart from that, if you have the ones which are trading under pressure, Tech Mahindra 2.5% downtick in trade today. IndusInd Bank under pressure, Infosys, SBI Life, L&T, ICICI Bank and Axis Bank ahead of numbers, which is trading under pressure. Reliance Industries will be reporting numbers tomorrow. Jio Financial Services reports today. You have ICICI Bank and HDFC Bank will be reporting numbers on Saturday. So ahead of numbers, all of these stocks which are in focus. In terms of broader markets, Thermax, one of the stock you should be looking at. It looks like the stock of the day on the back of the Kotak note. The stock has climbed to the day's highest levels. We will try getting you more details. Sona BLW is also seeing some smart moves. Thomas Cook and a Sterlite Tech, which is trading with gains. Network 18 is seeing profit booking today after yesterday's up move. India Glycols under pressure. JP Power and Bharat Dynamics, which is under pressure. But let's listen in to what Samir Arora has to say in terms of the sectors he's bullish on, and why does pharma make it to his list, because he's absolutely negative in terms of IT, only holding a KPIT Tech.
In two and a half sectors, which are big sectors, the growth rate will be very low, which is IT, big consumer, and even although we own most of these big banks, they are not going to grow even 10%, I think. Maybe 8-10% they will grow. Pharma, we might buy more also. And we like healthcare also. So yeah, that broadly. But the thing is, those weightages, because the way we have done it in the past, these won't define our life, but they will be helpful. That means we are not going to make 15% pharma, but you can have 5-6% pharma. So you can say matters or it doesn't matter. But yeah, we like pharma and we like healthcare and we like this and we like Apollo and we like here and there pharma also, yes.
Right, so that's the word coming in with regards to why, Samir Arora likes pharma, and Apollo Hospitals is one of his picks as well from the healthcare space. But moving on, Thermax, as we mentioned, is the stock of the day at the day's highest levels. Kotak Securities has gone ahead and hiked the target price. Let me head across to my colleague Harsh to get us more. Harsh, what is making Kotak Securities so bullish on Thermax? I mean, if you talk about the target price as well, 3,800 crossed that number already.
Well, target price not much higher than what the current market price is, 3,800, but they certainly make a case because they've hiked their target price from 35 to 3,800 Kotak, and that obviously moves a couple of eyeballs for sure, given that it's a Kotak upgrade. Now, in that sense, FY25 was an active year, is what Kotak is saying in terms of products and innovation, and they're expecting Thermax to be an outperformer within the capital goods space. So what they're saying is industrial products saw the most launches, and that's where the most traction is going to be built up. Now, FY25 numbers, they've just broken this down. 77% of the revenue does a healthy double-digit EBIT margin. 14% of the revenue is where there's loss making, and that's been the drag with regard to the overall margin. And 9% has reported around a 6% EBIT margin. If that 14% were to turn around, you could well see margin accretion come through to the tune of 250 basis points overall. What they've therefore done is they've hiked the margin by 20 basis points, thereby increasing the target price as well. So that's where the bit of tweak is. Further, they're talking about growth as well. Industrial products is around 40% of the business where there's solid growth. Energy solutions also has solid growth, 22% of the business. Chemicals, 7% business has good growth as well, and biomass, 5% of the business, accumulating to around 75% of the business has good growth prospects going into FY26. They're penciling an EPS CAGR of 20% or over 20%, nearly 22%, FY25 to 28, due to that turnaround in the loss-making 14% revenue business. That's broadly the thesis which they're playing at. They've notched the multiple up a bit to 40 times, and they've rolled forward their estimates to June 2027. All of those tweaks leading to the target price hike to 3,800.
In fact, what's interesting is the target price has the current market price has already crossed the target price as well. But let's get in a view from Lancelot Dicuna from ValueX Wealth Connect. Lancelot, welcome to the show, and always a pleasure to speak to you. Kotak did come in with a report on a Thermax with the target price of 3,800. A couple of positives that they maintained. And if you see the current market price, it's already reached that 4,000 mark. What would you advise investors to do?
So I think, it's already factored in almost all the positives that were pointed out by Kotak, which is the margin expansion, the order book, and execution. So at this point, it does look a little bit, fully valued or fully priced in. So from here, the upside may not be, significant enough to warrant an investment at this level. But yes, one can keep it on the radar and look at, whenever there's a price correction, either due to market or due to some news, it may be a good time to accumulate the stock, because over the long term, the initiatives taken by the management of Thermax are really going to show up even over the next 2 to 3 years. So it definitely makes it an opportunity to buy whenever there's a price decline.
That's with regards to where Thermax goes. But moving on, you have the IT space, which is in focus as well in today's session. Apart from the companies which have reported numbers, let's quickly look at Tech Mahindra as well right now. Overall, if you see in terms of Tech Mahindra, a 33% increase is what they've seen in terms of profit. The company also witnessed a dip in terms of revenue. The numbers have been largely in line with what the street was estimating. The margins have improved, showing on track with FY27 estimates. New deal wins have outperformed. The constant currency revenue has seen a downtake. The street is not really happy with that aspect. Apart from that, if you see in terms of their guidance for their margins, that I think the street is taking with a pinch of salt. Does not seem that the company will be able to achieve that aspect as well. If you talk about Morgan Stanley, what they've said is they've maintained an underweight. They've cut the target price to 1,555, and they're saying that the company should deliver on margins. Their concerns are weak conversion of deals to revenue, a tough outlook for verticals, as well as a weak macro. Apart from that, if you talk about the other companies, you have Macquarie, which has maintained an underperform. They have a target price of 1,110. They've hiked it slightly, but it's still below the current market price. And what they're indicating is that it continues to lag peers in growth in terms of key verticals. Apart from that, Jefferies has gone ahead and maintained an underperform. They've cut the target price to a 1400. Revenue a miss, profits ahead of estimates, and they are saying that the rich valuations compel them to remain underperform. So that's with regards to Tech Mahindra. In fact, let me also get in Jasmeet to talk to us about LTTS, that's L&T Technologies. Jasmeet, with regards to where L&T Technologies is concerned, how has the quarter been according to you? And in terms of the stock price reaction, what are the key highlights that you're picking up?
All right, thank you for that, Hiral. So here are the 5 key takeaways from the LTTS results. Firstly, the margins have been muted at roughly 13.3% compared to what last quarter is. While when you look at the number of deal signs, this is the 3rd consecutive quarter where the management has signed over 200 million of deal wins. While when it comes to revenue from Indian geography, it is down by 16.5%. In Indian geography, roughly contributes 22% of the overall revenue. When you look at the tech segment, tech revenue also is down by 9%. Tech revenue contributes roughly 40% of the revenue. That's a huge chunk. While when you look at this revenue in CC terms, even that fell by 4.2% on QOQ basis. When you look at the financial aspects of the company, the revenue is down 3.9%, while even the EBIT is down by 3.1%. While the margins are up by 10 basis points, is almost muted from the last quarter. When you look at a segmental performance, the mobility segment has dropped by 3%, but whereas the sustainability segment has gained the 3%, while management also comments that sustainability segment enters a 400 million annual revenue mark in this particular quarter, while the tech segment saw a drop by 9.2%. When it comes to the attrition headcount, the attrition has increased to 14.8% compared to 14.3%. Here we are seeing a 50 basis point increase. While in terms of the outlook, what management sees going forward is the company expects to clock in a double-digit growth as of FY26, while they are also keen on making a middle-term outlook growth of 2 billion in revenue, while the EBIT is expected to be between a 16% range between Q4 of FY27 and up until Q1 of FY28. So here is all about LTTS review.
Okay, so that's with regards to LTTS. In terms of the review and what the numbers are looking like. Jasmeet, you've looked at LTI Mindtree as well. What is the expectation?
Right, so LTI Mindtree results are like right across the corner and the street is waiting for it. Now let's understand what to expect from the results. In regards to revenue, it's almost muted. They expected to rise by 0.91%, while when it comes to EBIT, it's supposed to rise by 5.1%. That's the expectation, while the margins are supposed to rise by 55 basis points. In regards to net profit, even that is expected to rise by 5.62%. When you look at the key highlights, the high-tech sector, it's supposed to have a soft to flattish quarter for this particular quarter, while the brokerages expect a 40 to 50 basis point of margin improvement for LTI Mindtree. In regards to deal win, Citi expects the TCV to range between 2 to 2.2 billion, while the Jefferies are at the lower end where they expect the deal to clock in between 1.5 to 1.7 billion. Nuvama expects the deal win will be strong in this particular quarter. While the key monitorable, what to look out for in the con call and the commentary would be what would be the strategy under the new CEO which was recently appointed, as well as the demand outlook going ahead for banking and high-tech sector. When you look at the margin performance over the past couple of years, the margins have dipped in last 2 quarters. As we say, they have ranged from 15.4% back in Q3 of FY24, and currently in the previous quarter they had clocked in 13.8%. So margin is something to look out for in the following result.
Okay, thank you, Jasmeet, so much for getting us the expectation on this one. The other IT major that will be reporting numbers today is a Wipro. An interesting one because it's going to be interesting to see what analysts are predicting for this one. In fact, my colleague Puneet has all the details and now he's on his way even to the Wipro campus. Puneet, over to you.
Well, Wipro is expected to come out with its result today, and it's expected to be a subdued quarter to say the least in terms of the 4 numbers. We're expecting roughly a 2 to 3% fall in terms of revenue, while the EBIT margin is expected to fall by roughly between 20 to 30 basis points on Bloomberg consensus basis. This will lead to the profits to fall by 9%, coming in at 3,248 crores. The key aspect is that post quarter 4, the management gave guidance of a fall of 3.5% in terms of revenue on a constant currency basis on the lower end, and roughly a fall of 1.5% in terms of constant currency revenue basis again. So we're expecting a fall by the management itself in terms of commentary. Brokerages are also seeing that that kind of a range, and someone like an HSBC has said that they expect the fall in revenue to be in the middle of that range of a 3.5% to a 1.5% fall in terms of revenue on a constant currency basis. On EBIT margin trends also, the last 4 or 5 quarters has been steady for the company, but it is expected to report a 40 to 45 basis points fall in terms of EBIT margins. That's led by lower utilization levels in this particular quarter, as well as some provisions to be made for client-specific issues. So overall, we're expecting a subdued quarter, but commentary will be one of the key aspects, like other IT companies, for the company going forward in terms of Q2, and see if the company gives guidance for Q2 as well in terms of growth. What is the kind of expectations?
Need for that, we will look forward to what numbers come in from Wipro as well. But Newgen Software has just reported numbers. The stock is trading under pressure. If you see in terms of the net profit, 50% downtick coming in on that one, 50 odd crores, and that's the reason why you're seeing that sharp downtick coming in terms of where Newgen Software goes. Revenues have seen a dip to the tune of almost around 25% on a sequential basis. Let's quickly look at what the margin number is looking like. The EBIT is down 72%, 36 odd crores is where that number is coming, and the EBIT margin has also come in at around 11 odd % versus a 30% kind of a number. So major negative with regards to where Newgen Software goes, and that's the reason why you're seeing such a sharp reaction that's coming in on this counter. Let me actually first head across to Lancelot to take his view. Lancelot, before we talk about any of the other majors as well, what's your read with regards to Newgen Software, Tech Mahindra, as well as LTTS, which has already reported numbers, and your expectation with regards to Wipro and LTIMindtree?
So, I think as far as, the 3 companies that have reported numbers are concerned, probably, LTTS, while everyone has shown that growth is slowing down, and you are seeing some impact of, the global uncertainty play out. And it's also not very clear as to how long this global uncertainty will continue as far as order wins are concerned and as far as deal closures are concerned. So that could delay the process for them getting back onto a growth path again. Except L&T Technologies has done a little better, maybe because they are in the engineering services space, and that space is seeing a little bit more traction as opposed to the other companies which have maybe larger exposure to banking, financial services, consumer, discretionary, and consumer appliances, etc. So given that background, I think we are going to see that even for Wipro, and the companies that are going to announce, the revenue growth is going to be soft. Maybe margins are going to be under pressure, and this situation may continue for a quarter or two before we see significant change, or we see some change happening. However, there's also a little longer term change or trend that is emerging, is that while a lot of these companies still focus on the services business, there is a need for many of these companies to reinvent them and focus on the AI-based service implementation, and that could be something which will give them a longer term sustainable edge in terms of being able to increase margins as well as increase revenues going forward. So I think it is up to those companies which can change and adapt in line with the changing scenario quickly. They will be benefited in as early movers, or maybe even get a major market share in this new emerging market that seems to be playing out.
So that's with regards to IT space. But moving on to the banking space, SBI is in focus. They've begun its 25,000 crore share sale to institutional investors in the largest equity capital raised by a domestic entity, and the first in 8 years by the most valued government asset. Harsh joins us with the details in terms of how do valuations stack up basis the QIP pricing. Harsh, over to you.
Well, yes, so if I were just to extrapolate the price itself at 811 rupees a piece, this is at 1.4 times 1 year forward post money price to book, just very, very simply put, post the fundraise. at 811 rupees a piece. The book value will obviously go up because the current book value is sub 550 rupees per share. So that will go up when you issue shares at 811 rupees a piece. So that's post money already, the book value going up. Plus you have profitability of FY26 to account for. So we've taken the Bloomberg average analyst estimate profit after tax, added that to that number and arrived at the book value, thereby extrapolating on 0.4 times price to book on the SBI's 811 rupee floor price, which they've established. Of course, there's a 5% bandwidth that management continues to have. It currently also trades around the 1.4 times price to book at around 830 rupees a piece. The current capital adequacy is where the challenge lies. The CET1 currently stands at 10.8, likely to go up to 11.5 as a result of this as per analyst estimates. So 11.5% being the capital adequacy or the CET1 ratio means that it gives SBI some bandwidth, some room to grow in this falling interest rate environment. So positive with regard to that, gives it that bandwidth to grow, and likely they are seeing that growth, which is why they front ended and really pushed for this QIP at the start of this year itself. Of course, we'll have results come out for Q1 and better commentary to come through on the back of that. But for the moment, all positive. The discount doesn't seem too large basis the current market price.
Thank you so much, Harsh, for getting us the details. In fact, we also spoke to an analyst at Equirus Securities. Let's understand what he had to say.
Near-term growth perspective, they are adequately capitalized. They are having 15% plus ROEs, growing at 12-13%. So no near-term requirement of capital. But I think this is, as you indicated, good from a medium-term perspective, because if India AS comes in, that thing would, a capital buffer would be needed for that migration. Plus, whenever the growth uptick happens at a systemic level, SBI would be favorably placed with this capital raise that has happened. From the equity raise that they are doing, we would expect roughly 4 bips kind of a NIM expansion that can happen in the current environment. From the bond raise, depending on the timing, bonds are typically on a higher cost. So there could be some marginal drag on NIMs. But we would also see in the second half, so by the time the bond issuance happens, in the second half, we would see the benefits of CRR coming in. So at the margin, that thing should be neutral, depending on the bond timing issuance.
In fact, if you talk about the investor interest with regards to where the SBI QIP goes, it's actually exceeded 75,000 crores already. In fact, domestic investors like major mutual funds and insurance companies have participated so far. Foreign investors are cutting large checks too. That's the information my colleague Vishy did get to us, where sources are indicating to NDTV Profit that foreign investors are willing to add nearly $400 to $700 million in QIP, and the bank will decide on the allotment in the next couple of hours. Investors list being formed now. That's the latest that we've picked up so far. Lancelot, how are you advising investors to look at SBI?
So I think SBI definitely is, in a good spot. Maybe it's a little late if you're trying to accumulate this at this point in time. It may be better to wait for the QIP. Once it's over, you might see a little bit of price correction. But if you look at SBI's growth over the next 2 to 3 years, I think it's going to see phenomenal growth, because SBI has, changed its approach from purely a branch-based model to now a digital model as well. You can open accounts using their app. You can transact using the app. And most of the services are now moving from a branch-based into the app and digital-based, which means that along with their branch reach, they can also reach out to more and more customers for more services. And the service fulfillings being digitized, it means that customers can execute all their requirements much faster through the app. So I think SBI is going to see, is going to see much better performance over the next 2 to 3 years.
A better performance in terms of SBI. In fact, moving on to another NDTV Profit exclusive, the Reserve Bank of India remains cautious about allowing private equity players to control significant stakes in domestic lenders. My colleague Vishwanath Nair joins in with more details. Vishy, what are you gathering from your sources? Because this is an important aspect to consider from here on.
Right. So what we're picking up at this point in time is the fact that foreign private equity firms, which tend to bring in bags of money into the Indian banking sector, they will not have that much access to the Indian banking sector. What we're learning is that the RBI is not keen on allowing any private equity players to control significant stake in domestic lenders. Now, significant stake as a term has meaning, and we'll get to that as we discuss this further. The RBI's concerns are primarily because of the source of funds, which remains sort of secretive or opaque in a private equity firm, and that PE firms are quick to sell their stake in banks. They don't hold that stake for a very long period of time. At best, maybe 5 years, and then they move on from their investment. That is their business model, of course. The RBI is only open to allowing foreign banks to own 26% in Indian banks. This is because they are strategic players who tend to hold that stake for a longer period of time. Having said that, the 26% limit will remain as it is, as the RBI is not keen on recommending a higher shareholding. Recommending to who? To the government, because there has to be legislative changes brought in if you want to exceed that 26% mark. The RBI is saying that should not be the case. You should not allow foreign lenders to directly hold more than 26%. Now, just for reference, I just want to point out that FDI and private bank currently allows up to 74% stake to be held by foreign investors. However, an individual investor can only hold up to 15%. So cumulatively, they can hold 74%. An important development also is that RBI's concerns on the foreign banks holding more than 26% stem from the fact that they are bound by their home regulators, these foreign banks. So essentially, the RBI wants to maintain the operational maneuverability when it comes to domestic banks. Like, for example, let's say in Yes Bank's case, right, where the RBI could quickly stitch together a rescue plan. So that cannot be done if there are too many foreign players holding Indian banks directly. What does the RBI favor, though, is wholly owned subsidiaries. Essentially, wholly owned subsidiaries are entities which are 100% held by the foreign banks, but they are India entities. And the next slide, you'll understand that, the wholly owned subsidiary model is something that the RBI favors. Only in certain special cases, like, for example, in Catholic Syrian Bank or in Lakshmi Vilas Bank, where the RBI allowed foreign lenders to come in and hold large equity stakes, that is fine because those are bank rescues. That is still within the possibility of happening. But the main reason is that, as a general rule, the RBI will not allow a foreign bank to directly hold more than 26% stake in an Indian bank.
Thank you, Vishy, for that. In fact, staying with the banking space, you have Axis Bank that will be reporting numbers as well today. If you talk about the NI, that is expected to see a growth of around 3% on a year-on-year basis at 13,900 odd crores. If you're expecting the PAT at around 6,361 crores, which is an uptick of around 5% on a year-on-year basis. Provisions are expected to go up around 66%. The asset quality might see some mild deterioration that could be coming in at the gross NPA level. Advances and deposits, both a pretty flattish growth is what is expected on a sequential basis. The FY26 growth guidance, margin expectation, and the asset quality will be the key monitorables as well with regards to where Axis Bank goes. The stock trading slightly under pressure with cuts of around 0.7% coming in there. So that's with regards to where Axis Bank goes. Lancelot, very quickly, your view on Axis.
So I think Axis is, interestingly poised, and while the stock has seen some amount of correction and consolidation, it is a good franchise. It is growing at a very good pace in terms of its loan growth. I think the issues regarding to credit quality will be taken care of, and with expansion in the product bouquet, it is offering more and more services. We will see that the fee income of the bank will grow, and the bank is also looking at controlling the cost to income ratios, which will help it. But and also the RBI's easing up of interest rates will benefit the bank going forward. But at the moment, it is trading at a reasonably high price to book, and so there needs to be some amount of compression in the valuations, which will play out over the next 3 quarters, and thereafter you'd see again growth resuming in terms of the price moving.
Okay. So that's with regards to where Axis Bank goes. But moving on, the market regulator has sounded the alarm yet again over losses in derivatives trading. SEBI whole-time member Anant Narayanan said that 91% of retail F&O traders lost money in FY25. In fact, The total losses incurred by them crossed 1 lakh crore rupees. Speaking at the 11th Capital Markets Conclave, he said that expiry day index options turnover were often 350 times the cash market and created an imbalance. Short-term options trading raises volatility and can hurt price discovery, he said. SEBI has already raised concerns over short tenure derivatives and has been trying to encourage longer tenure products to curb losses. So that's coming in with regards to where the F&O segment goes. But let's quickly slip into a short break. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today
Welcome back. You're watching Profit Buzzers on NDTV Profit. But staying with the earnings, a lot of broader market companies that have reported numbers. Vansh is standing by to tell us what's happening with the JTL India, Angel One and the others. Vansh, over to you.
Yeah, so first on the list is JTL Industries. Now the company has reported a muted set of numbers. There has been a significant decline in the EBITDA per ton from the company, and there has been a significant hit on the margins front, if we can see. And there has been an increase in the employee cost and the cost of material consumed by the company that has led to this margin hit. If we talk about the financials, the revenue is up 5% at 544 odd crores, and the EBITDA is down 41.5% at 23 crores versus 40 crores. And the margins are at 4.3% versus 7.8% YOY. And the EBITDA per ton is down 50% at 2,300 odd rupees versus 4,600 odd rupees. Now if we talk about Angel One, the Angel One has reported a set of numbers, and the revenue has been impacted due to the SEBI's changed derivative trading volumes. There has been a fall of 19% YOY, and the fees and commission income has dropped 30% year on year. And there has been a margin contraction, which margins have contracted from 33% to 24%. And the company says that there has been a 260 basis point impact on the margin due to the incubation of new business that is coming in. And if you talk about the financials, the asset management for the company stood at 340 odd crores, and the wealth management segment grew by 33% quarter on quarter to 5,000 odd crores as of June 2025. So these are two stocks that are kept in focus today.
Thank you so much for getting us the numbers and the what the impact is. Osho, in fact, let me get in Osho Krishnan, Chief Manager and Technical and Derivative Research at Angel One as well. Osho, how are you looking at a JTL India as well as Ixigo in trade today?
Very good morning, Hiral. Firstly, thank you for inviting me at the show. Well, JTL India, looking at the recent technical developments, the counter have started gaining some traction, but overall, it is still at a very lower segment. It is still below the short-term moving averages. So on technical front, it is not very lucrative at current level. So one should definitely wait for a decisive counter trend in this counter. Any move beyond the 200-day simple moving average, which is currently at the levels of 86 to 87. So that will be a very critical zone for the counter. Till that time, it's better to stay sidelines, because yes, in short-term period, there is a kind of a resurgence from the lower zone, but again, a decisive move beyond 87 can only provide some kind of counter trend in the going future.
Okay, so that's with regards to where JTL Industries is concerned. And how are you looking at Ixigo?
For Ixigo, again, this counter has not been performing very well in the recent period, but looking at the consolidation breakout with today's movement in the counter, I expect that there is a consolidation breakout and one can expect a rally to continue on the higher end. Looking at the recent development, the support has now shifted towards the zone of 185, 190, which was the resistance for the counter. While on the higher end, with the kind of a breakout in this counter, I expect the zone of 215 to 18 to be tested in the near period.
That's with regards where Ixigo goes. In fact, we did speak to the management as well of Ixigo. The stock is really tearing apart, 15.5% up move coming in on this counter. Let's quickly listen into what he had to say.
Well, our take rates have been fairly stable, and in fact, they may have improved slightly on categories like flights and buses. But some of that is optics also, because last quarter, the fares on domestic actually came down a bit due to some of the turbulence that the sector was experiencing as a result of Sindoor and then AI 171. But if I look at the broader, bigger picture, right, the take rate comprises of, what kind of convenience fees exist, and there's commission, and there's also value-added services. I think our ability to have latch-on value-added services and the ability to also, figure out through data science and AI, what kind of pricing and what kind of essentially personalization one can do around who to market it to or sell it to. I think that cross-sell upsell funnel has really started to work. So you can expect that take rates are fairly stable. I mean, on train, we've been centered around 6%, and it's a regulated industry. So I think we've been managing to maintain it around that number, slightly plus or minus here and there is okay. But on buses, we've managed to improve it from 10% to 12% over the last 1.5 years, if you see. And I think we are at a point where we are satisfied with where we are. So we don't see any major changes happening there.
Okay, so no major changes happening there. That's the word coming in with Ixigo. But Patanjali, that's another one that has been surging in trade in yesterday's session. Let's see what that stock is doing in trade today? Pretty much flat. Let me head across to Mahima as to what's happening with regards to Patanjali, because now that they've issued a bonus as well. Mahima, over to you.
Right. So, as you rightly mentioned, while the stock is trading flat today, the stock did see significant amount of moves yesterday. In terms of the move yesterday, it touched an intraday high of almost 7.4% and closed around almost 6% higher. And this is because they had announced that they will consider bonus issue today, that is 17th of July. And now they've also announced their bonus. Yesterday was the biggest intraday gain since over past 1 year, and was the top FNO gainer as well. The stock has been up around 12% in the past 5 odd days. Overall, in the past 6 odd months, the stock performance has been pretty flat. Now, in terms of the recent update with regards to Patanjali, the board has approved bonus issue of 2:1 in ratio. In terms of the valuations also, this is an interesting aspect because it's the third cheapest FMCG stock, in the entire Nifty FMCG pack. In terms of where the valuations go, as per 12-month forward, ITC stands at around 23.8 times, Imami stands at around 26.8 times, and then comes Patanjali at 32.8 times, followed by Colgate at 41.9 times, and Varun Beverages at 46.3 times. Interesting thing observed was that in terms of 3-year sales CAGR for both Patanjali as well as its peers, likely peers, near peers, the growth for Patanjali in terms of 3-year sales CAGR as well as profit CAGR has been better. Patanjali saw a sales CAGR of around 12% in terms of profit growth seen around 17% versus that of Imami, and Colgate seeing gains of about 6% in terms of their sales and 10% in terms of their profits. Lastly, in terms of margin growth, that has been on a steady pace. It's grown to that 6% mark where it was in FY22 at its highest level as well. And lastly, even FIDIs have been slightly increasing their stake as compared to March 2023, where FII stake was at 2.8, that's gone to around 13.4%, and DI stake, which was at 2.3, has gone to around 8.7% mark. So this is everything that one needs to know about Patanjali and why, of course, it's buzzing in trade.
Right. Thank you so much for getting us the details as well. In fact, AWL agri-business, that's another one which is erstwhile Adani Wilmar. That stock is also up around 5.5% in trade today, and this is post the numbers that were reported. Strong moves coming in. Osho, how do you look at AWL agri-business as well as Patanjali? What are charts indicating? Anything that you would recommend? Osho, you're on mute.
Oh, I'm really sorry. I was saying that Patanjali was looking very positive on the technical chart because in the last 3 days, or specifically in this week, the counter has already surged nearly 12%, but from a very strong support. The zone of nearly 1600, 1650 has historically been a very strong support for the counter. While on the higher end, I expect an immediate target or a very stiff resistance present around the zone of 1900. So we still have rooms of nearly 40 odd points for this counter, and it is expected to hover on a positive terrain, but 1900 will be a critical zone to watch out for. Any breakthrough above 1900 can provide another leg of rally in Patanjali. So overall technical setup is very positive and dip should be augured well for the buyers. Now coming to AWL, then this counter again today has seen a kind of a strong movement that has been backed by very strong volumes, but overall the counter is still hovering below the 200 simple moving average, which has been a very critical resistance for this counter. So I expect that any breakthrough above the zone of 285 can only provide a continued momentum in the counter. So one should wait for another day of follow-up buying. If it happens, then we can conclude that it has a higher potential of nearly 330, 320 kind of a zone from a short-term point of view.
Right, so that's with regards to where AWL Agri goes. But ABB, that's a stock to focus on. You have ABB Global, which has come out and reported numbers, but India has outperformed global numbers in the past quarters. If you talk about ABB Global order inflows, it's down around 9% on a year-on-year basis versus 1% growth earlier. The analyst expectation was a positive 12% to a negative 7%. So that was a broad range that you were looking at. The stock now near the day's highest levels with gains of 1.5% coming in there. Apart from that, if you talk about the past quarter as well. Pretty interesting numbers that you're seeing. Negative 9% in terms of ABB Group. But if you have to look at all the other quarters from Q1 2024 to Q1 2025, you have India, which has gone ahead and outperformed. Lancelot, a quick view in terms of where ABB goes, taking into consideration ABB global numbers that have come in. Any cues that you're picking up?
I think the numbers were, pretty reasonable in terms of an order growth of 9%, and where you are looking at maybe a sustainable order growth of between 10 to 15% for the whole of the year. So given that background, I think the stock should do well in terms of margins, and business has been stable. So from perspective of whether one should invest in at this point in time, I think any kind of decline would give an opportunity to invest in this company, because the longer term outlook remains strong, and we will see a good amount of new order traction coming in as well. So one should look at a price decline to buy into the stock.
Price declines on a ABB should be used as an opportunity to buy. That's the word coming in from Lancelot. But let's quickly look at a few of the other buzzers in trade today, from a Lupin to a PNC Infra to a Sterlite Tech. Varsha standing by with all the details. Varsha, over to you.
Thank you so much for that. Let me start with PNC Infra, wherein it emerges as the lowest bidder for NHPC's 300 megawatt solar project, and the tender is for setting up 1200 megawatt ISTS connected solar power capacity. If you see, the PPA shall be for the period of 5 years, and the contract need to be executed within next 24 months. If I were to talk about the order book stands at around 17,790 crore, which is 3.2x book to bill ratio. Next on the list is Sterlite Tech, wherein they partnered with Hyginco for a green hydrogen plant for optical fiber. Now they aim to be one of the first optical fiber makers globally to use 100% green hydrogen. Hyginco will build, own and operate the plant for 20-year supply. Next on the list is Lupin, wherein they've received approval for one of the drugs in the US, and the approval for the drug treats almost steroid responsive inflammatory conditions, and the estimated annual sales for the same drug stand at around $55 million. Next on the list is Zydus Life Sciences. If you see, the US FDA has conducted remote regulatory assessment for company's unit in Gujarat, and the assessment is approval for one of the drug which lowers your cholesterol. And for that, if you see, they've received, for that unit, they have received 0 observation, and the site is recommended for approval. So these are the 4 stocks which are buzzing on the back of news.
Okay, thank you so much for that. Osho, anything that comes to your radar, because all of these are seeing some good moves, good strength and volumes.
Yes, although all the 4 counters are looking positive to me at current levels, because there has been a kind of a strong traction that is being seen after a very decent consolidation. So firstly, for PNC Infra, this counter has been into a very strong consolidation around the zone of 300, and in the last 2 trading sessions, there has been a very strong momentum which has given a breakout from the consolidation zone. So I expect that in the near term period, 345 to 355 can be seen as the immediate target for this counter, whereas followed by Sterlite Technology, then this counter has also seen a very strong breakout, and technically it is a flat pattern breakout. So I expect that the momentum should continue, although there can be gradual movement because the recent traction has been very vertical in nature. So there can be some kind of subdued or profit booking in the short term period, but overall the technical target comes around the zone of 135 to 140 kind of a zone. So that counter is also looking very positive. Now coming to the large cap like Lupin, then this counter, yes, no doubt has started gaining traction at current levels, but is still hovering below the short term moving average. So I will wait for some kind of decisive surge beyond the zone of 2000, then only can be seen as a buying opportunity in this counter.
Okay, so that's with regards to some of the buzzers. Moving on, SmartWorks co-working space is a prominent name in India's managed office campus sector, made a strong debut. My colleague Agnidev interviewed Harsh Pinani, Executive Director, and Nitish Sarda, Managing Director at SmartWorks, about the company's future plans. First, let's quickly listen in. 11% up move right now.
SmartWorks' trajectory in the last 3 years, we've been growing fairly quickly. From 6 million square foot, we've grown to 10 million square foot. From a adjusted EBITDA of 35 crores, we've grown to 172 crores. If you look at that growth trajectory, it's a 3.5x growth in our EBITDA numbers. We are using these funds from the IPO not just to grow, but there is an ambition to take this business to a significantly higher scale. IPO funds is only a part of that funding, because the cash flow that the business is generating itself is also funding a significant portion of that growth.
Right. So if I take that a step forward, you're currently operating 50 centers across 15 cities. So is there any plan of expanding beyond that?
90 to 95% of India's demand comes from the top 7 cities. We'll continue focusing on having a bigger presence there. There are other interesting cities that you can explore, especially in the tier 2 and the tier 3 regime in India. And we will look at expanding into those cities. But majority of our expansion will be within the tier 1 cities in terms of scale of the centers that we're taking.
Lancelot, how would you look at SmartWorks and this entire space? Because office is another one which is listed as well.
So I think the space is growing at a good momentum, and you are seeing this. There's increasing interest in this segment, but it could be also a little bit cyclical, because a lot of these spaces are utilized by startups at the initial stage, and when they grow, then they move out of this this model. So the growth of startups could drive the requirement to utilize such places, and then we could see some amount of cyclicality, because there could be a phase when the startups could be finding it difficult. There would be consolidation. So we've got to be a little careful that you're not investing in the space at a very high valuation, because it's easy to extrapolate the growth going forward. But one must not forget that there could be cycles in this growth, and it's better to invest in the downside of the cycle rather than at the peak of the cycle.
That's with regards to SmartWorks. But moving on, Arvind Fashions announces a major transition as Amisha Jain steps in as the new MD and CEO, bringing decades of experience in retail and tech. The stock is at the day's highest levels with gains of 5% coming in there. My colleague Vansh takes a closer look at what this means for the company and its investors. Vansh, over to you.
Right, so as we can see, the stock is already up 5% now. They have appointed Amisha Jain as the new MD and CEO of the company from 13th of August 2025. This is followed by the expiry of the term for Mr. Shailesh Chaturvedi as the MD and CEO by 31st of Jan 2026. Now let's understand who is Amisha Jain. Now she has 25 years of experience across technology, consumer and retail sectors, and she is the alumna of Incred and McKinsey. And she was the MD and Senior Vice President of various divisions as Levi Strauss and Company. And if you look at the stock performance under Mr. Shailesh Chaturvedi's tenure, the stock is already up 221% from his tenure starting in Jan 2021. And if you look at the company performance under his leadership, the 5-year revenue CAGR for the company stands at 8.5%, while the 5-year EBITDA CAGR for the company stands at 39%. So this is what is the development that is coming in for Arvind Fashions.
Okay, so that's with regards to where Arvind Fashion goes. An interesting move coming in there. In fact, we've seen a lot of leadership changes that are happening. You did see similar things in HUL as well. So strong moves there. 5% up move on this one. Moving on, DLF. That's the big story as well in terms of today's session. Entering the MMR region, the stock trading absolutely flat right now, and they're trying to make a re-entry here. My colleague Anushi is at the launch event. Anushi, what are the details that you have picked up? They've partnered with Trident from Mumbai project and a premium project launched today.
Well, real estate is the sector of the day since DLF is marking its entry back in the Mumbai market. The company, which has a strong dominant position in the NCR region, is making its entry with the West Park Phase 1 project, which comprises of the first 4 towers initially, and this comprises of 416 flats priced at 6 to 9 crore each. Now, what is interesting is the sales expectation being around 2,000 to 2,500 crore. Well, this is what the analysts have to say. The total pre-sales projection for the company being in the range of 20,000 crore to 22,000 crore. So do keep DLF on your radar today.
In fact, we also spoke to the company's joint MD, Akash Ori. Let's quickly listen into what he had to say.
We've given a project launch pipeline of we're hoping to do about 20,000 plus crores a year. and how we are going to backward integrate that with our land banks and the values that we bring in is something that we are continuing to do on a daily basis. It depends on geographies, it depends on products, whether it's going to be a super luxury offering or a luxury offering or a premium plus. That is what is going to define the final price points and which geography we bring in what. So those things are going on. We've already given a guidance of what like a rate at what rate that we want to on an annual basis is what we are wanting to commit, and that is something that we will do. So as far as the product mix is concerned, that we will keep making those announcements as we keep crossing those bridges.
So that's with DLF. Let's quickly pull up Indigo on the screens as well. That stock has been trading under pressure since morning, and there has been a development yesterday with regards to Indigo, where their flight 6271 from Delhi to Goa was actually diverted to Mumbai, and this was on the back of a technical snag. In fact, an alternative aircraft was arranged as well for passengers who would depart to Goa. The airline had expressed regret for the inconvenience caused as well. That is what the Indigo mentioned to NDTV Profit. The stock is down nearly 2% in trade. And very lastly, the other thing I want to mention about is a key regulatory development that could reshape the insurance landscape, where IRDAI's committee has recommended barring mergers between insurers and non-insurers. In fact, they've cited moral hazard risk. If formalized, this could actually pose a major hurdle for the proposed Max Financial Max Life merger, on the back of which you have Max Life, which is trading under pressure as we speak. Lancelot, a quick view in terms of Max Life, the merger details, and DLF and Indigo. Which would you pick and why?
So I think, it's more an option of, elimination at this point in time. So I wouldn't look at Indigo at this point in time, because I think you are seeing some amount of pressure on the on the passenger traffic going forward, and that could result in lower operating profits as well as revenues. The international situation or global situation may have an impact on overseas visitors to India, and that could also see some amount of pressure on prices and fares. And so I think Indigo, who've had a very good year in the past.
Lancelot, we're running out of time. So Indigo is eliminated. Osho, just one word answer. Which would your pick be out of the three?
I will prefer DLF as of now, because it is looking positive.
So DLF is Osho's pick as well, but completely out of time, gentlemen. Thank you, Lancelot. Thank you, Osho, so much for joining us on the show and sharing the views. It's a wrap on this edition of Profit Buzzers from the team that put the show together and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Hello and welcome to NDTV Profit. Now, a company in focus in the back of the co-working space. This is something like office space solutions. And to discuss on the outlook forward, we are joined by Amit Ramani, the chairman and MD of the company. Hello, Mr. Ramani. Once again, it's a pleasure speaking to you. Firstly, you know, it's been a strong FY25 that we've already discussed about. Just want to understand your current outlook for FY26. What are some of the growth updates or project updates that we are seeing over here?
So, Anushri, I think, I'll start with the macro. I mean, if you look at the overall commercial real estate market, I think it's done extremely well. Already in the first 6 months of the year, we are touching almost close to 50 million square feet of commercial leasing. Co-working continues to be a large portion of it, between 18 to 20% leasing is in the co-working domain. So on the back of it, I think the outlook continues to remain positive. We had given a guidance of 30% growth on FY25 and then for FY26. So we continue to hold on that. I think clearly our product of Elite that we have launched has done extremely well with GCC clients. And I think the GCC boom that's happening in India, I think is something that obviously the co-working industry is also benefiting. And due to that, and our continued growth in terms of addition of our seats, we are looking to add another 40,000 seats in FY26. And on the back of that, I think outlook remains positive. Growth numbers, as I suggested. I think from a margin standpoint, we had already achieved close to about 34% EBITDA margin, which will continue to remain in that category. And then the profitability as well will be in that similar range that we did last year.
Okay, Mr. Ramani, you spoke about 34% of margins that you expect to clock in with this financial year. But is that the outlook forward, as also we'll see, because Elite centers, if we see, I'm expecting margins to be on the higher side and you're expecting a ramp up over here. Can you give us a breakdown of that as well?
So Anushri, Elite obviously is a very small part of our portfolio. Currently, only about 3 centers are live. This year, we are looking to add another 4 to 5 centers. So as a percentage, it will not have an immediate impact for FY26 in terms of margin improvement, but as we continue to grow that piece of Elite and Office Gold, I think we will see some bit of margin improvement. But for FY26, since it's a very small part of our current portfolio, it won't have any significant impact.
So if you just have to take the next 3 to 4 years in perspective, what is the kind of contribution that you expect from Elite and this Office Gold that you spoke about?
So, Anshri, currently it's about roughly 10% of our portfolio is in Gold and Elite. That will go to about 15%. 85% will continue to be the flagship product that we offer.
Okay. So that's the view that we are seeing for the next 3 to 4 years. In terms of your segment and revenue also, now, you did specify on increasing focus towards allied services as well. If you can give us an outlook on that as well, if you can give us segmental breakdown in terms of your allied services as well as the co-working and design and build segments as well.
Sure. So design and build, as part of the overall portfolio, we did about 900 crores from our co-working and managed office business. And we did roughly about 278 crores out of our design and build business. So it's about a 75-25 split. For FY26, that will continue to remain the same. We achieved about 11% out of our allied services. That will see some improvement. Will probably go 3 to 4 percentage points higher in FY26.
Okay, and Mr. Ramani, also, last time we spoke about the return ratios as well. From FY24 to 25, we've seen a significant uptick in terms of where the ROC numbers are concerned. 62% was what we looked at FY25. Just want to get your overall sense for the near term, not just talking about FY26 in particular, but even in FY27, 28, the 2 to 3 year perspective in terms of how the return ratios would shape up for the business.
See, currently our managed aggregation and our straight lease is a 67-33% split. The new addition that we are doing, 40,000 seats, again will continue to maintain that ratio. As this number increases, the return on capital employed will continue to improve. As an example, last quarter of FY25, it was 78%. For the full year, it was 62%, but for the last quarter, it was 78%. So we will continue to see that improvement in FY27 and 28 as well.
Okay, and can you also specify on the current pipeline that you have in terms of new LOIs which have been signed, new centers that you expect? If you can give us a breakdown, and do you see any more fundraising plans on table considering all that? If you can just give a perspective in terms of how the capex and the fundraising is also shaping up.
Sure. So the March 25, we had 135,000 seats live, about 210 centers were live. In addition of LOIs and fit outs, roughly 155,000 seats are already underway. And essentially that would put us somewhere close to about 230 plus centers. And that guidance for the year would be we'll do 175,000 seats and roughly about 260 total centers for the year. In terms of the overall, seat addition, this is the outlook for us right now.
Okay, and Mr. Ramani, in recent months, what we are looking at is a lot of recent listings in terms of the segment that you operate in, the co-working space. Just want to get a picture on how the competition is also shaping up. If you can give us a number in terms of the market share that you currently hold in just the tier 1, tier 2 cities, if you can give us more details on that front.
Yeah, so currently, if you look at the whole market landscape, I think it's great that many companies are getting listed. It actually is a great thing for the sector because, for the longest time, the sector had a lot of negative views around it. I think we listed one of the first ones to list in India and successfully changed the narrative on the co-working space. So I think it's great that other competition is coming into the public markets. I think for us, we feel that overall the sector is getting a lot of interest from the investors, and that just ensures that the sector, which was a sunrise sector, will become a established sector very soon as a few large companies come into the fray. Also from our standpoint, currently we have about 8 million square feet. Total square footage of co-working would be somewhere around 80 million. And we would be in the 10-11% market share on an overall perspective. Last year, we sold about 53,000 seats on a single year, and overall 250,000 seats were sold in the co-working space. So there also we have a very healthy, sort of share in terms of 20% of that was ours. So clearly, I think we continue to be one of the top leaders in terms of the network. We are the largest in India today, with having 18 cities and 250 odd locations across 60 plus micro markets. And that leadership position will continue to, we will hold.
Okay, and from this, you just specified about the 10 to 11% of market share. Do you have a particular target to increase this number in the next 3-5 years or so?
So from our standpoint, see, I think we are a profitable company. I've been for the last 2 years. We want to make sure that we balance growth with profitability. We don't want to go into a scenario where we have built capacity and then it's obviously taking us time to fill it up. We have a healthy occupancy of 73% blended, 84% of centers which are 12 months or more. And I think we want to keep that healthy balance. I think market share is important. We clearly feel that is something that is important. But also you have to see from, and we gave the guidance last time as well, is that we are moving into various verticals, right? We are doing co-working, we are doing managed office, we are doing currently design and build services. We are getting into contract furniture manufacturing. We are also doing transportation solutions with Ecos Mobility. We are doing cafeteria management services. So the target market itself is becoming large, right? So it might be in the co-working sector, we might have a leadership position today, and which we'll continue to hold. But I think our target market is becoming much larger, and hence the company's opportunity becomes much larger, not just in co-working, but the variety of other services that we are getting into.
Okay, so that's the overall trend that we are seeing in terms of how this is shaping up. But Mr. Ramani, my final question to you, you specified that you just turned profitable in FY25. You specified a 30% of a growth is what we'll continue to see, with margins being in the 34% of range for FY26. If you can give us an outlook in terms of profit numbers as well, what is the kind of profit growth that you also expect since you've just turned profitable in FY25?
So I think as the margin would remain almost similar, the profit numbers will also be along the similar lines that we did this year. Obviously, it will be a larger number at a base because obviously our revenue growth will happen, but the percentage will remain similar to what it was last year.
Well, this was the management of office space, wherein they were all talking about how the company is going to do in next few years. Well, let's get back to markets and let's see what markets are doing. Let's see where Nifty 50 is, because it's down almost 0.17%. Let's see who are the constituents or who are the losers. When it comes to Nifty 50, you have Tech Mahindra on the back of earnings. Then you have IndusInd Bank, SBI Life, Infi and L&T, which are on the losing end when it comes to Nifty 50. While on the gainer side though, you have Tata Steel, you have Hindalco, you have Tata Consumer, and also DRL and Tata Motors, which are buzzing when it comes to Nifty 50. Let's pull up a sectorial heat map and let's see what sectors are buzzing. So I think barring a Nifty, FMCG, Pharma, Realty, everything is in red, though Pharma is up almost 0.6%. Nifty Realty is up 0.97% and Nifty FMCG is up 0.45%, while Nifty Bank, if you see, is down 0.48%. Let's see what broader markets are doing. Let's pull up Nifty Midcap 150 and let's see what that counter is doing. Well, Nifty Midcap 150 is kind of flat. Let's see, but though in green, but yeah, flat. You have Thermex, which is gaining on the back of positive brokerage note. You have Sona BLW, you have Adani Wilmar is also buzzing. You have Hitachi Energy and UPL, which are buzzing on the when it comes to Midcap 150. On the loser side though, you have Max Financial, you have Bharat Dynamics, BSC, L&T Finance and Persistent System, which are losing on the Nifty Midcap 150. Let's see what Small Cap 250 is doing, is up 0.24%. Well, you have Sterlite Tech, which is buzzing on the back of partnership for green hydrogen backed optical fiber unit. You have RR Kabel, Alok Industries, Craftsman Auto and PNC Infra, which are buzzing on the back of order wins. Well, on that note, let me invite the guest for the day, Prashant Tapse, who is the Senior VP Research Analyst at Mehta Equities. Hi Prashant, welcome to the show. Pleasure to have you. What's your view on the market? What are you liking today?
So overall, the markets are very much flat, 50 points up and down from last few days, which means there is no clear direction for the market, which is heading towards the Q1 earnings, which has started few days back. And the way how Trump tariff updates are coming every day on every country. So there is a clear no direction for the markets, very much trading in a flat zone. Indian markets are waiting for some kind of big updates from the Trump tariff sooner than August 1st. And we are missing a lot of big jumps in terms of Q1 earnings. TCS started very muted earnings, and even yesterday Tech Mahindra also did not perform well. So overall, the focus would remain on the Q1 earnings and the more updates from the global markets.
Just few minutes back, we were, we were speaking with the management of office space. Any view on that? Because clearly, company was highlighting good growth prospects for the coming, 2 to 3 years. Are you tracking that stock? Any view?
Yes, obviously that space is very interesting to read and understand. And even today we have another company in the same space which got listed, SmartWorks. So if you see, the company has turned out to be a profitable company from last financial year to this financial year. So that is giving a lot of confidence for the investors in the industry. But having only two companies which are listed, it is very difficult to understand and get some kind of valuation comfort levels at this point of time, as both are very much expensive at this point of time. But again, Office being a profitable company would be a preferred bet for any investors as a long-term investment in this space, because the space is growing very fast. There is a very basic difference between these companies. One is into managed office of large campus, and the office is into very much in the micro space of limited co-working space. So I am very much bullish on the profitable company, which is Office, and wait and watch for the smart work to deliver better numbers going forward.
Absolutely, Prashant. Well, moving on, Yatra is in focus after Exico announced its Q1 earnings number. Now, why so? Because Mahima joins us to give more details on that.
Right, so interesting moves coming in on Yatra online, and of course this is on the back of the way Ixigo posted its Q1 earnings yesterday. The stock has touched an intraday high of almost 10.4%. Volumes are almost 6 times its 30-day average, and 1 month, however, the stock has not done much. It's down by about 0.15 odd percent. 6 months, it's down by about 13 odd percent as well, and year to date the stock is down about 22 odd percent. But we're seeing significant amount of moves in the stock today. Now, what can one read through when it comes to Ixigo earnings that could also possibly apply to Yatra Online? Strong revenue growth on the back of transaction value growth, gross transaction value expansion also expected, net profit growth due to strong top line growth as well, and flights and bus segment to see higher growth as compared to the train segment. Now, in the recent news also, the company was in focus because Oyo entered into partnership with Yatra to expand its business travel offering to strengthen presence in Delhi, NCR, Mumbai and Bengaluru. Over 500 hotels are already onboarded, and by the next by the coming September, 100,000 new hotels will be onboarded. In terms of what the company has said with regards to where FY26 stands, the guidance, revenue less service cost to see a growth of 20% plus, and EBITDA to see a 30% plus growth. Growth will be driven by corporate travel expansion, the MICE, hotels and Globe synergies. The margin synergies from Globe is expected to add around 10 to 15 million profit per quarter is what the management is expecting. So this is with regards to where Yatra Online stands.
Right. Thank you so much, Mahima, for all the details. Well, Prashant, two stocks in focus. One is Yatra, of course, and the other is Exigo. Good numbers posted by the company. What will you suggest to investors when it comes to Exigo? And also your view on Yatra. How are you expecting numbers, and what's your view on both of the stocks?
So both sectors are really one of the fastest growing sectors in India right now. But obviously the sectors have a lot of pressure in terms of cost. If you see, both costs are rising with respect to customer acquisition. So I think getting new customer to their platform is a high cost affair to both the companies. But again, Exigo, I think with the value added services which they are providing for all the railway tickets as well as the flight tickets as well as the hotel booking and all, I think that is giving some kind of comfort for the customers to be landing on their app. So I think that is the reason why the growth in terms of app downloads as well as the profitability in the Q1 earnings has been shown. With respect to valuations, again, I think Exigo is very much expensive at this point of time. If we see similar kind of business can translate into Yatra, obviously, yes, Yatra looks very cheaper at this point of time when we compare to Exigo. So if a risky investor would like to bet, Exigo can be the bet which he can take it, but not at today, because we are seeing some kind of very aggressive movement because of the Q1 earnings. There can be some kind of cooling down post these results. And once that gets settled, so aggressive investors can go to Exigo, and very conservative investors can go with Yatra. But there's a basic difference between two. One is into B2B, which is Yatra, and B2C, which is Exigo. So I think Exigo will get more growth in the quarter-on-quarter growth.
Got that view, Prashant. Thank you for that. Well, moving on, SmartWorks co-working spaces is in focus after company lists today on stock exchanges at premium of 6.8%. Well, Vansh joins us to give us more details on that.
Right, Varsha. So the stock has listed on the stock exchange with a premium of 7%. If you look at the details of the issue price for the share was 407 rupees per share, and the total issue size of the IPO was 582 crores, out of which 445 crores was a fresh issue, and the remaining 137 odd crores was offer for sale. If we talk about the use of the proceeds, 114 crores would be utilized towards the repayment of borrowings, and the remaining 225 odd crores will be used towards the capex. If we talk about the business of the company, now the company provides office space to small and mid enterprises with clients' needs exceeding spaces of 300 seats. So they also provide their services within multiple centers and cities. And if we talk about the financials of the company, the revenue is up 31.8% at 1370 odd crores, and the EBITDA is up 29% at 853 odd crores. If we talk some of the positives and negatives of the company, first let me start off with the positives. Company operates 50 centers across 15 cities, and they have a capacity of 2 lakh seats, and they deliver 75% of the rental revenue from Pune, Bangalore, Hyderabad and Mumbai. And they also have additional centers coming up, and they are targeting to expand their capacity by 20%. While in terms of negatives for the company, they have recently incurred a preferential allotment in June 2024 at 269 rupees per share, and they have expensive centric business model unlike peers like Office. Now they are more focused towards leasing rather than a asset-light model like Office. So and also the company has been loss making for the last 3 years. So these are some of the points that are in focus for SmartWorks.
Thank you so much, Panch, for all the details. Well, moving on, let's pull the chart of Shipping Corp. The stock is buzzing. The stock is almost up. The stock is up almost 11%. Jasmeet joins us for more detail. Jasmeet, why Shipping Corp is in focus?
Right, thank you for that, Varsha. Yes, let me give you a brief about Shipping Corp and its stock performance over last 1 year. While the stock is 30% over the last 1 year, while as we see a year to date, it's up 5%, it's down 30% over the last 1 year. While in terms of market capitalization, the current market cap of stock Shipping Corp stands at 10,000 odd crores, while the 64% of the company is held by President of India. It's a government company. Now let's understand what does Shipping Corp India actually do. While the company is engaged in transportation business, where they transport goods through the vessels and ships across India and various parts of the world. Now, while the company has their own fleet with regards to bulk carriers, crude oil tankers, product tankers and other vessels. While the company's clientele also includes IOCL, BHEL, SAIL India, while ONGC and others. When you look at the valuation of this particular stock, it's at 12.2 versus the GE Shipping, the competition is at 6.05. So it's a little higher than its other competition. In terms of financial metric, the FY25 revenue was up 11% compared to last year, trading at roughly 5,600 odd crores. While we talk about the margins are at 31% for the particular company as of FY25. Now let's understand the operational metrics for the company. The company has 4 major segments, that is the linear, bulk, carriers and tankers, while the tankers holds the majority of the revenue as it contributes roughly 64% of the overall revenue. The stock was also in news recently where the stock price surged 11% in trade on the particular day given the trade war between Israel and Iran, as the company is based out of shipping business and the Baltic index had gone up. So given that this would benefit the company and the stock price has surged 11%. So this is all about the company. You're listening to watch out how the Q1 results turns out the company as it's on the radar.
Thank you so much, Jasmeet, for all the details. Well, Prashant, are you tracking Shipping Corp? Just wanted to know your overall view on the logistics sector and on this company, and if you have some other picks on this sector.
Yes, a very optimistic view on the sector. Now, if you see how government is focusing more on the Indian Marine Vision of 2047, which they are going to invest almost 30,000 crores for the shipbuilding logistics in India. So that will have a lot of indirect and direct effects for Shipping Corporation of India. As the business model is very clear to have goods being exported and imported in and around India as well as gold worldwide. So being a government company, this company looks some kind of a conservative approach for a long-term investment. But again, GE Shipping looks very good for me at this point of time, based on the valuations, and the addressable market remains same for GE Shipping as well as the Shipping Corporation of India. One thing which looks very good for me in the Shipping Corporation would be the ratios. When we compare with the GE Shipping, there is a more comfort level which I can see in the GE Shipping business model going forward on the long-term basis. But again, two companies should be the portfolio companies for investors, but more aggressive should be on the GE Shipping, and conservative investors can go with a Shipping Corporation of India.
Right. Well, thank you, Prashant, for that view. Prashant, also, if you see HDFC AMC, the numbers are out now. The net profit is up almost 24% at 748 crore versus 604 crore year on year, while total income, if you see, is up almost 27% at 1200 crore versus 948 crore year on year. We need to analyze more numbers onto that. But Prashant, on the face, if you see, on the back of these two numbers which are flashing, what's your view on HDFC AMC overall, if you can give?
Yes, overall on the AMC as a segment, we are very much bullish the way we have seen month-on-month growth in terms of SIP numbers or one-time investments in equity markets. I think the AMC business is doing really great. And even the volatility in the market, if you see last 6 months, the DIs have invested huge in the market and their profitability yield has gone up on quarter-on-quarter basis. So this was expected, delivering a 20% good growth on the top line as well as 20% good growth on the bottom line in the AMC business. And HDFC being the largest among the top two will deliver the better numbers. So in terms of price action, I think the upside is very much limited right now. Based on the assumption, the stock has already rallied a 7 to 8% from last 1 week. So upside can be very limited to that, which can be targeted to 45450.
Right. Got that view, Prashant. Also, Prashant, if you see Lumax Industries, if we can pull that stock up, Lumax Industries is up almost 5%. Now, if you see, this is because the current order book that the company has, and of course the financials, if you see in the last 3 years, revenue CAGR was almost 25%, PAT CAGR was almost 50%, and so overall the outlook for the Lumax Industries look good. But I just wanted to have your view. What is your view when it comes to Lumax Industries? Should investors chip in, or they should book the profits and get out of the stock?
No, I think the investors should continue to hold this company. It is India's largest automobile lighting company in terms of their market share. So I think looking at the growth in the auto sectors, the new models in the auto sectors, the way how four-wheelers, two-wheelers are getting more designed, and also lighting plays a very important role. So recently I had a chance to visit this plant also, so that gave me a very clear picture about the lighting industry. So my recommendation for the investors should continue to hold and buy more on the dips. Even at the current levels, I think yes, one can go and accumulate the stock, considering the ratios of ROCs and ROCs very comfortable for a automobile manufacturing company, and even P and price to book value is very much comfortable for a fundamental investment for long term.
Thank you so much, Prashant, for answering all the questions and joining this conversation. Pleasure to have you. Well, this is all the time, viewers, we have on this edition of Profit Top Trade. Stay tuned to NDTV Profit.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trade.
2 साल हो गए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए, तो बताओ कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है. जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है. ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है. बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए. इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, and we've been now in a couple of weeks where we've seen a bit of a consolidation, right? So what do you as an investor really want to know? You want to know whether this is going to last or not. And we're going to have Mihir Vora in just a couple of minutes to understand what he's seeing in markets. He has a close ear to the ground, everything that's happening around Jane Street and the like, as well as sectors that he's picking up. So stay with us. In terms of the Nifty, that consolidation clearly seems to continue. Let's look at how the heat map is showing, and the bank Nifty is down around 0.5% as well. So that's something you want to keep on your radar. That's the heat map. The Tata Consumer being the top stock of the day, 2.5% higher clearly on the Nifty. But outside of that, some metal names shining in trade as well. But it's even Steven in terms of the breadth. HDFC AMC has come out with numbers as well. And you will have Geo Financial, the other one, which will come out with numbers along with an Axis Bank, which is currently down 1% in trade pre the numbers. IT stocks continue to be under pressure. Let's pull up sectors and maybe we'll see some of that, a hint of that. IT is down 1%. Defense is also down 0.8 odd%, and the PSU banking pack is down around 0.8% as well. Mind you, PSU banks were one of the top gainers yesterday because SBI drove that leadership, but today has taken a bit of a backseat. Realty is the one which is shining in trade along with metals, no surprise there. We saw some of those metal counters doing well even on the Nifty 50 index. The Nifty FMCG also up around 0.5%. So consumption doing decently well for itself. Pharma, a couple of approvals coming through, so that one too outperforming. Let's look at the breadth overall on the exchange, and it is just about 1:1 in favor of the advances, just a wee bit in favor, but it's tapered as the day has gone by. Not that there were significant advances versus declines at the start of the day, but that taper has been has now led to a 1:1 on the breadth. Let's look at the mid cap and small cap indices as well, and the Nifty mid cap flat, absolutely flat. The Nifty small cap is just about 0.25% higher, so some outperformance, seen there. Now, in terms of what we here at NDTV Profit have been doing, and this is of course an NDTV Profit exclusive, we investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies. The platform, called Trading Dost, is a classic racket. It's luring investors by promising huge returns. My colleague Charu Singh has done this report.
On the morning of 13th July, we came across an interesting ad in a Hindi daily. It was quite an audacious ad because the trading firm that gave the ad promised 500 times returns to investors like you and me. That's not all. It had also promised opening an account with them with zero brokerage and no documentation. It seemed a little strange, so this entity called Trading Dost was irking us and we went to the SEBI website and checked for their registration. It was quite strange that none of the names mentioned on the ad or the entity's name itself was registered with the regulator. And hence, we decided to give this person a call.
जी कौन बात कर रहे हैं?
राघव बोल रहा हूँ।
अच्छा राघव जी, मैं चारू सिंह बात कर रही हूँ एनडीटीवी प्रॉफिट से। आपका एक ऐड देखा था तो आप कॉल किया था। मुझे पता चला यहाँ पे कोई सेबी रजिस्टर्ड इंसान एडवाइस नहीं देता है। 16 साल से काम चल रहा है, तो ये कैसे पॉसिबल है?
नहीं, आप क्या बोलना चाह रहे हो, क्या पूछना चाह रहे हो? जर्नलिस्ट हो, न्यूज में डालने के लिए आप हमसे इन्फॉर्मेशन लेना चाह रहे हो या आपको हमारे लिए अकाउंट खोलना है वो पूछना चाह रहे हो?
अकाउंट तो नहीं खोलना है, इन्फॉर्मेशन ही चाहिए। इन्फॉर्मेशन तो न्यूज़पेपर में भी है। खैर, मैं तो बस ये पूछ रही थी कि ये 16 साल से बिना रजिस्टर्ड एंटिटी के कैसे काम चल रहा है?
मैडम, आप एक बात बताओ कि आप जर्नलिस्ट कितने साल से बने हुए हो?
मैं तो जर्नलिस्ट कितना हो गया होगा, 2 साल हो गए होंगे।
5 साल, 2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
ठीक है,
हमारा और आपका तो जन्म भी नहीं होता तब से डब्बा ट्रेडिंग का काम हो रहा है। अभी तो ये NSE, BSE, आप देख पहले क्या होता था, पेपर पे लिखा जाता था, आधा पत्ते पे चढ़ता था, आधा नहीं चढ़ता था। धंधा थोड़ी ना बंद हो गया, धंधा तो पहले से ही चल रहा है।
सही बात है।
एप्लीकेशन का काम ये जो चल रहा है ये 15-16 साल से चल रहा है। मैं और आप तो डिसाइड नहीं कर सकते ना किसी के बोलने से। मेटा 5 एप्लीकेशन है, पूरे इंडिया में चल रही है मैडम, इंडिया के पूरे वर्ल्ड में चल रही है।
सही बात है राघव जी।
हाँ,
कहाँ से हैं आप?
कौन से मीडिया में डालना है ये तो बताइए।
NDTV। कहाँ से हैं आप?
हम तो हिंदुस्तान से ही है, बेस्ड ऑफ दिल्ली है।
दिल्ली से?
हाँ जी मैडम।
दिल्ली में कहाँ से?
दिल्ली में रहते हैं मैडम हम। वो देखा आपने शादरा?
राघव जी, आपको डर बिल्कुल नहीं लग रहा कि ऐसे न्यूज़ चली जाएगी, लिख जाएगा, छप जाएगा? ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम, एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
अरे आप बोल रहे हो कि क्या कहते हैं, बिना सेबी रजिस्टर्ड एंटिटी के एडवाइस दे रहे हो, जानकारी दे रहे हो।
एडवाइस किस बारे में दे रहा हूँ मैं? एडवाइस
रिटर्न की गारंटी दे रहे हो।
100% दे रहा हूँ मैडम। आप ट्राई करके देख लो कि आप पैसे डाल के डिपॉजिट करके ट्रेड करके विड्रॉल तो देखिए कितना फास्ट देते हैं हम। आपका जो बिजनेस है वो आप करिए, मेरा जो बिजनेस है मैं वो करूंगा मैडम। ग्राउंड टूर पूछना चाहे तो बिल्कुल पूछिए, बेझिझक पूछिए। आपको मेरा पर्सनल नंबर चाहिए वो भी ले लीजिए मैडम, कोई प्रॉब्लम नहीं है।
बताइए आपका पर्सनल नंबर क्या?
585 पहले लगाना पड़ेगा आपको +971। मैं आपको इसी नंबर पे व्हाट्सएप कर दूंगा।
अच्छा चलिए कर दीजिए। ओके।
After this call, NDTV Profit broke the story first on its website. And on the same evening, India's leading bourse, the National Stock Exchange, came out with a cautionary circular for the investors. First off, they said that this platform, Trading Dost, is not to be trusted and investors should not associate themselves with it. Secondly, they asked the investors, advised them to steer clear from these dabba trading activities, all these schemes that lure them and promise them high investment returns. After this, we decided to give this Raghav person another call to ask him how he felt about the NSE circular. First off, we would like to tell the viewers that first number on the newspaper ad did not go through, and the second number did allow us to speak to him after 2 attempts.
हेलो राघव जी, आवाज आ रही है?
बोलिए मैडम।
सर, आपने कहा था आपसे बात करनी हो तो आपको कॉल कर लूं, तो इसी
बात करनी है, मेरी तो बात हो गई आपसे कल।
नहीं, मुझे आपसे बात करनी थी इसलिए मैंने किया था। अगर आपके पास 5-6 मिनट है तो मुझे कुछ चीजें पूछनी थी।
किस बारे में पूछना है मैडम?
सर आपने कहा था कि क्या कहते हैं ये गलत नहीं है डब्बा ट्रेडिंग या जो भी चैनल है और ऐसे बहुत सारे लोग हैं, तो क्या आप बता सकते हैं ऐसे और कौन कौन से प्लेयर्स हैं जो कर रहे हैं?
कौन से न्यूज में देना है आपको?
मुझे बस जानना है कि और भी लोग हैं और नंबर्स हैं।
नहीं, हमारे पास इतना टाइम नहीं है मैडम कि आपके लिए हम कंटेंट दे आपको। हमारे बहुत काम करने के लिए मैडम, दोबारा फोन मत करिएगा प्लीज।
अच्छा, तो आप ये बता सकते हैं कि आप यूएई का नंबर क्यों यूज करते हैं जबकि आपका काम दिल्ली से होता है?
मेरे पास है ही नहीं यूएई का नंबर। आपको कौन बोला मेरे पास यूएई का नंबर है?
आपने मुझे दिया था, शुरू किया था बोलना, लेकिन फिर आपने बताया नहीं पूरा नंबर।
नहीं, है ही नहीं मेरे पास यूएई का नंबर। आपने कल छाप दिया है, देख लिया हमने पेपर, ठीक है, कोई प्रॉब्लम नहीं है। आप करिए जो आपको लग रहा है करिए, आप हमें प्लीज डिस्टर्ब मत करिए। हमें हमारा काम करने दीजिए, आप अपना काम करिए।
क्या आप यही काम कंटिन्यू करेंगे जो आप कर रहे हैं?
100% यही करूँगा मैडम।
ठीक है, और कब तक करते रहेंगे, कब से कर रहे हैं?
क्या करना है मैडम आपको?
सर जानना चाहती हूँ, ऐसे जर्नलिस्ट पूछ रही हूँ।
आज ही चालू किया मैडम मैंने काम।
क्या?
आज चालू किया, आज से काम चालू किया, न्यू बिजनेस।
नया बिजनेस? कौन सा नया बिजनेस?
मेरा नया बिजनेस चालू किया मैंने, डब्बा ट्रेडिंग का। डब्बा देता हूँ घर में जाके, दाल चावल रोटी सब्जी।
और फिर उस एड का क्या हुआ जो आपने डाला था नवभारत में?
कौन सी? मैंने कहाँ डाली एड? गलत फहमी हुई आपको।
यही नंबर है न्यूज़पेपर के ऊपर, एनएसई का सर्कुलर भी आया कल शाम को इसी बात पे।
मेरे को नहीं आया मैडम कोई सर्कुलर, क्योंकि ये नंबर मेरे को बिलोंग ही नहीं करता।
तो फिर आपने ये नंबर उठाया कैसे?
मैडम आपके पास और कोई काम नहीं क्या?
नहीं सर, जर्नलिस्ट हूँ, यही काम है मेरा।
हाँ, तो हमारा काम तो हमें करने दीजिए ना। हमारे को बहुत क्लाइंट के फोन आ रहे, दोबारा प्लीज आपसे हाथ जोड़ के विनती, कॉल मत करिएगा। थैंक यू वेरी मच जर्नलिस्ट मैडम।
As you all just heard, Raghav had changed the meaning of dabba trading itself by the end of our call. This particular platform trading those is likely to disappear and reappear in some new avatar. And investors like you and me will be lured into such schemes every single day using Telegram channels, YouTube channels, WhatsApp calls and SMSs, and we must exercise extreme caution before putting our money in such schemes. Charu Singh in Mumbai for NDTV Profit.
That's just a fabulous piece by Charu, which an expose of sorts, if I can call it that. Mihir Vora joining us, CIO at Trust Mutual Fund, to talk more about markets. But Mihir, first, just a question or two on everything that's playing out with regard to the retail investors' safety is concerned. Now, you do have SEBI, which is taking appropriate steps, but you know, some or the other case slips the cracks. What's your take with regard to this problem that we've been facing? This is not new. It's been happening since decades. But you have that experience to tell us how should one respond to this?
Hi, good afternoon. You know, there are 2 or 3 guidelines or truths in the market, when anybody is, trying to make a quick buck. One is that there is no free lunch, right? And second is it's always caveat emptor, buyer beware. It is always the responsibility of the buyer or the customer to do his due diligence whenever you are embarking on any investment or any endeavor or strategy, so to say. So I think you can't just wish away the fact that there will always be fly-by-night operators in the market. While the regulators can do, and I'm sure they are doing, the exchanges, I'm sure they are doing whatever they can. But ultimately, it's your money. And it's your responsibility to protect your money with the appropriate due diligence while embarking on these kind of initiatives, so to say. So I think there is enough information available in the world these days. You have the internet, you have common sense, you have everything available. You have company financials. So you can't say that you did not know. If you kind of still fall prey to such things, it's only because you did not adequately take your money seriously and you did not do your due diligence. So I think please do your research before you embark on any of these things.
So Mr. Vora, point taken. Clearly one has to be careful. Let me take a step back. Let's talk markets, sir, because I have this opportunity. So we've seen a longish period of consolidation now, and 2 weeks is long, especially in the trading world. We've seen a bit of a consolidation. Just if you can help us, give us perspective on this. Take a step back. Let's look at where valuations are at. Certainly not cheap. Globally too, there is some bit of uncertainty. Domestically, consumption isn't picking up. How do you view valuations at this point, given all of this that's playing out?
Sure, absolutely. So I think what you said is that we are in a kind of a wait and watch mode as far as the markets are concerned. If I look at the overall backdrop, liquidity is not going to be a problem. So domestically, there is enough fund flow to the market. Globally also, given the fact that you will have willy-nilly fiscal deficits running high in the US, you want the central banks, and the central banks, most of them are going the rate cut way. So there is going to be ample liquidity. The dollar's strength is no longer a given. So the anti-dollar trade, so to say, in commodities, in gold and silver that we are seeing, and flows to emerging market, I think that trend will continue this year. So I don't think liquidity is going to be a problem for the Indian markets. That will continue. But what we will need is fundamentals and results to back that liquidity, and that's what I think the markets are waiting for. The results season has just started. You had a mixed bag of results so far, and as the results season progresses, I think the markets will start forming its view. My guess is that given the state of the market, given that we are not very cheap in terms of valuations, we are not extremely overvalued also. So we're kind of in the middle, neutral zone, kind of so to say. My guess is that it's going to be a stock pickers market. It's going to be a very sector and subsector specific kind of a market.
Where do you believe, sir, that the results are going to surprise on the upside, or is there just very little room for that?
So there are certain segments where I think the base for last year was low, right? So for example, last year we saw a lot of the government spending big sectors in the June 24 and the September 24 quarter. They were kind of on the sluggish side because government decision making was a bit slow. And now we are seeing that government spending has normalized and even accelerated in the last few months. So, the infra, construction, cap goods, the defense, railways pack, we may see some positive results in that. Some of the metals and global commodities, again, they had a lower base last year, and we see some recovery in commodities in certain pockets. So they might see some kind of a positive result. And then we obviously need to see whether there is some traction in some of the other segments like pharmaceuticals, but that will more be of a stock by stock nature. But in general, I would say that there are some pockets of low base which will do well. The big ones that we need to watch for is how the financials do, especially the large banks.
Okay, so before I go to that part of the market, financials, large banks, so is there a pocket that you're seeing where growth will also be quite decent and valuations also don't look all that expensive? Would you have maybe a sector or two which might strike that fine balance?
Actually, more stock specific, but I'd say that in some of the retail financing names, whether it's the smaller banks or some of the NBFCs, you might see some positive surprise because the cost of funds has come down, and finance companies or banks which have a relatively higher proportion of fixed rate loans, they might surprise on the positive side. And some of them in the sub pockets have started showing loan growth also. For example, some of the microfinance, gold, etc., those kind of pockets, they have shown decent growth in assets. And if that is coupled with some improvement in margins, then you could see some positive surprise there. Some of the other names where you were seeing margin pressures last year, they might also come back.
So what about unsecured and microfinance? Is the asset quality cycle looking much better now? In your opinion, is the worst well over, and are we now going to see a recovery?
Yes, I would say so. Again, won't cover every bank or NBFC in the same brush, but overall, I would say that the worst is over. A lot of provisions have been made, and the fact that RBI cracked down on some of the growth that we saw in these pockets last year is also going to help. So I think that a lot of cleanup has happened in this segment, and we are seeing volume growth coming back. Ultimately, for these pockets, if you see volume growth coming back, it means that now the managements have confidence about the asset quality. Typically, if the asset quality internally is not looking that great, then they will not go for growth. But if they are going for growth, it means that they are internally satisfied with the asset quality trends.
Sir, you spoke about cap goods as well. You know, some of the cap goods names have seen some real sharp bounce up from maybe in the last 4-5 years. They've been 5-bagger plus. Where is it that one can strike a fine balance between, again, growth in terms of EPS and cash flow and valuations?
In cap goods, typically we've seen that cash flows is not that much of an issue. It's basically how the order book pans out. That is more the driver. Cash flow becomes a bigger issue in some of the construction names where the government or state governments are big clients. There the receivable cycles tend to be a bit longer. But in general, cap goods has been a good cash flow generating segment, and a lot of the companies in this segment are very well run, and a lot of them are multinationals also. So in general, the ROE, ROC are pretty decent. So it's all about order book, and we have seen that, especially in the power segment, the railway segment, some of the other infra segments, we have seen good ordering happening, water segment, etc. There has been good ordering happening. That's what I think is driving some of the recovery and some of the longer term trends.
But again, sir, isn't execution there far more key than ordering? Because ordering activity has been really, really strong. Okay, maybe FY25 was not a very strong year, but otherwise, if I look at it from a 3-year perspective, and therefore, shouldn't the focus shift more towards execution, some of these names? How do you view that?
Execution has not been an issue. I think it's more of the order book. Execution was an issue in some of the defense names, I would say, where there were capacity constraints or plus minus in ordering, some confusion about parts availability, etc. But typically, we've seen that at least the private sector, we've not seen too much of a problem in execution. If order book is there, then execution happens.
Point taken. So how are you seeing real estate as a sector? Again, it's one of those sectors where there's been a multi-year tailwind and it's cyclical as well. Do you see this being hit by cyclicality anytime soon, or do you see that this is still going to be a 3-4 year or rather there's a 3-4 year tailwind to this?
I think we have seen very good traction in real estate. I would say that given the very strong last couple of years, there might be a breather sort of a thing. But if I look at the next 2 to 3 year view, it's still positive. Having said that, prices have moved up a bit sharply in the last 1 year, 1.5 years especially. So that might cause some kind of a pause in the volume growth in the very high premium segment. But I would say over 2-3 years, I think it should again normalize. In the middle ticket segment, I think the traction is still quite decent as long as the micro market has not seen too much of a price growth.
Okay. Mihir, while we're at it, I'm also curious to understand what you make of some of the capital market plays and where is it that you feel there is best value within that entire capital markets basket. There are just now so many ways to play capital markets.
No, absolutely. So, I mean, we've had a decent exposure to capital market segment, but we have reduced a bit in the last few months, mainly because of concerns about valuations and, I would say volumes coming down in some of the segments, etc. So we have booked some profits there, but structural story is very strong, as long as savings continue to grow, as long as we have more and more investors coming into the system, that longer term trend will continue. So I think it's more about relative valuations, tactical switching, but structurally all the segments frankly look good. The less cyclical segments would be, the asset management companies, the distributors, etc., the insurance segment where the cyclicality is lesser. Some of the other capital market links segment like brokerages, etc., they may tend to be a little more cyclical. But I think if you look at 3 to 5 years, all segments will grow quite well, I would say.
Thank you so much, sir, for coming in, speaking with us, giving us all of that perspective. It's always good to get a big voice like you come in and give perspective to investors, to retail investors, at a time when we've seen a bit of a consolidation in markets as well.
Thank you. Always a pleasure.
Thank you. This hour, Kush Bora also quickly joining us. We haven't taken a technical view. Kush, what's your take with regard to the Nifty Bank Nifty?
Hi Harsh. I think consolidation continues, very much name of the game. Nifty hovering around the 25,200 mark. As bit called out, I think 2 days ago on the channel. The 25,200 straddle for this weekly expiry playing out, and the call option open interest is fairly heavy. So in all likelihood, we could have an expiry which is below that 25,200 mark. But going forward, the bullish view on Nifty continues. 24,900 remains as your stop loss. You could still play the Nifty on the long side. We did have last 2 sessions of higher high, higher low formations. Today that seems to be negated, but we're looking at that as more of an expiry impact. Bank Nifty, very honestly, not going anywhere. While we may have a couple of 100 points of move here and there, it's really the 57,000 straddle that's playing out on Bank Nifty. Whatever moves are largely around that mark. So unless we get a decisive move above 57,700 or below 56,500, I don't think Bank Nifty is going anywhere. I take heart from the fact that HDFC and ICICI are consolidating, but now you've got SBI and some of the PSU names also joining the party. So I think the downside from here on for Bank Nifty would be limited. So a long view on Bank Nifty also. I think 57,700, 58,500 are the next levels to watch for on the upside.
And your picks, Kush?
Sure. SBI makes the cut finally after that big breakout around that 820 mark. I think it's now perhaps turned the consensus call where I've heard a lot of experts on the channel put that out as a call. So 850, 870 targets on the upside. 810 is your stop loss. The other one is Syngene. Here too we are seeing a good recovery, a good rebound after hitting that 625 low a couple of times and then rebounding from that level. Couple of key resistance levels taken out on the upside. 685, 700 are your target. 655 is where you place that stop loss.
Are you positive real estate, Kush?
Very much so, Harsh, but selectively. I think Marathon and DB we've spoken about more than enough. I think Prestige Estates is one of the other additions to that name. So yes, if you do want to play real estate, you could as a sector. But even there, I would suggest be a little stock specific. I'm not sure if the entire sector plus is going to do well, as is the case for a lot of sectors right now.
We'll take some of those stock reactions on the other side of this break. But before we take that break, DLF remains in focus. And we spoke to Mihir Vora as well. He's positive too with regard to real estate. Kush also positive, stock specific. We'll ask him stocks on the other side. DLF is set to launch its new project today in Mumbai. On the sidelines of the event, my colleague Anushi got a chance to speak to the management of DLF Home Developers, Akash Ori, who is the joint MD and CBO. Listen in to a slice of that conversation where he mentions the strategies of the Mumbai region. We'll be right back after a short break.
Big project launch that we are looking at, your entry in Mumbai being the most important focal point in the real estate space that we are seeing. Just want to get your perspective on this. What is your overall strategy for Mumbai in general?
Well, thank you for having me on the show and thank you for having DLF on the show. I think what we are doing is this project is a futuristic project. It is a project with a lot of amenities. It's a project that comes with a lot of strength. It's in the Andheri West area, and it caters to the new set of Mumbai customers. So it's an exciting, honestly, time to be in Mumbai, and we have put in a lot of hard work to kind of get this whole thing off the ground. This is our joint partnership with Trident Realty, and we hope to make a nice statement. We hope that the customers enjoy what they see and enjoy being part of this journey, and of course later living in it. And as far as DLF is concerned, we will make sure that whatever our strengths are, we will bring on the table and kind of deliver them.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100%.
Welcome back. Thanks for staying with us on India Market Close. We hope we're giving you the best we can, and what we're going to do is we're going to go across to Somit sitting right next to me for our segment Heard on the Street to give us all of the chatter that he's picking up from dealing rooms. Somit.
Well, multiple stocks that continue to remain in focus. Firstly, it's Paytm. There are huge buy flows when it comes to Paytm at lower level, and the street is quite bullish for Paytm, and they're expecting the company to report an EBITDA, in fact, a positive EBITDA in the first quarter of FY26. And dealers believe that if the company goes ahead and reports a positive EBITDA, then there could be target price revision and upgrades as well that could come in for Paytm. Second stock on the list is Cipla. There are sell flows on institutional desks. Both foreign and domestic institutions have been selling this counter in trade today. That's what the dealers have been indicating, and dealers are also saying that the first quarter of FY26 earnings could be on the weaker side for Cipla. For M&M, there are buy flows. Yesterday also the stock was up around 2.5% in trade, and dealers are indicating that these buy flows are largely on expectation of some positive corporate action that could come in from M&M's side. For Patanjali, the stock has been gaining for the last couple of sessions. In fact, yesterday it was up 7%. Today it's up around 1.5%. Obviously, the company did announce a bonus as well, but the dealers are indicating that this up move is on the back of a couple of buzz that has been there for Patanjali. Firstly, the buzz is of a management change, and the second one is a potential MSCI inclusion. And these two reasons are the reason behind this 8.5% move that we have seen in Patanjali for the last couple of days. For Gland Pharma, the stock has been buzzing off late, and we did indicate few days back that large HNIs have been accumulating this counter in trade. And today the buzz on the street is that the promoter, that is the current promoter of Gland Pharma, that is Fosun, might exit the company anytime soon. So this announcement could come in from Gland Pharma's side as well.
Interesting, and interesting at a point in time, Somit, when interesting to see Paytm on that list of yours, because 22nd July is going to be the date on which they announce numbers. Well, you seem to sense that the numbers are strong.
Yeah, EBITDA positive is something that the street is going by, and if that happens, then they expect that there could be multiple target price revisions and upgrades as well.
That is, if you remember the UBS note, I think on Paytm last week, also said that Q1, well, I'm not sure if it was UBS, but there was a note on Paytm last week that said Q1 FY26 is when they get EBITDA break even. So that could be.
If they achieve that target, then might as well the street can get more bullish on it.
Okay, so Paytm in focus as well. Thank you for that, Swami. A lot of action. It's looking like an action-packed afternoon, truly. And Coach Bora continues to be with us. Aditya Shah joining in, founder at Hercules Advisors. Aditya, are you also feeling optimistic about Paytm?
Not particularly. Paytm's business has pivoted over the last 1 or 2 years, and now it is basically a loan dispersal channel where a lot of lenders can come in. The asset quality across the microfinance sector has deteriorated and continues to deteriorate. We could see a bottom. However, from my perspective, need to see more details on how the transformation is working out. Of course, the stock price has risen from about 400, 500 rupees to about 1,000 rupees, but that doesn't mean that the business is really very strong. So, from my perspective, I would try to avoid Paytm, and I would tend to go to other stocks where business continues to remain very strong.
Just want to pull up Sona BLW as well, and I'll get Kush's view on both 197 as well as Sona BLW. So a clarification has come in on the stock, which is buzzing since morning on reports that they have a tie-up with BYD for EV components, but they've come out and said that we're in talks with potential customers in India and globally. No material information that requires disclosure. This is, of course, a clarification on reports of talks with BYD for EV components. That's neither a yes or a no, which is why you're not seeing any major dent in the stock price even after that's come through. Just, Aditya, a quick word on Sona BLW on this particular news, or how you see it as a company.
So for a long period of time after listing, the stock has really underperformed. The potential for the business is really very strong over the period of next 5 to 10 years. As EV cars continue to gain traction, Sona BLW will also be one of the beneficiaries. Pending this news, I am positive on the stock for a longer period of time. The stock is still expensive. However, long-term investors should continue to stay invested in the stock. The stock has the potential to do extremely well.
Okay. Sona BLW in focus. There's some flashes on your screen, which we will also address in just a second. There's a stake sale in AWL Agri Business. We should pull up the stock because AWL has been, Adani Wilmar has been buzzing. Wilmar International will hold now nearly 64% stake in the agri business. Adani Enterprises has executed the sale of 20% stake in AWL Agri Business Limited to Wilmar International Singapore. Transaction is priced at 275 rupees per share. There's a 13.5% offer for sale in the AWL Agri Business, priced at 275. Wilmar International will replace Adani as majority shareholder with a 64% stake after this. What we're learning is that the total deal size will be 7,150 crore rupees as a result of this. So some of those details now coming in on that big deal. In fact, Mahima is joining in with more details on this. Mahima, this was news that was on the cards.
Right, absolutely. It was on the cards, and now, Adani has gone ahead and executed the 20% stake sale in AWL Agri Business, which is priorly known as Adani Wilmar. Now, the transaction is priced at 275, which is almost at its current market price right now. The stock is currently at around 278 odd rupees. As you rightly mentioned, Wilmar International will replace Adani as majority shareholder, and that will be around that 64% mark. Now, in terms of what this proceeds will be used for, it will be used for growth in core infrastructure platforms, as well as proceeds will be used for energy, utility, transport and logistics and primary industry growth business as well. From the 7,100 crores amount that will receive, overall can also be used to pay off the debt as well. Now, in terms of, just to give viewers a perspective of the timeline of how this has happened, Adani had done a 13.5% offer for sale back in Jan 2025 at around 275 rupees. Overall, Adani had then also declared that they will reduce their overall stake in the entire JV with Adani Wilmar, which was around 75% back then. So this is the overall view as to how the stake sale is going to happen, and now it is getting executed, around 20% being sold right now.
Okay, so that's a big one. Adani Wilmar also buzzing. So let's do a rapid fire with all of these stocks that we've discussed with you on the charts. Kush, Adani Wilmar, Paytm, and of course Sona BLW.
Paytm is a buy, Sona W is also a buy, and Adani is a hold.
Adani Wilmar,
Adani Wilmar is a hold, yes.
Adani
AWL.
Wilmar is a hold, buy, and a hold. Sona BLW, even after the kind of jump up we've seen, all of them buzzers this afternoon. So even after that jump up?
So, Taman, I think after the after the sad news, the stock actually had gone into a spiral, and on the way down, it had hit deep oversold territory. So a rebound was expected. It was only a matter of time. Where does it come from? Also, then it created a gap near the 510 zone, which I think will be the immediate target, to be filled. So yes, on the way up for levels of 505, you could hold, perhaps even consider a fresh buy. This rebound could actually take the stock to that level and higher. And beyond that, I mean, 525 is also a good level as the second target. Stop losses come at 470, 465 is also good risk reward ratio. So yes, Sona BLW remains a buy, but even more constructive on Paytm. We've had this as a call, I think, 3 days ago, reiterated that yesterday. So yes, good moves. I think I'm even more impressed with the accumulation, the volume accumulation on Paytm in the last 5 sessions rather than just the price action. So yes, I mean, this kind of a dip should be taken as a long opportunity on Paytm.
I think the other buzzer of the day, and this is something, Harsh, that you had picked as the big brokerage call this morning, is Thermax.
Yes.
And Kotak on Thermax, I mean, look at the moves on that stock. About 8% up. No, I mean, this is just a quick plug here that you should tune in the morning and watch our big brokerage call on all the elements we have on India Market Open. But nevertheless, what was it that Kotak found exciting?
Well, what they were essentially saying as part of the note is that around 70% to 75% of the top line of the company has good growth prospects. There's good tailwind in some of those business lines, and therefore that tailwind should carry forward all the way through FY28. So that was one piece. The other one was around 14% of the business which is currently loss-making will likely shift towards more profit-making. I'm not saying it will be one of the most profit-making segments, but it will shift towards maybe a 6% EBITDA kind of a number. And what that will do is it will flip the overall EBITDA margin by 250 basis points. Now that's large. For the adjustment that they've made, they've just done a 20 bip adjustment because a lot of that adjustment was already baked into the price. To the earlier target price that Kotak had. So they hiked the target price only from 3,500 to 3,800. But of course, the stock has flown as a result, ad rating given on the counter, and 3,800 being the target price. And that is what has led to the reaction that you're seeing right now. Aditya Shah, positive with regard to where capital goods stocks are. ABB also came out with their guidance on what they see in terms of business. What's your sense on some of the cap good plays and just the move on Thermax in particular, if you have a view?
So positive on the cap good space, but not positive on stocks that are traded about 60-70 times multiple. I don't think capital good stocks do need to trade at those obnoxious valuations. Thermax also has good potential over the period of next 3 to 5 years. They're market leaders in whatever products they make. However, the valuations, in my opinion, have already priced in the growth that will come in over the period of next 2 to 3 years. So longer term, over a period of 5 to 7 years, good stock to hold. But in the shorter term, I think the stock will undergo some bit of time correction, after which it will move on from there.
And Kush, do you have a view on this one, on a Thermax and maybe even an ABB?
So Thermax, good move, but I think now the risk reward ratio will not be favorable because mind you, this is not a one-day move. This has been in the offing for the last 5 sessions. Yesterday also, the stock had a good move, about 4.5%, 5% kind of an up move. Today, if you see, it's off the high point of the day, suggesting some profit bookings already kicked in from those 4,100 odd levels. So yes, you could continue to hold around that 200-day moving average support, which comes in at 38.25, 38.30 zone, but wouldn't suggest a fresh buying. ABB is seeing short covering today. Although it's on back of very strong volumes, it's the first day of short covering after about 12-15 odd sessions of sell-off. I think one other chart which is shaping up very well in this space is actually CG Power. Very narrow band the stock had gone into, and today you're seeing a breakout of a wedge. So I think on the upside, CG Power has some room. You could see the stock head to 705, 720 kind of levels, and the recent consolidation base near 670 will act as a support. So that seems to be shaping up rather well.
Okay, shifting quickly to stock of the day, we have Ixigo. Stock has skyrocketed. Strong earnings is what's driving that stock. Mahima here with all of the details. 17%, Mahima. What a move.
Right, and absolutely, and at its day's high point as we speak, 17% on the counter, and this is on the back of its Q1 earnings. For sure, it's a blockbuster quarter for Ixigo in terms of how the numbers have fared. But, in terms of what worked for the company in Q1 FY26, there's strong revenue growth on the back of good transaction activity that has taken place this quarter. And this is despite of the headwinds that the entire quarter saw because of Operation Sindoor, Iran-Israel war, etc. There's gross transaction value that has expanded almost 55% this particular quarter in terms of the overall numbers. Net profit up 28%, revenue up 73%, EBITDA up 52%, margins slight dip there because of investments made by the company from that 9.2% mark to around 8.1% mark. But overall, the net profit grew because of the good top line growth, and plus market share gains in flight segment have also been observed. And again, this is despite of the headwinds that the industry faced. Now, what has not worked? Couple of things: margins contraction, and this is on the back of investments that led to dip overall in the contribution margin. In terms of segmental performance, overall, flight and bus segment saw a gross transaction value growth of around 80-odd%. Flight segment, robust passenger segment growth was seen despite of industry headwinds. Train gross transaction value was up around 30-odd% YOY basis, and train business has continued to consolidate further and has maintained its dominant position in the online travel agency market. Bus passenger also saw a good growth of around 73% YOY basis. In terms of its key con call takeaways, travel guarantee is driving significant user engagement is what the company has said. Management plans to continue to invest in technology, AI as well as new initiatives, and company has guided for slightly more than that 300 million rupees of ESOP cost that will also be recorded in FY26. Lastly, in terms of what brokerages are saying about the counter, JM Financial has maintained buy with a revised target price of 220 on the counter. Medium-term profit could grow 45% plus is what they're saying. They did raise their EPS estimates also by 2 to 5%, and they believe that the company deserves to trade at a premium valuation multiple and expects them to outperform its peers. So this is the overall view as to what has made the stock buzz in trade today. We also spoke to the management about his take on how take rates will continue to see growth in the near future. Listen to what he had to say.
Well, our take rates have been fairly stable, and in fact, they may have improved slightly on categories like flights and buses. But some of that is optics also, because last quarter, the fares on domestic actually came down a bit due to some of the turbulence that the sector was experiencing as a result of Sindoor and then AI 171. But if I look at the broader, bigger picture, right, the take rate comprises of, what kind of convenience fees exist, and there's commission, and there's also value-added services. I think our ability to have latch-on value-added services and the ability to also, figure out through data science and AI, what kind of pricing and what kind of essentially personalization one can do around who to market it to or sell it to. I think that cross-sell, upsell funnel has really started to work. So you can expect that take rates are fairly stable. I mean, on train, we've been centered around 6%, and it's a regulated industry. So I think we've been managing to maintain it around that number, slightly plus or minus here and there is okay. But on buses, we've managed to improve it from 10% to 12% over the last 1.5 years, if you see. And I think we are at a point where we are satisfied with where we are. So we don't see any major changes happening there.
Okay, look at that stock going strong, nearly 19% up. I think he was on KYC this afternoon as well, Know Your Company. And what was your assessment, Harsh? Because I know that in this show, you look at the company from various angles in terms of valuations, in terms of performance. He has strong numbers. Are the valuations matching up?
Well, so that's what really stood out, actually. So great company, good growth, but just the valuation at which it currently trades at, which is 130 times earnings. And even when I'm looking at 1 year forward, it's roughly 80 times. That's what the consensus trade view is. But also need to understand, this is a typical platform company. It's one of the fastest growing within that space, and it already has a very good interface, and customer acquisition is strong. So all of those things aiding the company. But from 93 rupees, which was its IPO price exactly 13 months ago, it's currently sitting at the price that you are seeing on your screen. And 19% of that is what is today's move alone. Aditya Shah, do you have a view on Ixigo?
No, Harsh, I don't track this company, so I will not be able to comment on it.
Sure, but just platform companies in general and companies which are facing the travel and tourism space. ITC Hotels has also done a decent bit. Chalet Hotels is buzzing today. And then you have Ixigo. So just give us your take. And, valuations 130 times for a platform company, fast growing. If at all you have a view on that, if at all.
Growth is a function of a lot of things, and growth can slow down, so then the valuation will take a beating. From my perspective, I am not interested. Investors should be really very careful when they are investing in stocks at about 100 times multiple. We've seen investors trying to invest in Trent at about 150, 200 times multiple, and we've seen the Trent stock correcting by about 40 to 50%. So from my perspective, high valuations is a no-go space. The moment the market liquidity dries up a little bit, those stocks will take a beating per se. Particularly within the travel and tourism industry, a lot of hotel stocks have risen very sharply. Something on my radar continues to remain Indian Hotels as well as Charlotte Hotels. Both of these companies continue to do extremely well. Indian Hotels particularly has seen a massive turnaround over the period of last 5 to 7 years. That is something that you need to watch out for. And again, of course, the favorite within this space continues to remain Indigo. Indigo has done pretty well, though the valuations are really very expensive. That is one company where if there's any bit of correction, there you could add in at a level of, let's say, about 4,500 to 5,000. That's an interesting stock to watch out for. It continues to dominate the Indian aviation space, and with the problems of other
I
airlines.
don't know when you're going to see 4,500. It's 5,800 right now. But okay, two companies that have reported right now. Let's quickly pull up. First, Polycab. Revenues up about 26% at 5,906. EBITDA, the numbers actually looking quite strong. I want to see the stock, please, if I can. EBITDA up 47% at 858 crores. Stock not performing well at all. Margins have also gone up 14.5% versus 12.4%. So have net profits. Net profits are looking robust. We will have to look at the fine print and see if there is something there that the street is noticing, because on the face of it, the numbers look good. Not so for Heritage Foods. Let's pull up the Heritage Food stock, please. The numbers have just been reported. Net profit down 31%. That's why you're seeing that sharp dip. Revenues are up 10%, but EBITDA is also down 21%. Margins seem to have crashed from 9.1% to 6.5% on Heritage Foods. Aditya, any visibility on these two companies that we're talking about? Polycab actually looks pretty decent on the face of it, but perhaps had run up earlier as well.
Yes, so a lot of corporate governance issues has plagued Polycab per se, but the business continues to remain extremely strong. The entire FMEG space, you take Polycab, you take KEI, or you take Finolex for that matter, all of these companies are doing extremely well. Need to look at the final details of Polycab. Polycab and KEI continue to be very strong companies, and investors must watch out for both of these companies.
Okay, and Kush, Heritage and Polycab?
So what you're seeing on Polycab, of course, is a result reaction. But had you not told me that piece of information, I would have said yes. Some profit booking is par for the course, because the stocks had a near vertical rise. In the last month and a half, from 58 all the way up until 7,000. I think a good consolidation point will be 6,700, 6,750. If the stock does dip around those levels, you should look to re-enter. There was some negative RSI divergence setting up, so profit booking was par for the course. So the structure is very, very strong and intact. Around 67, 6750, if you do get it in this dip, should be taken as a buying opportunity. Heritage Food, not so encouraging, had a run up, but volatility and profit booking began about 10 sessions ago, and you're seeing a continuation of that today. So if I had, I would perhaps look at an exit for Heritage Foods, but Polycab buy on.
Okay, all right. Time to bring in a global voice and get us some global perspective. David Roche, strategist at Quantum Strategy, joining us. David, pleasure having you. Give us your perspective. the US 10-year bond yield closer to 4.5 now. What is your take? Because equity markets don't seem to be pricing that in. That is at least broadly what most strategists are saying. What's your take?
Well, I'd hate to say what most strategists are saying, but I would say a couple of things all the same. The first thing, you have to remember that most US investors diversify within America. They are buying equities because they think that having Microsoft manage their money is better than having Scott Bessent and the US Treasury and Trump manage their money. So in a sense, that's why the equity market is moving differently to the bond market. Now, to answer your question on the bond market, I think that the US 30-year yields, I want to focus right on the long end because that's where the damage is being done. US 30-year yields today are pretty well at 5%. My feeling would be we will see them at 6% probably before the end of the year, which is a massive increase. And the reason that will happen is two reasons. Number one, the US exceptionalism idea, whereby everybody, private investors and states and central banks, automatically put their surplus dollars to work in US treasuries, that is over because it's just too dangerous an economy and things are too uncertain. The second reason why this is going to, why US long bond yields are going to increase dramatically is because the budget arithmetic announced by Trump is fatal. You're going to add approximately, in my view, 1.8 to 2% to an already 7%, 6.77% budget deficit, which is really going to put pressure on getting that funded. It will have to be funded domestically because the dollars to fund it will no longer be pumped out by the US through the current account deficit. So the savings have to come out of domestic savings. And that will increase domestic savings by 4% of GDP, which requires high interest rates to achieve that. And of course, the higher savings rate means lower growth. The final reason is because tariffs, you're just seeing the beginning, but tariffs are going to edge up towards a 20% average tariff rate, effective tariff rate, and they're going to increase inflation by 2 to 3%, which the long bond is not going to assume is temporary. They leave the temporary business to the people in the Fed. That's the answer.
Okay, David, in all of this that's playing out, and you spelled it out really well, how do you view India, if at all you have a view?
Look, I think India is kind of good because it's not so dependent on international trade, and it does appear to have dodged Trump bullets by being relatively compliant and friendly. And Trump needs a deal somewhere. I mean, most of his deals have never been published, like, for instance, Vietnam and what's going on in China. There's no written record at all of any of this, so we really don't know. But he needs another big deal, which he can proclaim a deal. The only way he can get that is India. So that's the good news. The bad news is, of course, if you come down to a confrontation between Trump and Putin after 50 days, and he puts 100% tariffs on Russian oil and on secondary tariffs on exports of countries that use Russian oil, then India would get hit really hard. So it's Yao Chi Yao Wai, sorry to say that in Cantonese, but it's more or less my second language. There are advantages and disadvantages in India. The good things is they've got themselves in a good geopolitical place cuddling up to Trump. The bad thing is if Trump picks a fight with Putin, then there are knock-on effects for India's use of Russian oil.
Okay, David, thank you so much for coming in, giving us that perspective. That's the worldview coming in from David Roche. Have a great day, David. We'll let you go.
And you too. Right.
And what we'll also do is, Kush, we'll let you go as well, is what I'm told. So thank you so much for joining us this afternoon. We'll let you go. We'll also slip into a very short break. On the other side, we'll get you top buy today, sell tomorrow recommendations. Stay with us on NDTV Profit.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and
Welcome back. You're watching India Market Close. Now, as market, I just a quick check on the Nifty before we get to our bull versus bear segment, and that's the highlight really of this afternoon, where we pick up one stock and tell you both sides of it. But the Nifty in a painful situation right now is at the day's low, just about keeping above the 25,100 mark, but 0.5% down. We're seeing some afternoon selling pressure coming in. Can we pull up the heat map on the Nifty just for a second? We'll see what's dragging down, or even Nifty contributors. I want to get a sense of what's really dragging down the Nifty, and there you see it, quite a bit of pain here. But let's focus on Tech Mahindra, currently trading in the red despite posting a 34% year-on-year profit growth. The key question remains, can Tech M meet its ambitious FY27 targets? To explore what's driving confidence what's driving concerns for investors and whether they're positive triggers, I'm joined now by Jasmeet.
Well, right, thank you for that. Yes, the Tech Mahindra results are out yesterday, and here's the complete analysis of the result. Firstly, the bull would be the expansion over the margin has been seen in last 7 consecutive quarters, which is a positive thing. But on the other hand, the bear is the management is still far away from the FY27 guidance, which is to reach a 15% margin growth. While secondly, when we look at the new deal wins given in this particular quarter are going well, as we see the Q2 onwards, but the management, another bear is the add-on of the new deal wins will be a little slower going forward. The third bull would be the deal wins in Q1 were at 809 million, where they beat the estimate that was the brokerage estimate of anywhere between 600 to 800 million dollar. But on the other hand, Jefferies and Morgan Stanley feels that the deal wins on the manufacturing and auto a little slower end. While lastly, when you look at the consensus growth, the Tech Mahindra consensus growth stands are above expected peers is a good thing on the other hand, but the stock is available on an expensive premium. So here is the complete analysis of the stock in bull and bear versus.
Okay, thank you for that. Nilesh Jain joining in from Centrum Broking on the show. Aditya Shah also in. Nilesh, very good afternoon to you. I'm going to start with your take on what's happening with the index. The Nifty is seeing quite a bit of weakness at this point.
Very good afternoon to you, Amanna. Good afternoon, everyone. Absolutely. So today, in fact, after 2 days of pullback that we saw, today we are witnessing a bit of profit taking. And if you look at the derivative data, today being a weekly of an expiry for the Nifty, the data also suggests that 25,200 is the strike on the call side where we have seen huge amount of call writing. So it is going to be very difficult for the Nifty to take out 25,200 level decisively on the upside. If at all it takes out those particular levels, then only we can expect a short covering rally towards 25,300, 25,400. But as of now, looks like Nifty is likely to oscillate in the range of 25,000 to 25,200. That's the 200-point tight range. I'm not expecting any major crack from here. Any dip from here could be a good opportunity in terms of taking long positions, keeping a stop loss below 25,000. 25,000 is psychological support as well as 50 DMA is also placed exactly at those levels. So 25,000 should be the stop loss on the closing basis and buy and dip should be the strategy.
Is this purely an expiry day move, Nilesh, that we're seeing over the last few minutes?
Right, it looks like purely driven on the back of expiry. We are witnessing unwinding of the position on the put side from 25,150, 25,100 strike. So we can expect a pullback going forward. Maybe tomorrow we can expect a day of a pullback. So it is purely looks like expiry driven move that we are witnessing today.
Okay. Aditya Shah, your take on IT. We just did a small piece on Tech Mahindra. Do you have a view on Tech Mahindra in particular and IT in general? How large cap IT is playing out in terms of earnings versus your expectations?
So again, my expectations on large cap IT were weak results would come in, and exactly that is happening. Most companies have reported weak set of numbers, and this will continue at least for the next 2 to 3 quarters per se. After which, so the bottoming out process should really happen, and stocks could move upwards from there. So from my perspective on a large cap IT space, HCL Tech continues to be my topic, given the dividend yield and given the strong fundamentals of the company. So HCL Tech followed by TCS will be the top picks within the large cap IT space, and you will have to wait at least 6 to 12 months before any turnaround happens in any of these.
Okay. I'm wondering if there are any IT picks that you have, Nilesh, right now. And I will just pull up the Nifty IT as well. Markets are at days low. Index is looking tough. Is this the time for the brave to stick their neck out and say, okay, I'll buy a Wipro?
See, first of all, if you see Nifty IT index, it has given a breakdown. So Nifty IT index is looking weak. So be it TCS, Infi, Wipro, in fact, all these stocks are looking slightly on a weaker side. But if I have to pick any of these stock, Wipro can be a good bet because 2 days of consecutive gains we have seen already till yesterday. Today, it looks like merely a profit taking. Any dip from here towards 258, 255, that can be a good entry point in terms of taking fresh longs in Wipro, keeping a stop loss below 252 because 252 is a very strong support. From here, we can expect a pullback towards 265 to 270. So purely a pullback play can be played in Wipro.
Pullback play in Wipro. What about an Axis Bank? Let's look at all of your companies that are going to report. Axis Bank also showing some weakness. Would you buy an Axis Bank? Would you be brave and buy an Axis Bank, Nilesh?
The only reason I could go long in Axis Bank would be since it is trading at multi-month support zone. So important level from a risk and reward perspective is placed at 11,145. So 1145 will be my strict stop loss if I'm going long in Axis Bank, and this pullback may extend towards 1180. A breakout above 1180 will confirm a short-term bottom for this particular counter. So as of now, purely from a pullback perspective, keeping a strict stop loss below 1145, yes, contra bet can be taken.
And your picks this afternoon, Nilesh?
Yes, so I have two buy recommendation. First of all, UPL. If you see this particular stock, after a long time, it has crossed 690 level. It looks like a multi-year breakout we have seen in this particular counter after a long underperformance. So gradual recovery we have seen in this particular stock. So UPL is a buy for upside target of 720. Stop loss will be placed at 678. Apart from that, if you look at the other stock that I have is CG Power. So this particular stock is also has given a good breakout. So we have seen long consolidation in this particular stock in past almost 1 month. So after 1 month of consolidation, it has given a good breakout from its falling trend line. The structure looks positive. We have also seen a good build-up on the long side on derivative front. So a long position can be initiated in CG Power for a follow-up move to continue towards 715. That will be the immediate target. 675 should be the stop loss.
40% return is what UPL has given year to date. It's a stock which has been excluded from the Nifty 50 index, and it's given this kind of a return. Wonder what you believe of agrochem, Aditya Shah. Is the cycle really turning? Because the markets are seeing something, and the numbers too are reflecting that to a certain extent. So give us your view. Okay, so we've just lost Aditya in the middle of all that. But let me quickly take it to Axis as well, because Axis numbers expected today. You're expecting net interest income, which is expected to be up just about 1%. So a flattish kind of a move on the NII number on a sequential basis as well as year on year, frankly, just 3% growth. So the expectations are quite weak. The operating profit too expected to be flat on a QOQ basis, up just 6% YOY. Provisions expected to go up. Mind you, just two numbers which is going to likely influence the way in which results come out. One is going to be the margin number and second is going to be the credit cost number. If either of those move, you could see a material change versus last quarter, which was an extremely strong quarter for Axis Bank. Even from an ROA perspective, it was 1.8% ROA. The question will always be, can they hold on to those ROAs? Growth not expected to kick through in Q1, and that's because of seasonality. But outside of that, broadly, that's the set of numbers expected. Really a muted set overall. That's the expectation as per consensus analysts. And those are the things that you really need to look out for where Axis is concerned.
So Axis is going to be a bit painful tomorrow, but I want to also pull up State Bank of India. I think if you're talking about the banking pack, State Bank of India is one to keep an eye out of on and has lost most of its gains. I'm wondering, Nilesh, whether you would have a buy call on SBI, because with the kind of response for the QIP that we are hearing of, is a 25,000 crore QIP, we're hearing of at least 75,000 crore already. So, you know, your price will definitely go up. Would you buy an SBI right now at these levels?
Yes, Samana, it's a buy on dip, buy at current level as well. Although we are witnessing some bit of profit taking, which may extend further towards 825 to 820. But if at all it falls in the range of 820, 825, that can be a good entry point, keeping a stop loss below 800. SBI is a buy, and we are expecting a short-term momentum towards 845 to 860. Maybe in the July series, we may see SBI moving towards 860 levels as well. So it's a buy on decline kind of structure we have in SBI.
Okay. Aditya, a view on SBI?
Yeah, so as it's been a long time since SBI was short on capital and they are now raising capital. Good for SBI per se. Amongst the PSU banks, SBI continues to remain the top pick. This capital raise really helps the bank to fasten off the loan growth to about 10 to 15%, positive for the bank in the longer term. So positive on PSU on SBI within the PSU bank.
Okay, in fact, Vishwanath broke the story this morning and he's with us. Vishi, we'll talk about the insurance story as well. But on SBI, since we are talking about it, looking at a bit of dip. But what you've reported is that there is quite a considerable appetite for the fundraise.
Yeah, Tamanna, so what we picked up from our sources is that there is, well, 75,000 crore might be actually a smaller number compared to what the actual interest in this is. 75,000 crore is already 3 times the size of the actual issue, and it could be as high as 4 times. That's what our sources are telling us. And this includes your domestic investors, including mutual funds and insurance companies, of course, but also a lot of international investors who are very happy with the fact that an SBI is coming to the market to raise equity. What seems to be the conversation is that they were waiting for a big ticket investment opportunity like this one, like an SBI, where you have a big enough size for these large investors to get in. What sources have told us is that they are cutting checks between $400 and $700 million so that they can participate in this issue. Of course, we will find out details about the actual allotment a little later today, because the issue will likely close now, considering so much oversubscription that is there on the 25,000 crore QIP. We'll find out who the big investors are who are actually going to get the allotment at the end of the day. But yeah, a large number of domestic, but more importantly, international investors coming in to buy a piece of SBI.
Okay, stay with us, because there's another key regulatory development that could reshape the insurance landscape. IRDAI's committee has recommended barring mergers between insurers and non-insurers, citing moral hazard risks. What are the details on this?
Right. So, Tamanna, there was a committee that was formed under Dinesh Khara by the IRDAI. It's a 7-member committee, and they were expected to look at the entire insurance regulations and law that exists at this point in time and consider any proposals for an amendment. One of the proposals for amendment was to allow an insurance company to merge with a non-insurance company if the need arises. Specifically, this is relevant from Max financial insurance, financial services point of view, where Axis Max Life was to be merged with Max Financial. This is because Axis Bank bought a significant stake in the life insurance company. So it seems that the committee has recommended that you should not allow this, because the game is entirely different when it comes to insurance companies and other financial services companies. And if you were to allow a merger of the two, then that could lead to moral hazard, because you do not know what kind of risk the insurance company is carrying versus what kind of risk the financial services company is carrying. So the committee has recommended this. IRDAI now will have to seek government comments on the committee's recommendations, and on the basis of that, they will see how exactly any amendment to the law can be made. But as things stand, the committee is not in favor of allowing a merger between insurance companies and non-insurers.
Okay. All right. So insurance in focus. Max Financial seeing a bit of pain because of this as well. Nilesh, on the insurance space, is there anything that you're spotting at this point?
See, within insurance space, in fact, today looks like more sort of a selling pressure across all insurance stocks, SBI Life, HDFC Life, even Max Financial. So we are witnessing a bit of selling pressure across all insurance space. But if I have to pick any one of these, then that would be SBI Life. Because this stock is approaching towards its support zone of 50 DMA, that is placed at 1790. So keeping a stop loss below 1780, SBI Life can be bought purely to play a pullback. And otherwise, it's an avoid. Sector as a whole is an avoid, because we have witnessed some bit of consolidation.
Okay, Aditya, do you have a view with regard to this development with regard to insurance? Is it a big one in your opinion?
Not particularly from my opinion.
Sure.
From my perspective, I remain positive on the life insurance space. Companies like HDFC Life have got very strong numbers. They've reported strong numbers, and they will continue to do exceptionally well. So from my perspective, this will have little bearing on the operations of entire insurance space person.
Okay. Okay. All right. Let's go across to Bengaluru. Puneet is joining in. Wipro will be announcing its quarterly results today. What is being expected? Puneet joining us from the Wipro campus. Puneet, have you survived the ride from the airport to the Wipro campus? First of all, because we know that is a very, very long one. And what is being expected from the numbers?
Well, definitely the ride was long, but it looks like it's going to be worth it because the result is a key one in the IT space today. For Wipro specifically, we are expecting that the revenue is going to be largely stable to a slight negative bias, and that's something that the management had guided for post quarter four earnings. But this is a key earnings because of what the guidance could be for quarter two. And why is this important? Because Wipro is the only IT company that give guidance on a quarterly basis. So we will actually know what could be expected in the short term for Wipro as well as for the IT sector as a whole. Apart from that, the deal wins number is going to be the other one to watch out for, like other IT companies specifically. And one question that we'll be going to be posing to the management as well is going to be how the conversion of deal wins will translate into revenue growth going forward, because historically that has been kindly subdued to say the least. So in the short term, we are expecting some pain, and those numbers will be reflected in quarter one. But as you rightly said, we're live from the Bengaluru campus of Wipro, and we're going to be speaking to the management tomorrow at 8:35. So do join into NDTV Profit to get more perspective for the large cap IT peer.
But while we have you, what are you penciling in for LTI Mindtree?
For LTI Mindtree as well, it's going to be a very interesting quarter, because for this company we're actually seeing some kind of positive margin pivot, and this is going to be interesting because one of its key products as well as services business has been doing very well. They've also got good deal wins over the last couple of quarters, and we are expecting the positive momentum to continue. The only key aspect is how the strategy would change under the new CEO, because we are seeing changes being one of the key aspects for the IT company LTI Mindtree. We've just recently seen the CEO change, and while the strategy has been penciling in and deal wins have been strong, the margins have been a weak print for LTI Mindtree. So the three things, again, similar to Wipro, would be the deal wins aspect, but we are expecting the CEO strategy to be the main talking point for this particular result, as well as if there's a margin erosion again for LTI Mindtree in this particular quarter.
Huge flip to margins. Thanks so much for that, Puneet. Huge flip to margins if expectations are met, because last couple of quarters margins have been a drag, as Puneet said. And 13.8% was the margin number last quarter, has been the case for the last couple of quarters. Historically has done 15% margin. A 14.5% margin likely this quarter could be a positive.
The problem with the IT pack and that assessment, I don't know if we have that bite ready. We spoke to Samir Arora this morning on IT, and he said clearly, I just don't like IT, because till you don't have companies in the United States who know what is going on, who have clarity on tariffs, they're not going to go out and spend. Fundamentally, the picture is looking difficult. Yes, then you can have drips and drabs where you come out and say this one is relatively better than that one, this one's deal conversion is better than that one. You'll have short-term moves, but that pain in the system is really looking tough. And he talked about the couple of IT companies that their funds are invested in. One was KPIT and the other one was eClerx.
Okay.
Those are the only two that at least Samir Arora likes. In fact, listen in to what he said this morning.
In two and a half sectors, which are big sectors, the growth rate will be very low, which is IT, big consumer, and even although we own most of these big banks, they are not going to grow even 10%, I think. Maybe 8-10% they will grow. Pharma, we might buy more also. And we like healthcare also. So yeah, that broadly. But the thing is, those weightages, because the way we have done it in the past, these won't define our life, but they will be helpful. That means we are not going to make 15% pharma, but you can have 5-6% pharma. So you can say matters or it doesn't matter. But yeah, we like pharma and we like healthcare and we like this and we like Apollo and we like here and there pharma also. Yes.
Nilesh Jain, let me take your view on IT and especially on a Tech Mahindra if I haven't already.
See, Nifty IT index, Harsh, as mentioned, the structure is looking slightly on a weaker side, and If you just pull up Nifty IT index chart, you can see in last almost 3-4 months the index has consolidated, and it is having a very strong support at 36,800 mark. If it breaks 36,800 levels, then we are likely to witness a filling up a gap which is placed at somewhere around 36,000, 36,600 that was seen in the month of May 2025. So that gap is likely to get filled going forward. So structure is looking slightly on a weaker side as far as Nifty IT space is concerned. Tech Mahindra, specifically this particular stock, looks like it is heading towards its 200-day exponential moving average, which is placed at 1530. So again, this particular counter is also looking slightly on a weaker side from a short-term trading perspective.
Okay, BTST, Nilesh, give us the take.
Right, so I have a couple of buy recommendations. I've already highlighted UPL, CG Power, another stock that is on my radar, that is Fortis Healthcare. So this particular stock is constantly forming a high top and high bottom formation. It has also given a good breakout today. So we are likely to witness another round of buying, another round of momentum, which will take this stock towards 830 to 840 on the upside. So with a stop loss below 796, Fortis can be bought.
Index BTST call, if any, because you know we know we're seeing some Thursday pressure, so to speak, but by tomorrow we will have Wipro, we will have Axis. Do you think that there is a case for a long call on the Nifty or the Bank Nifty, Nilesh?
See, Nifty and the Bank Nifty, as mentioned at the beginning, that no doubt today we are witnessing a selling pressure that looks like merely because of the weekly expiry. For tomorrow, I think there has to be some bit of a pullback, because if you see the volatility index India Weeks, which is trading at very comfortable levels of 11.25 right now. So on that front, we are expecting sort of a pullback in the market, and this pullback may extend towards 25,200 to 25,250. Nifty index has a very strong support at 25,000. So till the time it doesn't break below the same, the outlook looks positive, and 25,000 should be the stop loss. Coming to Bank Nifty, see, comparatively the structure has weakened today. It has breached 57,000, that psychological support zone. Now from on the lower side, it may test the levels of 56,600, 56,400 going forward. But again, 56,200 is a very strong support. So some bit of a short-term selling pressure may extend further. But I think if at all you see any dip towards 56,400, that can be a good entry point. So from index perspective, I think it is better to stay away for the time being. But the sectors and stock specific focus can be done.
Okay. Heritage Food. I think you're going to have stock specific and you're going to have result specific. So you know, let's pull up Heritage Foods. They've announced their numbers and it's looking tough actually. It's still recovered from its lows, 3.5% down on the stock, but they've posted a 30% decline in net profit for the quarter. Mahima is joining in with more details.
Right, so a 30% decline in the net profit. Overall revenue is up around 10%, but EBITDA also impacted by around 21%, so down 21%, and margins have significantly taken a hit. Earlier it was 9.1% in Q4 FY25, Q1 FY25, which has gone to around 6.5% in Q1 FY26. Now a couple of reasons as to why that has happened. Cost of raw material has gone up significantly by around 13% for the counter. Plus overall finance costs have also gone up. Depreciation has gone up because the company has made investments, capex investments when it comes to their overall factory outlay as well. And plus they're also investing heavily in terms of increasing their touch points as well. Last when we spoke to the management, they had said that they want to increase their touch points beyond southern markets, and they're probably going ahead and making those investments, and that is why one of the reasons as to why the overall costs have also gone up in terms of their marketing as well. In terms of the overall earnings, there is also a dairy segment overall that has gotten impacted in terms of profits. This is mainly because of costs of raw material going up. Plus there is also an exceptional item during the quarter, and this is on account of impairment charges on account of the property, plant and equipment that is recorded by its one of its joint venture subsidiary. So that's with regards to the exception item. But overall, I think of course the investor presentation we'll have to wait as to how volumes have fared versus how the value growth has been in terms of the 10% revenue mark. But overall this is the picture. Majorly because of dip in margins and the net profit overall going down, the stock is seeing a downtick in trade today.
Downtick in trade today for Heritage Foods. I wonder we can quickly pull up Polycab as well. That also reported a short while ago. So Polycab also might see some pain. Thank you for that, Mahima. Nilesh, thank you for joining in. Aditya, thank you for joining in this afternoon. It's been quite an action-packed day of trade, as you would expect on expiry day. But still a recovery from the lows as far as the Nifty is concerned. Barely there, holding up above 25,100. So that is good news. I want to pull up the heat map very quickly. Bank Nifty actually has taken a bit of a dive more than anything else. And there you have it. Tech Mahindra is top loser. Indus in joining in. SBI Life as well. Insurance is having a tough time this afternoon. Wipro ahead of results. Not too much excitement there. And as we heard from Puneet reporting from the Bangalore campus of Wipro, you might see a bit of pain. HCL Tech following suit. On the winning side, Tata Consumer doing okay. Tata Steel, Hindalco, a smattering of stocks there, but even so, Tata Consumer is the standout, more red than green on the screen. And, you know, the kind of dive that we've seen on the Nifty gives a little bit of less comfort. I want to pull up the intraday for the Nifty for you just very quickly and see, and you know, just give you a sense of what's happening there. So there you have it, Harsh. It's very clearly that you've seen a knock coming in the last 40 minutes odd of trade. And I suspect that's been led by banks, because just pull up the Bank Nifty as well. And then we'll get to the constituents of the Bank Nifty. I think the banks have really pulled it down. You can just pull up the Bank Nifty constituents very quickly and take a look at what's happening there. Yeah, I mean, IndusInd seems to have pulled down, Canara Bank, BOB. I wonder why. State Bank of India. Can we just pull up State Bank of India and the intraday just a minute before trade or so? And yeah, there you have it. So you have a heavyweight there, nearly at the day's low.
Well, yes, so it was the banks. It's also a bit of IT, right? And those are the two largest. It's also a bit of expiry day move thrown in. So I think it's those couple of factors that are playing out. So IT also a bit tepid at close. We saw that close 1.5% lower, and we're in the thick of IT earnings. And that's probably the other piece that's playing out. But let's look at the broader markets. First, let's look at the advanced decline. Let's see how the breadth is shaped up. And at close, we've largely closed okay, even Stephen on the breadth.
I mean, you've lost most of the gains through the day.
We've lost the gains through the day, but over the last hour and a half, we've been largely flat. So I'm just looking at the positives over the negatives, frankly. And yes, but through the day, we've gradually tapered, as you can see. So yes, surely that. Let's look at the mid-cap and small-cap indices as well. And the Nifty mid-cap absolutely flat. So that one not losing any ground. That's a positive. The Nifty small-cap too largely flat. 1/5% higher, in fact, 1/4% higher, in fact, on the Nifty small-cap. So that's the one positive. Some buzzers in trade. And let's pull up the BSE 500 top gainers, top losers. There you go. Thermax, what a move. 7%. AWL Agri, not surprised by that move. Sona BLW2, 6.5% higher. And then you have a chemical name, Chemplast, along with a Suvain Life within the pharma pack, which was also buzzing. Zydus Wellness, on the back of that approval that they got, that one too up 5%. Among the losers, BDL within the defense pack, Tech Mahindra within the IT pack standing out here, and Interglobe otherwise. So those are some big movers on the BSE 500. Now let me take it across, see what's in store tomorrow and what you need to keep your eye out on. And there's plenty of things. That's on the macro. Well, US retail sales maybe, and Japan inflation may be something that we'll keep our eye out on. Let's also look at, yes, those are certain adjustments that will come through on stock prices tomorrow. So those are some adjustments for you coming on your screen. Now, I want to, so that there are a couple of bonuses as well, which will get adjusted tomorrow, but most importantly, the earnings. And today we split it up in two. First is this set of numbers, which will come out post-market today. So you'll see all of those numbers likely to have reactions tomorrow. You can take a screenshot of this so that you can have that for your record. Also, let's pull up the list for tomorrow, because that will require preparation and some big ones there. So there's a Reliance Industries which will come out with numbers. JSW Steel is the other big one which I would look out for. Within the lenders, it's Bandhan and L&T Finance along with an IOB which will be in focus. Hindustan Zinc among the metals pack will also be in focus. So some big names there for you, and those are for tomorrow, of course, and we'll prep you in trade before open tomorrow for those.
I think you're going to have a busy weekend as well, because you have
Yes.
your large banking numbers
Yes.
coming in. So very quickly, that's where the focus is going to turn to over the next few days. But it's been a bit of a, I would say, what is the emoji you would use, Harsh, to describe the close of markets today?
Well, I'd do a... You know that one, I hope.
I do know that one, but then Harsh, I can't tell because that's how you look most of the time. No offense there, but you know the reason we're talking about it is because today is Emoji Day, and we had this conversation between two people in our newsroom to understand that gap sometimes between people who get emojis and those who don't, isn't it?
Yeah, absolutely. So let's celebrate this a bit. Forget everything that you knew about emojis. Gen Z has flipped the script, turning cute little icons into emotional landmines and meme-worthy masterpieces. What started as innocent pictograms is now Gen Z's secret weapon for throwing shade, masking pain, and delivering peak drama, which I believe I just did a bit of. NDTV Profit did a newsroom deep dive and found that different generations read the very same emoji very, very differently. A smile that feels harmless to millennials or boomers. To Gen Z, it might scream passive-aggressive.
एक छोटी इमोजी की कीमत तुम क्या जानो सजीत बाबू? मुट्ठी की कीमत जानते हो? Alright, so Gen X versus Gen Z, whose emoji game is on fire? Let's find out. For that, I would show an emoji which is this.
Mine is this. तुमने क्या दिखाया?
Sir, वो high five की emoji है. Why would you show high five to?
मैं बोला जी कर लूँगा.
For snacks in the pantry, this one. For sure.
Mine is this. तुम्हारा क्या है?
Dancing girl.
तुम नाचोगे क्यों?
So again,
this one.
You will laugh. At an editor's level, you can laugh about such things. At my level, I have to be very scared about. I would use the melting face emoji.
I'm using this.
Thumbs up. How can you be so nonchalant about something where it's your fault?
And how can you be sinking?
You have to re-record your link. Okay, yeah.
Mine is this.
Mine is
waste of time. Crying.
So if I would get the chance to put this, see, I think it stems from personal experience that both of us are showing the same emoji. So एक भी कम पड़ रहा है. I think 4-5 ऐसे lines से
line आना चाहिए ना.
So
coffee.
This emoji.
This is coffee, right?
Coffee,
You're saying no. You said it's tea.
No, I didn't say it's tea. Someone told me it means कि you are asking for gossip, but I myself have never used it for asking for gossip.
It's for asking for coffee. हमारे our generation just says this.
Your generation में emoji नहीं होते थे, ना ही coffee shops होती थी. You see, even a monkey can be an emoji like this monkey. So
I don't see your mistakes.
No, this monkey is very like you want to say something which is controversial.
No,
Sajid sir, I think you are wrong about this, and I'll send that message, but I don't want you to be angry about it, so I'll follow it up with a monkey.
No, it basically means that I've seen your mistake, but I'm not saying anything.
Next is melting face. So melting face, what do you?
Now tell me.
Now I'll tell you. See, melting face is when you make a mistake, and when you want to accept it, and you want to show ki I feel more about it than just words, so you'll put a melting face next to it. Devil face.
That's you.
That's me. So again, a devil face in my generation is used for content which is 18 plus. This emoji to the back, it's a cat with a sunglass and a pata gobi hat. So again, it's a very
what does it mean actually?
Sir, it means ki I am very cool about something. You give me some work and you tell me ki jaldi karna hai, and I am being calm and
am I hiding under a pata gobi?
No, I am a pata gobi.
No, I need an emoji which is representing mechanical life.
Why आपकी life mechanical हो गई है?
बहुत हो गई.
Yeah, so that was Sajid sir versus me. So older generation versus the younger generation. Whose emoji game do you think is the stronger one?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. So viewers, Nifty ends a volatile day of trade below 25,200 levels. Sensex also sheds over 360 points. Most sectors ended in the red. PSU banks, defense and IT were the top losers. On the flip side, realty sector cemented gains and metals were in good shape too. Now let's take a look at Newgen Software. So Q1 of FY26 results disappointed, with shares sliding 5% post-earnings. Consolidated revenue also fell 25.18% quarter-on-quarter and net profit plunged 54.09%. EBIT crashed 71.8% with margins shrinking to 11.27%. So the Indian segment saw a steep 29% decline, though a 164% rise in the other income offered some relief. Ixigo kicks off FY26 with strong momentum, posting robust revenue growth in Q1 driven by rising travel demand and transaction volumes. Net profit jumps nearly 29%, supported by solid top-line performance while margins contract slightly. The company continues to scale efficiently. Now, flight, bus and train bookings also surge. Adani Enterprises sells a 20% stake in AWL Agri Business Limited to Wilmer International at 275 per share. So the stake sale raises about 7,150 crore rupees, which Adani uses to fund growth in its core infrastructure businesses, including energy utilities, transport and logistics. Wilmer becomes the majority shareholder in AWL Agri with around 64% ownership. Earlier in January 2025, Adani sold 13.5% of the stake through an offer for sale at the same price, fully exiting the joint venture and increasing Wilmar's ownership to 75%. State Bank of India launches its biggest ever share sale to institutional investors, marking a major capital raise after 8 years. The fresh issue at a floor price of 811 rupees leads to a modest 3% equity dilution, but boosts capital adequacy and strengthens the bank's book value. And viewers, Wipro Q1 results are out.
My colleague Harsh is here with all the details. Harsh, what are the numbers suggesting?
Well, it's clearly a margin miss here where Wipro's numbers are concerned. You're looking at a downtick with regard to margins. 17.01% was where the 17.1% was where the margin estimate was. It's come in at 16%. Also, you've got Axis Bank's numbers on your screen. That seems to be a miss as well. 4% lower on the net profit. We have Wipro as well as Axis coming in together. So let me first tackle Wipro. 3330 is the profit after tax number. The expectation was 3248. So the PAT number has come in better. Margins at 17.1%. The expectation, the margin number coming in at 16.02%. That's clearly a miss. So that's where Wipro is concerned. Now let's go across. We have Puneet here with his take on Wipro's numbers. Thereafter, come back with Axis Bank. Puneet, first on Wipro.
Well, thanks for that, Harsh. So we're definitely seeing a miss there on the EBIT. As you rightly said, it was expected to be 17.01. It's come in actually at 16.02, and this is a key miss here because we were anticipating that despite pressure in this particular quarter on revenue, we will see some kind of sustenance in margins on the EBIT side, but that's not happened. While the profit number, as you rightly said, has come in better than estimate, there's still a fall of about 6%. But on the EBIT side, it's largely a negative number. And what we'll be still waiting out for is the press release to come out, because we'll get the deal wins number from the press release. So, we will be talking a little bit about that. But the EBIT number specifically is a key miss. There has been some increase in employee costs as well as subcontracting costs in this particular quarter that's been higher than the fall in revenue, and hence we are seeing that miss in terms of EBIT. But in terms of the four numbers, the EBIT is clearly a miss. The net profit is better than estimate, but still down 6%. And we'll wait for the deal win number to come in, and as soon as we get that, we'll also connect with Rahul Jain. But back to you for the Axis numbers.
Okay, so that's the take coming in on Wipro. The problem with Axis's numbers, in the meantime, let me quickly read them to you, and let's flash them on the screen as well. That's the problem. The provisions number has come in at 3948 crore versus the NDTV profit estimate of 2262 crore. So that increase in provisions has caused a lower profit after tax number, even though the operating profit, as you can see on your screen, was at least 5 to 6% better than what we were penciling in. So on the operating profit side, it's been a decent kind of a number, but the net profit is a miss on the back of elevated provisions. We'll obviously have to wait and watch as to what's caused that increase or that spike in provisioning. But for the moment, that's a miss as well. So miss largely from Wipro. Net NPA has spiked for Axis Bank at 0.45% versus 0.33 QOQ. Also, GNPAs have spiked nearly 29 bips on a sequential basis. So clearly not looking good, both Axis as well as Wipro. Wipro on the margin scout, Axis largely okay when it comes to margins, but provisionings is what is hurting Axis Bank's numbers. So that's the overall take coming in with regard to Axis and Wipro. Okay, so while we are at it, I also want to quickly maybe pull out a couple of more numbers when it comes to an Axis Bank, and I want to take that through. You're looking at operating profit, which is okay, 11,515. Net interest income is up just about 1%. So that's again okay, slightly on the weaker side, but okay. Let's bring in Rahul Jain, Director Research, Daulat Capital, to speak to us about Wipro's numbers. Rahul, welcome. Good afternoon. Give us your first take with regard to the numbers.
Yeah, I don't think we have got the CC number right now.
Yes.
So it's and this is a quarter where there is a significant shift we have seen versus the reported number to CC number. So it would be difficult to call out at this point in terms of how it is shaping up. We would wait for this, but the first take looks okay given the kind of a number that we have seen so far.
Okay, Rahul, what in your sense is causing that margin drag?
I think, again, it's related to growth partially. And what we have seen in some other commentary is that the need for investment on talent and skilling is something which you need to do to stay relevant. So that could be a possible factor in here as well. And we would hear more input on that once we hear the management commentary.
Okay, there's also an interim dividend of 5 rupees per share which has been declared by Wipro. So that's something to note as well. Rahul, what's your overall take? Wipro, there are a couple of stocks within large cap IT that need a turnaround, and both of those to declare numbers today, Wipro and Tech Mahindra incidentally. Do you believe that turnaround is underway, or rather Tech Mahindra declared it yesterday, but point being, do you believe that that recovery is underway for both of these names?
Yeah, in case of Tech Mahindra, the new leadership is in place for some time now. So we are seeing those early signs of improvement. In case of Wipro, the new CEO is yet to complete a meaningful tenure before we could see those execution things coming into the numbers. And of course, it is coinciding with the macro being fairly adverse. So I think looking at the way year is shaping up, even for the stable ships, FY26 is not going to be that year. Maybe FY27 would be a more realistic year to expect a meaningful recovery for Wipro's business.
Rahul, our numbers indicate that profitability was largely in line with expectations, but EBIT was a miss. What does that mean from Wipro's standpoint for this quarter in particular?
I think what is always more relevant is the operating number. There is always bigger profit, other income profit that come in Q1. Typically, there is always ETL movement also that happens. So I think as long as the operating income is missed, that is more relevant data to look into. And to your dividend comment, which you said earlier, actually this was anticipated, although it is slightly more than what one would have expected for the quarter because they have increased their payout to 70% of net profit. So this was expected that the dividend in this year should be higher than the previous year.
Point taken. Rahul, a couple of IT names now have declared numbers, or rather pretty much all of them. What is your pick within this pack, and what stood out for you in terms of commentary? So two questions wrapped into one.
So in terms of result, as you might have also noticed that most of them look like miss from what was anticipated out of them. So that is something which is slightly disappointing. Even from a commentary perspective, we did not got a significant assurance that how this recovery might happen in a very near future, and it may be slightly back-ended, and there are a lot of management talking H2 to be better, but we all know those are very hope-led. So net-net, I would say that nothing very exciting at this point, and we would rather see how the next quarter shape up before we take a meaningful view on how the year is progressing. But net-net, it's weaker than what one would have liked it.
Rahul, a very good afternoon to you, and thanks so much for joining in. It's Puneet this side. The press release has just come out, so I just wanted your view on a couple of data points. One is, of course, the large deal number has come in at $2.7 billion. It seems to be a strong number compared to both on a YOY and a quarter-on-quarter basis. Last quarter was roughly about 1.7 billion. How are you viewing this specific number?
Yeah, this is definitely a decent number, and it's slightly more than what we were also expecting for the quarter. But I think what we are seeing is that the TCV number is still better for many players. What we are not seeing is the ramping up of these deals. So that kind of a worry might still bother us for the commentary as well. So yes, that's a good data, but the ramping up visibility is what we need further for this to translate.
And Rahul, what was your number for the deal wins, if I can ask?
Sorry, what was our estimate for the deal win was 2.3 billion.
Okay, and in terms of constant currency as well, on a quarter-on-quarter basis, it's down by 2% on a quarter-on-quarter basis for constant currency revenue growth. On a YY basis, it's down 2.3%. If we can have your view on this as well, because largely it was expected to be a fall in terms of revenue between 3.5% to 1.5%. So this number largely seems to be in the middle of that range. Would that be your assessment as well?
Yes. So, this is broadly in that band, and I think the consensus thought were around this number itself, around 2.4%. I guess what we need to see, another important data for us could be what is the outlook for the Q2, because that could also sense that how some of these deals are shaping up into the P&L.
So Rahul, just coming back to you on that, the guidance that the company has given for Q2, they're expecting -1% to +1% in terms of constant currency for Q2. Are you also seeing this number because it's from Q1 where it was -3.5 to 1.5. This number seems to be quite decent in terms of the context of the macroeconomic challenges. Do you view this number also largely in line with what the estimates were?
Incidentally, our estimate was precisely the same. But I would slightly disagree to your comment that does this add any confidence, because if you see this quarter is already -2 plus on the decline, and let's assume we are on the lower end of this band in the coming quarter, which would mean that even on an exit basis, it would be difficult for the company to have a run rate which is similar to what it started the previous fiscal. So that way, I think it would take the trajectory significantly lower. So I think 0 to 2 should have been a good respite. Here, we would still expect that at least anything more than 0% is something they should actually clock. If that does not happen, I think the pressure would remain for rest of the year, because H2 generally is weaker.
No, fair point, Rahul. So compared to last quarter, it is a better number, but this will lead to some pressure for the growth for the full year. That's the key point that you're making, and point very well taken. Final question to you, Rahul. What are some of the key aspects, apart from what we've spoken about on deal wins, on growth, that you will be watching out from the conference call as well as the press release of Wipro?
Sorry, I missed your question. What we should be watching out specifically, is that the question?
The question was largely what is something that you're going to be watching out from the press release as well as the conference call, apart from deal wins, apart from growth. Is there anything specifically that you'll be watching out from the management on both in the press conference as well as the conference call slated today?
I think some of the vertical data point would be crucial for us to assess. If you see in this quarter, we have seen slightly mixed commentary on a vertical specific, like we've been hearing now BFS like declined for TCS, so that was a slight deviation from the thought process generally industry was having on the sector. So similarly, if there are any aberration or improvement they are seeing, at least from a vertical commentary point of view, that would help us build the confidence for the period beyond this Q1.
Okay. Thank you so much, Rahul Jain, for being on the show with us and breaking down those numbers for us and our viewers. And I'd like to go to my colleague Vishwanath Nair, who's going to tell us more about the Axis Bank Q1 results. Vishwanath, what are you picking up, and what are these numbers suggesting?
Right. So if you were to look at the net interest margin picture, that's obviously worsened significantly. The overall net interest margins down at 3.8% versus 3.97 in the Q4 period. Similarly, if you were to look at the domestic NIM picture as well, net interest margins dropped to 3.91% compared to 4.08% in the preceding quarter. Quarter on quarter, there's been a sharp dip on the net interest margin position. Advances and deposits both have grown only in single digits. If you look at the net advances growth, that's about 8 or 9%. Similarly, deposits have also only grown about 9%. And you can see that the net interest income is also obviously not growing very sharply, less than a percentage, barely moving here and there. If you were to look at the slippages figure as well, there again, a sharp uptick on slippages, 8,200 crore worth of fresh slippages reported in Q1 compared to about 4,805 crore in Q4 of FY25. So increasing stress coming in, largely coming in from the retail asset book, while overall loan growth is slow. Net interest margin was expected to drop, of course, because the RBI has cut the repo rate sharply. So obviously you were expecting the net interest margin to come down, but one must say that this is quite dramatic for Axis Bank, looking like not such a strong set of numbers actually.
Yeah, completely uninspiring set of numbers, Vishy, at a time when we're going to see some of the larger banks also report on Saturday, I beg your pardon, and that'll have quite an impact on the Bank Nifty over the next couple of days, which is tomorrow as well as Monday. Thanks so much, Vishy, for that. Parag Thakkar joining us at this hour, Head Fund Manager, Fort Capital. Parag bhai, great having you here. I want to first start off by understanding your take with regard to Axis Bank in particular, NIM compression being seen and a sharp one there. Is that the trend which we are going to see from all private sector banks, or in your view, is this only Axis specific?
No, it will be across the private sector banks or PSU banks also. PSU banks might see a little bit lesser NIM compression. But NIM compression has to happen because, see, this 50 bips rate cut which happened in February has got reflected here. And most of the banks will have 60% except for IndusInd and IDFC First. 60% of the loan books are at floating rates. So that definitely will translate into NIM compression for all banks. I would say the thing to worry about is slippage number. The slippage number is very high. Let's hear on the call that whether they have, they were always saying that in the first half of FY26, the slippages will be higher. But nobody would have expected such a high number. So I would say that that is something to really see, that what management has to say on the call, that whether entire pain in their personal loan book or I would say on the asset quality side has been taken as a hit, or still it is going to continue in Q2 or for the year. That is the main thing which I will look for in the earnings call. Otherwise, as you rightly said, NII growth QOQ is negative, and I feel that most of the banks will remain flat or slightly more in short term. So NII compression is not a big worry for me at this point, because see, in Q1 and Q2 combined, I expect a NIM compression of 25 to 30 bips for all banks. For all banks which have more than 60% floating loan book. So that is not a problem, but slippage number is a big problem.
Got it. Slippage number is a big problem. Of course, we'll wait and watch for commentary, Parag bhai. But the miss is sharp, as you said, on slippages, and the provisioning also sharply heightened. Where do you sense the pain is coming from?
See, as per their own earning calls, if you hear them closely, they have been saying that they are seeing some pain in their personal loan book. And they have always said that personal loan losses have not been completely cleaned out. And they have said that in H1 FY26, means this quarter and the next quarter, it will peak out. The asset quality problem will peak out for them, especially in this unsecured segment. So we will have to see that what kind of confirmation they give on the call. Suppose if they say that in Q1 we have recognized everything, okay, and there's nothing left in the pipeline which has to be recognized, then it's a good news that, okay, so at least there is a complete cleanup which has happened in this quarter, and from next quarter we can look at just a NIM compression as a problem. Because NIM compression is a transitory phenomena. As we enter into next year, so this NIMs will come back because deposits and saving rates have also been reduced, but deposits typically have a 12 to 18 months maturity period, so it will take time to get repriced. So NIM compression is not a shocker in my view. The shocker is slippage.
I want to bring in a point about a technical sort of impact that the bank is referring to. Actually, in its investor presentation that it put out a little while ago, the bank is pointing out that it has made some technical changes to the parameters required to identify slippages as well as provisioning and contingency as well as upgrade of loans. Now, according to the Axis Bank's disclosures, the technical impact on the overall slippages is about 2,700 odd crore. And if you remove that, slippages for the quarter are still elevated, but at a much more respectable 5,500 odd crore. According to what Axis Bank is saying, the technical impact on the profit after tax, that number is coming at about 614 crore. So if you were to remove the technical impact, then the profit number would have gone up by 614 crore. That's essentially what Axis Bank is saying. What they're saying is that the technical impact on the ROA is about 15 basis points, and the technical impact on ROE is about 1.4%. 140 basis points. So it would have changed the Q1 results to that effect. While it's not better than Q4, it is still better than what is currently being reported by the bank. I just want to make that point clear. I'll throw it back to you, Harsh.
Well, thanks so much for that, Vishy. That brings good clarity on exactly what's happening with regard to provisioning. But Parag bhai, give us your view with regard to Axis in particular. It's done a Q4 FY25 ROA of 1.8% plus. That clearly doesn't seem sustainable, even though the aspiration was to sustain it. It's not happening, and they've tried it over many quarters now. They hit it in one quarter, Q4 FY25. Thereafter, we've again seen a bit of a slip. What should the realistic ROA number be for an Axis, and therefore, how do valuations stack up for something like an Axis? Just trying to take that indication that what will the stock likely do tomorrow, in your opinion?
So let's hear the earning call for that.
Sure.
Because you know, as he was pointing out, that there might be some one-off, right? The term they have used is technical, and they have always been saying that they have been tightening the provisioning norms. Okay, and they always say that their tightening norms are much stricter than the peers. Now, let us see how much of this is, coming as a confident commentary from management that, okay, this will not get repeated again. Based on that, I think the tomorrow's opening or the future stock price movement will depend. That said, the valuation at 1.5 times price to book on FY27 or PE of say 10x is very attractive. And now due to this liquidity surplus situation in the banks, Axis Bank can also grow in line with the system or ahead of the system from next year in my view, because now the pressure on CD ratio is that much less. So let's see. I think, as I said, if they can clarify on the call that this slippage number is a one-off and the sustainable slippage number is far lesser than the current reported slippage number, then I think people will have confidence.
Okay, thank you so much, Mr. Parag, for being there on the show and sharing those wise insights there. And with that, viewers, it's a wrap on this bulletin of Market Express from me, Harsh and Vishwanath. But stay tuned, don't go anywhere, as we have more action lined up ahead on the other side for you all.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back, and this is Profit 360 on NDTV Profit, and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's take you through how the markets did today. The market ended lower today, breaking its two-day winning streak after a largely rain-bound trading session. Sectoral indices delivered a mixed performance, while broader market indices managed to outperform the benchmarks. For a comprehensive wrap-up of today's market action, let's go over to Harsh.
Well, it was expiry day, so that was just the kind of reaction we saw over the last hour and a half of trade. So we saw a bit of a slip where markets are concerned. There you go, you'll see that on your screen. In terms of stocks, and if we could pull up the heat map, get better perspective, the breadth, of course, on the Nifty 50 was a tough one. But you saw some consumption stocks shine, some metals shine as well. You can see a Tata Steel right up on top. A Tata Consumer was the other one. Hindalco also, and Trent, Titan, all of those doing well. So those you can clearly see at the top of your screen. The laggards were, of course, the IT names. On the back of TechM's results, some of those IT names really haven't fired. And that is reflective with the way in which they've reacted today again. So IT was the other pain point. Let's look at the heat map of sectors as well, and let's close that out, and likely that's what we'll see. So realty within the broader markets pack did fairly well, sharp outperformance, but metals, pharma, FMCG were the three pockets which have done relatively better. So some bit of outperformance seen there. IT, of course, was the laggard. Along with that, PSU banks sank a little, and the Nifty bank as well sank a little in trade. In terms of how the breadth was on the overall market, we opened positive on the breadth, but that weakened, and towards the end we were just about holding on to 1:1. So that's the take on the breadth. Where the broader markets go, the Nifty mid-cap index largely flat, not much of a reaction seen there, but the Nifty small cap index was actually in the green, so that's where some bit of outperformance continues to play through. That is visible, 0.25% higher on the Nifty small cap. Last off, I want to take some names, and let's pull some of them up, some real buzzers in trade today. I want to start off with Exigo. That was really the stock which was shining. Tech Mahindra on the broader market end of on the Nifty 50 end of things was the big loser. Thermax on the back of a brokerage call did really well. Some earnings, and within that earnings pack you had something like you had a few names within results like a JTL, a Newgen, and LTTS, all of which were buzzing. Some of the real estate names did well, including the likes of a DLF who we spoke with, and you also had some consumption names. Patanjali did well, a Relaxo, a Vedant Fashion, Uno Minda within the auto pack, Craftsman Auto was also some which really shone in trade.
Right, Harsh, thanks so much for bringing us those updates. And moving on to another very, very important piece that we are focusing on this hour, US President Donald Trump last night indicated that the United States are very close to finalizing a trade deal with India, telling reporters that we have another one coming up, maybe with India. This renewed optimism coincides with ongoing high-level trade talks in Washington, where Indian Commerce Ministry officials are in negotiations with their US counterparts.
We made deals with a lot of great places, but we had one yesterday, that was announced. We have another one coming up, maybe with India. I don't know. We're in negotiation. When I send out a letter, that's a deal. In other words, that's a deal. They don't want to ever say that. Oh, how many deals have you made? And the best deal we can make is to send out a letter. And the letter says that you'll pay 30%, 35%, 25%, 20%. In one case, 50%. Brazil. And because what they're doing to their former president is disgraceful. I know the former president. He fought like hell for the people of Brazil, that I can tell you. And I believe he's an honest man. I think what they're doing to him is terrible. So, yeah, we have some pretty good deals to announce.
However, Sameer Arora, CIO of Helios Capital, expects US tariffs on Indian exports to be set between 15 to 20%, a rate that puts India in a comparatively better position than other Asian peers such as China, Vietnam and Bangladesh, which face higher tariff rates. He pointed out that India holds a relative advantage only in select sectors like textiles, but beyond textiles, there is little benefit over other countries.
According to me, it will be between 15 and 20%. So it won't be the 10 that we initially thought, but we will all view it as positive by looking at relatively what has happened to other countries, including China. So China is at 35 new, plus it had the old 20%. Let's ignore that. Okay, it's been there from previous Trump regime. So the new one for China is currently 10 plus 25 for fentanyl. So that is one competitor. Second, we can say for textiles is that Bangladesh, more than Sri Lanka, more than Vietnam, 20. So if you are in the 15-20% range, you can say we are not, we have got some advantage over some of the guys, but I don't think we're getting to 10 the way this conversation and the comments seem to be coming. But I'm saying beyond that, beyond a point, what will we get excited about except to say that relatively this advantage is there for some of our exports like textiles and here and there.
That's Sameer Arora, not too gung-ho about these negotiations. But let me go across to my colleague Rishabh Bhatnagar for the latest on the US-India trade deal ahead of the August 1st deadline. Rishabh, give us all the details.
Right, Sanjana, what we've been seeing over the past about roughly now 2 weeks, what we're seeing is the fact that there were the previous round of negotiations that happened, and now we are in the fifth and final round, hopefully ahead of this August 1st deadline. The negotiations are going on in Washington as we speak. Chief negotiator Rajesh Agarwal is in Washington leading these negotiations from the Indian side. You just heard from Trump. He said that any sort of letter that he's sending is a deal. Tariff rates of 30, 35%, 25, 20% even. We've now seen 19 in the case of Indonesia. So a 15 to 20% bracket of tariffs would be ideal relatively, but not tantamount to the sort of negotiations that we've had starting March of this year. What we're also picking up from official sources is the fact that India is very watchful of the tariff differential that it will have with competing manufacturing economies, especially you saw it with Indonesia, then Vietnam, Thailand, Bangladesh, Sri Lanka, all of these countries, India is monitoring the deals that they are making also very keenly. Again, agriculture, dairy, these have remained the red lines for India so far. And that is what we're continuing to see, that India has stuck to its narrative since day one about where it draws its red lines. So that is, again, a very important part of these negotiations. But all our eyes are peeled on at the end of this weekend. The talks were expected to last roughly a week. And so by Saturday, Sunday is perhaps when we can hear either from the American side or the Indian side for more clarity on this mini trade deal.
Right, Rishabh, thanks so much for bringing us that update. We'll continue tracking what's happening in Washington and even in India and bring you all of the updates. Moving on, India's Oil Minister Hardeep Singh Puri has made it clear that India will continue buying Russian oil despite US threats to impose 100% secondary tariffs on countries trading with Russia. Now, Puri's comments come amid escalating warnings from the US and NATO, which have threatened severe penalties unless buyers put pressure on Russia to pursue peace talks in Ukraine.
My own view is the price of oil will come down. It will come down, madam, only because there is more oil available in the international market. Today, two major suppliers of crude are sanctioned. My first submission to you is, will those sanctions remain forever? You know whom I'm talking about. Iran next door and Venezuela. Number two, there is more oil coming on the global market from the Western Hemisphere. I mean countries like Brazil, Guyana, Canada, they're not even OPEC plus members. So my response, and I'm sorry I've given you such a long-winded response, is that I'm not worried at all. If something happens, we'll deal with it. If, for instance, major buyers of oil, major suppliers of oil just go off the market, well, there was worry when some of them went off the market earlier, which same thing happened. You either divert. वो हमारे यहाँ कहावत है ना, एक दरवाजा बंद होता है तो दूसरा खुल जाता है. I think we've got a lot of scope in that. There are a lot of new suppliers coming on the market. Our own E&P is going to go up soon. And when will this happen? Let's not draw any inferences. Some statements are made in order to ensure that two disputants settle quickly.
Now, DLF is making headlines today as the company launches its latest project in Mumbai. And on the sidelines of the launch, my colleague Anushi caught up with Akash Ohri, Joint Managing Director and Chief Business Officer of DLF Home Developers.
Big project launch that we are looking at, your entry in Mumbai being the most important focal point in the real estate space that you are seeing. Just want to get your perspective on this. What is your overall strategy for Mumbai in general?
Well, thank you for having me on the show, and thank you for having DLF on the show. I think what we are doing is, this project is a futuristic project. It is a project with a lot of amenities. It's a project that comes with a lot of strength. It's in the Andheri West area, and it caters to the new set of Mumbai customers. So it's an exciting, honestly, time to be in Mumbai, and we have put in a lot of hard work to kind of get this whole thing off the ground. This is our joint partnership with Trident Realty, and we hope to make a nice statement. We hope that the customers enjoy what they see and enjoy being part of this journey, and of course later living in it. And as far as DLF is concerned, we will make sure that whatever our strengths are, we will bring on the table and kind of deliver them.
Exciting indeed for Mumbaikars, as the luxury market is a pretty competitive one in the city. Moving on, Bharti Airtel has announced a partnership with AI-powered search engine Perplexity, offering a complimentary 1-year subscription to Perplexity Pro for its 360 million customers across mobile, broadband and DTH services. Let me quickly go across to my colleague Aishwarya Patil, who's standing by and has all the details on this very exciting development. Aishwarya, over to you.
Well, Sanjana, first off, when this news came in, a lot of consumers or subscribers may have been perplexed, knowing that this 17,000 rupees per year kind of a plan of Perplexity Pro is available for free, absolutely, for only the Airtel subscribers, which you mentioned, rightly mentioned, about 36 crore of them across their mobile, broadband as well as DTH services. And this of course is significant because it also shows that there is a growing interest towards generative AI tools such as Perplexity and ChatGPT, so on and so forth. What this will help them use in terms of creating and generating content, images, videos, for some deep research as well. So it comes at a no cost for all subscribers of Bharti Airtel. Now, if you compare Perplexity Pro with other generative AI tools in the market on a yearly basis, this is priced at 17,000 if you're a non-Bharti Airtel user. But if you speak of the other apps available in the market, AI tools available in the market, which is a pro version of them, it's priced anywhere between 15,000 to almost 20,000 per year kind of a pricing. So an enticing offer, and if you're a Bharti Airtel subscriber, don't be perplexed.
Thanks, Aishwarya, for that. We'll continue tracking this, but definitely good news for Airtel subscribers. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI?
Hello and welcome. You're watching KYC. We've spoken about quite a few sectors on this show, and one sector that we've not covered is online travel. So we thought let's take that up. It's also a stock which is absolutely a buzz today. It's called Lert Revenues Technology Limited, and it's basically branded as Ixigo. So you would have obviously either heard about it or seen it or perhaps even used it. Let me first start off with what I want to know about Ixigo. The numbers for Q1 FY26 were solid. Are they sustainable is the first possible piece. But really zoomed out on a broader sense, it's a very competitive space, right? How is Ixigo standing out? How do they continue to plan to stand out in this very crowded marketplace? And they're doing good numbers, Mahima, frankly. And so what's helping those numbers is what I'd want to understand. Second is, what are the growth expectations and levers? And they're getting into new businesses, especially into hotels. Yes. So that's one possible lever. Also, the revenue is skewed towards train and flights. So there's a large gap where other avenues with regard to travel is concerned, which they can tap into quite easily. Whether they are planning to do that and what the potential for that perhaps is. So that's what I'd want to understand. Also, customer acquisition, customer usage has gone up quite sharply. The monthly active users have increased and not just inched up. They've nearly doubled up over the last year or so, which is all a positive. But what does that do to customer acquisition cost? Is that continuing to remain elevated? Are marketing expense continuing to remain high because it's competitive? That's an important aspect to understand. Can take rates further expand? And an extension to that, I'll take it to number 5. Take rates are basically your commission payments that you make on each transaction. And number 5 as well, I'll couple both of these by saying that, and this was an interesting observation which Sajid sir in our newsroom made to both of us, that train prices have gone up because of premiumization within the train segment. And most of those booking
today. Let me start with a quick view on Q1 and of course the broader environment that we are seeing today. If you recollect, we started the quarter facing significant macro uncertainty, which kept overall demand muted. In fact, our clients prioritized initiatives with immediate impact, focusing on cost optimization and vendor consolidation. And at the same time, they accelerated their AI data, and modernization programs. We saw a clear trend of many AI projects moving to scale and production. So we quickly aligned with these priorities, deepened our partnerships, and of course, secured key deals. The large deals we closed this quarter, and of course, the last quarter, along with a strong pipeline, put us in a good position for the second half of the year. With that, let me now turn to our quarter one performance. I'll start with key financial highlights and an overview of our markets and sectors. I'll request Aparna to provide further details on the financials in her remarks. Our IT services revenue for quarter one was $2.59 billion, which is degrowth of 2% in constant currency terms within our guidance range. Our IT services margin was 17.3%, an expansion of 80 basis points year on year. In our markets, Americas grew 1.5% year on year in constant terms, and we are seeing strong deal momentum in Americas. APMEA revenue stayed flat. However, digital spending in India, Middle East, and Southeast Asia kept this market resilient for us. Europe continued to face headwinds, and clients remained focused on maintaining their competitiveness in this environment. Finally, Capco grew year on year, driven by strong performance in Latin America. Now, turning to our industry sectors. In fact, in BFSI, demand is strong and steady. Clients are modernizing their IT landscape with a sharp focus on AI-led efficiency and transformation. In fact, we won 2 mega deals here, which I will discuss later. In consumer and EMR, we are seeing a more cautious mode. Retail, CPG, and manufacturing in these sectors have been most affected by tariffs. Even though discretionary budgets are tight, outsourcing renewals are creating new opportunities for us to gain wallet share. In technology and communications, we are seeing a clear shift towards AI investments. In fact, clients are looking to innovate and future-proof their software and platforms. We won a large deal here, and in fact, that has the potential to become a mega deal. Healthcare for us continues to do well as clients invest in modernization and digital transformation. While payers are under cost pressure, the overall outlook for the sector remains positive. These priorities and shifts in client focus are evident in the strategic deals we have won in quarter one. Let me talk about that. During this quarter, we reported bookings worth $5 billion in total contract value, a growth of 51% year on year. Our large deal bookings reached $2.7 billion, up 131% year on year. This includes 16 large deals this quarter, including the 2 mega deals I talked about. Several of these wins, I want to repeat, several of these wins were driven by vendor consolidation, where we continue to build strong momentum. These deals reflect a good balance of extension of work and securing new business. They also highlight our capabilities, our domain expertise, and the progress we have made in AI. Let me share 3 examples to bring this to life all three are, two of them are mega deals, and one of them is potential mega deal. My first example is a global banking leader that selected us as their strategic partner to transform technology across multiple business lines and enterprise functions. They chose Wipro for our deep BFSI expertise and consulting-led approach. We will help transform their digital ecosystem, modernize their cloud and data platforms, and improve cyber resilience and also embed AI across their software development lifecycle to boost engineering productivity and also reimagine core processes. Next, a leading global semiconductor company signed a multi-year agreement with us to modernize its entire product lifecycle. Building on our long-standing partnership, we will drive end-to-end engineering transformation from silicon design and system software to platform development and hardware validation. Our focus is on using AI and automation to accelerate development, improve quality, reduce costs, and enable agile practices. The third one, we secured a mega deal with a leading North American bank, extending a decade-long partnership. We will transform their technology across core banking, wealth management, and retail using our AI-powered global delivery framework. In fact, this includes modernizing their cloud infrastructure, strengthening cyber resilience, and digital ecosystems and enterprise applications. For a client, this will accelerate innovation, improve time to market, and deliver a customer-centric experience. If you notice, these examples highlight a clear trend. AI is no longer a niche. It's becoming essential to how businesses operate at scale. At Wipro, we see AI as a force reshaping industries and amplifying human potential. We are, in fact, building an AI-first, AI everywhere enterprise focused on solving complex challenges, accelerating delivery, and reimagining operations at scale. By embracing autonomous and agentic AI, we are transforming business models and how organizations work. Our AI capabilities are integrated into both industry and cross-industry solutions. So by combining domain expertise with AI, we are able to deliver value through solutions such as hyper-personalized wealth management for our BFSI clients, predictive industrial insights for our manufacturing clients. So far, we have deployed over 200 AI-powered agents using advanced technologies from our leading hyperscalers, who are big partners. Just to give an example, these agents enable smarter lending, intelligent claims processing, and autonomous network management. I talked about teams and talent. We are equally focused on talent and training our teams with the skills and mindset to thrive in an AI-first world. Building on this strong foundation and with our continued focus on 5 strategic priorities, we are well positioned for the future. I'd like to now discuss our outlook for the next quarter. While we are cautious given the macro environment, our strong order book healthy pipeline, and focus on AI-powered consulting-led solutions give us confidence in delivering long-term value to our clients. Returning to profitable growth remains our priority. Based on our visibility, we are guiding for a sequential growth of minus 1.0% to plus 1.0% in constant currency terms. With that, let me hand over to Aparna for a detailed view on our financials. Thank you, and over to you, Aparna.
Thank you, Srini. Good evening, ladies and gentlemen. Let me give you a brief update on the financial performance for the quarter ended 30th June 2025 before we move on to the Q&A session. Our IT services revenue for quarter one sequentially declined by 2% in constant currency terms, which is within our guidance range. On a year-on-year basis, the revenues declined by 2.3% in constant currency terms. Our operating margins for quarter one was at 17.3%. This is an expansion of 80 basis points on a year-on-year basis. As Srini shared, many of our large deal wins are in the nature of cost takeout or vendor consolidation. These deals require upfront investments and come with their fair share of pressures on costs. As always, we will continue to focus on operational excellence in order to offset these pressures. Let me give you some color on the performance of our strategic market units and sectors. All numbers that I will share will be on constant currency basis. Americas 1 grew 0.2% sequentially and grew 5.8% on a year-on-year basis. Americas 2 degrew 1.7% sequentially and 2.7% on a year-on-year basis. Europe declined 6.4% sequentially and 11.6% on a year-on-year basis. APMEA has grown 0.6% sequentially and has declined 0.1% on a year-on-year basis. Moving on to sector performance, BFSI declined 3.8% sequentially and 3.5% year-on-year. Healthcare grew 0.5% sequentially and 3.5% on a year-on-year basis. Consumer declined 4% sequentially and 5% year-on-year. Technology and communications grew 0.4% sequentially and declined 0.3% on a year-on-year basis. Energy, manufacturing, and resources declined 0.7% sequentially and 2.4% on year-on-year. Capco continued to perform well, growing 6.1% on a year-on-year basis. Let me share with you some of the other key financial parameters. Our net income grew 10.9% year-on-year in Q1. This is after absorbing a one-time restructuring charge of INR 247 crores. Our EPS for the quarter was at INR 3.2 rupees, a growth of 10.8% year-on-year. The free cash flows as a percentage of net income continues to be robust and came in at 115% for the quarter. This takes our gross cash, including investments, to $6.4 billion. In Q1, our net income grew 62% on a year-on-year basis. Accounting yield for the average investments held in India was at 8.1% in the quarter. Our effective tax rate was 21.6% for Q1 26 versus 24.5% in Q1 25. Our hedges continue to be in line with policy. We had about $2.5 billion of forex derivative contracts as hedges at the end of the quarter. Finally, before I move to guidance, I would like to share with you that in our recently concluded board meeting, the board of directors have declared an interim dividend of rupees 5 per share. With this, we have now distributed cash in excess of 1.3 billion in the last 6 months. As you know, we have revised our capital allocation policy in January to pay out to a minimum of 70% of our net income over a block of 3 years. Going forward, subject to our cash position, the need for strategic investments, and board approval, our endeavor will be to pay dividends twice a year, once along with the June results and then along with the quarter 3 results. In terms of guidance, to reiterate what was shared by Srini, we expect revenues from our IT services business segment to be in the range of $2.56 billion to $2.612 billion. This translates to a sequential guidance of -1% to a +1% in constant currency terms. With that, I'm going to hand this over to Nisha and we'll open it up for Q&A.
Thank you, Aparna. We will now open the floor for your questions. For journalists present in the room, please raise your hand for the mic and we will pass it to you. For the journalists outside of Bangalore who have joined us on Teams, please key in your questions and we'll accommodate as many as we can. To ensure that everyone has a chance, we request that you keep your questions to 2 and please introduce yourself before your publication and your publication before you ask your question. Beena, do you want to get started? Oh, sorry, Sai, go ahead.
Hi, this is Sai Ishwar from Reuters News. Two questions. Srini, so what is the macro outlook right now? You said in your speech that you are cautious about the coming quarter, but still the deal wins give you, some visibility. But beyond that, has the situation changed from what we see, what you had seen in the start of Q1? And one to Aparna. So we see that Americas has grown by 5.8% constant currency. But if you see the sectors, all the sectors are down. So what has, powered this Americas one performance? And just one more, if I can squeeze in. So Srini, you have completed 1 year. Congratulations. And I think in corporate parlance, you are eligible for hikes now. So any additional mandate from the board now, since you've, completed a year, or any, personally also, any change in additional goalposts or additional vision here since you've completed a year? Thank you.
No, I completed 1 year last quarter. So you're 1 quarter a little too late to ask me that question.
Delay in hikes question.
So he's asking about hiking. Okay. First and foremost, I think most important thing is to stay focused on the clients and continue to deliver on our 5 strategic priorities. So from that perspective, I think we'll continue to stay focused. Going back to your question on macro environment, I would certainly say that there is uncertainty. Okay, so the whole aspect of geopolitics continues, the aspect of tariff continues, and each of the industries and each of the countries have a different situation. But at a broadly from a sector perspective, clearly, like I said, retail, CPG, and manufacturing are the 3 industries specifically impacted by that. But if you look at, like I said, BFSI, right? The pipeline is very strong, and also deal momentum and wins are also strong for us. The clients are very focused on cost optimization and vendor consolidation. I think that's where we are winning. Having said that, the clients are also spending money on AI data, and that's where we are also staying focused on. In terms of technology and telecom, clearly they want to protect their investments, both software and platforms. Again, a lot of investments in AI. So net uncertainty continues.
So your question on America's One growth, we're very pleased with our performance. We've been growing 5.8% year on year. If you notice, our performance in America's One has been strong all through. Sectors that are doing well within the market unit, health is doing really well, and that continues to grow for us and is one of the sectors that's actually powering the growth for the market unit. We had a very good win in communications vertical in Q1 of last year. That continues to grow and build into a very good sector for us within the market unit. Consumer, even though this quarter there is slight softness because of tariff related impacts is something that has done really well in terms of the B2C part of technology companies. We kind of categorize them as consumers, so that part of consumers doing really well, even though there was some softness in retail and CPG. But overall, if you look at our bookings in retail and CPG this quarter, those bookings have come in really well, right? So 6 of the large deals that we spoke of, 16 large deals, are actually in consumer. So we do feel very confident about our performance in Americas one. I would say that it's very broad based within the industry verticals that are there within that unit. Yeah.
Hi, this is Beena from the Economic Times. Srini, you mentioned that most of your deals have been in vendor consolidation and cost takeout. Could you give us a sense if discretionary demand is no more the focus, and is this an era of past for most of the companies? And you mentioned about pressure on costs as well. Do you see that really impacting the margins going forward? And are you seeing a revisit in terms of your pricing overall on deals across the industry, if you could just highlight? Second, in terms of AI efficiencies, how is that impacting your hiring and headcount change? Because this quarter as well, we've seen very minimal, changes. And if that is going to continue and the non-linearity between revenue and headcount change is likely to be the new normal. And also in addition, similar to that, you mentioned yesterday in your AGM that there is a focus on getting high potential talent and, moving high performers to critical roles. Could you elaborate a little bit on what is your game plan going forward?
Hi, Veena. So, discretionary spend is coming back in certain pockets. It's not uniform across. Second, when I said, we are focused on data, AI, and modernization, that's kind of a discretionary spend because, this is something that clients want to experiment on. So if you look at the cost optimization and vendor consolidation, the savings that a client can get actually gets into discretionary spend. So these are the two tracks that we are seeing. As far as we are concerned, this is purely based on the pipeline that we see. So there will continue to be investment on data, AI, and modernization in a big way going forward. And of course, there will be projects around cybersecurity and enterprise modernization and so on and so forth. As far as AI efficiency is concerned, I think it continues to evolve. Right. For example, I said we have built 200 agents that we have put on the hyperscalers. These agents actually address certain tasks. Right. So we are building on that. As far as talent that we have, whether it's a software development or managed services or building our industry solutions and our platforms and agents, we need the talent. However, they have to be AI trained. They have to be trained in advanced AI, and that's how I see at this point in time. There is no strong correlation in the industry yet in terms of AI and the hiring aspect of it. I think it will continue to evolve as we move forward. As far as high performance, you want to talk about it, Saurabh? Or
in the philosophy across, and I think Srini yesterday reiterated it in the AGM. We continue to have people taking up critical roles who are high potential, and we have a bench strength, and we're seeing it across since last 1.5 years. Srini has come a lot of critical roles. People have moved up and taken up those roles. So that will be in a philosophy for us, and we'll continue to build on it.
So Veena, just to add one more, right? It's also important for our leaders to rotate laterally. And I'm a classic example at Wipro. For the last 3 decades, I've done multiple roles, and that gives you a good view of clients and within Wipro and the partnership. So that's going to be evolving, and that's how you build future-ready leadership for Wipro.
AI impact on pricing of deals.
So if you look at a software development lifecycle, let's talk about it. It depends upon the tool that you use and the productivity the tool can get in coding stage, in testing stage, and in the deployment stage. So the pricing will actually put those components into it when you are actually going back to the client. So it will be, part of the project cost, end-to-end project cost.
Veena, you'd like to go next?
Yeah. Hi, Veena Mani from the Times of India. First of all, I wanted to understand we keep talking about benefits of AI being passed on to the customer. What kind of benefits are we talking about at this point, and how is it, panning out in terms of the projects that you're getting? Are you getting more projects for the same price that you're offering, or are they asking you to take a discount and keep the scope of work the same? Aparna, if you could give the margin breakup for the quarter, and then from the talent perspective, AI talent is quite premier, quite niche in the industry still. What I gather from industry is about only 20 to 30% people are really ready to take on AI roles. Is that having an impact on the salaries that you're giving people that you hire for AI? Is there a premium involved here? The same way that that happened in the cloud cycle, people with cloud skills got more. Also, if I look at the fact sheet, there's been if I look at the attrition right from Q1 of FY24 till now, there's been a steady increase. Now, where are we heading? Are we going back to a cycle of high attrition, increasing attrition? And is there a reason for that?
Sure. All questions for you. Should I start?
Yeah, go ahead.
So first of all, on attrition, if you look at last 4 quarters, it's been as my colleague and friend Aparna says, narrow band of 1.1, 0.2, so 15 point. It's we see as we move forward the attrition coming down. That is one. However, we also see that there are pockets where we are seeing higher attrition, depending on the skill and the demand for that skill. But from our standpoint, we are very comfortable with this kind of a range of attrition forward. So that is one. Because we have good supply and good bench, and there is no challenge in meeting demand. On the talent and premiumness, I think that's been a norm, an industry norm for us for the last 3 decades. As new technology comes in, we have always seen this thing happen. We always have a role at building that capability and going external to get that capability. And it's been a mix. It's not that there are large number of people available in the industry who are deeply trained on AI. That's also a very new area. So obviously that's a scarcity, and that's why there's a premium. But we are comfortable because we are doing a lot of work in-house to build that talent as well. So it's a combination, and we have gone through these cycles earlier also. There was the ERP, there was data, there was cloud. So it's going on. So same way we are at this today. So on both these counts, we're fairly comfortable as we move forward.
You had a question on margins, Ila. You were requesting for a breakup. I'm assuming you're looking for a margin walk, right, of sorts. It's been in narrow band. We reported 17.5% last quarter. In Q1 we delivered 17.3, so that's a 20 basis points movement. If you look at forex, it's been broadly flattish. Our utilization has been flattish. We've had some savings in SG&A, and we've had the revenue decline being offset through operational improvements. That's broadly how I would characterize the margins for the quarter. You also had a question on AI and how that's been impacting deals and pricing. See, like I said, Srini had spoken about how a lot of the deals that we won are vendor consolidation, cost takeout, right? Now, these deals will have a fair share of AI, right, in terms of productivity that we bake in, and some of those benefits are passed on to the client, right? And therefore, we, in some sense, it has always been the case with the industry, right? That vendor consolidation deals are very intensely fought and competed, and therefore it's always likely to be competitive. But if you look at overall portfolio of the deals that you win and the pricing that you get, it's pretty much neutral and similar. But this category of deals, there is more pressure, right? And there is a tendency to be a little bit more competitive and for you to take on more than what you can see at the moment, and therefore push yourselves to it. So that's about it. If there's something else that you want to add.
Perfect.
Can we have the next question from Puneet?
Oh.
From NDTV Profit. Thanks.
Sorry, missed your name.
Puneet.
Puneet.
Thanks for the opportunity. Just a couple of questions on deal wins has been very strong in an uncertain time, as you pointed out. How do you see the movement of these deal wins into your financials? Because we've seen that kind of impact on both revenue as well as margins for the last 2 quarters, and the margins have been a little more stark compared to the previous quarter. So if you can just give some perspective on how do these big deal wins, 16 large deals you quantified, into financials. And the second is largely on guidance. You mentioned for Q2 -1 to +1 percentage point. Does that largely put pressure on the second half to post any kind of positive revenue growth for this year? Because it's something that's been a conversation with Wipro. So how do you tackle that as well going into H2? I know we're still in Q1, but how does that happen in H2 for growth in terms of revenue? That's it. Thank you.
So in terms of deal wins and conversions, some of the deals that we won have a good balance of both extending the work that we do, and there is an element of expansion. Given the nature of these deals, they will take about 6 to 8 quarters for them to just fully ramp up, right? But you will start seeing that trickling down. And we also had a very large deal win in Q4 of the last fiscal, right? The Phoenix deal win. So this does put us collectively in a better shape. And, Srini also characterized that in his speech by saying that the second half is looking far more positive. And we've got the deals that we need. Now it's down to execution. Your point on guidance for Q2, at midpoint, it's flat. We always guide based on the visibility that we have at the start of the quarter. We don't give a full year guidance, but just based on the deal bookings, we've already given you a color that the performance would get better in the second half.
Rishabh,
Hi, Srini, Aparna, and Saurabh. Rishabh here from Money Control. So, Srini, your large deal wins are at least a 19-quarter high, but the constant currency revenue growth is at 8-quarter low. So, is there a delay in conversion? If you could throw more light on that, then you have a stated goal that you'll reduce your tail end of your customers. So, how is that trend playing out? Because we see that there's a continuous reduction in the number of clients that you have. Are you losing market share there? And are you building LLMs, SLMs for banks, because that's gaining traction and momentum? Thank you.
Right. So, hi Rishabh. Let me answer the 1 and 3, and then I'll leave the tail accounts to you. On the large deal wins, right? If you recollect, in Q4, we announced a mega deal, which is from Phoenix, right? And that actually will get started in Q3. So some of these large deals do take time for the ramp up. Similarly, the deals that we have won this quarter, last quarter, will take some time for us to, for it to accelerate. As those deals, we've completed the transition, get it to a steady state, it will have an impact on the revenues in a positive way. So I'll leave it there. And I think, like you rightly said, a very strong deal wins, both a $5 billion overall deal wins and $2.75 billion of large deal wins. I think one of the highest, like you rightly said. Coming to the LLMs and SLMs, I think our strategy for our clients is we have what we call as a Wipro AI platform, and we have Vega Studio. And the platform is a place where we have the complete guardrails to make sure whatever we build in the context of AI is ethical, is secure, is reliable, and responsible. With that in the context, what we do for our clients is use the LLMs that are there in the market. We don't build LLMs, but we build the SLMs, we build the models, we feed in the data, and actually help our clients to accelerate on the AI journey.
Hi.
So the point on clients, right? Number of clients. If you look at the number of clients with more than $50 million of revenues, it's actually expanded from 44 to 47. If you look at our top account, top 5 and top 10, they're all growing. In fact, substantial portion of the large deal bookings that we've got is actually from our top 10 existing clients. So in fact, we are doing very well. And the fact that we are winning in vendor consolidation should give you should all take heart that, it will continue to grow.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। रबर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you
Welcome back, and this is Profit 360 on NDTV Profit, and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's take you through how the markets did today. The market ended lower today, breaking its two-day winning streak after a largely rain-bound trading session. Sectoral indices delivered a mixed performance, while broader market indices managed to outperform the benchmarks. For a comprehensive wrap-up of today's market action, let's go over to Harsh.
Well, it was expiry day, so that was just the kind of reaction we saw over the last hour and a half of trade. So we saw a bit of a slip where markets are concerned. There you go, you will see that on your screen. In terms of stocks, and if we could pull up the heat map, get better perspective, the breadth, of course, on the Nifty 50 was a tough one. But you saw some consumption stocks shine, some metals shine as well. You can see a Tata Steel right up on top. A Tata Consumer was the other one. Hindalco also, and Trent, Titan, all of those doing well. So those you can clearly see at the top of your screen. The laggards were, of course, the IT names. On the back of TechM's results, some of those IT names really haven't fired. And that is reflective with the way in which they've reacted today again. So IT was the other pain point. Let's look at the heat map of sectors as well, and let's close that out, and likely that's what we'll see. So realty within the broader markets pack did fairly well, sharp outperformance, but metals, pharma, FMCG were the three pockets which have done relatively better, so some bit of outperformance seen there. IT, of course, was the laggard. Along with that, PSU banks sank a little, and the Nifty Bank as well sank a little in trade. In terms of how the breadth was on the overall market, we opened positive on the breadth, but that weakened, and towards the end we were just about holding on to 1:1. So that's the take on the breadth. Where the broader markets go, the Nifty mid cap index largely flat. Not much of a reaction seen there, but the Nifty small cap index was actually in the green. So that's where some bit of outperformance continues to play through. That is visible, 0.25% higher on the Nifty small cap. Last off, I want to take some names, and let's pull some of them up, some real buzzers in trade today. I want to start off with Exigo. That was really the stock which was shining. Tech Mahindra on the broader market end of on the Nifty 50 end of things was the big loser. Thermax on the back of a brokerage call did really well. Some earnings, and within that earnings pack you had something like you had a few names within results like a JTL, a Newgen, and LTTS, all of which were buzzing. Some of the real estate names did well, including the likes of a DLF who we spoke with, and you also had some consumption names. Patanjali did well, a Relaxo, a Vedant Fashion, Uno Minda within the auto pack, Craftsman Auto was also some which really shone in trade.
Right, Harsh, thanks so much for bringing us those updates. And moving on to another very, very important piece that we are focusing on this hour, US President Donald Trump last night indicated that the United States are very close to finalizing a trade deal with India, telling reporters that we have another one coming up, maybe with India. This renewed optimism coincides with ongoing high-level trade talks in Washington, where Indian Commerce Ministry officials are in negotiations with their US counterparts.
We made deals with a lot of great places, but we had one yesterday, that was announced. We have another one coming up, maybe with India. I don't know. We're in negotiation. When I send out a letter, that's a deal. In other words, it's a deal. They don't want to ever say that. Oh, how many deals have you made? And the best deal we can make is to send out a letter. And the letter says that you'll pay 30%, 35%, 25%, 20%. In one case, 50%, Brazil. And because what they're doing to their former president is disgraceful. I know the former president, he fought like hell for the people of Brazil, that I can tell you. And I believe he's an honest man. I think what they're doing to him is terrible. So, yeah, we have some pretty good deals to announce.
However, Samir Arora, CIO of Helios Capital, expects US tariffs on Indian exports to be set between 15 to 20%, a rate that puts India in a comparatively better position than other Asian peers such as China, Vietnam and Bangladesh, which face higher tariff rates. He pointed out that India holds a relative advantage only in select sectors like textiles, but beyond textiles, there is little benefit over other countries.
according to me, it'll be between 15 and 20%. So it won't be the 10 that we initially thought, but we will all view it as positive by looking at relatively what has happened to other countries, including China. So China is at 35 new, plus it had the old 20%. Let's ignore that. Okay, it's been there from previous Trump regime. So the new one for China is currently 10 plus 25 for fentanyl. So that is one competitor. Second, we can say for textiles is that Bangladesh more than us, Sri Lanka more than Vietnam 20. So if you are in the 15-20% range, you can say we are not. We have got some advantage over some of the guys, but I don't think we're getting to 10 the way this conversation and the comments seem to be coming. But I'm saying beyond that, beyond a point, what will we get excited about except to say that relatively this advantage is there for some of our exports like textiles and here and there.
That's Sameer Arora, not too gung-ho about these negotiations. But let me go across to my colleague Rishabh Bhatnagar for the latest on the US-India trade deal ahead of the August 1st deadline. Rishabh, give us all the details.
Right, Sanjana, what we've been seeing over the past about roughly now 2 weeks, what we've seen is the fact that there were the previous round of negotiations that happened, and now we are in the fifth and final round, hopefully ahead of this August 1st deadline. The negotiations are going on in Washington as we speak. Chief negotiator Rajesh Agarwal is in Washington leading these negotiations from the Indian side. Again, you just heard from Trump. He said that any sort of letter that he's sending is a deal. Tariff rates of 30, 35%, 25, 20% even. We've now seen 19 in the case of Indonesia. So a 15 to 20% bracket of tariffs would be ideal relatively, but not tantamount to the sort of negotiations that we've had starting March of this year. What we're also picking up from official sources is the fact that India is very watchful of the tariff differential that it will have with competing manufacturing economies, especially you saw it with Indonesia, then Vietnam, Thailand, Bangladesh, Sri Lanka, all of these countries, India is monitoring the deals that they are making also very keenly. Again, agriculture, dairy, these have remained the red lines for India so far. And that is what we're continuing to see, that India has stuck to its narrative since day one about where it draws its red lines. So that is, again, a very important part of these negotiations. But all our eyes are peeled on at the end of this weekend. The talks were expected to last roughly a week. And so by Saturday, Sunday is perhaps when we can hear either from the American side or the Indian side for more clarity on this mini trade deal.
Right, Rishabh, thanks so much for bringing us that update. We'll continue tracking what's happening in Washington and even in India and bring you all of the updates. Moving on, India's oil minister Hardeep Singh Puri has made it clear that India will continue buying Russian oil despite US threats to impose 100% secondary tariffs on countries trading with Russia. Now, Puri's comments come amid escalating warnings from the US and NATO, which have threatened severe penalties unless buyers put pressure on Russia to pursue peace talks in Ukraine.
My own view is the price of oil will come down. It will come down, madam, only because there is more oil available in the international market. Today, two major suppliers of crude are sanctioned. My first submission to you is, will those sanctions remain forever? You know whom I'm talking about. Iran next door and Venezuela. Number two, there is more oil coming on the global market from the Western Hemisphere. I mean, countries like Brazil, Guyana, Canada, they're not even OPEC plus members. So my response, and I'm sorry I've given you such a long-winded response, is that I'm not worried at all. If something happens, we'll deal with it. If, for instance, major buyers of oil, major suppliers of oil just go off the market, well, there was worry when some of them went off the market earlier, which same thing happened. You either divert. वो हमारे यहाँ कहावत है ना, एक दरवाजा बंद होता है तो दूसरा खुल जाता है. I think we've got a lot of scope in that. There are a lot of new suppliers coming on the market. Our own E&P is going to go up soon. And when will this happen? Let's not draw any inferences Some statements are made in order to ensure that two disputants settle quickly.
Now, DLF is making headlines today as the company launches its latest project in Mumbai. And on the sidelines of the launch, my colleague Anushi caught up with Akash Ohri, Joint Managing Director and Chief Business Officer of DLF Home Developers.
Big project launch that we are looking at, your entry in Mumbai being the most important focal point in the real estate space that we are seeing. Just want to get your perspective on this. What is your overall strategy for Mumbai in general?
Well, thank you for having me on the show, and thank you for having DLF on the show. I think what we are doing is this project is a futuristic project. It is a project with a lot of amenities. It's a project that comes with a lot of strength. It's in the Andheri West area, and it caters to the new set of Mumbai customers. So it's an exciting, honestly, time to be in Mumbai, and we have put in a lot of hard work to kind of get this whole thing off the ground. This is our joint partnership with Trident Realty, and we hope to make a nice statement. We hope that the customers enjoy what they see and enjoy being part of this journey, and of course later living in it. And as far as DLF is concerned, we will make sure that whatever our strengths are, we will bring on the table and kind of deliver them.
Exciting indeed for Mumbaikars, as the luxury market is a pretty competitive one in the city. Moving on, Bharti Airtel has announced a partnership with AI-powered search engine Perplexity, offering a complimentary one-year subscription to Perplexity Pro for its 360 million customers across mobile, broadband and DTH services. Let me quickly go across to my colleague Aishwarya Patil, who's standing by and has all the details on this very exciting development. Aishwarya, over to you.
Well, Sanjana, first off, when this news came in, a lot of consumers or subscribers may have been perplexed, knowing that this 17,000 rupees per year kind of a plan of Perplexity Pro is available for free, absolutely, for only the Airtel subscribers, which you mentioned, rightly mentioned, about 36 crore of them across their mobile, broadband as well as DTH services. And this of course is significant because it also shows that there is a growing interest towards generative AI tools such as Perplexity and ChatGPT, so on and so forth. What this will help them use in terms of creating and generating content, images, videos, for some deep research as well. So it comes at a no cost for all subscribers of Bharti Airtel. Now, if you compare Perplexity Pro with other generative AI tools in the market on a yearly basis, this is priced at 17,000 if you're a non-Bharti Airtel user. But if you speak of the other apps available in the market, AI tools available in the market, which is a pro version of them, it's priced anywhere between 15,000 to almost 20,000 per year kind of a pricing. So an enticing offer, and if you're a Bharti Airtel subscriber, don't be perplexed.
Thanks, Aishwarya, for that. We'll continue tracking this, but definitely good news for Airtel subscribers. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for all of the news and updates.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Spot the Scam is an effort by NDTV Profit to educate you, the viewer, and to protect you from the scams that are currently being perpetrated in the name of promising amazing returns through investment. Now, this is an NDTV Profit exclusive. We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies. The platform, called Trading Dost, is a classic racket, luring investors by promising huge returns. My colleague Charu Singh has this report.
On the morning of 13th July, we came across an interesting ad in a Hindi daily. It was quite an audacious ad because the trading firm that gave the ad promised 500 times returns to investors like you and me. That's not all. It had also promised opening an account with them with zero brokerage and no documentation. It seemed a little strange, so this entity called Trading Dost was irking us and we went to the SEBI website and checked for their registration. It was quite strange that none of the names mentioned on the ad or the entity's name itself was registered with the regulator. And hence, we decided to give this person a call.
जी कौन बात कर रहे हैं?
बोलिए ना मैडम, राघव बोल रहा हूँ।
अच्छा राघव जी, मैं चारू सिंह बात कर रही हूँ NDTV प्रॉफिट से। आपका एक ऐड देखा था तो आप कॉल किया था। मुझे पता चला यहाँ पे कोई सेबी रजिस्टर्ड इंसान एडवाइस नहीं देता है। 16 साल से काम चल रहा है, तो ये कैसे पॉसिबल है?
नहीं, आप क्या बोलना चाह रहे हो, क्या पूछना चाह रहे हो? जर्नलिस्ट हो, न्यूज में डालने के लिए आप हमसे इन्फॉर्मेशन लेना चाह रहे हो या आपको हमारे लिए अकाउंट खोलना है वो पूछना चाह रहे हो?
अकाउंट तो नहीं खोलना है, इन्फॉर्मेशन ही चाहिए। इन्फॉर्मेशन तो न्यूज़पेपर में भी है। खैर, मैं तो बस ये पूछ रही थी कि ये 16 साल से बिना रजिस्टर्ड एंटिटी के कैसे काम चल रहा है?
मैडम आप एक बात बताओ कि आप जर्नलिस्ट कितने साल से बने हुए हो?
मैं तो जर्नलिस्ट कितना हो गया होगा, 2 साल हो गए होंगे।
5 साल 2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
ठीक है।
हमारा और आपका तो जन्म भी नहीं होता तब से डब्बा ट्रेडिंग का काम हो रहा है। अभी तो ये NSE BSE आप देख, पहले क्या होता था, पेपर पे लिखा जाता था, आधा पत्ते पे चढ़ता था आधा नहीं चढ़ता था। धंधा थोड़ी ना बंद हो गया, धंधा तो पहले से ही चल रहा है।
सही बात है।
एप्लीकेशन का काम ये जो चल रहा है ये 15-16 साल से चल रहा है। आप मैं और आप तो डिसाइड नहीं कर सकते ना किसी के बोलने से। मेटा 5 एप्लीकेशन है, पूरे इंडिया में चल रही है मैडम, इंडिया के पूरे वर्ल्ड में चल रही है।
सही बात है राघव जी।
हाँ।
कहाँ से हैं आप?
कौन से मीडिया में डालना है ये तो बताइए।
NDTV। कहाँ से हैं आप?
हम तो हिंदुस्तान से ही है, बेस्ड ऑफ दिल्ली है।
दिल्ली से?
हाँ जी मैडम।
दिल्ली में कहाँ से?
दिल्ली में रहते हैं मैडम हम। वो देखा आपने शादरा?
राघव जी आपको डर बिल्कुल नहीं लग रहा कि ऐसे न्यूज़ चली जाएगी, लिख जाएगा, छप जाएगा, ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
अरे आप बोल रहे हो कि क्या कहते हैं बिना सेबी रजिस्टर्ड एंटिटी के एडवाइस दे रहे हो, जानकारी दे रहे हो।
एडवाइस किस बारे में दे रहा हूँ मैं? एडवाइस
रिटर्न की गारंटी दे रहे हो।
100% दे रहा हूँ मैडम। आप ट्राई करके देख लो कि आप पैसे डाल के डिपॉजिट करके ट्रेड करके विड्रॉल तो देखिए कितना फास्ट देते हैं हम। आपका जो बिजनेस है वो आप करिए, मेरा जो बिजनेस है मैं वो करूंगा मैडम। अगर आउट पूछना चाहे तो बिल्कुल पूछिए, बेझिझक पूछिए। आपको मेरा पर्सनल नंबर चाहिए वो भी ले लीजिए मैडम, कोई प्रॉब्लम नहीं है।
बताइए आपका पर्सनल नंबर क्या?
585 पहले लगाना पड़ेगा आपको +971। मैं आपको इसी नंबर पे व्हाट्सएप कर दूंगा।
अच्छा चलिए कर दीजिए। ओके।
After this call, NDTV Profit broke the story first on its website. And on the same evening, India's leading bourse, the National Stock Exchange, came out with a cautionary circular for the investors. First off, they said that this platform trading Dost is not to be trusted and investors should not associate themselves with it. Secondly, they asked the investors, advised them to steer clear from these dabba trading activities, all these schemes that lure them and promise them high investment returns. After this, we decided to give this Raghav person another call to ask him how he felt about the NSE circular. First off, we would like to tell the viewers that first number on the newspaper ad did not go through and the second number did allow us to speak to him after 2 attempts.
हेलो
राघव जी आवाज आ रही है?
बोलिए मैडम।
सर आपने कहा था आपसे बात करनी हो तो आपको कॉल कर लूं, तो इसी
बात करनी है, मेरी तो बात हो गई आपसे कल।
नहीं मुझे आपसे बात करनी थी इसलिए मैंने किया था। अगर आपके पास 5-6 मिनट है तो मुझे कुछ चीजें पूछनी थी।
किस बारे में पूछना है मैडम?
सर आपने कहा था कि क्या कहते हैं ये गलत नहीं है डब्बा ट्रेडिंग या जो भी चैनल है, और ऐसे बहुत सारे लोग हैं, तो क्या आप बता सकते हैं ऐसे और कौन कौन से प्लेयर्स हैं जो कर रहे हैं?
कौन से न्यूज में देना आपको?
मुझे बस जानना है कि और भी लोग हैं और नंबर्स हैं।
नहीं हमारे पास इतना टाइम नहीं है मैडम कि आपके लिए हम कंटेंट दे आपको। हमारे बहुत काम करने के लिए मैडम, दोबारा फोन मत करिएगा प्लीज।
अच्छा तो आप ये बता सकते हैं कि आप यूएई का नंबर क्यों यूज करते हैं जबकि आपका काम दिल्ली से होता है?
नंबर है ही नहीं यूएई का नंबर। आपको कौन बोला मेरे पास यूएई का नंबर है?
आपने मुझे दिया था, शुरू किया था बोलना, लेकिन फिर आपने बताया नहीं पूरा नंबर।
नहीं है ही नहीं मेरे पास यूएई का नंबर। आपने कल छाप दिया है, देख लिया हमने पेपर, ठीक है, कोई प्रॉब्लम नहीं है। आप करिए जो आपको लग रहा है करिए, आप हमें प्लीज डिस्टर्ब मत करिए। हमें हमारा काम करने दीजिए, आप अपना काम करिए।
क्या आप यही काम कंटिन्यू करेंगे जो आप कर रहे हैं?
100% यही करूँगा मैडम।
ठीक है, और कब तक करते रहेंगे, कब से कर रहे हैं?
क्या करना है मैडम आपको?
सर जानना चाहती हूँ, ऐसे जर्नलिस्ट पूछ रही हूँ।
आज ही चालू किया मैडम मैंने काम।
क्या?
आज चालू किया, आज से काम चालू किया। न्यू बिजनेस।
नया बिजनेस? कौन सा नया बिजनेस?
मेरा नया बिजनेस चालू किया मैंने, डब्बा ट्रेडिंग का। डब्बा देता हूँ घर में जाके, दाल चावल रोटी सब्जी।
और फिर उस एड का क्या हुआ जो आपने डाला था नवभारत में?
कौन सी? मैंने कहाँ डाली एड? गलत फहमी हुई आपको।
यही नंबर है न्यूज़पेपर के ऊपर, एनएसई का सर्कुलर भी आया कल शाम को इसी बात पे।
मेरे को नहीं आया मैडम कोई सर्कुलर, क्योंकि ये नंबर मेरे को बिलोंग ही नहीं करता।
तो फिर आपने ये नंबर उठाया कैसे?
मैडम आपके पास और कोई काम नहीं क्या?
नहीं सर, जर्नलिस्ट हूँ, यही काम है मेरा।
हाँ तो हमारा काम तो हमें करने दीजिए ना। हमारे बहुत क्लाइंट के फोन आ रहे, दोबारा प्लीज आपसे हाथ जोड़ के विनती, कॉल मत करिएगा। थैंक यू वेरी मच जर्नलिस्ट मैडम।
As you all just heard, Raghav had changed the meaning of Dabba trading itself by the end of our call. This particular platform, Trading Dost, is likely to disappear and reappear in some new avatar. And investors like you and me will be lured into such schemes every single day using Telegram channels, YouTube channels, WhatsApp calls, and SMSs. And we must exercise extreme caution before putting our money in such schemes. Charu Singh in Mumbai for NDTV Profit.
I certainly was a little taken aback at the tone and tenor of the voice that this Mr. Raghav used when he was speaking to Charu. And there was absolutely no hesitance. Of course, at the end of that conversation, he changed his tone and he said that he was actually delivering dabbas and not dabba trading. Devin Choksi, Managing Director of DR Choksi Investment Managers, joining us now. Devin, thanks so much for taking the time. I hope that you heard at least a portion of that conversation. Are you surprised that people are unafraid to carry out what is essentially an illegal activity?
Yes, Alex, good morning. Well, I think not completely surprised though. I think because they are carrying out illegal activity, they know the perils and the consequences of those activities. Unfortunately, I think these illegal activities are happening in the system also because of the byproduct of our age-old trading norms and the rules. Today, I think in these times, when you have a complete blockchain in place to, I think, trace all your transactions, starting from order to the transaction, for banking, from stockbroking, for depository, for everything, you are still maintaining a kind of a system which was then installed at the time of introduction of derivatives. We started derivative market with 1 lakh rupees worth of market lot. Today it has become 20 lakh rupees worth of market lot. I don't understand the need for this particular market lot. Because of this market lot, which is a restriction that one has created, the fallout effect of this market lot is dabba trading. If you don't have market lot, then dabba trading do not exist. Now the question is that I think we are creating market lot for the safety of investors. 9 out of 10 investors are losing money. Where is the safety? So I think this is a subject I think which needs to be introspected a little bit more in detail. I don't necessarily blame, I think, the entities who emerge to take the inefficiency into their account and probably make money. We have seen Jan Street, I think, doing that. We are seeing local traders doing it. Inefficiencies, everybody wants to make money out of it. I think it's not their fault. It's a lacuna in the system which they are capitalizing as I see it.
Interesting. That's an interesting take. Devin, hi. Mahima also joining in. It's not just these scams, right? There are also scams going on where, people are just creating WhatsApp channels, Telegram channels, and going ahead and giving stock recommendation in terms of trading as well as, fundamentally buying the stock. If there's somebody who wants to begin trading today or investing today, what should that person keep in mind? There should be, I feel there should be an SOP that every investor should, be aware of, that these are the 3 or 4 things that I should keep in mind before joining any of these WhatsApp channels or Telegram group or before approaching anybody like Raghav.
So Mahima, I think my whole take is that I think every investor, I think as they always say, the buyers beware. The investor also requires to be aware about, I think, certain rules, regulations, and the regime of the regulators. Unfortunately, I think he's a sophisticated investor who knows about everything. But the one who is not so sophisticated is only concerned with, I think, easy part of making money. He's getting into this particular trap and he's playing around. He does not even ask the question that who the person on the opposite side is. In fact, I think there are instances of impersonation in WhatsApp and Telegram accounts wherein people are cheated, their money, they're duped, I think their money has gone. All those things are happening under our nose. Maybe I think regulators are operating separately. The banking regulator operates separately. The security regulators operate separately. I guess I think it's time that finance ministry or government takes up this particular call, make all regulators work together and ensure that I think there is no such loose end in which I think people can take money out of somebody's account by way of impersonation on WhatsApp or on Telegram or any such kind of social media channels.
Devin, and ultimately, as you said, it's buyer beware, but from the perspective of managing expectations, I think what we've seen in the recent past is change of regulations in the derivative space where the regulator is attempting to at least hold back some of the fervor that people have, and the fact that so many individual traders have lost money. So would you say more than anything else, it is setting of expectations? If somebody is promising you to double your money in 30 days or in that kind of time, it's something that any top investor in the world would be incredibly happy with, but nobody's achieved, right, Devin? So would you say that setting your expectations more than anything else is the most important thing?
Provided you are self-aware, I guess I think you are absolutely right in your question. But you as an investor, I think you don't have greed. I think that is impossible. Every individual person, I think, would have small or big greed. I think that is definite, and that is a fact. So when you have greed, I think this kind of outcomes are bound to be there. It's not going to be very surprising if this outcomes not there. In fact, I think to teach them the right methods, you may do the public awareness program that you have been doing as an exchange, as a regulator. Everybody is doing this kind of program, but still it is happening and it is still unfolding. Remember well that I think we are still not 50-60 crore investor accounts in the country. I think for a size of population, we still have only 10, 12, 13 crore kind of an accounts in the country. I think if they have multiplied by 4 times, 5 times, this is even going to take a bigger shape. In my viewpoint, I think it is a regulator who has to basically install correct practices. Today, I think this particular market, and I'm taking the liberty of explaining this part a little bit, I think here, that today this market, which was evolved in 2000 derivative market, has now completed 25 years. In 25 years, what has changed? Probably nothing has changed, I think, except creating the larger and larger hurdles. That is not the solution. In my viewpoint, there are 3 different classes of players in the derivative market. One is a proprietary trader who is coming either from the local or the global side. I think what we have seen in recent days, one example. The institutional players who use derivative market for also the hedging purpose, and the retail who basically use the derivative market for leveraging as well as for hedging purpose. Now, if these 3 classes of players, they operate on one single platform with the same set of rules, the disaster is bound to happen. You are driving a bullock cart and you are driving a racer car on the same expressway. You are bound to meet with accident. In such situation, I think these 3 classes of players, I think, should be segregated, not from the price discovery point of view, but from the execution window point of view. The product differentiation has to be created for 3 segments. If you want to stop the menace of, I think, this double trading, or I think the higher amount of greed which is getting generated in the minds of people, I think this kind of system will have to be created. This system has the power to, I think, control the kind of, I think, nonsense which is happening in this particular place. If we can handle that part, I think that can possibly give a relatively better solution in my viewpoint. That is why I'm insisting that the remodification or the modification of this particular system is required at the uppermost priority level in my viewpoint.
And that's a very important point that you're making. Just another illustration of that is I can choose to have a 100-meter race with Usain Bolt, but I have absolutely no hope of winning that race. Devin, thanks so much for joining me this morning. Pleasure speaking with you as always. All right, so this was an attempt to draw your attention to some of the strategies that people are using to take your money away. In no other uncertain terms, effectively this is scam, and beware is the message that we have for you, and spot the scam with NDTV Profit.
Joined now by Samir Arora, founder and fund manager at Helios Capital. We always look forward to these conversations with Samir. He speaks his mind and has the best commentary ever on what's happening in the markets. Plus, I love your glasses this morning, Samir. It's matching your jacket. So, okay, let's start with the kind of appetite we've seen for State Bank of India. The reason I'm starting the conversation with that is because if you just look at fund flows, and we tend to look at fund flow data, foreign flow data, it's quite dismal. But when there is paper of value, clearly the appetite is very much there. Is that the problem? Not enough value being spotted right now in the Indian markets?
No. It is, of course, the fact that it's a big size issue and the stock is relatively cheap. By the way, we own it since June 20. And so that could be one reason. But I think the overall market flow dynamics have already changed. Because since April, May, when people have got, even though the US market is doing well, the world seems to have come to a conclusion that they have to diversify away from US a little bit. Long story. That is a short story. That you will get more of these. Of course, SBI itself was attractive because it looks visually cheap, and it is cheap, and it is big, and it's easier for people to put 500 million. But if you give them $350 million deals, they will also get subscribed now. I think because the direction has changed.
The direction has changed. So, I'm wondering whether you are waiting with bated breath to see the India-US trade deal or not. It's sometimes anticipation becomes so long it kills the buzz.
That's why it's gone. Now, basically, you can see from the hints, according to me, it'll be between 15 and 20%.
Yeah.
So it won't be the 10 that we initially thought, but we will all view it as positive by looking at relatively what has happened to other countries, including China. So China is at 35 new, plus it had the old 20%. Let's ignore that. Okay, it's been there from previous Trump regime. So the new one for China is currently 10 plus 25 for fentanyl. So that is one competitor. Second, we can say for textiles is that Bangladesh, more than us, Sri Lanka, more than Vietnam, 20. So if you are in the 15-20% range, you can say we are not, we have got some advantage over some of the guys, but I don't think we're getting to 10 the way this conversation and the comments seem to be coming. But I'm saying beyond that, beyond a point, what will we get excited about, except to say that relatively this advantage is there for some of our exports like textiles and here and there.
Just on a little bit of a separate note, Sameer, I was going through your X feed, which I find most entertaining, and I have to ask you about this that you put up, where you say, analyst, we had a buy on the stock, we continue to recommend a buy. We actually made a graphic, let's pull that up. So client says, but how were the results? Analyst in the voice of Salman Khan, एक बार commitment कर दी तो मैं अपनी भी नहीं सुनता. I can't do the Salman Khan voice, but he says buy remains a buy. This I think is an important point to talk about and address, Sameer.
I aimed it at the IT sector, where companies have had pathetic results, broadly no guidance, and everybody said, no, we have a buy because next year there will be a 1% gain in something or a 0.5% gain in something. There's no logic. If you start from a zero base, then any of these guys would have put a buy. But because they had a buy, now they say, okay, let it continue kind of thing.
But it's an important point to note. We did a piece recently about how a majority of buy ratings have not translated to anything over a year.
In terms of returns.
In terms of returns.
No, but that is okay. But go beyond that. That if you have two bad results, you reduce your EPS guidance, you reduce your own EPS estimate by 5-6%, and then you say doesn't matter, buy still continues. So in Alliance, when I was there as an analyst in the 90s, the rule was that if you cut guidance, if you cut your estimate by some X%, 4-5%, you have to change this. You can't say it doesn't matter. It's 5% less. How does it matter? Because we are long-term guys. That was the rule for being sort of not active, but to be whatever is the word. That you can't just generally let the buy be separate and the analysis be separate.
Okay.
So
coming back to IT. Coming back to IT, because that's an important one. No one can quite make up their mind. There is enough commentary which shows some positivity on IT and Indian IT, but the numbers are just not matching up.
No. I'm saying you look at those numbers and you make them positive. You take these guys' positive number and then say what is the valuation, what is the growth. Okay, instead of going 3 to 4, I will go 4.5. Now that is positive as per the market for 2 days. That because you have outperformed. But the point is that 4.5, how much will you give? Okay, make it 7%. Make it double of what the estimate is. What should be the P for that? Look at the Google P there. It might be 16. You do it SOTP, it might be 10. And here we are saying that doesn't matter, 25p is good because lever is 50.
No, so how are you looking at IT right now, Sameer?
So we don't look at it much.
Yeah.
We don't look at it broadly.
Completely underweight IT? with all the numbers
We have
coming?
only, I mean, it depends on what you like. We have one stock, which is KPIT, which we also have kept. Although that also hasn't done much in the last year or so. Yeah, otherwise we don't have. Unless you call Indigene IT, okay, we have it. Depends on classification, but yeah, nothing else. Nothing.
So ER&D is something that you're liking?
No, it's not like even that. That is a big concept. Look at the results of these other companies and how they have done. So you can call it one company now, whatever category you want to call it. Because my general big picture thesis was, we don't like generally auto. We don't like a disruption by EV. But here he's assisting the disruption. Assisting the disruption is okay. Being disrupted is not okay. And basically, IT sector itself has been disrupted. What to say? IT sector itself is disrupted right now. People don't want to believe it's been disrupted black and white. You can see it in every result, every company.
What about the new age tech companies? Swiggy, Zomato, would you still look at them from a positive view?
Absolutely. But before that, they are not really tech companies. Tech company would mean that, they are basically, because what people don't understand is how difficult it is to, in real life, have 300,000 restaurants and 300,000 agents, and every minute they have to be busy and every guy has to be delivered what was ordered, and there should be less complaint or zero complaint. Everybody should get it in 25 minutes and then go to the next guy and in Blinkit deliver everything in 10 minutes. It's a massive exercise. And so people think of it, oh, he's just delivering food to you, but that is not the way. It is an extremely complicated business. And we like Eternal more just because we have it in a bigger position. And by the way, we have just made 5x as of last week because we bought at 52. But the point there is, there are very few pockets in India where you don't have to rely so much on the end growth of the industry. You are relying on the change in buying habit. And at a very small percentage move, it has reached like maybe combined, this whole industry might be a $10 billion value, and whereas the market might be 500 billion or something for grocery and retail and all these things. So it's a very small shift, but you are still not depending on some unknown random this thing that the growth will be 8% and you will get new orders from somebody or something. It's a day-to-day business with the convenience being highlighted again and again because of too much difficulty in dealing with India every day in terms of traffic and pollution and weather and heat. And on the other hand, for whatever reason, very comparatively available labor. Now, if the world doesn't want it like that, there's nothing we can do, but that is a model perfect for India.
When you're seeing the results so far, and I know it's early days, it's barely a week, there's a lot of commentary on optimism with Q1. Q1 can have a positive surprise. Are you buying into that at all? Have you made up your mind?
I thought you said it well, that the results have been very weak.
For IT?
This week.
For the week this week, okay.
But I'm saying in general, I don't think that you can have... See, so we are bullish, but you have to understand what does bullishness mean in today's context. Bullishness is that India is better than most of the other countries or many of the other countries in terms of fundamentals and macroeconomics and policy sentiment or change, whatever you want to call it, on the margin. Plus, this flow-based thing is there. But
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। गब्बर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the
Good evening, you're watching The Big Question. I'm Sanjana. Generative AI is no longer just a buzzword in the advertising world. It's now a boardroom reality. According to a brand new Naukri.com report, 60% of India's top employers are already experimenting with AI tools in their marketing functions. And over half of these employees surveyed believe AI will make their work more creative, not less. But here's the flip side. 41% of advertising and marketing professionals fear that AI could lead to a loss of originality and creative thinking. And nearly 1 in 4 are worried about job security. So this evening we ask, is AI in advertising a creative collaborator or a silent killer of human imagination? We bring you voices from both ends of the spectrum. Let me quickly introduce Manish Bhatt, founder, director at Scarecrow, MNC Saatchi, who has always championed for raw human insight over algorithmic trends, and joining us in the studio today. Harshal Karya, founder of Shebang, where AI isn't just being tested, It's actively shaping brand campaigns. Pawan Goyal, CBO at Naukri, who brings us ground reality from hiring managers, marketing teams and job seekers across India. And Dr. Ruksheda Seda, psychiatrist and psychotherapist, here to explore how all this change is affecting minds behind the marketing. So from chatbots and concept art to real fears of being made redundant, tonight we're going to decode what AI in advertising and all of these creative fields really means for the future of creativity. So let's come to the creative crossroads. Manish, does AI dilute originality, or do you think it can spark new forms of storytelling?
So I think actually everything works in this planet with the long-term insights. Like there were this Alexas and all, or even 3D as a technology, QR code. There's a time and there are something kind of washed off and something which actually lasted long.
Sure.
So AI has to pass that test. AI is a wider terms than these two techno gizmos I spoken about. But I think AI as a novelty, yes, it'll thrive. But you know, everybody also wants, it's under the garb of like kind of ease and convenience. Everything can't long last. It actually has to work for humanity for a longer terms. And I think if the ease and garb is the main thing, then people would have not done bungee jumping or even kind of skydiving.
Sure.
So people like the difficulties, people like the adventure, people like not all the time the ease, and hence I think AI would be a good novelty to start with. It is overarching, it is wider, so it will definitely help the human being. It is already helping. Today morning I had a presentation and I had used AI as a music track, but I don't think I would long term want to miss out on these working with music composer going to studios.
Yeah.
So I think it will prevail, the experience will prevail, the novelty will give its time. I think time being there will be a problem, but later it will all be settled.
I think even critical thinking, and that's something that we'll come to. I read a report a few weeks ago about how just the dependency on AI is also potentially reducing the feeling of being fulfilled, which comes only when you finish a certain task. Yeah. And if you're getting that kind of platform or that kind of dependency on it, that will potentially reduce. Harshal, in Shebang, how are you currently using Gen AI tools for creative output? And more importantly, are there any boundaries, any guardrails that you have?
Thanks, Sanjana. Nice to see you, and thanks for having me here. I'll just tell you a bit of context in terms of why we are so excited about AI. So historically, the marketing domain has only focused on the top of the funnel. So what do I mean by that is that we've only focused on the awareness phase of marketing. Pretty much all of marketing is focused on the awareness phase of marketing. What has happened, therefore, is that the consideration, all of the other phases of the funnel, the remarketing phase, the consideration phase, the bottom of the funnel phase, they often get ignored by marketers. What AI allows us is the opportunity to do optimum marketing at every stage of the funnel, because AI can create with speed and with scale and with a fair amount of sophistication. So you may have like all different kinds of consumers want to be spoken to differently. So you may have 10 Sanjana Chauhans, and one may like to have her email saying, "Hi Sanjana Chauhan." One may like to have her email say, "Hi Chow," for example. So AI can do a lot of A/B testing to figure out at scale multifarious messages of different styles across different stages of funnel. That's why we're very excited about it. Also, at the top of the funnel, I think it gives creatives the ability to really experiment with outlandish things that production budget limitations often stop them with. So often and not, people have a lot of crazy ideas and they cannot be implemented simply because of production constraints. So that is what AI is really unlocking. In terms of guardrails, I think we're still really figuring out the guardrails, etc. But they're coming in place. But we're using Gen AI actually now for the last 1.5 years in our everyday processes. And I think it just the thing that I see creatives enjoy is that they can see further, or they can make sure that their ideas are able to be seen further.
Okay, that's a refreshing perspective. Let's take a reality check on what the data actually says. Pawan, your report, which actually this entire discussion hinges on, shows that over half of the workforce is optimistic, but also anxious. What would you say are the biggest fears that showed up?
So I think the fears that showed up is around loss of creativity and loss of job. But that also varies from different segments. Okay. The freshers are more optimistic with respect to job creation. The experienced folks, and especially the high-paying people who are paid higher, they are more apprehensive about the impact on jobs. Okay. But overall, if you contrast to US, in US, there is a lot more pessimism about AI. But if you look at the Indian market, 86% are positive about the impact of AI. They consider it as a threat. And this is similar to China, where I think the number is 75%. So perhaps it's the developing versus developed economy where we think that there's a lot more to be accomplished. So we are more optimistic about what AI will enable us to do than in a developed market where there's a lot more pessimism around the impact of AI.
All right. So, Dr. Ruksheda, what are you seeing in terms of anxiety, burnout? Would you say there's an identity crisis among professionals because of the rise of AI? Is that something that you're noticing?
Thank you so much, Sanjana. And it's a very, very important question because, yes, what's happening today and what also is going to happen tomorrow. I work with a lot of emerging adults and young adults, and they are definitely seeing that a lot of work is getting outsourced in that sense, even though all the time they are the ones who are also consuming AI and using it to their benefit. Having said that, the fear that, okay, how long can I sustain? And for younger people, even as early as 5 years ago, we were kind of telling them that you also need to start picking professions or academic curriculums which will also be maybe AI friendly or which won't get replaced by AI. So that anxiety that we are going to be replaced by AI and how am I going to survive in this atmosphere is a very present and real issue that a lot of young people, a lot of academic institutes, a lot of training institutes are facing. And like I said, because we see that the technologies are getting advanced every single second that we speak. And even while we're embracing the technology, we are also noticing that, yes, a lot of it is also creating certain issues. We were super happy with a lot of communication technology, but that's also leading to less and less empathetic and human-to-human contact and interaction, giving rise to increased loneliness, even in a sea of people. So the similar kind of fear that this might also happen with creativity and other kind of jobs is definitely taking over and a cause for concern.
Okay, so what I want to ask, and this is exactly, I think, a perfect segue into my next question, and I want to address this to both Manish and Harshal. Manish, maybe you can address it first. What will tomorrow's advertising/creative team look like? Even if we're looking at advertising, looking at design, will we have AI copywriters as equals?
I think the replacement will take some time. The redefinition is already happening. Like, for example, I am wondering whether the person with a great craft is better, or the person who get the craft done through AI is better. So even a 2-year young, 2-year in business versus a 15-year in business, I would probably, now looking at their skill sets to use AI to generate a temporary solutions which the users want or the clients want. So that curation is increasing, but that actually was there even during the Shutterstock came in our picture, or the stock pictures and all.
Sure.
So from shooting something to curating and using something, so that is already there. Here is a more tailor-made solutions and more crafted solutions coming. So it's frightening at this moment. It is redefining. It may impact the increments and the promotions of certain people, but I don't think it will replace people. at this stage.
Got you. So what would you say is the boundary at your agency? Where do you say that, okay, this is where it stops. This is where there's no more use of anything to do with AI?
No, it's an exploration stage. So we are trying AI for everything, but we definitely understand the importance of our 60 million years of instinct which human species has developed. I don't think we call our agency as the champion of emotions in next 10 years. So where emotions will be very expensive. There won't be that. There'll be a cold world, and the emotions and warmth will be needed. I think we would be looking for that in the time of a cold technological invasions.
Absolutely, and then we'll need more of Dr. Rupsheda in that point of time.
Yes.
I think a lot of us need her anyway. It's so interesting that you say that, and I'm going to bring Harshal in for his perspective, because just last week we had a discussion around IT. And the similar discussion, because we were trying to assess whether then a degree mattered or then a skill set mattered. So Harshal, curious to understand from you, what would you say the future ad team looks like?
So I think if I see it, I think it's this current ad team, all of them augmented with a second brain or many second brains sitting with them. So I think I see this as a great inflection point and the opportunity for the advertising industry to really leapfrog its value to customers, because it's particularly the new rising digital side of the advertising industry has been very agile. And also, I think AI really just superpowers this whole generation of digital creatives to be able to really come almost at par with the consultancies, because what you can now do is that you can bring the sophistication and the chops of the right brain and the left brain together. And I think that's the biggest leveler for AI. I think therefore the teams that are most agile with it will work really well. With us at Shebang, what we are really pioneering is the concept of an AI second brain for every customer of ours. So right from every online call that we have with them, we're recording transcripts of that and we're feeding it into a second brain. Every minutes of meeting is fed into a second brain. Every data point that we have is fed into a second brain. Every performance marketing data point is fed in. Every ad performance and brand uplift score is fed in. So you can really have a scenario 6 months later saying, tell me what happened in November last year and what worked in Diwali and what was the consumer saying then. And you have a lot of consumer work going on, and then you can layer that and say, how does that differentiate from what the consumer is saying now? So you have the ability to have a super intelligence at your fingertips, which can really give you a very cohesive solution to customers and make you bring the magic of people that you understand, emotion that you understand, coupled with the business understanding, coupled with technology to create a near perfect solution for customers with agility, with scale, with depth. So I think it's one of the most exciting times the industry is going through, and it is really the opportunity for us to increase the pie of the business and bring more people into the industry.
Great insight. Pawan, your data says nearly 60% of organizations plan to integrate AI into hiring the next year. So I'm curious to understand whether you have any data or your understanding of what does that mean for creative hiring?
So we don't have data yet on what it means to creative hiring, but we also have a marketing team. But I can perhaps pitch in and saying, hey, well, what is the impact of AI on our marketing team? I think it's just a lot of potential for our marketing team. Things that they could not do earlier, they are just able to do. They are able to produce content at scale, which is relevant to the audience of one. So the holy grail of marketing is right person, right time, right message. And that was done at a very broad segments, and our now marketing team is able to do with all the AI tools at the segment of one. So this just the creativity possibilities are just expanding, while there might be set of jobs which may, where especially people who are not using AI, I think they will become redundant, but those who use AI, they will become better and will be able to deliver a lot more value in the creative space.
Okay. Dr. Rukshida, from a physiological perspective, in terms of just how the human brain works, what about critical thinking? What about what we were just talking about, that feeling of being fulfilled, that boost of dopamine that one gets when you've completed a task? Please correct me if I'm just speculating or adding conjecture here. But does AI then worsen that, erode that? Does it worsen imposter syndrome in creative fields? Because the job might be done efficiently, but not as efficiently or not as fulfillingly in a way that when you sit down to really create something from ground up, right?
So thank you so much for that question. But I'm going, a lot of what is resonating is that, yes, these are still early days. We don't, right now, most of us are still feeling high that, oh, I know how to use AI and, get a better result. So we're still in that stage, even in workspaces. But when we are, we were I heard somewhere that emotions, and that's where the creativity comes from. That's not really true. Creativity doesn't come only because of emotions. Creativity comes from boredom. Creativity, the neural tracks that need to form in my brain for me to be able to think, like you said, critical thinking, all of that needs time and space. Just before I was coming on here, I had a 17-year-old and I asked her the same question, what do you think AI is going to do? She's like, yeah, no, nobody's going to replace human beings, and that's fine. And I asked her, you just, told me that you sit there and either the music is on or you're scrolling on something or you're doing something. So human beings in it already are not really just sitting with themselves and sitting with their thoughts and ideas to develop that problem-solving attitude that you require for everything in life, including creativity. So currently, even though people are happy that, oh, I did such a great job using AI, but it's also really started to scare people quite a lot in terms of what this may lead to. From a psychiatry point of view, it's also kind of, I'm optimistic, cautiously optimistic about all technologies and AI, but it's also kind of makes me wonder, because if the AI is perfect and if an AI generated image is perfect, is that going to also then relate for me that I'm going to go away from my reality? The reality is not going to look pretty enough. I can't upload a picture of mine without putting a filter or without airbrushing something or the other. So if we're already doing that, so there's a lot of self-rejection. There's a lot of rejection of humanity in general in terms of the prettiness of it. And also the distinct difference between if I'm watching something that's fiction, that's not reality, versus I know what's real. So those kind of lines, which when they get blurred, causes a lot of human distress and a human destruction in a sense, in a way. So again, the ability to kind of decipher all of that is going to be quite problematic. And when everything is very sanitized and everything's very pretty and everything is very perfect, it's also very, very boring. And that makes people check out emotionally and thought-wise and all of that. So when we are, when we are seeing with the use of, like, I don't remember single cell phone number, maybe excepting for a couple of, mine or my loved ones. If you're already losing that, and if, with human beings, human bodies, it's like that. If you don't use it, you lose it. So those are some of the concerns that I bring to the table today, even though I'm being, like I said, cautiously optimistic about AI.
I'm hopefully noting down and furiously noting down all of this, so that, because the use it, don't lose it, adage stays with me. So thanks so much for that. Manisha, I'm curious to understand, how are clients responding to this? Are they hesitant? Are they maybe opting for something faster, efficient? Are they excited? Are they saying, आपने नहीं किया है, AI ने किया है, तो इतने सारे पैसे चार्ज मत कीजिए?
So we are not telling them that it's done by AI.
Okay.
Today morning also I lied to a client that, okay, this track has been recorded.
Okay.
So we are in that stage where we can take that liberty.
Clients, I hope you're not watching them.
But yes, I think eventually it will be an open thing for everyone. It's like a computer, everybody uses it. So it's like that. I think it's going to go that path, but I see it not like a trend. Trend is everybody saying, Herschel spoke, everybody spoke about how we use it.
Yeah.
But I think I always have seen things like a art style, like a partitions, wars, pandemics, and this AI boom is all going to pass. And I think how the art, see, the commercial art will become more fine art when the commerce stop supporting it. So if the commercial field is going to be dependent on the machines, and then the human will thrive to become a better fine artist. I would say my advertising and creative team would rather be a much more creative, because they're now not that their other jobs is also being done, so they'll be more. I would look at it as an opportunity of another art movement, like how the expressionisms and postmodernisms and many isms have happened. I think this will be a AI-ism maybe for us.
Okay. Harshal, do you see AI then widening the gap between agencies that adapt and those that resist?
Yeah, definitely. I think it is actually, without doubt, the biggest opportunity that we have. I think it's rewiring every part of the process. Intelligence is more scalable. Work is more scalable. And the agencies, and also not just the agencies, but all workplaces that adapt faster to AI will move forward faster. So there's no doubt that this is the biggest inflection and opportunity that we have. This is way bigger than social media. This is way bigger than digital marketing.
Okay, so Pawan, you, according to your report, and this is something that we have actually covered, 41% of ad professionals fear loss of originality. So is there any data that you have supporting that in terms of how the employers are addressing that fear internally?
We don't have that that data, and it is still all very new.
Sure.
Okay, if you just put it in perspective, ChatGPT is less than 2.5 years old technology. So I think when I speak to the employers, they're all still figuring out how to transition to this AI first world. What we see right now, it is in enterprises. It is mostly at pilot stages, and it's not yet moved to mainstream. But as they go to mainstream, perhaps some of these anxieties that you mentioned, that's where the organizations will have to deal with that. But it's still at pilot stage in most organizations that I'm aware of.
All right. So final closing, and I'm just going to come to Dr. Ruksheda on that. The kind of advice, not asking for free advice on national TV, but the kind of advice that you would give to people that are anxious about job security, anxious about critical thinking or dependency, or then just feeling empty, feeling that void because maybe the work isn't as fulfilling because of this heavy dependency that we all have on AI now?
Fear is always about uncertainty. Fear is always about, anxiety is always about losing control. And all of that, the uncertainty, all of us are uncertain. We don't know how far AI is going to work and for what. So for us to say that, oh, that's not a real fear, it's just anxiety, it's in your head, wouldn't be really true. Having said that, we look at like Singapore government, they have offered free or discounted educational courses for people who are in their 40s or over, so that they can relearn or learn different skills, which, because a lot of jobs are going to get redundant, and that's a real possibility. So people who do feel that yes, their work is going to get replicated, we would also encourage them that, okay, if you do have a problem, go ahead and solve it, figure out what your resources are, and figure out how you can either have a lateral move, if not a linear move in terms of your career, and in terms of dealing with a real problem in employability and just living expenses and all of that. Yes, all of us are going to have some side hustle, it looks like, if you're not in a situation, in a job which doesn't require AI. So definitely looking at yourself, looking at your requirements, looking at your life, looking at your resources, and then seeing how you can adapt to the technologies is something that we've been encouraging everyone. I mean, we're teaching grandmothers how to use, video calls and things like that.
Right.
for good. So we definitely want to stay with it a little longer, not get too scared, but at the same time not be very frivolous about or neglectful of your own future. And if you're worried about something, definitely figure out a way to help yourself to reduce that uncertainty, get more answers, get more trustworthy.
All right. Okay, so if you can't beat them, join them. And that's what we're trying to figure out this evening. Is AI the destroyer of creativity or a muse in disguise? From campaign design to career definitions, the advertising industry is undeniably at a turning point. This evening's discussion showed us that while AI can speed things up, creativity still needs curiosity, empathy, and imagination. Qualities machine can't replicate, just as yet. But for professionals, one thing is clear. Adapting is not optional. Whether you resist it or ride the wave, AI is here to stay. Thank you to all my panelists joining me this evening. We'll keep tracking this shift for you only on NDTV Profit. Thanks so much for watching.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or
Namaste, hello, and welcome to the NDTV World Report. I'm Priyanka Deo. Let's go straight into our top story. Israel has carried out a series of powerful strikes on the Syrian capital Damascus on Wednesday, escalating a campaign that it says is in support of an Arab minority group involved in deadly clashes with Syrian government forces. Now, Israel has stepped up its campaign despite pressure from the United States, which has made moves to end Syria's international isolation. Listen in to what the Syrian president and Israeli prime minister had to say, followed by a report. Here we go.
فكنا بين خيارين: الحرب المفتوحة مع الكيان الإسرائيلي على حساب أهلنا الدروز وأمنهم وزعزعة استقرار سوريا والمنطقة بأسرها، وبين فسح المجال لوجهاء ومشايخ الدروز للعودة إلى رشدهم وتغليب المصلحة الوطنية على من يريد تشويه سمعة أهل الجبل الكرام. فلسنا ممن يخشى الحرب، ونحن الذين قضينا أعمارنا في مواجهة التحديات والدفاع عن شعبنا، لكننا قدمنا مصلحة السوريين على الفوضى والدمار.
היי אזרחי ישראל הדרוזים, המצב בסווידה, המצב בדרום מערב סוריה, הוא חמור מאוד. צה"ל פועל, חיל האוויר פועל, כוחות אחרים פועלים. אנחנו פועלים כדי להציל את אחינו הדרוזים וכדי לחסל את כנופיות המשטר. ועכשיו יש לי בקשה אחת מכם. אתם, אזרחי ישראל, אל תעברו את הגבול. אתם מסכנים את חייכם, אתם יכולים להירצח, אתם יכולים להיחטף, ואתם פוגעים במאמצים של צה"ל. ולכן אני מבקש מכם, חזרו לבתיכם, תנו לצה"ל לפעול.
The last few days saw dozens of civilians and military forces killed in intense clashes between Druze armed factions and Sunni Bedouin tribes alongside Syrian government forces in the country's Sweda province. What started as a series of tit-for-tat kidnappings spiraled into series rounds of fighting as tensions have simmered between the Druze and Syria's new Islamist-led government, which led the movement that toppled President Bashar al-Assad in early December. The interim government has promised to include the Druze, a small Islamic offshoot largely based in Syria, but has so far kept the authority. The Druze, like other minority groups in Syria, have been skeptical of those promises. Meanwhile, the Israeli army struck near the entrance of the Syrian Ministry of Defense in Damascus. Israel has launched a series of airstrikes on convoys of government forces in southern Syria since the clashes erupted and has beefed up forces on the border. It threatened to further intervene to back the Druze in the country. A number of Druze live in the Israeli-controlled Golan Heights and are related to those in Syria.
50 people were killed in a massive fire in a hypermarket in Al-Qut. This is a city in eastern Iraq. Local media is reporting this. Video circulating on social media showed flames engulfing a 5-story building in Al-Qut overnight while firefighters were trying to contain the fire. The cause of this fire was not immediately known, but the governor said that initial results from an investigation would be announced within 48 hours. NDTV's Mohammad Ghazali brings us details.
Around 59 victims have been identified of this fire incident, which happened in one of the shopping complexes in Qut area of Iraq, and it is believed that many people are still trapped under the debris. It's a multi-story shopping complex where the fire incident happened. The reason of the fire incident is the cause of the fire has not been ascertained yet, and within 2 days a formal inquiry report will be released, and 2 days of mourning has also been announced in Iraq over this particular incident. A lawsuit has also been filed against the owner of the shopping complex where this incident has happened.
Thank you very much for that report. Let's move on to our next story. The demolition of legendary filmmaker Satyajit Ray's ancestral home in Bangladesh, Mymensingh, has been halted, and the authorities have formed a committee to look at how it can be reconstructed. This comes after India expressed concern over the ongoing demolition of Mr. Ray's ancestral house in Bangladesh. West Bengal Chief Minister Mamta Banerjee has also protested this demolition, stating that the house is intricately tied to Bengal's cultural history. NDTV's Saurabh Gupta brings more. Saurabh?
After concern and India also offering to help with the restoration of Satyajit Ray's ancestral house in Mymensingh in Bangladesh, the Bangladesh government has told NDTV that there is, of course, an effort now ongoing to restore it. Not only that, they've halted the demolition, and they say that the demolition of this structure, which is connected to cultural icon Satyajit Ray, noted filmmaker, all of that, and also his ancestors, including Upendra Kishore Roy Chaudhary, who of course are associated with that house in Mymensingh in Bangladesh. Now, in an exclusive interview with NDTV, the Bangladesh High Commission official said that this was an administrative oversight, this was not a targeted demolition, and that while they can restore it, India, they say, has offered to help, and they would certainly look at it because India has also restored many old buildings. But this is something that was also being seen from the perspective and lens of cultural revisionism in Bangladesh, because it came after Sheikh Mujibur Rahman's home was burnt down. Then, of course, there was Rabindranath Tagore's home in Shirajganj, which was vandalized, and then you had this particular house also being demolished.
Thank you, Saurabh, for that. Violence erupted on Wednesday at a rally of Bangladesh's youth-led National Citizen Party in the southern town of Gopalganj, with 4 people killed and over 50 people injured. That's according to local media. Awami League chief and former Bangladesh Prime Minister Sheikh Hasina has strongly condemned the horrific attack and barbaric killings in Gopalganj today, blaming the Yunus-led government for this violence. Deadly student-led protest forced longtime Prime Minister Sheikh Hasina to flee to India in August of last year, and since then, there have been delays over promised reforms, over growing protests, and political division. U.S. President Donald Trump has hinted at reaching a new trade agreement with India soon, while a trade deal with the European Union could also possibly be finalized, but it would be too soon to say if a deal with Canada can be agreed upon as the tariff deadline looms. India and the U.S. have been holding negotiations for the trade pact primarily to keep the tariffs below 20%. During an interview with Real America's Voice on Wednesday, Trump was asked which trade deals were on the horizon, and he responded by saying, and I quote, "We're very close to India and we could possibly make a deal with the European Union." Listen in to what Mr. Trump has to say.
We had one yesterday, that was announced. We have another one coming up, maybe with India. I don't know. We're in negotiation. When I send out a letter, that's a deal. In other words, it's a deal. The best deal we can make is to send out a letter. And the letter says that you'll pay 30%, 35%, 25%, 20%. We're very close to a deal with India where they open it up.
Again, Donald Trump making headlines. He said that Coca-Cola had agreed to sweeten its signature soft drink with cane sugar in the United States in what could represent a major shift from its decades-long use of high fructose corn syrup. In a social media post on Wednesday, the U.S. president said that he had been speaking to Coca-Cola about using cane sugar in their drink, calling the switch just better. Coca-Cola hasn't confirmed a full recipe change just yet, but promises more details soon. The announcement is stirring backlash from corn growers who warn that this move could cost jobs and hurt U.S. farmers. The U.S. Embassy in India has issued a visa warning stating that committing assault, theft, or burglary in the United States could lead to a visa being revoked. This advisory comes after an Indian woman was caught stealing items worth 1.1 lakh rupees at a Target store in Illinois. As a word of caution, the advisory further stated that such an act, robbery, could make one ineligible for future U.S. visas, preventing re-entry into the U.S. Therefore, the embassy urged foreign visitors to adhere to law and order. A U.S. citizen and Army veteran who works as a security guard at a California cannabis farm said on Wednesday that U.S. officials arrested him during an immigration raid last week and held him for 3 days without any explanation. George Reitz, who's 25 years old, works as a security guard at Glasshouse Farms in Camarillo, and said he was arriving to work on July 10th when several federal agents surrounded his car and, despite identifying himself as a U.S. citizen, broke his window, pepper sprayed him, and dragged him out.
I was on my way to work. I got caught in the middle between the protest and ICE agents. I explained myself. I let the ICE agents know that I'm a U.S. citizen, that I'm American, that I work at the Glass House, and they ignored me. They didn't care what I had to say. They automatically accused me of just, I guess, doing something wrong, and they escalated it from there. ICE escalated the entire situation.
Keir Starmer and Germany's Chancellor Friedrich Merz are expected to sign a new bilateral treaty that promises tighter action on smuggling gangs, expanded defense exports, and closer industrial ties between the UK and Germany. The bilateral friendship and cooperation treaty marks the latest phase of Starmer's bid to build Britain's influence in Europe without reopening formal ties with the EU. Now, this treaty includes a German commitment to make it illegal to facilitate unauthorized migration to the UK, closing off a key supply route used by smugglers operating from German territory. UK officials say that the new law, which is expected to be passed by the end of the year, will give police and prosecutors the tools to target warehouses and logistical hubs used to store small boats and engines linked to channel crossings. The U.S. Department of Justice has fired a veteran federal prosecutor who worked on the cases against sex offender Jeffrey Epstein, his accomplice Ghislaine Maxwell, and hip-hop mogul Sean Diddy Combs. It's not clear why Maureen Comey was removed from her job at the Southern District of New York, but her exit was confirmed by sources to the BBC's U.S. partner, CBS. Doctors in the United Kingdom have announced the birth of 8 healthy babies after performing a groundbreaking procedure that creates IVF embryos with DNA from 3 people to prevent the children from inheriting incurable genetic disorders. The mothers were all high risk for passing on life-threatening diseases to their babies due to mutations in their mitochondria. This is the tiny structure that sits inside cells and provides power that the cells need to function. The 4 boys and 4 girls, including one set of identical twins, were born to 7 women and have no signs of the mitochondrial diseases that they were at risk of inheriting. One further pregnancy is ongoing as we speak. Indian astronaut Shubhanshu Shukla reunited with his wife Kamna Shukla and 6-year-old son Kiyash Shukla after his 18-day mission aboard the International Space Station. The emotional moment was captured on camera with photographs showing Shukla embracing his wife and his child in tight hugs. His wife and son, Kamna and Kiyash, are in Houston, Texas, and it was the first time that Shukla saw his family in 2 months. He wrote in an Instagram post, and I quote, "It was challenging. Coming back to Earth and holding my family back in my arms felt like home." He added that human spaceflight missions are magical, but they are made magical by the humans. Astronomers have discovered the earliest seeds of rocky planets forming in the gas around a baby sun-like star. This provides a precious peek into the dawn of our own solar system. It's an unprecedented snapshot of time zero. This is according to scientists' report when new worlds begin to gel. And now we're going on to a break. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
imports become the exception rather than the norm. And increasingly, we do almost, last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
And now from the world of technology, Google has announced that students in India can now get their AI subscription plan for free. This means access to Gemini's suite of AI-powered products and services, which is otherwise worth 1,950 rupees per month, free for 12 months. Here's a brief report.
The headline here is that Google is offering all the might and benefits of their Gemini AI Pro plan to students for absolutely free for 1 year. Now here in India as well. We've compiled the 5 major benefits that you get if you're a student and you avail the offer that was otherwise worth 19,500 rupees for the entire year. Number 1, you get a study partner who can bounce ideas around with in unlimited capacity. This buddy will help prepare study schedules, help with homework, help bounce ideas, help prep for exams, help prep for internship interviews, help ideate so sessions aren't boring so much. Number 2, you get features like deep research for free included in the plan. Since the Pro version is powered by Gemini 2.5 Pro, Google's most powerful and most advanced model, you get deeper insights and better contextual understanding and outputs and answers. To go above and beyond if you need to, you also get higher usage access to Notebook LM, which actually is a dedicated research and thinking partner. Number 3, access to VO3 tools, which means the ability to generate very realistic videos and other media for your creative projects. Number 4, access to Gemini in Docs and Gmail. I mean, everyone on earth has a Gmail ID, but with this plan, Gemini will integrate into Google Workspace apps as well. Number 5, I saved this one for last because sheepishly admitting, this is why I got my Google One subscription. You get 2 terabytes of cloud storage, readily available anywhere, readily shareable, everywhere. The fight for supremacy in the AI space is absolutely real. We just don't see it happening that much. But with Google making the entry free for students, do you also feel like they've actually gotten a leeway with users of advanced AI tools of tomorrow? At NDTV, we do a huge bucket load of stories around AI, by the way, and it's tailored to everyone. It's tailored to you as well. So stay hooked to us for developments on this one as well.
Samsung boss Lee Jae-young has been cleared by South Korea's top court of fraud charges, concluding a years-long legal battle, over his role in a 2015 merger deal. Now, Lee is the grandson of Samsung's founder and the de facto head of the company since 2014. He'd been accused of using stock and accounting fraud to try to gain control of the firm. In its final verdict, the Supreme Court in Seoul upheld a not guilty verdict after Lee was acquitted of all charges in 2 earlier trials. A new portrait of Britain's King Charles III has been produced by the world's first ultra-realistic humanoid robot artist, Ada. Algorithm King was created using Ada's advanced AI algorithms, a robotic arm using oil on canvas, and the cameras in her eyes. The portrait was unveiled at the UK mission to the WTO and the United Nations in Geneva as part of the 2025 AI for Good Summit hosted by the UN. A rare oil portrait of Mahatma Gandhi, believed to be the only one that he sat for the artist to paint, has fetched triple its estimate at £152,800. That's approximately 1.75 crore rupees in a Bonhams auction in London. The painting, which had never before been offered at auction, had been on offer for an online auction with a guide price range between £50,000 and £70,000 and was the top lot of the travel and exploration sale. Pragananda has taken down Magnus Carlsen in the 4th round of rapid chess at the Las Vegas Freestyle Chess Grand Slam Tour. He played a superb match with the white pieces to beat the former world champion. With this win, Pragnanda is the sole leader of his group with 3.5 out of 4 points. There will be 3 more rounds of rapid chess played. The top 4 players from the 2 groups will make it to the winner's bracket. Carlsen was beaten twice by Gukesh after he branded the later as a weak player and held on to draw by 9-year-old Arit Kapil. Barcelona's electric 18-year-old winger Lamine Yamal has been handed the famous number 10 shirt previously worn by club icon Lionel Messi, capping a remarkable breakthrough season for the teenager. Yamal earned the jersey after a stellar campaign where he netted 18 goals and provided 25 assists as Barcelona swept the domestic treble of La Liga, Copa del Rey, and Spanish Super Cup while they reached the Champions League semifinals. The youngster, who wore the number 19 shirt last season, had already committed his long-term future to the club, signing a contract extension in May that will keep him at Barcelona until year 2031. A fire has destroyed the main stage at the Tomorrowland Festival in Belgium just 2 days before the event was set to open. Now, no injuries were reported during the blaze, and the cause of the fire still remains unclear. In an update posted on the festival's website, organizers said that the campsite would still open on Thursday as planned and that the focus was on finding solutions for the festival weekend. July 17th is celebrated as World Emoji Day. Now, just like you and me, the world is obsessed with emojis. There's an emoji to literally convey everything, every emotion and every action. My colleague Arun and Mayank decode emojis for us. Have a look.
All stupid monkey, this, that. How did it work?
Put a red dress on.
1, 2, 3, 4.
It's World Emoji Day and we have another segment.
We're celebrating the fabulous mode of communication that is emojis.
We'll be recreating some of these with our own face, and we don't really have a name, but I would want to call it He-moji because we're putting he like the human element.
I wouldn't put a gender to it.
Okay, what do you want to call it? He, they, them emoji.
Emoji. Yes.
Lovely.
All emojis.
He, she, they, them emoji.
Right. So stupid.
Now this is the second one. Okay.
Okay, that's easy.
I think for this emoji, I think you will be the closest.
How dare you? It's the monkey emoji.
I think he should get a good score for this.
I will take it.
You have to recreate it. This is your face 24/7 anyway.
No, it's not. how would I even, how would things come out?
Yeah, I mean,
Special effects.
not this one.
I mean, these are so you. I think I should give you something. All stupid monkey, this, that.
You did the monkey one really good, I must tell you.
I don't even want to defend it.
Okay, this one. Okay, last.
Okay.
Do you want to do a dancing emoji? I'll do the girl twirling emoji.
But you don't have a red dress on.
Editor, put a red dress on. Thank you very much. बहुत अच्छा लगा आपसे मिलके. Thank you very much.
Thank you.
The emoji that I have for you is
this.
Yeah. Collab for collab. Hashtag. Hashtag collab for collab.
Okay, done.
Have fun with those emojis. Let's go to a commercial break. Stay tuned.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम. गब्बर ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है. जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है. ऊपर से ये अलग फाइट है. कोई पूरा लेफ्ट तो कोई पूरा राइट है. बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए. इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी. मैं शुभांकर मिश्रा. मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Benchmark snapped 2 days, a gaining streak. Nifty IT emerges as the top losing sector for the day. Nifty Realty, Energy, FMCG and Auto continue their gains. GST department cracks down on 60,000 unregistered businesses and traders, sends notices to firms with over 40 lakh rupees in turnover, targeting businesses such as ice cream parlors, salons and eateries. Axis Bank's asset quality dips in the first quarter of FY26. The NPA ratio rises by 29 basis points, while slippages rise sharply to 8,200 crore rupees. Wipro's EBIT misses estimates in Q1 while the deal wins remain solid at $5 billion. Company hikes Q2 guidance between -1% to +1%. NDTV Profit launches a campaign, Spot the Scam, against fraudulent market advice by Dabba traders, advices that promise mega returns and attempt to lure unaware retail investors. Bharti Airtel partners with AI-powered search platform Perplexity to offer its premium Perplexity Pro subscription free of cost to all Airtel customers for 1 year. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it. The market ended lower today, breaking its two-day winning streak after a largely range-bound trading session. Sectoral indices delivered a mixed performance, while broader market indices managed to outperform the benchmarks. For a comprehensive wrap-up of today's market action, let's go over to Harsh.
Well, it was expiry day, so that was just the kind of reaction we saw over the last hour and a half of trade. So we saw a bit of a slip where markets are concerned. There you go, you'll see that on your screen. In terms of stocks, and if we could pull up the heat map, get better perspective, the breadth, of course, on the Nifty 50 was a tough one. But you saw some consumption stocks shine, some metals shine as well. You can see a Tata Steel right up on top. A Tata Consumer was the other one. Hindalco also, and Trent, Titan, all of those doing well. So those you can clearly see at the top of your screen. The laggards were, of course, the IT names. On the back of TechM's results, some of those IT names really haven't fired. And that is reflective with the way in which they've reacted today again. So IT was the other pain point. Let's look at the heat map of sectors as well, and let's close that out. And likely that's what we'll see. So realty within the broader markets pack did fairly well, sharp outperformance, but metals, pharma, FMCG were the three pockets which have done relatively better. So some bit of outperformance seen there. IT, of course, was the laggard. Along with that, PSU banks sank a little, and the Nifty Bank as well sank a little in trade. In terms of how the breadth was on the overall market, we opened positive on the breadth, but that weakened, and towards the end we were just about holding on to 1:1. So that's the take on the breadth. Where the broader markets go, the Nifty mid-cap index largely flat. Not much of a reaction seen there, but the Nifty small cap index was actually in the green. So that's where some bit of outperformance continues to play through. That is visible, 0.25% higher on the Nifty small cap. Last off, I want to take some names and let's pull some of them up. Some real buzzers in trade today. I want to start off with Exigo. That was really the stock which was shining. Tech Mahindra on the broader market end of on the Nifty 50 end of things was the big loser. Thermax on the back of a brokerage call did really well. Some earnings, and within that earnings pack you had something like you had a few names within results like a JTL, a Newgen, and LTTS, all of which were buzzing. Some of the real estate names did well, including the likes of a DLF who we spoke with. And you also had some consumption names. Patanjali did well, a Relaxo, a Vedant Fashion, Uno Minda within the auto pack, Craftsman Auto was also some which really shone in trade.
And thanks, Harsh, for that. Moving on to our top focus this evening, about 60,000 businesses and traders are learned to have received GST notices from state GST departments in states like Gujarat, Tamil Nadu, Andhra Pradesh and a few other states apart from Karnataka, where traders and businesses have threatened protests and a complete shutdown over tax authorities accessing their UPI transaction data and now demanding tax payments. My colleague Shrimi, who has been tracking this relentlessly, now joining with more on this. Shrimi, over to you.
Yes, apart from Karnataka, actually couple of states, GST department, especially in Andhra Pradesh, Tamil Nadu and Gujarat, have issued similar sort of notices to trader and businesses seeking tax demand for not getting registered under GST and evading taxes for some time. And in fact, the sources tells us that the investigation revealed that the UPI transaction of these businesses and traders has actually revealed that the turnover, the transaction they are receiving is above the threshold limit of GST, which is 40 lakhs for goods and 20 lakhs for services. Now, these businesses are predominantly is in the business to consumer segment, like ice cream parlor, eateries, event companies, as well as automakers, dealer, etc. So now the GST department, the state department particularly, is trying to nab these businesses who are not under the GST registration despite crossing the GST limit, and try to sort of ensure that they are GST compliant. But at the same time, there are certain debates going on the UPI transaction, as investigation has tried to sort of track these UPI transaction of these businesses, and in some more state may also use these data to understand and to track the transaction and the turnover of these businesses to ensure the compliance part. So the debate is going on that whether the authorities have legal authority to access these data is one point, and in fact this has sparked a more bigger debate on the fact that whether it could demotivate the UPI transaction and push towards the cash economy. But so far the development is that more state GST department in different states have started sending notices seeking tax payment on pending dues, and in fact they have also reported that some businesses have also actually underreported the income, underreported the tax, and they are ensuring that all should come under the GST net.
And now I have Saurabh Agarwal, tax partner EY India, joining us. Saurabh, good evening. Welcome to NDTV Profit, and thanks so much for your time. Just for our viewers and even for me, if you could clarify how turnover in this particular case and even others is determined for GST registration. Should only taxable supplies be considered, or are all forms of receipts, including exempt income or informal loans, are included?
So, Sanjana, from the GST inception, it was very clear that 40 lakh is the limit for goods turnover and 20 lakh is the limit for services turnover. Both taxable turnover as well as exempt turnover will form part for the purpose of determining that taxable limit threshold. Of course, loans will not form part. Transactions in money will not form part for determining that threshold turnover limit.
All right. So, and in this case, what would your advice be for businesses whose digital transaction data has triggered a GST notice, but who believe that their actual taxable turnover is below the applicable threshold?
So, Sanjana, I think the government has been very clear. When we look at the Digital India initiative, which was launched somewhere in 2015, followed by Project Insight from the Income Tax Department, followed by GSTN, I think they are taking data from everywhere and they are doing mining of data like anything, which we call as big data. I think the preparedness of the government department has been quite on a far better front compared to maybe the industry as well. So if you ask me from an advice perspective for our small businesses or nano businesses, it is important for them to determine whether they are falling within that particular threshold limit. And if they're falling within that particular threshold limit and there is an exempted turnover as well, we can take an example. A nano business is having a total turnover of 60 lakh rupees, of which say 40 lakh is towards the exempted turnover. The exempted turnover would not be subjected to any tax, but on that 20 lakh, they will be required to make the payment of tax. They can opt for composition scheme. The composition scheme is available, wherein for goods, you can take up to 1.5 crore, you can pay 1% tax without claiming an input tax credit. For services, there's a composition scheme with a turnover of up to 50 lakh, you can pay a 6% input tax without claiming any credit. So they can opt for that particular composition scheme. From a government perspective, if I have to advise, I'll say that simplify those particular returns. The format of those returns, while they have been simplifying it over a period of time, but from a nano business perspective, there's more simplification which is required.
Okay, so with many traders now reverting to cash and maybe shunning digital payments, what potential long-term effect could this particular enforcement strategy have on India's push for digital payments and the formal economy?
So Sanjana, I'll put some data points for you. You know, initially in 17-18, if I remember correctly, the GST collection was on an average 89,000 crores per month.
Okay.
If we look at 24-25, which is the recent fiscal year which has gone by, I think somewhere around 1.84 to 1.86 lakh crores per month has been the GST collection. The taxpayer has increased from 60 lakhs to, I think, 1.5 crores has been the increase in tax base. I think the drive was very clear in government's mind that they will be driving this particular agenda, and digital payment was a start to it. I think if you ask me, I'm coming from a tier 1 city, and while I'm born and brought up in a tier 2 city, but for me now to carry cash, it's a pain. So I think UPI is not going away anywhere. I think there will be a push from the street vendors or maybe those small vendors with respect to taking the payments in cash. But I think given the customer choice, I think UPI will continue.
Saurabh Agarwal, thank you so much for that insight and for your time. We'll continue tracking that story and bring you all of the latest developments. Now let's take a look at the day's big earnings. First up, Axis Bank reported a rise in provisions while its profit misses estimates. The bank's asset quality dipped and it also reported a sharp rise in fresh slippages. Let's go over to my colleague Vishwanath Nair for more on the numbers. Vishwanath, what are you making of the earnings at this point?
All right, so Axis Bank reported its Q1 FY26 results late on Thursday, and what they're saying is that their net profit has actually dropped about 4% to a little over 5,800 odd crore. Now there are 5 key takeaways that we'll take you through what exactly happened in these results and why the net profit has fallen. The first of which is, of course, the asset quality position of the bank. That has worsened. The gross NPA ratio is up about 29 basis points on a quarter-on-quarter basis and stands at about 1.57%. The second important part is that the fresh slippages for the bank has risen sharply from about 4,600 odd crore in Q4 to 8,200 crore in Q1 of this financial year. The third thing that has happened is the technical impact that the bank is referring to. Essentially, what the bank has done is it has changed the parameters that are used to measure the gross NPA, the slippages, the upgrades, and other provisions and contingencies. Because of these additional sort of assessments that the bank has done during Q1, the gross slippages as well as the gross NPA numbers are looking a little inflated. And because of that, of course, provisions have gone up. The third important thing that has happened here is the net interest margin for the bank. That has dropped sharply for Axis Bank. It's come down actually from about 3.97% in Q4 to about 3.8% in Q1, and that's a sharp dip, and this is largely happening because of A, the Reserve Bank of India's rate cut, and B, because the fifth takeaway that we're reporting here is that there are single-digit advances and deposit growth for Axis Bank, and that is precisely why the net interest margin has dropped. Overall profitability has dipped because of this technical impact, and the bank's numbers are looking a little shaky for Q1.
Thanks so much for that, Vishwanath. Meanwhile, IT bellwether Wipro reported a muted first quarter. The profit dropped by 7% but met the estimates, but the company remained cautious on the revenue guidance for the second quarter. Puneet Javeri now joins in with an analysis of the earnings.
Wipro was in focus after the company reported their quarterly earnings. While the revenue was down roughly about 1.6%, we have seen the EBIT margin as well as net profit also fall by 6 to 9%. Now, in this particular quarter, it was expected to be weak, and the constant currency revenue growth has come in the middle of the management's guidance of 3.5% to 1.5% fall in revenues. Going forward, they are expecting some kind of positive momentum, and hence the quarter 2 guidance of -1% to +1% in terms of revenue is something that they've given. In terms of deal wins, it was a decent quarter in terms of deal wins, over $2.5 billion to $2.7 billion in terms of large deal wins. Now, and they've had 16 large deal wins in this particular quarter. But the concern largely remains on how the conversion happens from deal wins into the financial numbers, and that'll be one of the key ones to watch out for in the quarters to come by. But post this results and the guidance that the management has given in Q2, it affirms that the second half of the financial year will be crucial for Wipro to show any growth for FY26, and that'll be something to watch out for.
Wipro's guidance for the second quarter is flat, but the company expects the second half of FY26 to be more positive. Let's listen in to the CFO, Aparna Iyer, on that.
In terms of deal wins and conversions, some of the deals that we won have, a good balance of both extending the work that we do and there is an element of expansion. Given the nature of these deals, they will take about 6 to 8 quarters for them to just fully ramp up, right? But you will start seeing that trickling down. And we also had a very large deal win in Q4 of the last fiscal, right? The Phoenix deal win. So this does put us collectively in a better shape. And, Srini also characterized that in his speech by saying that the second half is looking far more positive. And we've got the deals that we need. Now it's down to execution. Your point on guidance for Q2, at midpoint, it's flat. We always guide based on the visibility that we have at the start of the quarter. We don't give a full year guidance, but just based on the deal bookings, we've already given you a color that, the performance would get better in the second half.
Meanwhile, US President Donald Trump has indicated that the United States is very close to finalizing a trade deal with India, telling reporters that we have another one coming up, maybe with India. This renewed optimism coincides with the ongoing high-level trade talks in Washington, where Indian Commerce Ministry officials are currently in negotiations with their US counterparts for the second time.
We made deals with a lot of great places, but we had one yesterday, that was announced. We have another one coming up, maybe with India. I don't know. We're in negotiation. When I send out a letter, that's a deal. In other words, that's a deal. They don't want to ever say that. Oh, how many deals have you made? And the best deal we can make is to send out a letter. And the letter says that you'll pay 30%, 35%, 25%, 20%. In one case, 50%. Brazil. And because what they're doing to their former president is disgraceful. I know the former president. He fought like hell for the people of Brazil. That I can tell you. And I believe he's an honest man. I think what they're doing to him is terrible. So, we have some pretty good deals to announce.
What we've been seeing over the past about roughly now 2 weeks, what we're seeing is the fact that there were the previous round of negotiations that happened, and now we are in the 5th and final round, hopefully ahead of this August 1st deadline. The negotiations are going on in Washington as we speak. Chief negotiator Rajesh Agarwal is in Washington leading these negotiations from the Indian side. You just heard from Trump. He said that any sort of letter that he's sending is a deal. Tariff rates of 30, 35%, 25, 20% even. We've now seen 19 in the case of Indonesia. So a 15 to 20% bracket of tariffs would be ideal relatively, but not tantamount to the sort of negotiations that we've had starting March of this year. What we're also picking up from official sources is the fact that India is very watchful of the tariff differential that it will have with competing manufacturing economies, especially you saw it with Indonesia, then Vietnam, Thailand, Bangladesh, Sri Lanka, all of these countries, India is monitoring the deals that they are making also very keenly. Agriculture, dairy, these have remained the red lines for India so far. And that is what we're continuing to see, that India has stuck to its narrative since day one about where it draws its red lines. So that is, again, a very important part of these negotiations, but all our eyes are peeled on at the end of this weekend. The talks were expected to last roughly a week, and so by Saturday, Sunday is perhaps when we can hear either from the American side or the Indian side for more clarity on this mini trade deal.
Bharti Airtel, meanwhile, has announced a partnership with AI-powered search engine Perplexity, offering a complimentary one-year subscription to Perplexity Pro for its 360 million customers across mobile, broadband and DTH services. According to Airtel, this collaboration is aimed at making AI-driven search tools readily accessible to its vast user base. My colleague Aishwarya has more details on this exciting development.
First off, when this news came in, a lot of consumers or subscribers may have been perplexed, knowing that this 17,000 rupees per year kind of a plan of Perplexity Pro is available for free, absolutely, for only the Airtel subscribers, which you mentioned, rightly mentioned, about 36 crore of them across their mobile, broadband as well as DTH services. And this of course is significant because it also shows that there is a growing interest towards generative AI tools such as Perplexity and ChatGPT, so on and so forth. What this will help them use in terms of creating and generating content, images, videos, for some deep research as well. So it comes at a no cost for all subscribers of Bharti Airtel. Now, if you compare Perplexity Pro with other generative AI tools in the market on a yearly basis, this is priced at 17,000 if you're a non-Bharti Airtel user. But if you speak of the other apps available in the market, AI tools available in the market, which is a pro version of them, it's priced anywhere between 15,000 to almost 20,000 per year kind of a pricing. So an enticing offer, and if you're a Bharti Airtel subscriber, don't be perplexed.
And with this new partnership between tech giant and an AI model, my colleague Arushi is here to tell us how Perplexity AI compares to other LLM AI models. Arushi, over to you.
A positive update coming in for Airtel users. India's telecom giant has teamed up with Perplexity, which is an advanced AI-powered answer engine. With this partnership, Airtel is giving its 360 million customers exclusive access to Perplexity Pro. But what exactly is Perplexity AI, and how is it different from other chatbots like ChatGPT or Google Gemini? Well, Perplexity performs live web searches for queries by gathering up-to-date information and provides citations, so users can verify the source themselves. That's quite different from most chatbots, which rely on pre-existing or outdated data and also don't display sources. While Perplexity supports follow-up questions, it's not designed for extended or free-flowing conversations like other chatbots. It depends on web source, which can be limited or behind the paywall. Another con is that it requires questions to be specific and may have regional access restrictions. However, for Airtel users, it's one more reason to explore what advanced AI can do, that too at zero cost for 1 year.
Thanks so much for that, Arushi. And now forget everything you knew about digital expressions. Gen Z has flipped the emoji script, turning innocent icons into emotional landmines and meme-worthy masterpieces. What started as a cute little pictogram are now Gen Z's weapon of choice for throwing shade, masking pain and delivering peak drama. NDTV Profit ran a quick check across its newsroom and found out that people of different generations view the same emojis differently. For example, what might seem like a harmless smile to a millennial or a boomer might come across as a passive-aggressive stance to a Gen Z. Take a look.
एक छोटी इमोजी की कीमत तुम क्या जानो सजीत बाबू? मुट्ठी की कीमत जानते हो? All right, so Gen X versus Gen Z, whose emoji game is on fire? Let's find out. For that, I would show an emoji which is this.
Mine is this. तुमने क्या दिखाया?
Sir, वो high five की emoji है. Why would you show high five to?
मैं बोला जी कर लूँगा.
For snacks in the pantry, this one for sure.
Mine is this. तुम्हारा क्या है?
Dancing girl.
तुम नाचोगे क्यों?
So again,
this one.
Two. You will laugh. At an editor's level, you can laugh about such things. At my level, I have to be very scared about. I would use the melting face emoji.
I'm using this.
Thumbs up. How can you be so nonchalant about something where it's your fault?
And how can you be syncing?
You have to re-record your link. Okay, yeah.
Mine is this.
Mine is
waste of time.
So if I would get the chance to put this, see, I think it stems from personal experience that both of us are showing the same emoji. So एक भी कम पड़ रहा है. I think 4-5 ऐसे lines एक
line आना चाहिए ना.
So
coffee.
This emoji.
This is coffee, right?
Coffee.
No, you said it's tea.
No, I didn't say it's tea. Someone told me it means कि you are asking for gossip, but I myself have never used it for asking for gossip.
It's for asking for coffee. हमारे our generation just says this.
Your generation में emoji नहीं होते थे, ना ही coffee shops होती थी. You see, even a monkey can be an emoji like this monkey. So
I don't see your mistakes.
No, this monkey is very like you want to say something which is controversial.
No,
Sajid sir, I think you are wrong about this, and I'll send that message, but I don't want you to be angry about it, so I'll follow it up with a monkey.
No, it basically means that I've seen your mistake, but I'm not saying anything.
Next is melting face. So melting face, what do you?
Now tell me.
Now I'll tell you. See, melting face is when you make a mistake, and when you want to accept it, and you want to show कि I feel more about it than just words, so you'll put a melting face next to it. Devil face.
That's you.
That's me. So again, a devil face in my generation is used for content which is 18 plus. This emoji to the back, it's a cat with a sunglass and a pata gobi hat. So again, it's a very
what does it mean actually?
Sir, it means कि I am very cool about something. You give me some work and you tell me कि ये जल्दी जल्दी करना है, and I am being calm and
am I hiding under a pata gobi?
No, I am a pata gobi.
No, I need an emoji which is representing mechanical life.
Why आपकी life mechanical हो गई है?
बहुत हो गई.
Yeah, so that was Sajid sir versus me. So older generation versus the younger generation. Whose emoji game do you think is the stronger one?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। गब्बर ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated.
Hello and welcome. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna, and I will be taking up all your stock related queries today. So don't forget to call us or WhatsApp us. The numbers are there flashing on your screens right now. Here's and on the show we are joined by G. Chokalingam on the fundamentals and Virat Jagar on the technicals. So welcome to the show, gentlemen.
Good evening.
Good evening. Now let's get started. So first query is written to us by Arijit from Kolkata. He holds 500 shares of RVNL at 23.5 a piece. Currently, he's sitting on a handsome profit of nearly 1.8 lakh rupees there. So, firstly, Mr. Chokalingam, I'd like to come to you talking about RVNL. How's the order book looking like? What are the fundamentals of the company? And are you positive on the counter for next 2 to 3 years?
Certainly, yes. Based on the order book, 2 to 3 years, definitely the stock should do well. But I believe in the short term for next 2-3 quarters, it is slightly overpriced. But if somebody is willing to hold for 2-3 years, then it's a good stock to hold.
Okay, so for 2-3 quarters, it's a bit priced there. So Virat, I'd like to come to you. What are the levels that a new investor should be eyeing on if they really want to invest in this counter?
So basically, the stock is trading between somewhere around 400 to 380. And recently it is trading somewhere near its support mark. So if it is breaching 380 mark, then we might see further drop in the same. Otherwise, the stock is quite decent. Both 50 and 200 days exponential moving averages are flat, which means there is no strong trend yet. The stock is not given buy or sell signal yet, and I would like to suggest you to hold the stock with the strict stop loss of 360.
Okay. Thank you so much for that. Now we have another WhatsApp query written to us by Roshan from Bhubaneswar. He holds 2,000 shares of POCL Enterprises. He bought it at 1,115 rupees. And he's also made some significant profits there with this investment, about 2.38 lakh rupees. So Mr. Chokalingam, what's your view on POCL Enterprises? Because if we look at the valuation front as well, it looks pretty attractive if I compare to its peers.
I'm sorry, I have not studied it in detail, so I'm not able to answer.
Absolutely, it's fine, Mr. Chokalingam. Virat, if you could just help us with the counter.
So technically speaking, the stock has broken above key resistance level with the strong volume. This is a classical bullish sign which is showing the buyer's interest, and the price is staying above the breakout zone, which is 960. So if it is managing to sustaining above 950 level, then we might see further upside till 1100. So you can hold this stock. It is a good stock to hold.
Okay, so a good stock to hold, POCL. And just a quick reminder for our viewers, we are here for half an hour. So, you can just pick up your phones and ask away all your stock related doubts, if any. Our experts are also there. So this is your golden chance. Please don't miss it. With that, we have a WhatsApp query written to us from Manoj. He's written to us from Malaysia, and he holds 2,050 shares of Kalyan Jewelers. He bought it at 585 rupees. Currently, he has made profits of around 30,000 there with this investment. He's asking whether he should hold or sell the counter. So, Mr. Chokalingam, in the current geopolitical scenario, people are looking towards gold and the jewelry space in particular as a safe haven. But Kalyan Jewelers as a counter, what's your outlook for the long term?
The long-term outlook for gold is certainly positive, no doubt. As you rightly mentioned, geopolitical tensions are there. that could be a negative factor for jewelers, because all of us know that gold prices have gone up substantially. And in down south, it's called 1 and 8 gram. And for marriages, they count in multiples of 8 gram, minimum quantity they have to buy. I have personally interacted with a lot of middle class people, who have got the daughters, yet to be married. There's a lot of stress, in South, you can see particularly in terms of accumulating gold for wedding. So it reached a point where it is a little difficult to accumulate jewelry for wedding. That's my personal view, and that should impact jewelers in the short term.
Yeah. Absolutely rightly said, Mr. Chokalingam there, because people are getting a little bit of worried, and especially in the down south, because they focus more on the gold ornaments. But having said that, Virat, I'd also like to take your view on Kalyan Jewelers for somebody who wants to invest or wants to take fresh positions. So what are those key levels that you would suggest them?
So as I can see, the stock is making higher low formation, which is showing upward trend. Momentum indicators are also supporting this move. I would like to recommend this stock where you can invest at this level. Your first target should be 650 and second should be 750, 650 and 715 with the strong stop loss of 550.
Strong stop loss of 550 there. With that, we are joined by our first caller on this show from Hyderabad. Hi, Mr. Subbarao. Good evening.
Good evening, madam.
Yes, how can I help you today on the show?
Madam, I am holding Tanla. I have purchased it at 667 rupees.
Okay.
150 shares.
Yeah.
It's a short-term move.
Okay. So 150 shares, am I correct?
Yes, madam.
Okay, 150 shares, Tanla platforms at 657 rupees, and looking for a short-term view on it.
667, madam.
Yeah, 657.
667.
Yes.
667.
667.
Yes, madam.
Okay, 667. All right. So it has dropped down to 652 currently, Virat, and was also, down in trade today over 0.5%. So what's your sense? What are the charts suggesting?
So the stock is trading in a sideways range with no clear direction, where it is facing hurdle somewhere near 660 and support can be seen near 630 mark. So the range is quite narrow. It is between the support and the resistance mark, which is indicating a neutral view. In such cases, the best strategy is to hold or wait for the confirmation.
Okay. Thank you so much for that. Now we are joined by Ravi on the phone line from Jewara. Hi, Ravi. Good evening.
Yeah, good evening, ma'am.
Yeah,
my
please go
query
ahead
is
with the
regarding
query.
Texmaco.
Yeah.
I'm holding Texmaco Rail. My query is, for a long-term perspective, is it good to hold on this counter or to shift to Chitagar?
Okay. So you have bought 180. You have bought 500 shares at 180 a piece. Am I correct?
Yes.
Okay. Understood. So, Mr. Chokalingam, the stock has fallen to 161 levels, but Texmaco Rail, is it an optimistic and a positive, counter to look at from a long-term perspective?
Yeah, though it has fallen a lot, it's slightly stretched, but still one can hold, for 1 to 3 years, because FY26 budget has not increased the outlay for railways significantly, but that cannot continue. In FY27 budget, I am confident that the government will accelerate the capex for railways. So therefore, Texmaco should be the beneficiary, and also stock has fallen a lot. So only those investors who are willing to hold for 1 to 2 years or 3 years can continue to hold, or even can buy on any decline.
Okay, for somebody who wants to stay invested in it for a minimum of 2 to 3 years, can look out for Texmaco Rail, is what Mr. Chokalingam is suggesting. Now we have Mr. Murli on the phone line joining us from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, and thank you for taking my query.
It's a pleasure. Please go
my
ahead.
My query is, I bought Gravita India.
Yeah.
At a price of 200 shares at a rate of 1746.25.
Okay.
The point is, I saw his financials and bought it. I am willing to hold. But the thing is, two things which comes to my mind. I heard one of the major clients, Amar Raja Battery,
Yeah.
is also getting into recycling
Yeah.
of waste, which is one of the major customers for this thing. That is on the stage. And number two, is it Hindustan Zinc?
Okay.
Which is where the today there is a news that there are further allocation of mines by government for Hindustan Zinc, and silver price is skyrocketing, and that P is around 17 or 18.
Yeah.
It's a good dividend yield.
Yeah.
Whereas Gravita is a very high PE as of today in the metal counter.
Yeah.
So which one is a better thing from a long-term point of view?
All right. All
and
right.
in this one, the dividend yield is better and the PE is low and the silver price is also zooming. And further allocation
Okay.
today. Which one is a better from a long-term point of view? I am looking at least 18 to 24 months.
Understood, Mr. Murli. And Mr. Chokalingam, Gravita India is the counter. But, having said that, do you suggest our caller to stay invested in this particular company or switch their positions to probably an Amara Raja or a Henzing for that matter?
Among the three stocks he has mentioned, in fact, I have studied all of them. The best one is Amara Raja for long term. Yes, right now it's having a difficulty in the new expansion. That is not going on as per the expectation, but it's a great company, great balance sheet. And, the lithium battery diversification definitely should ultimately click in. So that is the best stock. And that can be followed by Hindustan Zinc in order of priority. As he rightly mentioned, silver is the king. And also the government has taken the company, so that can mitigate all possible governance issue coming from Vedanta. Gravita, as an analyst, I would not recommend at all. It is trading at around 41 PE on FY25 earning. If you see worldwide, even within India, the metal stocks normally trade, at around 9 to 11 PE. And at best, even stock like Hindalco and all, trade at 13, 14 PE. But this stock is commanding 41 PE. So I would not pay that kind of PE for just a recycler of metals. So I would, fundamentally speaking, give a sell call on Gravita.
So a sell for Gravita and a buy for Amara Raja is what Mr. Chokalingam is suggesting. Now we have Manoj on the phone line from Hyderabad. Hi Manoj, good evening.
Yeah, good evening, ma'am.
Please go ahead.
I'm holding Emersinka seeds share at 155 rupees. That is 5,000 quantity.
Okay.
And I would like to hold it for next 1 year.
Yeah.
Just I want suggestion on the whether I can hold or sell.
All right. And your buying price is 155 or 165?
155.
165.
155.
All right. 155.
Correct, 155.
Okay. So you've bought 5,000 shares of Himmat Singh Seed at 155 rupees. Currently, it's hovering around the similar levels. It's trading at 152, but since the quantity is large, so you have made some losses there of around over 13,000 is what I can see. So, Mr. Chokalingam, Himmat Singh, are you viewing this counter? And if yes, so is it an optimistic company to be invested in?
Stock has corrected a lot, and historically in the last 20 years, it has always rewarded in up cycle. And, also the rupee is depreciating, which should be favorable for the kind of business Himmat Singh Seed is engaged. So one can buy for medium to long term at current price.
Okay. Thank you so much, Mr. Chokalingam, for that. We have Rajesh on the phone line from Chennai. Hi, Rajesh. Good evening. Okay, so it's a WhatsApp query, my bad. Rajesh holds ABB shares. He's holding 200 shares at 6,120 a piece. Currently, he's made losses of around 97,000. He's looking for a short-term view on the counter. So Virat, since he has made such, losses there, so what would your advice to him be? Like, should he be booking his losses, or there's any sort of, positivity there that you can see on the charts?
So the stock was trading in upward trend, upward moving channel, and recently it's broken below the support line. So this is a warning sign, and volume has also picked up recently, which is showing there are seller interest. So technically, I would like to say this is a signal to sell, or you can reduce your position, but avoid to hold as much as quantity. I mean, you are holding 5,000 quantities, so either you can reduce your quantity, otherwise sell all the stocks.
Okay. Thank you so much for that. Now we are joined by Mr. Kudeshwar Rao from Andhra Pradesh on the phone line. Hi, Mr. Rao. Good evening.
Good evening, madam.
Yes, please go ahead with the query.
I am having I am having 100 shares of Sundaram Fasteners bought at the rate of 1030. Can I keep it for 1 year for good profit?
All right. So, Mr. Chokalingam, without wasting much time, Sundaram Fasteners is the company's name that we're looking at. It's hovering around the similar levels, but if we talk about today, so it was up in trade today, nearly 2%. So how are you viewing this as compared to its peers?
No, certainly Sundaram Fastener is a leader in the fastener business, excellent management, excellent promoter, no doubt. Unfortunately, even after significant correction from 52-week high, still it is stretched in terms of valuation, and also automobile outlook, whether within India or outside India, also not that robust as it used to be 2-3 years back. Still, however, if somebody is willing to hold for 2 to 3 years, this is one of the best auto component stocks. But I'm afraid that one may not make much return in the short term, in 6 months to 12 months. But it's a really great stock to hold for anywhere 2 to 3 years time frame.
Okay, so that's a hold on Sundaram Fasteners. With that, we are joined by Hari Krishna on the phone line from Andhra Pradesh. Hi, Hari Krishna. Good evening.
Good evening, everyone in the panel.
Yes, please go ahead with the query.
Thank you for helping us with our stock-related queries.
It's our pleasure.
I have a question to Chokalingam sir. So actually, I follow him on other platforms as well. On his advice, and also I did some research. I bought this company called Nesco very recently. I averaged it at a price of 953, and I hold around 90 stocks.
Okay.
And it gave very good returns in the last 1 month.
Yeah.
So I just want to ask Chokalingam sir if I can add more for a long term, 3 to 5 years.
Okay. So Mr. Chokalingam, Nesco is the counter. Currently it's trading at 1282, and he is sitting on some profits there of 30,000 rupees. So what would your suggestion to Mr. Hari Krishna be?
Yeah, since 2010, I have been recommending Nesco. It's originally at around 100 rupees, adjusted for split and that. Even now, I have a buy recommendation. Target price is 1500. That is for short to medium term with 6 months to 1 year. I may be wrong. I have personally invested after initiating a buy recommendation to my clients. My company also invested. This is the one stock I bank on heavily on the basis of the fundamentals. This 1500 target is a conservative target. I believe that the kind of many multi-bagger ideas I gave in the past, this also should be able to play out as a multi-bagger stock in the next 4 or 5 years, purely based on the fundamentals. I may be wrong. Since I have invested, investors should take their own decision. The point is that it's an extraordinarily cash-rich company, and it is tripling the capacity, and it is holding 70 acres of land in Goregaon, and which is creating a rental business model in various areas apart from exhibition and the corporate park, and it has gone outside Mumbai also in terms of roadway infra. So all this would augur well, and I believe in 5 years time EPS can be upward of 200 rupees, 200 to 240 rupees in 5 years time. And if I multiply by even 20p on that 200, the stock from here at least triple in 4 or 5 years, if not more than that. This is my conviction. I may be wrong, but I have a tremendous confidence in the stock.
Okay, so Mr. Chokalingam is strongly bullish on Nesco, and with that we are joined by Krishna on the phone line from Bengaluru. Hi Krishna, good evening.
Hi, good evening. My question is about Reliance. So I'm holding 412 shares, purchased at the rate of 1270.
Okay.
So around 84,000 is my profit. But if I see last few days, it is continuously coming down because of the Jio IPO news. Okay. Either something is left here. How about the technicals? Another 2 years I can hold. Whether it will further it will go up from here. I would like to know from Jacqueline, sir.
All right. I'll get your query solved. So, firstly, coming to you, Virat, Reliance is about to come up with its Q1 results tomorrow. So, everybody is eyeing that. So, there will be a lot of momentum on the charts tomorrow. But having said that, how are you viewing the counter?
So as I can see on the daily chart, the stock has had a strong rally recently and now it is consolidating, or we can see a sort of profit booking right now. This is a healthy behavior, so no need to rush into buying or selling. Hold through this phase, it's a smart move. So you either you can hold it or you can add more stocks at this level.
Okay. So add more at these levels. And Mr. Chokalingam, I'd also like to take your view on the counter, since it's a strong company, but still for somebody who hasn't invested in it yet. So what would your suggestion to them be?
Yeah, in fact, we have a buy recommendation, and on the same channel, I also mentioned that it is emerging as an economy. And third, in the short term, it may not give big reward. Recently, it has recovered. Short term, it may continue to face some difficulty in year-on-year profit growth. But medium to long term, the potentials are huge. Definitely, the unlocking possibilities there from the mobile telecom, and also they already built 11,500 crore worth consumer goods business, and that also offers a lot of growth potential and unlocking potential. So I think Reliance Industries is one of the best large cap stocks for medium to long term investment.
All right. So with that, we are joined by Siddharth on the phone line from Tirupati. Hi Siddharth, good evening.
Hi ma'am, good evening ma'am.
Yeah.
Ma'am, can I invest in Vedanta at current levels for the next 10 to 15 years?
Okay. All right.
Or investing that same amount in any mid cap fund, which will be more profitable?
Understood. So, Mr. Chokalingam, Mr. Siddharth has a corpus of 5 lakh rupees there and he wants to invest in Vedanta. But currently the company is surrounded with some negative news. But having said that, fundamentally, how are you viewing the counter? Is it advisable for investors to, invest in it for long-term purpose?
It is a very interesting question. In the interest of the investors, if you permit me, I will take 1 or 2 more minutes extra. I heard him saying that he wants to invest for 15 years. That is a really very good mindset. That is the kind of mindset one should have. But certainly in stock market, you should not buy and forget for 15 years. The prospects of the companies keep changing dramatically, even sometimes within a quarter or so. And more so in case of metal stocks. If you look at the last 20 year or 40 year or 60 year, the metal stocks always extremely cyclical, once in 3-5 years. And there are metal stocks which have fallen 50% also in 3-5 years and then recovered even 100-200%. So therefore, metal stock is not the stock to be invested, continuously for 15 years. One has to take a view on a very quarterly basis. Having said that, if the investor has that kind of perspective to invest for 15 years, I would not prefer, metal stock like Vedanta. More so, there have been a lot of news around. Rather, I would, consider a stock like the State Bank of India. This is going to emerge, one of the topmost banks in the world in the next 15 years. I'm pretty confident. And this 25,000 crore mobilization also is a big positive